Reserve kept its policy rate unchanged for a fourth time in a row and also signalled cuts this year, but it indicated that it is not in a rush to cut rates. The FOMC unanimously decided to hold the key interest rate at 5.25 to 5.5%, citing slower economic activity and also easing but elevated inflation. That's according to a statement that was issued yesterday. It also removed any reference to future rate hikes. Here's some of what Fed Chair Powell had to say.
It's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it.
All right, and also overnight you saw the US bond yields across the yield curve come off. Of course, that was not related to what the Fed chair said. You had earlier on in the session a regional bank in the US that posted surprisingly weak set of numbers. It posted a loss, and that led to some expectations on Wall Street that the banking sector as a whole is heading for troubled waters. That resulted in a flight to safety, to safe havens, and you saw yields come off very sharply. You saw the 10-year yield fall below 4%. Of course, when Fed Chair Jerome Powell started to speak and pushed back on those rate cut expectations, you saw bond yields rise a bit across the board, but not by very much. In the Asia-Pacific region this morning as well, you've had a bit of a muted start to trade. Of course, the Hang Seng is trading flat at this juncture. The early risers were, two of them, in fact, were trading lower. That continues to be the case. The Nikkei 225 down about 0.8%, and the Chinese markets have opened lower by about 1% or thereabouts. Let's shift attention to the Indian equity markets. Of course, apart from the fact that you have the presentation of the Union Budget, it is also the weekly expiry for options to take into account. That's also something that we have to take into account. And Agam is here to tell you about the latest cues from that space. Agam, chop and churn, we've seen all through the last week and a half. How do we look at today's session?
We did see advances yesterday, Alex, and that perhaps is a positive because, well, things have changed a little bit, at least in the underlying. So the Nifty did advance by around 1%. Sure, we didn't see any change in open interest, but the Bank Nifty too, which advanced by around 1.5% nearly, which also saw unwinding coming through. So at the moment, over the past couple of days, what we've seen is a lot of traders, well, square off their positions as we moved into the interim budget. Do remember that until before the FM speech, you will have the most amount of traction in terms of expansion in option premiums. And once you start seeing the speech, perhaps you'll start seeing a little bit of more contraction coming through. Speaking of option premiums, yesterday was a day where the Nifty advanced, and because of that, we saw a little bit more of writing around the put side, but it was also a choppy day of trade, which is why we really can't make out in terms of addition or subtraction in options. But we're still working with the 500-point range, and on the higher end, 22,000 is what we are keeping an eye on. Moving on, as far as stocks go. And today's day of trade, we'll be watching out for something like a Pidilite and Coromandel, Pidilite and Cholamandalam, which saw shorts, and longs building in DRL, Maxfin, and of course, several other companies. And in terms of stocks, we saw short covering. We saw Exide, Federal Bank, M&M Financial, PNB, and AU Small Finance Bank. Overall, Alex, we are keeping an eye on the benchmarks, of course, and the Nifty. Perhaps it will be a choppy day, and it could in fact lead to increased volatility, considering it is also the weekly options expiry.
Certainly, and in fact the Nifty Bank gained over 1% in trade yesterday. Agam, a couple of financial names are going to be watched very closely today. Of course, HDFC Bank saw a little bit of breather in selling, and it gained in trade yesterday. It gained over 1% and lent quite a bit of support. But in today's trade, you're going to watch out for Paytm, because there was a major announcement by the central bank yesterday. It's announced further restrictions against Paytm Payments Bank because there are updates that they have found from an audit report that have pointed to persistent non-compliance and continued material supervisory concerns. That's from the statement that was issued yesterday. But to tell you what it means, and also to tell you what it means if you're a customer, Vishwanath Nair is joining in to give you some perspective. Vishy, what can you tell us this morning?
Good morning, Alex. So what the RBI essentially did was block any further deposits or credit into Paytm bank accounts, Paytm payment bank accounts from the 29th of February. So remember that customers still have time till the end of this month to make any kind of transactions that they want to do on their Paytm payment bank account. Which are the accounts that are covered in this? Well, any of the Paytm payment bank accounts, if you have a wallet account, if you have any kind of a FASTag account with Paytm payment banks, then all of those accounts are affected by these new strictures that the RBI has brought in. As you mentioned during your introduction, that there were persistent non-compliance issues as well as major supervisory concerns that the RBI found with Paytm payment banks. This dates back to March 2022 when the RBI had stopped Paytm payment bank from onboarding new customers. So over the last 2 odd years, Paytm payment bank has not been bringing up customers onto its business, but the RBI has also found material issues which continue on the Paytm payment bank system. This is after they conducted an audit. What should customers do? Well, they have time till the 29th of February to make further deposits into their payments bank account with Paytm. However, after 29th of February, they will not be able to make further deposits into those accounts. If you have an existing balance in those accounts, then you can continue to use them, you can continue to withdraw that money. Those things have been allowed, but other than that, all other banking services have been stopped by the RBI from the 29th of February. That is till the end of this month.
All right. Thanks so much, Vishy, for bringing us those details. Certainly one to watch out for in trade today. It has, of course, sent out a clarification saying that it's working towards what the RBI has pointed out as concerns. But we'll see how the stock reacts in trade today. We have to slip into a very quick break, but on the other side, we'll bring you a ground report on what to expect from Budget 2024. Do stay tuned.
India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई.
Welcome back. You're watching the coverage ahead of Budget 2024. And as we told you, we have a ground report set up for you. Janani, in fact, is reporting live from North Block, where the budget is set to be presented in just a few hours. Janani, if you can hear me, what are you picking up?
Hello, can't hear.
Okay, so let's try and get Janani back with us in just a bit. In the meanwhile, let's turn to a few of the big voices that spoke to your channel ahead of the presentation of the budget. And of course, there are several expectations to take into account. Listen into a few of those big voices.
I continue to think, of course, there's going to be a lot more of what they've already done to carry that forward. So I expect number one, continued investment in defense indigenization, in railways indigenization. So we are going to get a lot more, either the PSUs or the private players, getting a lot more business from the railways in order to improve the mix, which was largely currently buying stuff and then getting services also from companies abroad, which is now changed to buying some stuff from companies abroad, but doing the majority of the work in India. So I think a lot more projects are, and plus you've got a lot of stuff that's still not finished, right? Like so you got a dedicated freight corridor. The DFC still continues to be in progress. So I think that has to be continued and needs budgetary allocation as well. Apart from that, you've got the defense programs, a lot more of the ships that have been ordered, and then their movement towards more indigenization of technology on some of the air equipment as well. I think all of this will continue. So this is like business as usual, but in the sense of this was a process that started about 3 or 4 years ago, and that will continue.
That's quite clear from how the market has been bidding up the railway stocks, the defense related stocks. Infrastructure has done quite well. Banking has lagged because of reduced margins to some extent. But I think banking and the entire financial pack will also be a participant in that. And then auto. As the rural economy picks up steam again, this year, two-wheelers, tractors should see an uptick unless you get another bad monsoon, in which case the government's hands will be full in terms of stimulating rural demand. So those are very clear in the market, and a lot of expectation is there. In fact, there could be a bit of a sell-off if the allocations are lower in railways or defense vis-a-vis what is expected, or the overall capex number will be watched. Last year was a big plus, and I don't expect that kind of a growth, but we could still have growth and not a cut this year. So let's wait and watch. I think within those, what we were talking, we have to look at capital, which is the financials. We have to look at capex, which is all these sectors, the infrastructure providers, construction companies who are putting up roads, bridges, ports, companies, transport, logistics, as well as defense and railways modernization, indigenization play. I think that's a multi-year play that's going on. And finally, consumer. The consumer has suffered because demand both at the lower end of the pyramid in urban sphere as well as the rural demand has not kept pace. So we have a problem with aggregate demand. But in a year where we are expecting rate cuts, with the macro continuing at about an 11 to 12% in nominal terms, we are expecting that there will be money going into these sectors. There will be some redistribution as well as generating surpluses, and that will help.
All right. Now, from an economic standpoint, we also spoke with HSBC's Chief India economist Pranjal Bhandari about how state capex has been a standout highlight in FY24 and how she expects a fiscal drag in FY25. Listen in.
Actually, the real story of FY24 wasn't central government doing capex. The real story was state governments doing capex. And a lot of people miss that out. State governments which were literally not spending, in the pandemic and the 1 or 2 years after pandemic, suddenly started spending in FY24, and capex spend rose 45% year on year. very strong numbers. And I think that has been a huge source of growth, particularly construction jobs, particularly rural demand over the last 12 months. So we should always think of CapEx as center plus state combined. And if you combine the two, my sense is we are at our best in terms of growth rate right now. Next year, the growth may not be as high, but in terms of percent of GDP, the thrust will be maintained. I wanted to make this important point that, there's something called fiscal impulse that economists talk about. That's the impact of fiscal policy on growth. Since FY19, the fiscal impulse has been positive for India. The government has been contributing to GDP growth. FY25 will probably be the first year in which there's going to be a fiscal drag. The government will not be contributing to GDP growth. And that is because it's wanting to bring down its fiscal deficit. And when you bring down your fiscal deficit, you cut spending, and then you don't positively impact GDP growth. So my sense is FY25 will be the first year in many years in which the fiscal policy will take a step back. But I also think it is the right stage for the monetary policy to take a step forward and loosen monetary conditions. I say this not only because fiscal will be taking a step back. I also say this because inflation is really coming off.
All right. Now, one particular sector that has seen tremendous growth over the last year is the real estate pack. And there is a lot of interest in the residential space. We spoke with Irfan Razak of the Prestige Group, and he talked about the potential for giving developers the incentive to make smaller homes in order to make housing more affordable. Listen in.
Important thing is if we can give some incentive to developers to make smaller homes, like in the past we had something called 80IB exemption in the income tax that encouraged developers to make smaller homes and get tax rebates. Similarly, there's one demand, but of course it's nothing to do with this budget, it's on GST. And now see, there used to be an input credit on GST which the developers used to get, and the end product used to be taxed. I believe that the end product today is being taxed at 5%. If that input credit can be restored, it will definitely reduce the cost of the home, and eventually it will, the offering will be much lesser to the consumer. And of course, they can do a balance, do it only for X amount of size of house, and that really will help things, and that will sort of spur up the entire construction for smaller homes. And that's where the actual need is. And I believe if that is addressed, it will be a big thing for the housing industry and for the home buyers, I mean, for the people who really aspire to have a home. And it will definitely fructify the dream of housing for all, which is our dear Prime Minister's vision and mission, and I think that should get done.
We also spoke with representatives of the Confederation of Indian Industry, and that, of course, ahead of the budget. Sanjeev Puri, the president-designate of the CII, said that the body supports the need for subsidy welfare measures. He spoke with my colleague Tamanna Inamdar. Listen in.
Better targeting will bring in efficiencies, and better instruments of targeting also will bring in efficiencies. I think the government has very, very wisely used the digital infrastructure to actually do direct benefit transfer, for example. So it's more about, sharper targeting and better instruments to provide that support to those who need it. And we completely, CII completely supports this fact that these welfare measures need to happen and need to be strengthened as we go along. But the idea is really to target it more sharply and move more towards direct benefit transfer.
I believe the PLI scheme has been very successful for 3-4 reasons. I think people are, first of all, India has obviously become the cynosure of most companies to look at. One, for its domestic market, and secondly, with this focus on the infrastructure and the cost of doing business, its own competitiveness. Therefore, in that background, I think the PLI scheme is like adding, I would call it the sweetener for people to come in and start investing in India. In that background, that this has been successful. The second issue is that what do we see as action at the ground? And if you look at it, I think there have been, these are all, I would call it big decisions for people to make, especially considering that they have been integrated into very many global value chains across the world. And therefore, I think it's very difficult to take a decision or take a view from a 1 or 2 year period. So our view is that at least it should actually be extended, and there is a greater opportunity to attract even more investments to come in, not just from overseas companies, but also Indian companies who wish to participate and become part of this global value chains. Therefore, in my view, the scheme has been quite successful. It needs to be further continued, and this will create a large opportunity for both global and Indian companies to invest in India and become part of global value chains.
All right, we promised you this earlier on in the show, a ground report from North Block, and Janani is in fact joining us. Janani, what's the word on the street on North Block? What could we expect today?
Well, anticipation and expectations are quite high despite it being an interim budget. But the word on the street is as simple as this, that firstly on the subsidies front, the food subsidy could be looking at an increase considering the NFSA Act-led initiative. The PMGKY scheme has been extended for 5 years as announced by the Prime Minister. So that's a certainty on that front that it could see an increased allotment. There's also word that petroleum subsidy would be increased considering that the government has increased 200 rupees per cylinder for Ujjwala beneficiaries, and however fertilizer subsidy might see a bit of a cut considering that global prices are simmering down and it might be a better year. If not a cut, it will be similar to FY24 estimates in FY25. But the next up is also the tax-related incentive, something that we've all been looking at. Now, will the government do something to make the new tax regime sweeter? Currently, individuals who have an income level of up to 7.5 lakhs have a standard deduction option, and up to a 7.5 lakh limit, they don't pay taxes. Whether the government will make this sweeter, perhaps increase the standard deduction, is something we'll be watching out for. Another one, of course, is the concessional tax regime for manufacturing units, for corporates who are setting up camp. Now, this was on the back of the COVID-19 pandemic, a scheme that came about. Whether this will in fact be extended, considering that its sunset is now in 2024 March, is something we'll also be looking at. And lastly, of course, some of the schemes that have already been agreed upon, say the PM Suryodaya Yojana. If you remember, this is the one where the Prime Minister had promised 10 million household rooftop solar projects, and this, of course, will require an outlay.
Right.
This is one of the things that we're getting, and last but not the least, the FAME scheme. So there might be also an increased outlay for EV vehicles, is what we're getting to hear. Back to you, Alex.
Fantastic. Thanks so much, Janani, for breaking that down for us and setting this up. In fact, there's a lot more to talk about before the Finance Minister takes the stage, and you'll find all of that right here on NDTV Profit, so do stay tuned.
India has an ambition.
The ambition is to become the third largest economy in the world,
to have authority in the new world order,
and to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action
in the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner State Bank of India, the banker to every Indian.
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
Welcome to India Market Open. Good morning, Tamanna. Good morning, Neeraj. No bigger day than this. It is D-Day, finally.
Finally indeed. But you know, it's a confluence of so many things because coincidentally we've had the Fed meet come out. Not as eventful, thankfully, but post-Fed, ahead of budget, which may not turn out to be as interim as people may think it to be. Never mind what PM Modi said yesterday, of course. And the fact that it's a morning which is so news heavy that you could have almost ignored that it's a budget day and still had a very pacey action-packed day.
I reckon budget will still take top of mind, but you're right.
As it should.
You're right, Neeraj, Samina, morning to everyone watching. Fed outcome, we're going to cover that. 197 communications, what's happening to Paytm, we'll be breaking that down for you. It's the Nifty expiry as well, and a whole host of data that is going to come out.
And it's still earnings as well.
Earnings, of course, in the background, in the backdrop is going on. So all of that happening, all of that here on our special coverage on NDTV Profit. So let's begin and very quickly take you through first what has happened with the Fed. Now, global markets got a bit of, I would say, cold water poured on all their hopes of a March cut. So the Federal Reserve, as expected, did not do anything to the rates. That was priced in, that was largely expected, but the whole question was, is there going to be a clear indication of when the rate cut begins? And over there it was made very clear by Jerome Powell, the Fed chair, that March is not the time when that will happen. He said, I find it very unlikely that, the committee members find it very unlikely that there will be a rate cut in March. So that saw then US stocks close down lower, and not massively, but the Dow down nearly 300 points for sure. There's a lot of nuance, though, in what Jerome Powell has said, and that's important as well. Because while he made it clear that there is going to be no rate cut in March, he did say that he sees a rate cut taking place at some point this year. He also said that he believes interest rates have peaked in this tightening cycle. So both of those positive things, and you could see that reflect, I would say, in the bond markets. The US 10-year, though, had already dipped below the 4% mark before the Fed statement came out, but it managed to persist and stay there. So a good view there on the US 10-year. Quickly, let's check what Asia has done as well, because that will give us a good idea of what the response has been. I would say, all in all, Fed not too negative at the end of it. Everything priced in largely, and you're seeing that play out as well. Asia mixed. So maybe that then, Neeraj, Samina, doesn't become the big factor this morning. There's a lot more cooking back home.
Yeah, most certainly. In fact, Kospi is well and truly in the green, in addition to the Chinese markets looking iffy. So that's the very interesting piece. And I think we'll get in Jeff Dennis in moments from now to try and understand what he thought, because back in his UBS days, he used to track EMs so closely, and therefore his view on what this means for EMs like India could also be very, very interesting, considering that we have a budget coming up as well. So, and the budget commentary would be important. So let's try and get in Jeff Dennis in just moments from now. But one is that, and two, that thankfully, Jerome Powell was not dismissive of the possibility of a rate cut. Thankfully, without timelines, he wouldn't anyways let that slip. But it didn't seem like from the commentary that it's negated and relegated to the back end of the year. It's still keeping the markets guessing, which is the important thing.
Neeraj, what might have made the markets a little disappointed is I think everybody out was believing it's a Goldilocks era. It's for risk assets, bonds. The bond king, of course, stuck to his call of a recession this year, and that was quoted by Jeffrey Gondlach. I think he's the Double Line Capital CEO. Very, very bearish at this stage. And he also said that what investors may want to start doing in the US is pull out money from the US, sit on cash, and maybe look at emerging markets. So while whatever is happening in the US potentially is negative emerging markets or negative risky assets, the flip of it is the US has run up already so much more.
Yeah.
So there is an opportunity, but
no. And frankly, Samina, I mean, Jeff Gundlach says something you got to hear, right?
Yeah.
I mean, he's as much a force to reckon with as any. The only thing is he's kind of held this view now for the last 6 months. But the ring in the tone of looking at EMs, one more voice added to the chorus, and which is also very, very needed.
Just one last line, and I hope we have Jeff Dennis up now any second. One last line that I would add from the Powell takeaway, and then we'll be done with that leg of this morning, is that he says don't expect consistent rate cuts after the first one. It's not going to be a steady stream, which is also what the markets had priced in. So we'll have to wait and see all of this and how it turns up.
Yeah.
But bonds, a lot happening domestically as well.
I think just before that, I think bonds also were all over the place yesterday. So we saw a sharp fall. There was a little bit of recovery in day trading, but finally went home with quite a cut on the US bond yield, of course. So those are things you want to watch out for. Very critical, because this has been an event that has been driving global markets, including emerging market equities like India over the last couple of months. Anticipation, hopes of this being a Goldilocks era is what's kept equity markets and risk assets on top of things. We're still waiting on Jeff Lewis, I believe.
Let's listen into what Powell said.
Let's
meanwhile listen into what Powell said on rate cut expectations.
It's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it.
So that was Powell, and that's a story that we'll see playing out for the next few days. But I think we should quickly move to the trade setup as well before we get to the big story this morning of 197. And that's the big question here, Neeraj, in a market which has so many factors to think about. Do you look at stock-specific earnings? Do you look at the sectors that are expecting capex flow? Or do you look at 197?
Yeah, no, so definitely look at 197. And let's move on to India now. Or do we have Jeff Dennis? Okay, so let's move on. We'll get you the Jeff Dennis conversation on our social media handles later on. Let's move on to India now. So, two things. One, the markets in the last 48 hours have done unexpected moves. Down in a big way the previous day, up about 1% when nobody quite anticipated it in yesterday's session. And while banks obviously have to play the pivotal role. Yesterday we saw other sectors come to the fore. It's not normal for you to see autos and pharma moving together. So very, very broad-based, the broader end of the spectrum, the market breadth was very strong. So I think in some sense, maybe call it because of what's happened in Bihar, maybe call it in factor of policy continuing now being rewarded quite adequately, and therefore the pre-budget or the pre-FOMC fears being shrugged off. But I think today, this morning, maybe on tenterhooks before the budget comes out, maybe a small bit of a pullback because of what the global markets are doing, but largely stable. That would probably be the verdict. I don't think too many people will be taking trades any which ways ahead of what Nirmala Sitharaman says, because her commentary on the glide path as well as what is it that they do on capex would probably take center stage. And if they managed both of those things well, predominantly, then I think we are in fine fettle.
Just a quick check on implied gift nifty. We haven't done that. So let's take a look at what we are expecting or anticipating in terms of today's market activity. Flat start, so no surprises there for guessing. It is going to be a sideways sort of opening. We are back to levels of what we were towards the end of last year. So again, while we did recover, like Neeraj said, in yesterday's day of trade, Jan has been a difficult month for the markets. It's been lacking direction. It's been lacking foreign outflows. In fact, if I have to put just put perspective, India saw the largest outflows from foreigners across as compared to other Asian markets in the month of Jan. So there'll be lots of moving parts, but the big story, like we've reiterated, is going to be budget. It is an interim budget, vote of account. You will have the full-fledged budget out in a few months from now, but still lots and lots of focus on this event. We've got Vishy. There's a lot of focus on a stock this morning. Vishy, it's a very news-heavy morning, or last evening was. 197 communication. I think it's going to get a gap down. The RBI has struck hard.
Yeah, terrible evening for us as well as Paytm. But essentially what the RBI has done is that it's blocked any fresh deposits or top-up transactions on Paytm Payments bank accounts from the 29th of February. That's essentially the gist of it all, right? So customers who currently have balances in those accounts, they can continue to spend money, they can continue to withdraw their funds, all of that is allowed, but fresh deposits, that's a problem.
And they can continue to top up until the 29th of
February. Yeah, they can do it till the 29th of February.
Nobody's going to do it if there's no continuity.
Yeah, there is absolutely no point doing it if there's a definitive 1 month sort of a deadline. What we picked up from our sources just this morning is that this is in preparation for a cancellation of license of the Paytm Payments Bank. Now, Payments banks came up about 10 years ago as a way to bring in differentiated banking, do better financial inclusion and all of that. But now the RBI is looking at a potential revocation of license. Now, of course, 29 days still exist, and the bank can go to the RBI for remedial measures. All of those options are available. Paytm itself has said last night that they're moving a lot of their payments businesses to other banks because the payments bank is under restrictions. So we will shift our business elsewhere. Only problem is then they don't get a share of the earnings from those payments. It goes to whoever is providing those services. So that becomes an issue. But at this point in time, what we understand is that the RBI may have considered a sort of a staggered move, primarily because you don't want the ecosystem to get too disbalanced. So you want to take it slow and see what the impact is, and then maybe take a final action.
I have a very basic question, Vishy, and of course, big exclusive there. I don't want it to get lost in this conversation that this is just step one to cancelling the license of the payments bank. So that's going to be big negative in any case for 197. What have they done wrong? So, because that's not very clear in the RBI's language.
It's not.
They say supervisory issues, etc., etc. But if you can explain, what has 197 or what has this payments bank done wrong?
The genesis of this problem comes from March 2022. That's a little over 20 odd months. Yeah, 22 months ago, the RBI found that there were issues with how KYC was being done and how data storage was being done at the payments bank. So essentially, the payments bank, being a RBI regulated entity, is supposed to have a bit of a Chinese wall with the parent. The RBI did find that the Chinese wall was not being maintained, the integrity of that was not being maintained through and throughout. Now, this is all based on what sources are telling us. The company itself, Paytm as well as the payments bank, both have completely denied these pointers. But what we understand from sources is that these were issues that the RBI found. The RBI in 2022 stopped onboarding of new customers and said, go ahead and fix these problems, and then we'll talk about bringing new customers in. nearly 2 years later, the RBI has conducted its system audit. It's conducted an external verification of that system audit as well. So it's not like the RBI is saying it out of their own free will. This is an external entity which is saying that these problems are real. And the RBI is saying if 22 months you can't fix it, well, now you need to face the music. That's what's happening here.
So, Vishy, let's put this in perspective with numbers. The expectation, or there are notes which the last night release said that even without this exclusive that we've broken, it's a cost of 300 to 500 crores on the EBITDA level, which is circa 30% of FY25 adjusted EBITDA.
Correct.
So that's the cost that is incurred. Correct. And we are only talking about the numbers cost. What happens to customer sentiment, what happens to other partners, whether staying or no, that is still not been and maybe cannot be factored in. So this is, aside of the fact that Paytm will go out and try and resolve, on an immediate basis, there is a large hit, not just to sentiment, but to actual costs moving up for Paytm.
That's right. So payments as a business is very big for Paytm. I mean, it's there in the name. So you're going to get a hit on that because there's going to be a reputational hit, because there's going to be a sentimental hit on the entity. If the RBI is coming down hard on a Paytm entity, then partners who work with Paytm and what Paytm is saying that we will move to third-party banks for payments businesses, all of them will sort of rethink their deals with Paytm. They will probably want to be safe in such a situation. So that is going to be an issue. Timing is also a problem because just last month, RBI after the RBI's unsecured lending guidelines, Paytm, which was a big player in the sub 50,000 market and the BNPL market, had to cut down on businesses. So there again, they have said that there's going to be a business impact. So lending, which was their big profit center, and then payments, which was their big operational center, both are being hit at this point in time.
Also, Vishy, so just to understand this going ahead from the 29th of Feb, your UPI app still exists.
Yes.
But they don't make any money off it because it's literally
won't.
like having an Access HDFC to Kotak banking app, and that's pretty much the business that will stay. If we have to try and break this down, if they're not going to make any money, Neeraj has already talked about the hit on EBITDA, what happens to the parent company now?
That's what the parent company needs to figure out. Now, the parent company on its part has said that we will move to other banks, we will ensure that our services are restored. On the side, the payments bank itself is working with the RBI on compliance. All of those things are being worked out, but we will only get a clearer picture at the end of this month. So when the March quarter results roll in, that's when you need to watch out.
Just one last thing for viewers, the FASTag bit. We need to mention because Paytm has a big share there, 17%. Right. So if your FASTag balance is done, can you reload it? Are you in trouble?
You can reload it till the
29th of Feb. Okay. And you can use it for the next couple of months. Is from what
if you reload it
understand.
before 29th of February,
but why would anyone do that, right?
But the money is not in danger, right?
Money is not in
danger.
For
users, money is not in danger.
Okay.
No problem.
Perfect.
So that was important. Thank you so much, Vishy, for coming in and giving us all of that, perspective and the exclusive. And the exclusive. But there's a lot of stocks to watch.
Yeah, there are lots of earnings reaction as well. So stellar set of numbers. So while, just a quick one, 197, we could bet on this one. The stock is going to see a massive gap down. The street is concerned. Brokerages as well are very concerned about what this is going to do to the stock. The company will open with a massive gap down and we'll be watching out for that. Beyond that, few earnings reaction. We've got Shree Cement. Exceptionally good set of earnings being posted by Shree Cement. Revenues are up over 20% at 5,223 crores. EBITDA is up nearly 74% to come in at 1,264 crores. Margins have seen a huge expansion of about 729 basis points to come in at 24.2%, and net profit has also has come in at a massive jump, 700 odd crores versus 281 crores that the bank had posted. Company, of course, is on record growth path. Expansion plans are on board. They've also indicated that the strong volume growth is on path. And I know Neeraj is looking at me. Shree Cement is a stock that we've talked about. Strong reaction. Why don't you come in and tell us your thoughts on it?
No, I don't have thoughts. Just two things. One, the City Note said that the discount between Ultratech and Shree, which is spoken about, has narrowed a bit, and therefore there is this income tax angle to Shree, so that is to be watched out for. But Samina, just carrying with your blowout numbers and just coupling that up with Ambuja, simply because while Ambuja went off yesterday, down yesterday, in the guidance that they've said that they will go to EBITDA per ton of 1,400 very shortly. Cities raised the price target today as well.
Okay.
So cement remains very strong. Now, I was just joining your enthusiasm, I must say.
And the budget.
Exactly.
So there is so much working for Shree Cement this morning.
Or cement at large.
If you were making a budget list, cement would be on top of it.
And so you tie that in with strong
Yeah.
earnings, brokerage upgrades. Even the management, I think, after a very long time is sounding so confident. And I think that's what you're really going to be taking heart from. They've said that they're executing a comprehensive performance improvement plan and are experiencing a positive impact. Strong volume growth along with building premium products through accelerated channel expansion and softening of fuel prices is what's actually helped Shree Cement. So watch out for this one. It will see a good start in today's day of trade. Also, like we've said ahead of budget, counters like Shree Cement are usually quite active in trade. Well, let's move on to the other one that also could be active in trade for more reasons than one. One being earnings, the other being budget, is IRB Infra. Again, the stock has been very active. So if you take a look at what it's done in the last 1 week of trade, we've seen a very sharp up move on IRB Infra. The reason being it made headlines on Monday as the company's private infrastructure investment trust, which is its InvIT, won an arbitration claim against the National Highways Authorities of India. They've been compensated 720 crore rupees. So it's a huge win coming in for IRB Infra, and that explained the big sharp move that we saw on the stock. Today we see the stock in focus on back of earnings. That, of course, is the 1 month performance of the counter. In terms of earnings, revenues are up 30% to come in 1968 crores. EBITDA is up nearly 17% at 870 crores. Margins, though, are down quite sharply. So could be viewed as a mixed bag because margins are lower. What we understand is the input cost has actually risen quite sharply, and that's what's impacted IRB Infra. In terms of top line, numbers look good, numbers look phenomenal. It is a little bit of pressure coming in from input costs that has impacted its margin picture. And on back of that, net profit as well. Net profit actually has come in about 30% higher at 188 crores. So all in all, I'd imagine IRB and Shree Cement should get a thumbs up in early trade this morning. 197, we've said it enough number of times, we'll be getting a thumbs down. But more earnings on the radar, Tamanna?
Yes, we can't discount the fact that earnings have been the big driver in these markets for the last few weeks, as they should be. But I'm going to start with a non-earnings sector that you should watch out for, and that is autos. I don't think too much of a budget play there. Maybe if there is a push for EVs, so some may react. But yes, you're going to have sales numbers here, and passenger vehicle numbers are expected to grow upwards of 20% year on year. Two-wheelers will be relatively sluggish, but an uptick is continuing. So you could continue to see single-digit growth. There are a couple of notes out in the expectations, and Bajaj Auto may not have as good a year-on-year growth as its peers. So that is one list that you should keep on your radar. In terms of numbers, Godrej Consumer Products and relatively looking at what's happening in the FMCG space, good numbers. It's a beat on EBITDA, beat on net profit, beat on margins. Those numbers will be on your screen of what the revenue and EBITDA was. But what is really working is a change in strategy. So they've, for example, they've put out one of their cheapest liquid detergents in the south. That is working. They're anti-repellent in the form of agarbattis. All these strategic moves and the new management strategies seem to be falling in place. I would keep that on my list. Westlife is another one. Now, this is a disappointing set of numbers, no two ways about it. It's missed estimates on most counts. Your same store growth has slid to -9%. Revenues are down below estimates. EBITDA is down 10%. Margins are also down about 138 bips, as are net profit. So a couple of things have happened here. Westlab has a lot of stores in Chennai, in the southern part of the country where there were floods. So a flood hit has taken place. They need to rework, I suppose, some of their strategies and their lower cost menu. So it'd be interesting to hear what the management has said. It's also talking a bit about your discretionary spend hit. So a bit of a stuck or a difficult place that Westlife is, and we saw that in Jubilant as well. Yeah. So those are some that I would watch out for.
Exactly, Jubilant and Westlife, both showing those chinks in the armor.
Trend there,
Yeah, very likely. But just 9% SSSG growth downtick is terrible. Now, the 2 or 3 other ones, and I'm sure we have more, but Dixon stands out. Revenues, 100% uptick. at about 4818 crores, so higher than the Bloomberg estimate. The margins came off, but remember, but relative to estimates, they were still higher. And keep in mind, for Dixon, margins may vary a little bit here and there, but largely managed at 3.5% to 4.5% band. The margins don't go above that and don't largely come below that. PAT, therefore, a healthy 87% growth. You could argue lower than 103 crores estimate, but largely in line. The point is, management refrained from providing revenue guidance, so that was one thing. And they've said that they are looking to vertically integrate with PCBA for industrial products, which can aid margins. Now, let's wait and watch what happens. This whole mobile components duty piece as well impacted Dixon yesterday. Let's see if there is more in store today, so watch out for this. The one that impressed me a lot was Mankind Pharma, not because of the reported numbers. So I'll take you through that. Revenues up 24%, EBITDA up 38%, which is fine. Margins, 23.26 versus 20.9. The estimates were 24.9. So on margins, they've actually been lower, but on PAT, they've been higher. But two things that stood out on Mankind Pharma. One, the export piece. Exports went up 118% YOY to 207 crores. This is big for Mankind because they've gone into it recently. And it's a free cash flow generating machine, it seems, because look at the balance sheet cash. It doubled since March 2023 to 2756 crores. So really strong show put up by Mankind Pharma. So watch out for that one. And then Ajanta, JSPL and Divgi, those stand out. Maybe we'll talk about them in detail. Tamanna or Samina might have details there. But Ajanta, margins expanded, PAT went up. JSPL, margins expanded meaningfully. And Divgi, it's a very expensive stock, recent listing, but it's won a 212 crore order. And it's important because it's coming from North American manufacturers of automotive transmissions, which is big market for Divgi. So therefore, you might see this stock react a bit.
Yeah, and I think Ajanta, those numbers were also fantastic. Margin expansion is mind-boggling. Every market of theirs has grown. EBITDA is up 85% YOY. So they've come to 314 crores with a margin expansion of 1,000 bips at 28.4% for the quarter. So Ajanta could be blowing out in early trade. Smaller company, but worth a mention is Thomas Cook as well. The reason I mention this is because we've seen the excitement, and you saw this with Ayodhya a few weeks ago, and the push for tourism that we've seen all through last quarter. Again, could be an important talking point from a budget angle too. The stock will be in focus. Numbers reflect exactly what the industry has been excited about. A quick word on that, Thomas Cook has registered a 241% growth year on year to report a profit of 90 crores, driven largely by income. Revenue from operations have also grown 24% compared to the last fiscal. Another quick one, I did come across some of these reports on Indus Tower. Now, of course, we'll find out more as we go along the day. KKR and CPP are likely to sell 3,800 crores in the tower infrastructure company. Again, this one's been in focus for the last couple of months now. The stock is up 25% in the last 3 months. Took a big hit in trade yesterday. Could expect a block deal of sorts on Indus Towers. So watch out for that too.
Yeah, just on the margins piece, three stocks which stand out today aside of Shree. One is Ajanta, as Samina stated, blowout margins. JSPL, extremely strong margins.
As well.
And data patterns, by the way, guys, good numbers, good profit, but margins just 96 basis points higher, but at 43%, this is the highest margin in the last 7 quarters, and the margins have trended higher for each of those last 7. So data patterns seemingly doing something well. It's an expensive stock, but could be an interesting one to watch out today.
Yep, absolutely. But you know, these are the stocks in news, so to speak, which have an immediate impact. Post 12 or so, the focus will move to impact of companies based on budget announcements. We know it's a vote on account, but directionally, there will be a clear push on whether the government is continuing with its capex and in what direction. After the break, we're going to talk about the F&O markets, what to expect, but we're also going to be bringing you ahead in the show a list of sectors and the top stocks in those sectors that you should watch out for that are likely to be impacted by the budget. Stay tuned.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company.
Welcome back. You're watching India Market Open. It's all eyes as we run down to the budget in a few hours. It is the day and the markets will be very closely watching out at the Finance Minister as she rules. Of course, how the year gone by has been, and of course talks about what lies ahead for India. Well, beyond that, the first few hours of the market will be driven by earnings and maybe sideways move as well. But Agam is standing by with more on that. Agam, yesterday's rally came pretty much out of nowhere. Wasn't very expected on the cards. We were expecting to remain volatile. But broad-based sectors across the board participated. What does that mean?
Yeah, so two big takeaways. The banking stocks are back in action. A lot of the strength on account of HDFC Bank, ICICI Bank and Axis Bank. And secondly, mid-cap and small-cap indices were going from strength to strength. But that has, in fact, also led to benchmarks moving higher. So the Nifty has come and seen, in fact, another 1% up move. But on the whole, we really haven't seen too much traction as far as your change in open interest goes in index futures. Why? Because I reckon to a certain extent, traders would want to wait before they take and, well, place bets as far as your futures are concerned. It's not very different for the Bank Nifty either. In fact, for the Bank Nifty, we've seen unwinding of positions to the tune of really 6%, even as the index moves higher by around 1.4%. And this move particularly, perhaps, was something that took a lot of traders out with surprise. And we were nearly at 4,600. Of course, we tested 46,000 and then we came off to a certain extent. Let's move on and talk about how things are stacking up as far as your option universe is concerned. It was a well, at least based on the kind of cues that we're seeing in terms of change in open interest on the Nifty options, it's been fairly all over the place, to say the least. But Nifty at 2,700, 27,000, 28,000. That's where we're seeing a lot more traction in terms of calls as well as puts. Remember, this potentially doesn't necessarily mean that all these calls and puts have been written, because we are moving into a large event. And where does that keep the Nifty in terms of your open interest? Well, we're still looking at a 500-point range, which could in fact change because it continues to change on a day-to-day basis. But based on max OI, keep an eye on 22,000 on the higher end and 21,500 on the lower end. What is really interesting is that the budget also falls on the day when you have the Nifty weekly options expiry. So you can't really rule out any choppiness going into today's day of trade. Starting and coming down to stocks then, well, we do have a bout of longs for Dr. Reddy's, Max Financial and Coromandel International. A lot of your agri-chem stocks perhaps will be in focus today as well on account of the budget. And shorts in Pidilite and Cholamandalam Finance. In terms of stocks which saw short covering, a lot of that coming through for Exide Federal Bank, M&M Financial Services, PNB and AU Small Finance Bank. No prizes for guessing. The financial sector will also be in focus today, and that's the reason why we've seen a lot of traders take their bets off and they want to wait for the announcements in the budget coming through. All in all, we're certainly keeping an eye on the benchmarks, and we are expecting a little bit of choppiness to play out, especially given the budget coming through.
All right, thanks a lot for that, Agam. So clearly watching out for that as well. And, in about 8 minutes, we'll get our first set of guests coming in right on time, just 20 minutes before the pre-open session begins. And then we try and dwell deep into what to look at it from a market's perspective. But keep in mind, aside of the budget being so important at 11, the pre-open or before the budget starts, to just try and nail down some of these specific movers in the session is extremely important, which is why the first half an hour today, we've had an extended trade setup, guys, because just the quantum of news flow, Fed, budget and the stocks in focus was just so high that it becomes very, very important to say that.
My point is that when there is so much uncertainty and so many factors, you would perhaps expect a bit, and that's what the implied open is showing you. Let's pull that up. You're seeing a muted start because people are waiting to see how things are panning off, and look at that implied open even lower now. So there's going to be a bit of wait and watch to really see what's panning out. And as much as people have been saying that this is an interim budget, it's a vote on account, yes, technically it is. Technically, a pre-election, pre-general election budget, the government at that time has to just pretty much put out something to keep the finances running. But that's not what we have seen playing out, and that's something we have to remember. If you go back to 2019, that was when you had at least two big changes that were announced.
Right. So that's, of course, all that budget talk. But Agam, very quickly, two sectors, like we said, that led the way up. Yes, it was banks and autos, both having a phenomenal run. Autos, again, in focus this morning, beyond the budget. It's the auto sale numbers that will come rolling in as well. Anything in the auto pack that looks constructive at this stage? I mean, have you sort of picked up on anything that is eye-catching in that sense?
Yeah, so some very interesting moves coming in yesterday on Tata Motors and Maruti Suzuki, where, if I'm not mistaken, Tata Motors market cap has taken over Maruti Suzuki. And these are the two big names which are going to be in focus. I reckon that to a certain extent, the volumes numbers will be factored into the markets. I think it's going to be interesting to watch whether or not we can in fact have some announcements which may perhaps have an indirect implication on auto companies, and because on the back of that, we certainly will be keeping an eye on both these behemoth auto behemoths going into trade today. But we are, as we move in, let's get an expert view and an expert point of view and as to how they would in fact navigate markets today, and not only just today but also through the course of the next few sessions. Well, we have Milan Vaishnav of Gemstone Research who's joining us on the show right now. Milan, good morning. Thanks for joining in. It's going to be an interesting day of trade, to say the least. How are you placing your bets as far as the benchmarks are concerned? If not on an intraday basis, then perhaps positionally?
Yeah, Agam, good morning, everyone. See, the reason is that I'm a little skeptical on markets today is that going strictly by the technical terms, what we have today is an vote on account, or rather an interim budget, which is more commonly referred to as. And generally speaking, there is no major announcements that should be expected. However, if we look at the history in 2019, this government had presented an interim budget or vote on account. And they had some important announcements, and this is precisely what the markets are expecting today. Now, that being said, there is immense volatility that we are seeing, and this is very much harmful for a retail trader, where the markets are down by 400 points, up by 400 points, down by 200, and then up by 200 points again. So I think the best method to approach this market for a retail trader is to very patiently wait until a directional trend emerges in the second half of the session, and then take a call rather than mindlessly participating in the very, very volatile move that can happen in the first half.
Okay. So Milan, based on that, what ideas do you have in terms of strategies and structures that you're employing in the markets today?
I will have a little conservative approach here. To begin with, I would suggest that one should stay away from the markets. There is no need to compulsively trade the index. There are rest of 199 trading days out of 200 where you can take a more informed and call based on more solid analysis. But still, if you have to trade today, I would go with a long straddle. I would buy 21,800 call and put for 8 Fed. At 215 and 249, I'll be buying call and put of the same strike price, that is 21,800, and that would result in a net premium outgo of around 464 rupees, that is 23,200. Now that's a maximum loss that technically I can occur on this trend. The logic behind there is that the markets will stay volatile, but after that it will take a sharp move on either side, and that's where this strategy will come into play. This will have a break-even of 21,300 on the lower side and 22,294 on the higher side. Now, this is a limited loss and unlimited profit strategy, and the maximum loss can be around 23,200. However, I would add another layer of safety here that by 2 trading days, if clear trend doesn't emerge, then you should limit your losses by 10,000 rupees. If your loss is at 10,000, you must move out of this trade.
Okay. Milan, I believe you also have one more from the banking space, if I'm not mistaken. Can you tell us about that idea as well?
Yes. Now, despite the kind of reactions that we might see to the Fed commentary, which I don't personally read too much into that, I have a bull call spread on HDFC Bank. The recent reaction to the numbers have given us an excellent opportunity to enter the stock on a positional basis because the long-term fundamentals remains absolutely intact. I expect the stock to test 1550 levels over the next couple of weeks' time. So therefore, I would like to go with a call spread. I would buy 1470 call, 29th Fed expiry, and sell 1550 call for 29th Feb expiry. I will be paying a net premium of 25 rupees. That would be my maximum loss. That translates into absolute sum of 13,750. The maximum profit potential in this trade would be 30,223. However, this max loss of 13,750 can still be kept limited by keeping a stop loss of 1410 on the stock.
Okay, so that's a very interesting strategy on HDFC Bank, and remember that it has actually begun moving upwards, and I reckon that Milan is looking to take advantage of that up move coming through for HDFC Bank. A bulk of the gains for both the benchmarks, the Nifty as well as the Bank Nifty, were also provided, in fact, by HDFC Bank. So we'll continue to keep an eye on that one. Well, on that note, Milan, thanks for joining us and taking us through your views on the markets and also giving us a couple of trading ideas. And with that, it's back to you, Tamanna.
Yeah, thank you for that, Agam. It's going to be an interesting day. So now, if you were wondering what were those visuals you saw on your screen while Agam was speaking of, cars in a convoy, that was the finance minister leaving from her home for North Block, where the budget will be presented in just some time from now. You must be probably seeing that countdown on your screens as well. Now, the question is, what will she say? I have to say this time round, both the finance minister and the prime minister in his budget session customary address have sort of played down what we will see today. Does that mean this is going to be a ho-hum budget? Unlikely, because remember, if it's before the elections, it's also an opportunity to lay a roadmap for what the policy push is going to be. Janani is joining me now from North Block, where the budget will be presented shortly. quickly. Janani, what are you picking up from your sources? I know now the budget document has gone in for printing, not much is going to come out of it. But are we expecting some major changes, at least, for example, to sweeten the new tax regime?
We're a few hours away from the Finance Minister Nirmala Sitharaman announcing the interim budget in the Parliament today. And here's what to expect ahead of the Finance Minister's speech. First up, an increase in allocation towards subsidies. Now, particularly the food subsidy could see a rise, considering that the NFSA-led PMGKY Act has been extended, as the Prime Minister announced, for the next 5 years. So this will be figured in the outlay already. We are also seeing that the petroleum subsidy could be increased, considering that 200 rupees per cylinder was increased for Ujjwala beneficiaries in October 2023. Fertilizer subsidy, however, may not be increased as much, might retain the similar allocation as FY24, or rather even lesser, considering that the global fertilizer prices have simmered and not a lot of volatility is expected in FY25. But there's also one of the most anticipated ones, which is, of course, the tax-related incentives. Whether the government will be adding some more sweeteners to increase the adoption of the new tax regime is something to be watched out for. Of course, currently, those with the income levels of up to 7.5 lakhs do not have to pay income tax. There's also a standard deduction in place. Whether the standard deduction would raise, or perhaps the limit would be altered to make the scheme sweeter, is something that we'll have to watch out for. Talking about schemes, of course, the PM Suryodaya Yojana. Now, if you remember, the Prime Minister had promised 10 million household solar connections, solar rooftop connections to be sure, and this would, of course, have to be figured in this year's outlay. Despite it being the interim budget, there's also expectation that the FAME 3 scheme might see a renewed outlay, considering that the government's push for renewable and clean energy, EV vehicles might get that push. That is the expectations that we're hearing so far. Back to you.
Right, that of course is the expectation and anticipation as we await the budget, and that is the Finance Minister walking in, getting set to unveil the big budget that we are all expecting. But there is news flashes on your screen. While the focus for the last couple of weeks has been about Zee and Sony, we believe that Disney's India valuation now is down to $3.9 billion. Really a big win-win for Reliance Jio. Let's not forget that this was valued at about $10 odd billion. The street last week was expecting that to come down to half, but this is clearly more than half. Disney has reached a pact to sell 60% of its India unit to Viacom. The India business now is valued at $3.9 billion as per the WSG report. So it's going to be an exciting morning. Lots of news, lots of earnings, lots of auto stocks, and lots of smaller sectors as well that you'll be focusing on. And of course, on the broader and the bigger picture, the focus of the ministry will continue to remain on women, youth, and infrastructure capex. So those are the 3-4 big expenditure pointers that the markets will be awaiting when the Finance Minister talks about the budget. Well, in the meantime, a quick check on the GIFT Nifty. It is indicating to a flat start, and that's what we're expecting. But Neeraj is standing by with more in terms of expectations. What is expected from this budget? Neeraj, take it away.
Yep, a few key questions that the markets will seek answers to, and this is just the broad brush. I mean, the obvious numbers are about the fiscal deficit and the path of fiscal consolidation being followed or no. And while that has happened, is the focus on capex sustained, or does that see a bit of a compromise? Maybe necessarily so, but does that see a compromise at all? If both these things happen as per market expectations or better than that, then that actually be a win-win. So that is to watch out for, and I'll come to that. The other aspect, of course, is that will the budget focus on job creation, because that's been the big talking point. CAD, not a part of the budget, but is there a reference made to that? Because we are in a Goldilocks scenario as far as the current account deficit for India goes. Will the moderation of subsidies for FY25 be more than what the street is working with? Because that could also add a little bit to the kitty from on the government side. And then the other aspect is that will the central government borrowing number be lower? So these are essentially the key questions that the market will be working with. Now, I'll try and get to some specifics. So what to track, right? That's the most important thing. We are talking about there are maybe 8 or 9 items, but the 3 most important things. The fiscal deficit number for FY25E, will it be lower than 5.5%? 5.5%, or lower. So I think that's one key thing to monitor. The government capital spending as a percentage of GDP, is it 3.3% of the GDP or lower? Hopefully the market doesn't see a number which is a significant aberration from this. And the revenue expenditure, is it lower or not? Because thus far it's below, it's about 12% of GDP. It's tracking about 12.1% for FY24 expected versus the pre-pandemic number of 11.1. So can we actually move towards that? That is something that the market will be watching out for. And divestment proceeds, that one place where we haven't been able to make a mark this year or the previous year are the divestment proceeds. Currently, the divestment proceeds are about 14.5%, only 14.5% of the budgeted estimates. What are the estimates, Billy, for FY25? That's the other key aspect. And last but not the least, what will please the market, guys? Fiscal deficit number at 5.5% or lower would be in line with estimates. If it's much lower, sure. Realistic assumption of non-tax receipts in the budget math, like I said, below 600 billion currently. Will they estimate 600 billion or more? That's the key thing to watch out for. Capex growth, is it 10% or is it more in a year of fiscal consolidation? So that's to be watched out for. And the gross borrowing number, the market is currently working with a number of 15.2 trillion. It will be lower than 15.2 trillion. That's the key thing. But frankly, fiscal consolidation and the borrowing numbers, etc., all get clubbed into that. And the capex plan, I think those are the two most important things that the budget and the market will be watching out for.
In fact, those are the big pointers that you want to watch out for in today's budget. Neeraj did indicate that a number of 5.5 is what some expectations are. The base case number is 5.2. The optimistic case remains at 5.5% of GDP. The finance minister has indicated that they want to reach a target of 4.5% in FY26. So 70 basis points this year, next year will also, of course, help us get to that 4.5% number in the next year. But let's not forget India's inclusion in the JPM index is going to pull in flows of about $25 billion. So with that kind of liquidity, being an election year, there may not be too much disappointment, even if that fiscal deficit number comes in slightly higher than what the street would like. Beyond the number, I think what's also important, like Neeraj indicated, is the borrowing. Now, watch out for this one, because that is clearly what will drive the bond markets and banking stocks. So while that GDP fiscal deficit number is critical, even more important is going to be the roadmap and the net and gross borrowing number that gets put out. But there'll be lots of sectors to watch out for. The trust on rural, the trust on capex would mean sectors like consumption, infrastructure, railway, defense, the list is extensive, will be an important space to keep an eye out for. Tamanna is joining us with more on that. Tamanna?
Well, we always look at the budget here from the point of view of the finances of the government, and that's what it technically is. But the fact of the matter is, for the last several years, the budget has also been a statement of intent. And that has been driving the markets as well for the last year or so, where you've seen huge government expenditure move the markets. Now, 5 key questions to look at ahead of a budget, which is in a sense going to be a pre-election budget. One is, will the pace of the government's capital expenditure slow down? It's expected to slow down from a 33% odd increase last year to about 8 to 10% increase, although on a higher base. What does this mean? All of that push we've been seeing on railways, on building roads, etc., will that get hit? And then what happens to those stocks and sectors? Also, will welfare spends increase significantly? There is an expectation that the PM Kisan scheme, which gives 6,000 rupees to farmers, will be increased maybe up to 9,000 rupees. What will that cost? Remember, your food and fertilizer subsidies already 90% of all your subsidies. How much headroom is there? And can the government really resist increasing these subsidies ahead of an election? If so, what does that cost, and does that come at the cost of capex? These are some of the things that the street will be watching out for. Apart from this, expectations of a rail capex boost, and I must talk about it. You already had a record capex for rail, a record budget for rail last year, 2.4 lakh crore rupees. There were these reports it will be bumped up to 3 lakh crore rupees. Truly and frankly, the spending room isn't there. So what happens to those sectors and stocks, to what extent does that work continue? Infra spend is also a big question. Usually infra spend is muted during an election period and will possibly be muted till next July's budget. Your new roads, your new capabilities may not be sanctioned immediately. But what this budget's indication will be is how much is this government willing to spend on infra, and of course on the basis of the fact that it's expected to continue after 2024 as well. The big question then, is there room for a rally in some of these stocks that have been fueled by government spend? And I'm just going to pull up 4 sectors with their biggest gainers that we have been seeing, because these really are the sectors that have been boosted in the last year. These are year-to-date numbers as of yesterday. So look at railway stocks in the last year. In IRFC, they're 429% up. The railway budget and that number will be looked at very, very closely. The other sectors that are on top of mind right now, defense is another one that we must see. We're seeing this in practice, actually, a huge Make in India defense push. Look at Masgard up about 188%. We've picked the biggest winners in these sectors. And renewables, one way or the other, the renewable push is here to stay. There is no question about it, and you've been seeing that story play out in this space as well. The last one I'll come to perhaps is infra, and IRB infra is one we should watch out for. All of these in this pack have seen a big boost. The question is there enough room to run up? And that's what we'll be watching. Yes.
Lots and lots of sectors, Tamanna, that we're going to be tracking, be it green, clean energy push, be it the infrastructure push, be it railway, defense. Consumption also will be in focus, with the government's focus on farmers, women and youth. Tamanna indicated that the PM Kisan scheme could be going up from 6,000 to 9,000. Talking about what that would cost, it's only about 0.1% of GDP. So small tweaks like these could be expected. While part of the market believes populist measures could be on the anvil, let's not forget that this government clearly is not very concerned at this stage, and historically as well, they've actually stayed away from doing anything that's very populist in nature. But lots to talk about. We've got Chakri Lokpriya, managing partner of Red Strawberry LLP, joining in. Hi, Chakri, good morning. And we've also got Sudeep Shah, Deputy VP, Head Tech and Derivative Research of SBI Cap Securities. Chakri, hi, this is Samina joining in. We've got you in a morning when the markets are enthused, maybe excited, or just looking at what the budget has in store. Historically, we have seen that the budget and market relationship doesn't go beyond a week, if not less. What is your expectation this morning? How important is this as an event for the markets?
Good morning, Samina. Thanks for having me. You're absolutely right. The impact is always only short term. And I think 2 or 3 things, as you rightly pointed out. One is, I think probably a continued emphasis on capex, rural and fiscal discipline. Now, capex, mind you, capex also helps the rural economy because you have construction workers from the rural side, and therefore it increases rural income. In a year when the monsoons were not great, and therefore income of rural went down, an increased capex or may continue to maintain a capex thrust over there will help. Second, I think the fiscal deficit would largely be no big surprises. The country's balance sheet is in good shape. And third, I think, all the defense manufacturing, the thrust is likely to continue. But the stocks have run up, but there's still probably it's going to be not much of a negative surprise.
Before we talk to you about sectors, the big number to watch out for will be the fiscal deficit. The roadmap, of course, is to get to 4.5 by FY26. The street is spread between 5.2 to 5.5. 5.5 being a little optimistic, but of course, the market believes that you've got that $25 billion coming anyway this year with India's inclusion in the JP Morgan bond index. How important is this number going to be for the street, and what do you think the street is penciling in at this stage?
I think a number about the 5.5, even if it's like 5.6, 5.7, slightly higher, it's unlikely to really looked upon negatively. Given the context, where the world economy is and where the Indian economy is, and the outlook for GDP has been revised up. So which also kind of entails higher tax revenue going into next year. And that can take care of the deficits largely around that number. So I think, rather than having a point estimate, a range around that 5.5, give or take, would be viewed positively by the market.
Okay, Chakri, stay on. Get in Sudeep Shah from SBI Caps as well. Sudeep, how are you trading the pre-budget morning?
Good morning, Neeraj. While we are discussing about this pre-budget trading, it's largely like an interim budget now. And I've just seen the last few interim budgets, there has not been any major volatility. Now, average returns, if we see on a budget day, it's around 0.8% negative, while for the Bank Nifty, it is 1.5% negative, 1.5%. But the volatility on a budget day is somewhere closer to, say, 1.5% for Nifty and 2.5% for Bank Nifty. So I feel almost, if we see the Nifty levels now, on the upside, 21,850, 21,900 zone will act as a resistance. Now, this is a pending gap which was there on 16th January. So I feel that zone on the upside will act as a resistance. And on the downside, if we see 21,500, 21,550 zone will act as a support, because there is a confluence area of the 10 and 20-day exponential moving average. So I feel that largely the indices would be trading in this range between 21,550, 21,500 and 21,850, 900 on the upside. Bank Nifty, if we see, the zone of 46,300, 46,400 will act as an important resistance, because the 20-day exponential moving average is there, and every time we have tried to hit that zone, there has been some selling pressure from higher levels, and Bank Nifty out of both the indices has been weaker of the lot. So if we see in the last few days, we have seen days of 500 points positive movements and 500 points negative. So there's a lot of volatility that has happened, but this zone of 46,300, 46,400 will definitely act as some kind of a resistance. And on the downside, the 10-day exponential moving average zone of 45,700 will act as a support. So largely, initially, till the budget is announced, interim budget is announced, this could be the range. And beyond that, if we see Bank Nifty, if we look at the open interest buildup, largely 46,000 as well as 46,500 calls are having maximum open interest, while on the downside, on the puts, 46,000 and 45,800. So if we try to adjust the premiums, the range for the Bank Nifty for the entire day could be between 45,550 and 46,500. So roughly around 900 point range, then it could be very choppy. And one thing I would just like to share with all the viewers is that while the volatility index is right now around 16, say 16.2, but what could happen post the budget announcement is that we could see a crush in the volatility, and even if there is a momentum in Nifty as well as Bank Nifty, the options might not move accordingly in sync with the indices. So option traders need to really be careful while the budget is being announced or an hour later on, because the volatility, the option pricing would adjust itself with the volatility.
Yep. All right, just a few seconds for the pre-open, and we'll keep a sharp eye on it. Meanwhile, Chakri, very good morning. Tamanna here. Is this going to be a wait-and-watch kind of morning? Are you going to be focusing on whether there is continuity in the quantum of spends? Intentionally, policy-wise, I think it's a clear shoe-in that there will be continuity in terms of infrastructure build-up, capex, smart cities, etc. But quantum and direction is what matters, and is that something you will be watching?
Good morning, Tamanna. You're absolutely right. In fact, that's going to be the key factor. There might be a little bit of volatility on the announcement, but largely the direction, which is capex, infra, and rural. I think rural is going to be quite important going into not just the budget, but even after. So I think just the direction is important, because if you rewind back actually to 2007, when India was a $1 trillion economy, then basically Nifty represented pretty much the 95% of the market cap. Today, it's at about $3.5–4 trillion market cap. Nifty represents only about 40-odd%. So that shows you how new sectors, new areas, which are largely in manufacturing, have also contributed to the growth.
We're seeing very initial pre-open rates and let those settle, but looking positive now. For now, we'll give it a few minutes there. Let's quickly, Sudeep, get your picks for this morning. You're on mute. Yeah, there you are.
Yeah. So the first pick is Exide Industries. In the last few days, we have seen this battery stocks doing really well. And if you look at Exide Industries, the long-term and as well as the medium-term charts are very positive. On the monthly charts, we are seeing a higher top, higher bottom formation for the last 4 months. And if we just drill down to a shorter time frame on a daily charts, last 10-12 days, we had seen consolidation in Exide between 310 and 325. And yesterday, we saw a breakout of that consolidation. And the stock is sustaining above its 10 as well as 20-day exponential moving average, which largely represents short-term momentum. So on this front, what we feel is that from the current levels, Exide Industries can be bought with a stop loss of 326 for a target of 355, 360 on the upside. The second pick would be L&T Finance. Now, if you look at the charts of L&T Finance in the last 15 to 16 sessions, the stock was doing nothing. Actually, it was trading in a range between 160 and 170. Yesterday, we have seen a breakout of that consolidation range where the weekly as well as the monthly charts are very strong, and this is trading above all its important moving averages. And we have seen some substantial long build-up in terms of open interest also in L&T Finance. So we feel that this stock could be bought at the current levels with 169 as a stop loss and 182 as a target on the upside.
Okay, now some stocks, and we're seeing some movements. So Paytm, for example, is down and out in the session right now. Look at that stock. The pre-open session still not settled, just early days, but 20% lower. Should mark Shree Cement, should mark some of the others which may have moved, Mankind Pharma, Ajanta Pharma. I think we'll see some serious movements in some of these stocks. Andrew Holland is with us as well, CEO of Indus Capital Public Markets. Andrew, while the budget is the big story, we can't take our eyes away from 197 Communications or Paytm. It's a sharp downtake and an action which not too many people would have thought would happen so soon has happened as well. What do you make of this? What does it mean for shareholders of Paytm?
It's difficult to say on this one, Niraj. I think there's a conference call this afternoon, and I think we'll get more clarity then. So I think until I hear what the management has to say, I think we're all kind of firing in the dark. Yeah. Yes, from what the RBI have said, it looks dire, but I don't know what they can do about it. So let's hear from the management first. I think we've seen one side of the story. Let's hear the other side.
Fair call. And yeah, Andrew, we'll get the big picture too, but just that at the start, when a stock like Paytm, so much in news, down 20%, or pay cognizance that. Chakri, can I get you in on this as well? Because this will be the big talking point, and we're going to talk about the budget, we're going to talk about earnings as well. But do you have thoughts on what does somebody who's an existing shareholder of Paytm think about this whole issue, and what could it mean going ahead?
Indeed, Neeraj, I think, the concerns for Paytm have been building up over the last several months, and on this issue, which is now this issue is unlikely to go away anytime soon from the way RBI circulars have come out one after the other. And in a business which is largely a pass-through business, which Paytm's business model is, third-party businesses could dry up very quickly, and that impact, and therefore the volumes that Paytm enjoys can get hurt until there is clarity and also probably beyond. So for existing shareholders, clearly it's a tough place to be in, and clearly to remain on the sidelines for anybody thinking of, I would stay on the sidelines for the stock.
Right. Andrew, of course, we talked about Paytm with you, but change gears. Let's talk about the budget. How important is this event going to be? Let's not forget it's a vote of account, and let's not forget that the markets usually either discount this or move on very quickly post the event. How much significance are you giving this budget as an investor?
I mean, as long as there's no surprises, I mean, obviously negative surprises, I mean, positive surprises markets always like anyway. So, you know, as long as it's more of the same, the direction's the same, I think the market will be okay. But I think that quickly thereafter, we'll go back to, you know, kind of more global as well as local kind of factors which will drive the market. Earnings season hasn't been as blockbuster as I think most of us were hoping for. It's been okay, but nothing great. And obviously, with the Fed saying what they said last night, interest rates are not likely to come down so quickly. Getting that Goldilocks scenario, the markets have been looking forward to, not just here but globally as well.
All right, so interesting morning. Paytm, of course, being punished. We talked about how that would be one stock to stay away from. There's a conference call with the management 3:30 this evening, and maybe some clarity there. Meanwhile, look at what's really moving pre-market. Dixon Tech about 3.5% up in your pre-open session. So is Mankind Pharma, a good set of numbers over there. Shriram Finance, meanwhile, doing quite poorly, as is Max Health and Jubilant Food. So you're seeing quite a bit of play over here. I want to come quickly to Sudeep on Dixon. Decent numbers, good numbers, as well as a policy push with import duties on certain mobile components getting cut. Any views there on Dixon? And I reckon, what would you say on Paytm, if anything, Sudeep?
Let's start with Dixon first. Now, if you see Dixon, the charts in the last 7 to 8 months have been consistently constructive, and that's quite positive. Now, the Dixon, if we all know, in the last, say, since November 2021 till Feb 2023, it was on a continuous downtrend from 6,000 to 2,500 levels, and it in the last 1.5 years, it has change its gears, and now the charts have, if you see the monthly charts, a lot of higher top, higher bottom formations, as well as in the last 1 month, we have seen some consolidation, and post that these good numbers are leading to a gap up, and we feel that right now the stock is in a complete uptrend, and any dips towards 6,000, 6,050 zone should be bought with a 5,900 stop loss, and we feel that very soon this stock could hit a new all-time high. And so if you see around 6,400 could be the first level, and then the levels of 6,700 could be achieved. So overall, we are quite positive on this stock. And if you look at Paytm now, it's a complete contrast chart, and since the listing times, we have seen the stock completely plummeting. In between, we have seen some kind of a rebound, but even in that rebound, the stock has never recovered more than 38 to 40% of the entire fall from listing. So overall, it's in a downtrend, and today's move is reaffirming that. And I feel investors or traders should completely stay away from these kind of names or trying to bottom fish here. But if investors are stuck, any rises post today's say the circuit opening or in the next few days should be used to exit this counter.
Right. Andrew, I'll come to you with two sectors, railway and defense. The last few months have been phenomenal for some of these stocks. And even the stock performance, the earnings have been rather impressive. Do you think there's anything that could come out in this budget that could fuel the next leg of rally for these stocks?
I think the budget would have to actually confirm that all the expectations in the share prices and the earnings expectations are going to be driven by the capex. So, if you take the budget as a whole, obviously, energy, renewables in that respect, defence and railways will be something that the government will always spend money on. It depends if they divert any of that and say something like affordable housing. Maybe they're going to look at that again to kickstart that, in terms of getting the bottom end of the housing market moving, not just the top end, which we've been seeing. So It's a fine margin. I just think the market's baked in, strong capex by the government across all of these sectors, and obviously, order flows will come through, and the share prices or the stocks are moving ahead of this expectation. So, again, you can only disappoint on the downside here. I'm not sure there's any extra you're going to get from the budget to propel these stocks higher in the very short term.
Okay, so pre-open rates have settled. Thanks for that, Andrew. Pre-open rates have settled, and seems that Paytm will do what it does. Mankind Pharma, Ajanta Pharma will do what they do. GMR Airports on the poor numbers will also start off weak. What will do well? Maybe cement. Just before I get to cement, this is live footage, and well, what is in this bag is something that will be the cynosure of everybody's eyes.
I just want to talk about the Bahi Khata, because this is important.
We have 30 seconds to do that.
30 seconds. Traditionally, the finance minister used to carry a briefcase. This one changed that to a red Bahi Khata, which is the traditional Indian ledger book. So that shot is important.
So much for modernization, huh?
No.
Shouldn't we move to an iPad?
It's about, but she reads from a tablet inside the parliament. This is to show that we are moving ahead, but we're sticking to a traditional route. So a lot of symbolism in that red folder. It's the Bahi Khata that you're saying.
Just for whatever it's worth, Bahi Khata is a startup which is valued quite significantly as well.
Trust me,
so keep that in mind.
always link it to stock on the radar.
Yeah, most certainly. Okay, let's focus on cement stocks as well. Mahika is here with the brokerage views on Ambuja as well as Shree Cement. Mahika, very quickly, what are brokerages saying?
So I'll start with Ambuja, and it's a positive overlook. Morgan Stanley maintains an overweight, and they say that Q4 will see the Sanghi integration come into full effect, and they're betting on the long-term market gain, which will be supported by expansions. Citi also retains the buy, and they say that there is a favorable swap ratio for Ambuja, which was the merger with ACC. Novuma also has retained a buy rating at a price target of 609, and they've also mainly focused on Ambuja's new guidance to achieve an EBITDA per ton of 1,450 to 1,500 in the next 3 years. Then we have Shree Cements, where Morgan Stanley has maintained an equal weight, and they are betting on the strong volume growth outlook on the rising share of premium products. We have Jefferies that also has a hold rating, and they've spoken about the cement capacity additions that Shree Cements aims to make. And finally, we have Motilal Oswal, which has also maintained a neutral rating, and they have raised the EBITDA estimates by 3% for FY25 and FY26 each.
Right, cement is, Mahika, thanks for that. It's going to be the big talking point this morning for more reasons than one. Beyond the budget, stellar numbers being posted by the likes of Shree Cement. If you can just take a look at that, the stock performance in the recent few weeks or months will be interesting to see. But the commentary as well coming from the management has been solid. So 3.5% gain is what we are picking up on that. Along with Shree, you'll have your Mankind, your Ajanta Pharma. Those stocks will be in focus. 197 Commune, Dixon Technologies, IRB Infra. That could be another one that you want to watch out for. Westlife, Jubilant are some of the other names that will be drawing our attention in early trade as we run into the budget very soon. IRB Infra 4% move after a 25% gain the stock has seen over the last few weeks. Dixon also not looking too bad, 3% higher. But yeah, a minute to go. I think sideways trade is what we'd be expecting at least till 11 o'clock.
Absolutely. But I'm just going to digress because I'm quite excited seeing those pictures of Finance Minister Nirmala Sitharaman. This is going to be her 6th budget. She is now at a record number of budgets. She is the first full-time woman finance minister to have presented these many budgets, and definitely an exciting one because she's taken the nation through COVID, kept a tight check on fiscal deficit despite what was expected, and we'll wait and see if she can manage to do that. So a lot to watch out for, Neeraj, and perhaps what she says today is something that may not play out immediately in the markets, but will set the flavor for the next several weeks.
Yeah, and hopefully if it has an immediate impact, it's a positive one, Tamanna. So watching out for, hoping for that, if you will. But 27 seconds left for the markets to kickstart trade. Our guests are with us. We haven't been able to ask Andrew about all the things that he's watching out for, not Chakri about the expectations from the key sectors. But we'll do that in moments from now. For now, as Samina and Tamanna have stated, focus on the stocks which will react on numbers or otherwise. The start we'll watch out for also what some of the auto names and pharma names are doing and whether they're taking off from where they left off yesterday. Here come the first trades on the market open. Okay, we'll get them in a moment. Yep, it's a flat start, 21760. Let's get the Bank Nifty and see if HDFC Bank is participating. Maybe, not too much, but the Bank Nifty is up about 1/3%. The mid caps and small caps, which had a very strong day yesterday, flattish start for the mid cap space, and the small cap index about 0.5%. By the way, viewers, this is not too bad because Asia is very, very mixed after what the US markets have done yesterday. Bring up the heat map. We are flat too. Bring up the heat map and let's see what's moving and what's not. On the downside, not too much. Wipro is the top loser. So on the gainers, Tata Motors, Eicher, Maruti, Hero, M&M. It is an auto day, as was an auto day yesterday. Yes, BPCL is the top gainer, but the screen right now belongs to autos. There is, yes, the 5 of the top 6 performers are auto names. There is an Adani Port, Ultratech participating. So not too much of a cement flavor, but nevertheless, we're seeing some bit of moves there. So the large caps are very, very muted. Suffice to say the action is at the broader end of the spectrum. So I'll quickly hand over to Tamanna for what's happening at the broader end.
Yep, absolutely. And, if you tuned in this morning, you would have seen autos on our list of stocks to watch. Good numbers are expected in this month. But I want to quickly take you through some of the other very, very important stocks that we're watching. And, we can't avoid Paytm on that list. Sort of a jolt from the Reserve Bank of India after market close yesterday, and you already saw that stock get beaten down in pre-open. It's continuing at a 20% dip, so it's a lower circuit kind of a scenario. That rocky boat is expected to continue till you have some clarity from the management in a con call at 3:30 later today. What's happened? RBI has stopped Paytm Payments Bank from accepting any money. Dixon Tech is the other one that I would keep on the radar. So earnings impact has been positive. They also will have some kind of relief from lower import duties on mobile components. So Dixon is up about 5.5%. We talked about Godrej Consumer, where you've seen the FMCG space quite muted, the consumer space quite muted. Godrej Consumer, relatively good numbers. The stock about 9.5% up. Westlife, on the other hand, may not have the same kind of a story. And you're seeing the McDonald's seller, the burger seller, down about 3.5%. They've had some issues with same store growth. Their SSG numbers have been poor. Floods in part have been the reason for that. So some of the stocks on our radar this morning.
The stock of the morning, one of the stocks of the morning is Dixon Tech. The stock is up and about, sharp up move coming in on the counter on back of a pretty solid performance being put out by the company. We have with us Atul Lal, Vice Chairman and MD of Dixon Tech. Atul, thank you very much. This is Samina. Thanks for joining us. I know you have a meeting, so we'll keep this short, we'll keep this quick. First up, you want to walk us through the fantastic quarter you've had?
Well, it's been a good quarter for us, undoubtedly. We have grown in revenues by 100% and more than 90%, almost, and in profitability. So indeed, it has been a good quarter. The order book, particularly in mobile, telecom devices, the new contracts bagged in the IT products looks healthy. And even in other businesses, except for one business of lighting, the business looks good, yeah.
Mr. Lal, good morning. Neeraj here. The note suggests that two things have happened. One, integration that you are seeking. So one, that the guidance, you've refrained from giving a guidance. So is there a specific reason for that to happen? And two, just a word on margins as well, because one of the notes seemed to suggest that you're looking to vertically integrate with PCBA for industrial products which can aid margins.
So we are not giving any specific guidance, but we are assuring all our stakeholders that the growth is going to be extremely aggressive. We are sitting on some kind of an inflection point, a sweet spot. We are into 9 businesses and in lead positions. So the growth, please be rest assured, is going to be very, very good. As far as so now is the time for Dixon. We strongly feel that not only grow horizontally in different domains, but also work on deepening the value addition. So what I had stated in the earnings call yesterday was that we are very seriously evaluating project on displays for mobiles and for IT products. The discussions are on with the potential partners. Let's see how it pans out. The other foray is into the EMS domain, wherein the margins are higher. And that is for PCBAs and also for box building for industrial electronics for global markets. So we have set up a team. We have received some significant RFQs. Let's see how it pans out. So these two would also be now the focus areas.
Okay. Mr. Lal, so revenue growth, formal guidance notwithstanding, would you reckon that FY25 could be a year of growth which could be similar to FY24 in color, if you will, and could it be accompanied by better margin profile as well? Also, maybe a sense of any new logos that you're adding. I know you refrain from giving names usually, but is there something on the anvil?
So undoubtedly, the growth in the revenues is going to be in a similar range, what you just mentioned. As far as the margin profile is concerned, because largely the growth is coming from prescriptive EMS business, I don't see an uptick on the margin. It's going to be in a range of 4.2%. And as far as the new customer acquisition is concerned, yes, we are on the anvil of signing with a couple of large brands in mobile. And also the discussions are on with some more large global brands in IT products. In telecom devices, we have an extremely strong order book from our anchor customer Airtel and also the largest mobile operator. So the order book looks good, yeah.
Good morning, Mr. Lal. We're also speaking to you. So a couple of things that are exciting for Dixon this morning. Of course, your numbers, but it's also the budget. And it seems that whatever was on your wish list, maybe one of them got ticked off yesterday itself with import duties cut from 15 to 10% on some mobile parts. Can you explain to us the impact of that for you? Is that something you will pass on? How does that play out?
So undoubtedly, it was a very, very significant positive announcement by the Ministry of Finance yesterday. Yeah, it was a big positive surprise for us. And this has been the ask of the industry for quite some time, and the government has responded to it extremely positive. So there has been a reduction on various components, and also there is some clarification on custom notifications pertaining to display. So these are very, very positives. And even beyond mobile phones, there were certain clarifications sought on custom duty exemptions that were there, and there were certain doubts around it. So those exemptions have been extended. So undoubtedly, it's a boon for the industry.
Salal, very lastly, I know you've got to run, but one last question. You talked about the cut in import duty, but anything else that, is on that wish list that you're hoping could either come through in this budget or the full-fledged budget in July?
So the policy intervention and policy framework for electronics industry in the last 2-3 years has been amazing. The government has rolled out PLI schemes, the PMP programs, the SPEC scheme, duty intervention, non-tariff interventions, quality control orders, semiconductor policy. So the package has been rolled out, and now the industry has to respond. However, from the industry side, also what we are requesting is that to deepen the value addition, we need a policy intervention on the non-semiconductor component side. And when we're interfacing with the government, we see their response to be positive. So this will deepen the value addition for electronics manufacturing in India. And also, there is a possibility that when these footprints or non-semiconductor components are set up in India, in these components, India will become a part of GVC, the global value chains. So that is what we are expecting. And we are getting positive responses.
Okay, Mr. Lal, we leave it at that. Thanks so much for taking the time out and being with us, and all the best for the year ahead.
Thank you so much. Thanks very much.
That's Dixon Tech, strong numbers and doing well. Andrew, Chakri, Sudeep are still with us. Gentlemen, sorry, but just that kind of a morning, too news heavy, so couldn't do justice to the time, but we'll still try and make good. Andrew, I'll come to you first. On on the commentary that you hear from companies like Dixon, I mean, margins notwithstanding, they've grown at a breakneck pace for the last few years and continue to do that. What happens to some of these EMS plays? There are now 8 or 9 listed. How constructive or not constructive are you on this space?
Very. I think, Niraj, I think we just need to say that we're at the beginning of the runway here for the whole electronic manufacturing sector. It's got a huge kind of 5 to 10 years of growth. Now, in between time, you're going to get usual things about margins and this and that. It's the same as the telecom sector. If you go back and look at Bharti, it has, kind of ups and downs along the way. But see where it is today. And I think that's what you got to look on the long term here for this electronic manufacturing sector. If the government continues to push this either through more kind of incentives and PLIs, it's going to be a kind of investment horizon. If you've got 3 to 5 years, you're going to make a lot of money from this sector, and there's plenty of companies, as you just said now, to kind of to invest in. So that's the good news. So you just have to kind of dip in and keep there for the long term.
All right, Chakri, let me come to you on a very specific budget-related point. Also, auto sector is completely zooming this morning. But when we, Chakri, back to budget, when we talk about the push of the government in terms of Make in India, and that's a theme, taking off from what we're seeing with Dixon. Dixon's growth is also part of the larger Make in India rubric. We're seeing that with defense stocks. How would that play out into specific investment decisions for you? What would be, say, your top 3 companies that would ride the Make in India wave?
The Make in India is actually impacting just about every sector in the manufacturing space. We just were talking about EMS as a space now, whether it's Dixon, Avalon, all these companies, they have both export revenue as well as the import components to make that export revenue. So that importing bit is the PLI schemes to replace it. And so that incentives is great. Second is, solar, renewable energy. A lot of the solar panels, manufacturing, EPC, the prices have crashed. Now Indian companies like Sterling Wilson can now compete with the global players, and the rollout makes it so much more feasible with the policies in place. Then third, if you look at including the other aspects of manufacturing, whether it's defense, in defense, the value chain is quite huge. Now, it's not, now if you look at a company like the Bharat Electronics, now this is a company whose margins have actually improved in the last couple of years, simply for the fact that they're moving down into higher margin, aided by the government's thrust. So we are seeing this benefit trickle down across various sectors.
Chakri, one quick question before we're completely out of time. I want to talk to you about auto at this stage. Tata Motors in particular has been zooming ahead, even ahead of the budget or the auto sales numbers. Overtook the market cap of Maruti only yesterday. And as a whole pack, actually, that sector has been doing well in terms of stock performance in the last few days. What's your view on auto, and is there any specific auto stock you're constructive on at this stage?
Auto and auto ancillary both will continue to benefit. Auto ancillary has a lot of the PLI incentives so companies like Motherson Wiring, they'll benefit right from the EV push as well as the PLI push. And second is, Tata Motors, you mentioned, it's a global story, it's a local story, commercial vehicles, passenger vehicles, strong lineup of EV cars, strong lineup of domestic budget cars, commercial. So it's there across the board. Its balance sheet has dramatically improved. So as and when the global economy also starts ticking up, now you'll have a dual engine. So Tata Motors still looks very good. TVS Motors in the two-wheeler space looks very good.
Chakri, we'll let you go on that note. Thanks much for taking the time out and being with us. Really appreciate. Andrew, just stay on because I just want to get an FMCG view here. But before I come to you on that, just want to mark Godrej Consumer, Dabur, amongst the two names which have had a really strong start in the session. On the back of that, a couple of others might be doing okay. I wonder if the FMCG index by itself is doing okay for itself. Sudeep, come in on the start that some of these FMCG names have had, and is there any that looks attractive from a trade perspective?
Neeraj, if we see this FMCG index today, it is up 0.5% to 1%, but largely both these names which you just mentioned have done fairly well. But apart from that, HUL, ITC is kind of sluggish. So that is the reason we are not seeing any major bump up in the index. But apart from Godrej CP, I feel one name which deserves a mention is Kolpal. Now, Kolpal, even while we were discussing about the rollovers, now rollovers also were very good in Kolpal, and the stock is in a completely upwards trajectory on a monthly as well as weekly chart. So there is strength building in Kolpal, and I feel very soon this also could break out on the way on the upside, and this looks good from positional perspective.
One very quickly, please, Sudeep. Take on Motherson Wiring, because Chakri spoke about it. That stock nearly 5% up. What do you like Motherson Wiring, and do you like anything specifically in the auto anch space?
Yeah, so if we come to Motherson Wiring, the stock has given a breakout now. It's a monthly breakout. Taken out all the previous swing highs around 65, 66 levels, and I feel the structure is very good from the current levels also till it holds 63. The stock could move all the way up to 78, 85 levels on the upside. May take a few weeks, but the trend is very strong. And one stock in the auto ancillary space which we like is Banco Products. Now, this stock has seen a fair bit of up move in the last several months, but the trend is still stronger here. It might consolidate from a short-term perspective, but looking at the monthly charts as well as the weekly charts, I feel the larger move is still there to be taken. And on any dip to 685, 700 zone, this could be bought for an upside of 800, 850 with a stop loss placed around 650 levels.
Right, Sudeep, thank you. Great having you on the show. We'll connect with you later this week, or next week actually. With that, Andrew, I want to come to a sector that you've been tracking and you actually quite like, is the tourism space. We saw numbers from Thomas Cook as well. I know small company, but those numbers were actually phenomenal in terms of top line growth, improvement in margins, and outlook as well has been looking pretty good. With the budget around the corner, do you anticipate a push for tourism? Is that a space you're watching out for closely? And if yes, any sector, any stocks particularly that you like in this pack, even the tourism ancillary play?
Yeah, I think I'm not sure what the government would do in a budget for tourism. I think Prime Minister Modi's done quite a lot for the tourism industry recently in terms of, talking about travel in India, being in India. So I think that momentum will continue. And I think, every time I speak to people, they're complaining about the prices of airlines and the price of hotels, but guess what? They're still going. It's all going to be about experiences, and it's not just at the top end of the hotel chain. It's across different levels as well. So I don't see this as being anything that's going to reduce in the short term. But if anything, I think we'll see more and more business people traveling into India, and I think we'll see more foreign tourists coming into India as well over the coming year. So this will be the extra kind of fillip for the revenues for both for airlines and for hotels. So I think it's a great sector to be in, and I think it's one that you're going to see very, very strong growth because the operational gearing is going to be huge. Without having to add so many more rooms or so many more seats at airlines. You can fill those to their capacity and get some fantastic revenues.
Absolutely. Thank you for that, Andrew and Sudeep. Markets, meanwhile, as flat as they can be, sapat, as they say in Hindi, completely hedging their bets, waiting for some clarity to come in from the big event, which will be in just over an hour from now when the finance minister speaks, an hour and a half actually for that speech. We're taking a very short break, but on the other side, Nilesh Shah of Kotak Mahindra AMC joins us for his take on what we can expect in that red Bahi Khata that finance minister is carrying. Stay tuned for that.
India as an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes.
Back to India Market Open on a news that the market is flat as a pancake, as Navjot Singh Sidhu would say. And I use that cricket connotation on purpose because our guest today loves to club cricket and markets and investing very well. Nilesh Shah, Group President and MD, Kotak Mahindra Asset Management Company, joins us right now on the show ahead of the budget. Mr. Shah, good having you. Thanks for taking the time out. And do you expect this budget to be a profound one, or would this be, in the words of the FM, the prelude to the main budget that comes, in the words of the PM, the prelude to the main budget that comes in July?
Undoubtedly, Neeraj bhai, this will be the trailer. The full movie will be visible in the next inning. But a T20 trailer equivalent will be as entertaining as the long-term test match.
Sure, most certainly. So, what do you anticipate, Nilesh bhai? Would it be, would the FM be able to balance out a fiscal consolidation move by virtue of the fiscal glide path that we've given out while maintaining the thrust on capex? Are both of these in the same measure possible?
So, you know, there is trinity of impossible, where on one side you create inclusive growth by spending money. On second side, you invest for future through investment, and yet you maintain the path of fiscal prudence. But over the last 6 budget, Honorable Finance Minister has achieved that. It's like Virendra Sehwag betting on the Multan Test cricket, where between beginning to lunch he scored a century, lunch to tea another century, and post-tea before the closure of the day, third century with a 6 from 294 to 300. If a finance minister is betting like Virendra Sehwag on Multan pitch, then why should I have lower expectation? In my opinion, I have very humble expectations from the budget because finance minister is betting like Virendra Sehwag on Multan pitch. Please take measures so that consumption at the bottom of pyramid starts growing as fast as the top of the pyramid. Please support ease of doing business or investments in a manner that private sector capex starts growing as fast as the government capex. If these two catalysts are achieved with the path of fiscal prudence, I have no doubt in my mind that India will become citizens' pride and peers' envy.
Hi Nilesh, this is Samina as well joining in, and if taking a cue from what you said, if it is going to be supporting the lower end of the pyramid, the focus is going to be farmers, women and youth. If all of that is played to script in the next few hours, will that mean anything to the markets, or this is beyond markets? Because we do understand the budget is not just about equity markets, right? It's about the country, it's about the economy and a whole lot of other things. So will that have any significance for the equity market is what I want to know.
So equity market is priced for perfection. We are expecting Finance Minister to hit 4s and 6s. And this vote on account will give confidence to the market that India is on the right path. It will create inclusive growth. It will invest for future by infrastructure investments, by investments in education and healthcare. And yet, at the same time, it will maintain the path of fiscal prudence. We will differentiate ourselves vis-a-vis our peers because we trade at premium valuation to them. So this vote on account is a step in the right direction to reassure the markets that what you have seen in the past, where India achieves trinity of impossible, it will continue to move in that direction.
Nilesh, moving from equity markets to the bond markets, while that fiscal deficit number is going to be very important, and of course the range is anywhere from 5.2 to 5.5, people also believe that it's going to be the borrowing that will be even more important in terms of what the bond markets or banking stocks will do. Again, that number also ranges from 12 lakh to 15 lakh. How do you feel about the importance of this number and the fact that you are going to get, as a nation, $25 billion this year on inclusion in the GPM? So what does it mean in terms of borrowings? What will it do for banking stocks and, of course, as bond markets as a whole?
So we believe the quantum of fiscal deficit will be lower than last year as we move towards the path of fiscal prudence. From 5.9 fiscal deficit should come at about 5.3, 5.4 or 5.5. The net borrowing program will be almost similar to last year at about 11.5 lakh crore. But unlike last year, this year will have the benefit of debt foreign portfolio investment flowing through. If we do engage with Bloomberg bond indices, this number can even go further up. So there will be lesser pressure for borrowing program to go through. We will also be aided by potential rate cuts globally, which will create elbow room for RBI to cut rates as and when appropriate. So overall, my feeling is that the bond market will be softer and the year-end exit yield, let's say in March 25, will be at least 50 to 75 basis points lower than what we are seeing today.
Nilesh bhai, good morning. Tamanna here. And I agree completely with Samina's point. Actually, budget is not for equity markets, but we are watching on, figuring out what's in it for us. Just your quick take on the point, which is very clear, that your capex build-up will be less than last year. It's on a higher base, but the government is likely going to spend at a lower pace. What does that mean for a factor that has been the biggest push for the markets on infra, rail, defense, green energy, based on government being the big spender? If government starts tightening the purse strings to reach a 4.6% fiscal deficit in 2026, is this something that worries you in the short term?
So our feeling is that most probably 4.6 for 2026 will be a bit ambitious to achieve, and hence it might get postponed a little bit. Second, today private capex is not growing as fast as the government capex, and hence government will have to be the front foot better rather than back foot better. The quantum of infrastructure investment this year is likely to be higher than last year. Last year, we were targeting about 10 lakh crore. This year, we may not target 12 lakh crore, a 20% increase, but certainly 11 to 11.5 lakh crore. This growth in infrastructure investment is necessary to maintain the momentum of our economy. And my feeling is that government has today opportunity on asset monetization and divestment, which will help raise its resources to fund infrastructure investment. So I don't expect degrowth in infrastructure investment. There will be an increase, and yet it will not deviate us from the path of fiscal prudence because there is opportunity on asset monetization and divestment.
Okay, Nilesh Bhai, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Take a very, very quick break. Back with more content on the budget.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some...
Back on NDTV Profit, let's cut across to the CI panel. My colleague Manvi Sinha Dhillon is in conversation with the CI President R. Dinesh and the Director General Chandrajit Banerjee.
We are talking about to further support this.
Okay, and I'm tempted to bring in Mukesh's assessment on whether on those specific actions that Mr. Dinesh has just outlined, we can expect movement?
The context to what is likely to come in the next 1 hour is 3 important statistics. We are touching a GDP growth rate of 7% against a world average of 3%. We are officially now the 3rd largest fintech economy in the world after US and UK. And we are now the 4th largest by market capitalization insofar as the equity markets are concerned after US, Japan, China. We've overtaken Hong Kong. So we find ourselves in a very interesting situation. And then we have a situation where still about 100 million people are below the poverty line, a fairly large middle class and growing economy. So what does one do with all of these, interesting statistics around us? It has to be growth-driven budget. Focus would be equal on agriculture, youth, women empowerment, employability. I think Dinesh cited out some important statistics. I think I would anticipate that the 15% corporate rate of tax for new manufacturing unit, which is officially supposed to be expiring for manufacturing, before March 31, 2024, to be continuing. I think there is scope for creating incentives is not the right word, but I would say, lend thrust by way of non-tax incentives, continuation of PLI, employability. There has been a thought for last several years whether you should bring back investment allowance, a capital allowance, which used to be there in the 80s and the 90s to give thrust to private sector capex. For reasons well known to the government, they have not brought in any changes, but I think this is a good inflection time for us, given the growth trajectory, to look at it.
Okay. You've, in a sense, touched upon business sentiment. You've also said very clearly that government spending on capex should continue. It's still needed to power the economy.
break down the business sentiment for us, and specifically from a capacity utilization perspective, because I know CII crunched those numbers with its members. When is there going to be a marked step up in private investment?
See, if you look at what has happened in the last 2 quarters, our surveys have shown that cutting across sectors, the lowest has been 75% capacity utilization, and in some sectors we have already seen 100% capacity utilization. But really, if you look at from a global scenario, and especially the geopolitical situations which arose, and as was pointed out, I think last year we talked about global growth as being less than 2%. So that is, I think, one of the main reasons why you have seen that the current capacity has been enough for, I would call it, the domestic growth. But having said that, if you are looking at another 7% growth over the last 3 years of 7% or more than 7% growth, and say as forecast, as you would have heard, is in excess of 7%, we do believe that we are already there. So it's a question of each of these sectors coming and private sector investments coming in to make that up from a manufacturing perspective. If you look at from investment in infrastructure, I think this crowding in or the support which has been given and that getting down into the states. So if you look at the center, the maximum expenditure has happened. So the rural areas, the focus on the infrastructure on the state side, and you see already some of these states have caught up significantly. So the rest of states catching up will be what I think will mean even more investment from the private sector, because at the state level is where the smaller companies will be investing in. So I think you will see that happening sooner rather than later, and you will already have seen it in certain sectors, but you will see it, spreading across more sectors as you go along.
I don't know if it's realistic to expect too much in the interim budget, but I say this is as good an opportunity to send a strong message out to government on what business critically needs at this moment. For instance, Mukesh talked about the investment allowance. I'm going to ask you as honestly as possible to mind the conversations that you have with all your peers and say if there's that one thing which is still a bit of a prickly area for businesses, which could be tangibly addressed in the next few months, today or July.
So actually, I wouldn't say it's a prickly area, but it is a very difficult path to navigate. And just as we have navigated the difficulty in the geopolitical situation and the inflation and managing that from a fiscal deficit as well, I think the next issue will be the transition or the correct transition from both energy and sustainability initiatives. So there, how do we support the MSMEs? How do we support the small companies which are based not necessarily on sectors which are today seen as high growth areas? So those are the areas where I think both from industry perspective and from the economy perspective, I think both the government and the industry have to work together to make that happen. And that, I think, direction I 100% believe will be there in the interim budget itself. And as you said, that hopefully will be addressed even more squarely in the final budget. So there it could be a fund to support them, digitally transition to make sure that they utilize the benefit of the digital public infrastructure in a better way, and equally so when it comes to supporting the transition from the climate side of it.
Indeed, but they're still talking about old issues that plague them, like access, easy access to credit, more painless procedures when it comes to taxes. Again, sort of pedestrian things, but those are areas that we've seen moves on in recent years. I just want to, of course, our viewers are seeing the images on the screen, I'm sure, but, Finance Minister Nirmala Sitharaman arriving in Parliament, so now you have the countdown beginning in real earnest. I interrupted your thoughts when I raised that point.
I just wanted to add that we did, CII has already mentioned that while the budget is not the right place to talk about it, that there should be a 3-tier structure on GST, to go back to your point of ease of doing business for the smaller companies, because they find it difficult to manage because of the multiple tiers.
Indeed. Well, I think we're going to take a quick break at this stage. Don't want to miss any action right here in the NDTV studio. And we have Nirmala Sitharaman, Finance Minister, getting out of her car at Parliament, she's got a busy day ahead of her. Those images currently on your screen, which you can see, it's a rainy day in New Delhi for those of you outside the city. I don't see any umbrellas, so perhaps around Parliament it's not raining. In fact, it's looking rather clear, and I know that all the Delhi Vasis have been pretty happy with the clean-up in the air. And Vishnu's been talking about, climate focus, climate change support. All of these issues are, of course, becoming more and more.
All right, so fresh shots there coming in. A rainy day in Delhi. May the finance minister rain down upon us a very, very good budget. On that slightly corny note, we'll take a quick break. Markets back in positive territory, but we're coming right back. We have a packed house here at the NDTV Profit Mumbai studios with all our budget masters in the house. You can't miss the next leg of our coverage. We'll be right back.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. We are in a full-blown panel as we run up to the budget over the next 1 hour. We'll be talking to our guest about what the expectations are. Our budget masters joining us in the studios. We have with us Pranay Saithya, Manish Dangi, Shankar Iyer, Rajiv Anand, Darvi Dharmeshi and Mihir Vora. Thank you, gentlemen. Thanks a ton for joining us today on the show. Mihir, I'll start with you. Much ado about nothing. Is it a big budget? Is it an interim budget, a vote of account, like we're saying? Nilesh, in fact, a few minutes said this is the trailer and the full picture will be out in July. Do you feel the same?
I think so, because as it is, the budget has become quite a streamlined process, For example, the big component GST is pretty much outside the budget. It's decided by the council. Tax rates for corporates, individuals, especially the new scheme, new regime, is pretty streamlined. So not much left, frankly, to tweak around. But it's important to see the direction in which the finance minister wants to take the budget spending. Because, for example, we've seen a lot of stress on capex for the last 3 years. Whether that continues, and that's what the market's been excited about for the last so many years.
You think so?
Yeah, so that needs to continue, right? So we don't want any disappointment on that side. But the problem is that on the revenue side, they've been curtailing revenue expenditure almost just about 3% growth for the last few years. This is an election year, so there's a balance between trying to do something for the election and the population masses, especially given that rural economy still probably is a question mark, in terms of growth. So balancing capex requirements versus revenue spending is something that we need to watch out for this time.
It's an interesting point, and sorry, just a follow-up there. Could rural be flipping? I mean, just trying to understand. Women participation, remittance is very strong, as Prajul Bhandari was telling us the other day. Wage growth starting to pick up, El Nino fading. So if you looks at 12 months out, could rural be a slightly lesser headache than what otherwise could have been perceived?
It's likely, yes. Especially, El Nino is one impact. We did see some unseasonal rain in some states this time around. But given that we've almost seen 2 years of not so great rural growth, the base effect itself should take care of a lot of growth. And with raw material prices coming down globally, inflation under control, that is a possibility, yes.
Okay. To be fair, El Nino is just starting, in the sense we haven't seen it played out. So a bit more of agri pain.
El Nino impact seen, could it be fading? And that could be something in playing on the minds.
The impact of El Nino itself as a phenomenon has not played out completely. So we might not be at the end of that phase. But yes, rural consumption could be boosted, I suppose, by a lot of other factors as well. Mrinal, let me come to you on your take this morning. And, does this also become a very important vote on account or speech to listen to because of precedents? We know that in 2019, the same finance minister in a vote on account before an election was very clear about what she wanted to do and what this government would do when they came back, not if. That's the confidence with which they go into a vote on account. By all accounts, that confidence could be merited this time round as well. In that sense, is it very important to watch out for that what is the next step of policy direction? Yes, you have decided to make in India, you have boosted capex, infra spends are there. Now what next?
So, well, very relevant point. See, the vote on account is clearly going to be a statement of intent. In terms of where does the government see the revenue trajectories coming from, what do they expect, and where do they intend to spend. Now, the spending part is the most crucial part. The government for the last 5 years has been the largest spender in the economy. They have been the force behind which the entire capex story and the growth of the economy has been. So we would like to see that capex number moving up. We would like to see how do they intend to accrue that amount that they intend to spend. So that yes, it is going to be an intent statement. Indirect taxation is anyway out. It's part of the GST Council framework now. So the direct taxation, whatever they want to do, if at all, generally vote on account is not somewhere they tweak too much on direct taxation, but at least where do they see the revenue trajectory? Where do they intend to spend it? The direct taxation revenue trajectory would be interesting to watch. We would be very keen to observe what do they want to talk about it. The fiscal deficit numbers, that's crucial. If we do get any sense on what would be the off-balance sheet items, that would be interesting too.
Just on fiscal deficit, we spoke with Nilesh of Kotak AMC just a short while ago, and in their view, the 4.6% target for FY26 is a bit ambitious and they may not be able to stick to it. Any call from your side?
I would concur. I think I would say 4.6 or somewhere around that would be very, very, very ambitious. In fact, the contours are more important. If they are going to spend that money into capex, that's fine. A bit of stretch on the fiscal deficit is all right, because we are yet to see a significant revival into private capex. Once that happens in a meaningful way, I think the government can decide to spend a little less. But at this juncture, the rural needs support. The economy needs supports in terms of government spending on capex. That needs to continue.
Taking a cue from that, and Shankar, I'll come to you. Rural needs support, and it's been explicitly stated that women, youth, and the poor, so the bottom end of the pyramid is where the support will be coming in. It is still an election year. While the government seems confident about what's going to play out over the next couple of months, what do you think? Do you think this one may be a populist budget or unlikely?
First, I want to sort of disabuse this idea that this will be an interim budget. I don't think this government believes in asterisks. There are no conditions apply. And if you go by past performance, as all you market guys say, is a good guide for
I like the
future.
Refrain, all you market guys say.
And I think the only thing the market guys say is don't go by past performance, but nevertheless.
But in politics, past performance is an indicator of what they will do. The 2019 interim budget presented by Piyush Goyal was 22 pages long, had extra expenditure of more than 1 trillion rupees. It was an interim budget, so-called. But the Modi government doesn't believe in interim and all those things. They will go in for. So take the context now of the economy. The political need and the economic need are at a convergence spot. You need to keep spending on capex because that's how you're creating jobs, because the private sector is not yet creating jobs. You need to spend on welfare because private final consumption is barely 4%, whereas your GDP growth is around 7%. So you want to push that, you will need to do that. Where are you going to spend? She referred to this whole new acronym that has been created by Hardeep Puri now and Mr. Modi, is GYAN, that is Garib, Yuva, Annadata and Nari. Translated, the voting class. Okay. Now that voting class is crucial for 2024, depending on what is their target. Are they targeting ab ki baar 400 par or ab ki baar 350, whatever is their target, they will focus on that. Unless you understand politics, there's no point in sort of waffling around the economic parameters of what the fiscal deficit will be and all. Mr. Modi, I don't think believes in all his ratios and all. I think he's conservative in the sense that you should have a structure by which is viable, sustainable, just as his politics he thinks should be viable and sustainable. So I expect a lot of things in this budget. I expect PM Kisan, some topping up or at least an announcement, if not an allocation. I expect some amount of push in terms of what they will do for women voters, because the W is actually the X factor in India's elections. And then they might have something to fix the problems of the old pension scheme and the new pension scheme. Yeah. And that's been there in many of the states. Now, having said that, they will also announce a big capex push for railways, because there's much scope in railways for investment and creation of, because it's one area where you have services, you have manufacturing and you have connectivity, the logistics play. So they will play into that. Roads, we are pretty much at 30 kilometers per day, and I don't know how much more roads you can build, but definitely railways has scope. So I see, if you just put back all the thing. Jaswant Singh used to say there is no economics without politics. And so there is the economic circumstance and the political need. So they are converging. So whether she makes only announcements now and leaves the allocations for July, or whether she allocates now, is a call that Mr. Modi will take.
Okay, interesting. On capex, and Mrinal, I'll come to you first on this. There's a point made that in FY24, state capex has shown a 40% growth YOI, and that is looking very strong. Does that ease the pressure a little bit on the center to dole out a big bang capex in a year, presumably of fiscal consolidation? And I know Shankar's views differ here, so I'll come to him as well. But let's assume that, forget 4.6, whatever the number may be, but let's assume that the next 2 years, some inkling of fiscal consolidation. Can they do that simultaneously while not increasing capex numbers too much, because state capex is anyways looking strong?
Well, the last union budget talked about 8.5 lakh crores of central government capex. My estimates are roughly 12.5 lakh crores has been spent in the economy, state and center included. Let's see what number the budget estimate comes up with this time, but state is significant, it's growing, but it cannot compensate for the central capex.
Of course not. Yeah.
So, I think there's no great merit in getting fixated about the fiscal deficit number. I would say that as long as capex is driving that expansion, it's all right. Subsidies would be a bit more troubling. Off-balance sheet items are something that we need to keep an eye for. I would not be worried about a fiscal deficit, inching higher and being driven by capex. That is not a worry for me. Okay, that's required.
I want to make this point to me here, because I know Shankar is of the view as well that capex or a fiscal deficit number being higher, right, might be a possibility.
No, Neeraj, one thing one must understand. The fiscal deficit number is just a ratio of your gap between expenditure and the earnings. Okay. Yeah. Now, the economy might grow, and this might actually fall.
Yeah, but it will effectively be the ratio that they will announce.
Yeah,
right?
so if the economy grows, higher growth, higher capex, higher growth, could bring down the deficit number.
But the problem with that is it becomes inflationary in pressure. So economists may not be pleased if you have high growth and high deficit. So that is the double-edged sword there.
I don't know whether in India's inflation matrix, the government spending has some role, but actually it's the seasonal ones that trouble them politically. So the tomato story might be bigger than what Shaktikanta Das does.
Yeah, but be that as it may, the limited point, Shankar, is, and which is what I want to get Mihir here, is that independent of what your economy number is, they will give a fiscal deficit as a percentage of GDP ratio, and if that is higher and doesn't show the path towards the fiscal consolidation 4.6 number, or a realistic number there, is there a reason for bond markets and then subsequently equity markets to be worried, Mihir? That's my question.
See, first of all,
or will they take it in their stride?
First of all, I think it's very unlikely that they will not reduce the deficit. They will show a reduced deficit.
Of course they will. The quantum.
No, I'm saying...
Sorry.
Because they have to show a path to 4.5, right? We are going to get included in the bond indices, global bond indices this year. And that's based on the premise that you are progressing on that fiscal consolidation front. Look, every country in the world blew up their fiscal deficits post-COVID. So I think that was necessary and it's done. But after that, we need a path to normalcy. And that normalcy for us is somewhere around 4.5. They have to show it, if not in 1 year, 2 years or 3 years, but they have to show it. So my guess is at least a 40 to 60 basis points reduction in fiscal deficit will be shown this year.
That's for FY25.
FY25, yes.
But 4.5% in FY26 seems doable to you?
I would say maybe FY27 looks more likely.
If you do 70 basis points this year,
even if they show a path to 4.5.
No, that's my point, yes. So independent of whether it gets met or no, do you think the bond markets and the equity markets will be worried if they don't show a 5.5 number or below?
I would
for
think
FY25.
so, yes, because everybody is working with the assumption of 15 lakh crores gross borrowings.
Right.
That seems to be the consensus.
But
right? Which is flat versus FY24. If that 15 lakh is projected to be higher, then it is a cause for concern, yes.
There's another way to look at it this. Since the FRBM Act was passed, Government of India has never met its FRBM target. But every interim budget has a higher fiscal deficit number and the regular budget lowers it by 10, 20, 30 basis points. The question is whether they will give a pathway to 4.6 and that will be given, but maybe it will be pushed ahead. Okay, there is no country in the world which is holding on to its macro numbers. India has a reason to do it because we are already on the JP Morgan index and then the Bloomberg index we are coming in and there's one more apparently. So once you have that, you could see two ways. Anyway, the money is coming, so it won't affect the bond market that much, or to keep the trail route. So I tend to think that they will give a pathway because the government is very keen to upgrade its ratings. If you notice in December, the chief economic advisor put out a whole compendium of essays in which a large portion discussed why India's ratings must be better. And so that is a goal for Mr. Modi. So I think that they will work towards that. So they will give a pathway. It may not be 2026, it may be 2027. They will also probably redefine some of the spending as green. Yeah. You see, that qualifies you for an exemption from the regular assessments among the rating agencies and others. So it's at the end of the day your definition.
I just want to come down to a very simple way of looking at it, and we'll take it through the panel, Mrinal. Today, at the end of 12:30 or so, and our budget masters will be there with us, what would be your best case scenario and your worst case scenario coming out of this budget? The assumption is that there is there's a very minimal chance of any harm coming out of it. No, hidden taxes which rock the boat, etc. But in your view, what would be your, best and worst possible outcome from today?
So, very interesting question. So, if you ask me democratically, most viewers would be liking to see LTCG going away. So that would be a dream thing for them.
Ain't gonna happen. That's not happening. Ain't gonna happen. I can tell you that.
Yeah. So I guess people will be happy, no tweaking around that. I guess most viewers will be happy, most investors will be happy. It would be interesting to watch. There have been corners in the market which have been asking for government to review on the dividend taxation. They've been asking the government to review on the debt taxation. So does the government heed in that direction in some form? That would be interesting to watch.
Just a quick one. Indexation that got removed last year, I mean, has put the debt mutual fund industry, off. Do you think anything could be done on that? Would they revisit that, do you think? I mean, go back on it, or very unlikely at this stage?
I don't think they'll reverse it. In my expectation, they won't toggle back so soon. Dividend taxation seems to me something that could be more interesting to watch. There have been a lot of people who've been kind of pushing for that. Yeah.
Okay. Gentlemen, stay on. We need to cut across to Delhi, where my colleague Manvi Dhillon is in conversation with Sanjeev Puri, CI President-designate and Chairman and MD ITC, as well as Mukesh Bhutani, founder of BMR Legal, plus Rajiv Memani of ENY.
Make any changes, and specifically the benefits for new manufacturing companies, which is 15%, which lapses this year. If they can extend by 2 years, given the fact that manufacturing is now picking up in India, I think that will be great. And the second is, as always, I think people do anticipate that on the personal tax side, especially to spur consumption, deal with the inflation, if they can raise the rebate level, especially in the new tax regime on personal tax, from say 25,000 to 35,000 or 30,000, whatever that is. I think I would anticipate that. More than that, whether they will do capital gain tax rationalization, tax TDS rationalization, and the most important thing is how do they deal with dispute resolution, which I think is probably the most important thing in my view. Whether they'll do it in this budget or not, I'm not sure.
But they have the room to do it. There'll be nothing amiss.
There'll be nothing amiss. No, most of these things don't have a significant budgetary impact. And I think some of these representations have been made earlier also. So I know that the finance ministry is well prepared. I think my sense is just from a timing standpoint, when they want to do it is the issue.
Particularly, capital gains rationalization, TDS rationalization. I mean, sometimes you look at that and you wonder what is the logic behind the systems that we have in place currently. You talked about dispute resolution, and you flagged it as an important area for lay viewers. Can you just explain exactly what you mean and whether there's some expectation of progress in the interim budget?
I think we have made reasonable progress in the last 12 to 18 months in various areas. But I think one area where there's a lot of clogging up that's happening is in the area of CIT appeals. I think there's a lot of clogging up that's happening there. If they can find an easier way of, so that some of these things don't get into litigation for 5 years, 10 years, 15 years, to alternative dispute resolution mechanisms, some of which are there, but they've either not been fully implemented or they're at slabs of income where probably the dispute levels are lower. That's what I would say. I think also beefing up the APA and also the bar, which is the advanced ruling piece. I think those things will be, my view is that those things will be very important. Again, I think the finance ministry is aware of this. They are well equipped to handle this. They'll have to choose the time when they have to do it.
They'll have to choose the time.
If I look at from an investor perspective, I would say consistency of tax rate, which has been the hallmark, and just figuring out that there are ways to resolve disputes so that they don't go on for 10, 15 years would be the most important. GST is another area, but I don't think they'll address that in this budget.
Okay, Mukesh, if I can get you to weigh in terms of your experience on the improvement in the dispute resolution environment, it would be good.
I largely echo what Rajiv mentioned earlier. We may not find many of these, in the finance bill, even if she moves legislative amendments, which is unlikely in an interim budget. But I think the government has a knack of, making progress on this on a continuing basis. Case in point is the tribunalization of GST. So though we've had, 4-5 years of GST law, we've had GST assessments, but the disputes were landing up in the courts by way of writ petitions, and the courts never wanted to get into the merits of the case. except give temporary relief to taxpayers by staying the proceedings or staying the recovery of demand. So tribunalization of GST was an important step which was taken 6 months back because it was clocked in disputes on the vexed issue of appointment of members,
right,
and which was cleared eventually by the courts, and that led to the appointment of members. The point that Rajiv made earlier, which is the first appellate authority, CIT appeals he referred to, that's an area where most of the appeals get stuck. However, having said that, I see a fair bit of development occurring on streamlining the dispute resolution. So if you just look at the digitalization of court records, the faceless appellate schemes, all of these measures are not necessarily featuring in the finance bill.
But they're happening parallelly.
But they're happening.
I'm just going to take in Rajiv's view here on, and this is a very simple question to you. Interim budget, modest expectations, we've all made that point repeatedly. But if there's one thing missing from the speech, which will really be a disappointment for you, your peer group, flag that off.
No, I would say one would really look at macroeconomic guidance for next year. I think that's the
most important?
That is the most important, and specifically what is the capex spend, because that's really something that pushed the economy. So
you're looking for a 20% increase in government capex spend?
Yeah, I mean, I think it really depends on what's the budget expectation they have on GDP growth. Are they looking at 7%? If they're looking at revenue collection growth of 12%, then you have flexibility of increasing capex spend by 20%. But if this government also, they've done a very good job of making conservative projections. They've almost overachieved on the revenue side at least. So if they're able to do that, I think that probably, in my view, would be the single most number to look at.
One number that we haven't talked about, and I'm wondering how important it is in your assessment, is the fiscal glide path, the fiscal deficit number that they put in the document. A, is it important? B, what are you expecting it to be?
It's definitely very important. I'm expecting it to be in the 5.3%, 5.4% kind of range, specifically given the fact that they've given a 4.5% number for 26. And from 6.4% to 5.9%. So I'm expecting that to be in that kind of range.
And any sort of number that's higher than that, you'd be wary?
Yeah, I'm pretty sure that it'll be in the 5.3 to 5.5% range. I think this government that way has been on the fiscal consolidation part has been very disciplined.
Well, we're going to have to leave it at that. Look forward to touching base with you later in the day, post an opportunity to hear what the Finance Minister actually presents. A quick break right here on NDTV.
All right, that was the corporate view coming in from Delhi, and we'll be getting you those updates through the day. Remember, you're going to get a very comprehensive 360-degree analysis right here on NDTV Profit. Meanwhile, time for a very short break, but we're back with our Budget Masters right after this. Don't go away. Well, exciting morning and packed house here at the NDTV Profit Studios in Mumbai as we are prepping you for what is coming. Less than 30 minutes left as scheduled for just about 35 minutes left for the Finance Minister to present her 6th budget. It's going to be an important one as we've been speaking. It comes before an election, but one that this government at least is very confident of winning and will show policy direction. Meanwhile, what's happening to the markets? Moving into positive territory, I would say with caution and some trepidation. What is really racing ahead though is auto. There's no stopping Maruti, and I'll just quickly pull up some of your auto numbers this morning. So a couple of things happening. Good numbers for Maruti relatively. Your auto passenger vehicle sales, etc. are all out today, and that's expected to be good as well. Maybe a bit of benefit from an infra push if that's announced in the budget. So 4% zooming on Maruti. Meanwhile, let's get back to the conversation right here in the studios, and I'll come to you, Mihir. A thing that I have noticed with at least the Modi government budgets, and correct me if you're wrong, for a long time, any kind of announcements that were seen as quote-unquote populist was seen as negative for market. But that is something that has become very easily absorbed when it comes to budgets that this government presents. Do you see that trend continuing? That, okay, if there is an increase in Pradhan Mantri Kisan Nidhi Samman payout from 6,000 to 9,000, no big deal, theek hai, chalega. We need it. You want to build up bottom of the pyramid. What the market is looking for is whether you're actually spending on capex. And do you think that trend continues so they can get away with a little more subsidy push or populist moves?
Certainly, but having said that, we also must realize that 2014 onwards till 2019, we actually saw a decent reduction in the overall deficits and subsidies. Yeah. The subsidies as a percentage to GDP till 2019 actually came down quite well. It's only because of COVID that they had to increase the subsidies, especially on food and fertilizer subsidies. So I don't think there is a general bent of mind to be populist. Wherever they are seeing pockets of stress or need to do it, they are doing it. It's not even across the board.
So no reverie.
No reveries. And I mean, look, during COVID, you had to do it, right? There was no other choice. But the general tendency has not been to blow up the fiscal deficit. So I would not be too worried about that. There is a strong focus on capex. You name any minister, they are talking about any kind of incentives required either by the private sector or even pushing the PSUs to spend their cash on capex. So that trend of capex should continue. As I said, they've been hiking capex budgets by almost 30% CAGR for the last 3 years.
But it's going to slow down this year.
It would slow down, but I'm saying, given a choice, they would still go for good deficit rather than a bad deficit.
You're not worried about maybe a slowdown in spending on capex and what it does to those sectors and stocks that have run up massively? Your railways, your defense, your infra, etc. Are you worried?
Look, railways, I'm not too worried, at least for the next few years, because they have laid out a path to modernization and they will continue to fund it. I don't think there's any backtracking on the existing announced capex, which is robust enough. On defense, actually, physically, they have not increased the capex budgets by dramatic amounts. It's the Atmanirbharta and manufacturing in India which has been the exciting point, right? And now we are even talking about exports of defense. So I'm not too worried about railways. Roads, again, there is a certain momentum that will continue. NHAI can fund itself. They have been kind of, and plus there is also the InvIT route which is becoming popular. So they can monetize some of the assets also. So there are enough levers to sustain capex. It may not be 30% growth, but even if it's a 20% growth, I'd be happy.
Taking a cue from capex, what do you think is happening on private capex? There's clearly been no pickup on that front. Anything that could be foreseen or expected to boost private capex, because that wheel also needs to run?
Look, private capex, again, on the headline, if you look at the survey data, etc., it seems to be taking some time. But if you look at the order books of capital goods companies, engineering companies, they are pretty much full.
Yeah, right. It's the execution that could potentially be a concern.
I think this time around the difference is that unlike the 2003 to 2010-11 boom, it's not, the capex that's happening is not in mega projects. It's not like massive refining capacities or massive steel plants or massive oil and gas fired power plant. This time around it's more granular. I think there's a lot of mid-sized companies which are doing capex in the manufacturing front. The PLI scheme, I think, is a huge stimulus, and the impact of which probably we are going to begin to see now.
Yeah.
You know, and the good thing is that PLI is really speaking open-ended. Any sector which needs incentives is getting it, frankly.
Taking a cue on that PLI, usually out of budget, do you think there'll be any indication on this? Sectors may be potentially added, extensions may happen this budget today?
They could, but as I was saying, it's open-ended. Any sector. We started with mobile phone manufacturing.
And it's not time limited to today in that sense.
Exactly. I mean, any sector, frankly, any amount also. If industry is going and representing the government, they seem to be having an open mind.
Yeah.
Okay. The other aspect is energy. And we know that there are paths laid out. Company after company cited that in their presentations that, hey, this is the opportunity size, etc. There was some mention or a significant mention last budget as well. To both Shankar and Mrinal, Shankar, starting with you. What's the focus on energy? Renewables plus the outlay and the impact thereof.
So if you look at the data, we import 86% of our crude requirement.
Exactly.
It's unsustainable, really speaking.
Exactly.
We have managed now because thanks to Iran and Russia and stuff like that. The other part is that 49% of our power generation depends on coal, which again is an issue as we transition to, for climate change zero. Or India's position is that capping net carbon emissions, not necessarily net zero. So what do you do? So the Prime Minister announced on Jan 22 or 20, the day after the Ram Temple thing, the PM Suryodaya program, the solar for 1 crore or 10 million houses, that's unfunded just now. So that funding might come through, but it might be expanded to other urban. So the 10 million is primarily aimed at bottom of the pyramid story. It is the renewable version of Ujjwala.
Yeah.
So once that kicks in, they might create, which is why I said that if they redefine the deficit in terms of what is the green deficit and non-green deficit, there will be an energy transition story in this. And while we talk about private capex, I just wanted to add, we must remember that the corporate tax cut that we saw in 2018-2019 is sort of expiring, and I don't think this is going to be renewed. So that the substitution will be through PLI, because it's a much more viable, much more directed idea. But all of this depends on whether they're able to grow the economy, because as it is, the Reserve Bank of India has sort of screamed about the credit deposit ratios.
Yeah.
And why deposits are not growing is also a part of the mystery as to why private final consumption is not growing.
Yes.
So there is this thing. So I think capex is on, I don't think, and there might be something new. How do you add to the government capex? How do you add to the government infra spend? It's to create the projects, green hydrogen, solar, multi-projects, basically.
No, yeah, but Mrinal, that's the point, that one, that there is a clear data given about the targets on the green side, wind, solar, etc. And two, as much as we've spoken about government capex and private capex, household capex also needs to be given some bit of a leg up. So therefore, one, do they do anything on the renewable side meaningfully, and how meaningful could it be? And could there be housing swaps, for example, loosely put, which could bring about maybe one factor of household capex into the fray?
So well, look at the technology landscape. I don't think we have a serious base power renewable option around. The government can create subsidy, can create framework, and it can incentivize some bit of peak power replacement through renewable, but we don't have a technological solution which is going to take over, let's say, 49% of our coal power generation. It's not there if you take away nuclear. So well, we will see the transition is going to be there towards renewable, towards greener mean of things. The government will do its bit, but I think unless science comes up with a serious technological solution, it will have its own issues.
But not the remit of the budget. So on the budget, what can happen which can even help some of those sectors or some of those themes? Because there has been a run out there anticipating continued government support, right?
There is one point to add to what he said. In terms of technology, the government is actively looking for storage solutions, both keeping in view the hydrogen, green hydrogen idea and the solar. And you know, Mr. Musk has visited Pune and there is an office he has set up there. They are talking to indigenous startups who are looking at storage. So you might see something, and I hope to see something, an incentive for storage, energy storage.
Sure. But yeah, so okay, maybe that too, and we'll look out for that. But just rounding off my questions, therefore, and I'm approaching this purely from a markets angle, that so many sectors and themes have had this spurt in the anticipation that continued support comes in. So what stands out in this budget or the next, but whatever, what stands out on the renewable side or on the housing soft side?
Well, housing is a clear darling. It is the sector which creates the biggest employment. It's the most formal sector which has the largest number of formal employees, and it has traditionally had tax stops. It won't be a surprise if you want to actually move up the formal employment number, you want to bump up the household expenditure, there should be increase in the tax stop in some form and shape for housing.
You think affordable housing is the route to do it? Because that scheme hasn't really taken off, and now there is a demand that please increase the ambit of where you call it or how you define it as affordable housing.
Well, it could be a combination of both things. Number of taxpayers are just 6%, so if you want to really reach the masses, I guess affordable housing definition might be a good way to. And private capex, in the private capex side, the government has done its bit in terms of what it has rolled out on PLI. It needs to continue to spend on the capex side in the economy so that the buffer, the slack in the system goes away. We have the job generation, we have the economy picking up, and when the revenue or taxation revenue does reflect at some point, they can slow down on the government expenditure and it will actually compress the fiscal deficit that we've been bothering so much about. In absence of good spending by the government today, we are not on the right trajectory to achieve fiscal consolidation 3 years down the lane or 2 years down the lane. It is required as of now that the government invests, because that will result into more jobs, more economic activity, which will increase the revenue for the government, which will finally help controlling the fisc. In absence of that, we will keep dragging things and it will go nowhere.
Well, it's a tightrope, you have to admit, a trinity of some impossible choices to make. What we'll do is take a break. Just before we take that break though, about an hour and 20 minutes for the markets, Paytm still sulking, down about 20. But on the flip side, aside of autos, there is also some other stocks which are doing well. Shree Cement is a case in point. So that has done well. Not that all the other cement stocks are doing well, but Shree was up about 5% the last time I checked, 4.5% for it. And FMCG, it's the morning for FMCG, Godrej Consumer in particular, but some of the others like Dabur up 6%, not doing too badly either. Take a very quick break, come back with more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Yeah. Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. को पावर्ड बाय बंधन बैंक, आपका भला सबकी भलाई।
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
All right, less than 20 minutes to go for the big budget speech that we're waiting to hear. Finance Minister Nirmala Sitharaman's 6th speech, an interim budget speech, but nonetheless an important one. We have a packed house here at the NDTV Profit Studios. All our budget masters are in, and I'm going to introduce them one by one. Manish Dangi joining us this morning. Mihir Vora is here. We have Shankar Iyer and, of course, Mrinal Singh are there in the studio. So welcome once again to all of you. Manish, we've been having an interesting conversation about whether the expectations or the possibility of populist sounding measures are now priced in. It's not going to ruffle too many feathers because there is an understanding that this is a pre-election budget. You have to at least make some announcements. Now, how much money you spend or not is a different story. You would agree?
So there are a couple of things. One is, of course, if you call it Modinomics, he does tweaks, but no extraordinary stuff is ever done. Neither in Gujarat for his 12 years term and nor the last two election speeches, So there was nothing extraordinary. Two is that as it is, budget and its finances are such that there's very little wiggle room now to sort of expand incrementally. So it's going to be only reallocation. Third is that within the budget of, let's say, government in India spends about 15% of GDP, just about 3.3% is spent on welfare. So only that you could tweak a bit, Some of it could, so very likely there's going to be a sort of subsidy going down by about 15-20 basis points as a percentage of GDP. And that much could actually go in terms of giving it away to through Kisan, some insurance scheme, likely some scheme for the organized labor because they have a data now. A lot of this labor, sort of urban labor.
Gig workers.
So not gig work, but generally all sorts of labor. So, it's sort of we are headed towards, in general, in the next term, kind of a basic income for 50-60 crore Indians.
Yeah.
So slowly, a lot of indirect subsidies, fertilizer, food will be subsumed in stuff like Kisan. So you'll have a labor-oriented sort of scheme most likely today. Kisan will have about 25-30% uptake. So from 6,000 per year to sort of likely to 8,000-9,000 bucks and so on and so forth.
So there's talk of an urban version of Manrega. Or some version of a...
So Narega is a insurance scheme effectively. It's not an employment guarantee scheme. Likely is that you're going to have a transfer. Because in urban, you cannot actually have urban landscape. You cannot offer Narega.
No, in the sense of when I say version, I mean a payout kind of scheme where you have some guaranteed income for a certain number of days. We could see the contours of that.
Sorry, So basically, urban version of Kisan.
Okay, that's better put.
Manish, What are you expecting on tax buoyancy? What do you think is being priced in or penciled in by the government? Of course, the first 8 months it was up by 30%. Compliance, admin. Some believe is a one-time step up. Others believe because it's compliance and admin, that number will continue running. How do you feel about your income tax and also out of that ambit, so indirect tax, so your RBI dividends, PSB profits? What is the sense? What is the pricing in that you're working with, and that number which you're comfortable with, and I believe the markets also would be?
So from a taxes point of view, it's been an extraordinary year.
Exactly.
Yeah, and so to the extent everyone is surprised, including FM, us, all analysts. Everyone is surprised, especially in direct taxes. The buoyancy has been extraordinary.
Yeah.
Some of it is sort of a mean reversion happening because post-COVID 2-3 years were very bad, 2 years were very bad, and then it's sort of going back to 2017-19 levels. But the buoyancy has been very, very strong. Very, very likely that it will fade in next 12 months. Again, the way budget math works and this particular FM works is that she would not assume more than 1.2 times buoyancy, which is a historic buoyancy. So it's sort of, you would get a 10.5% nominal GDP growth in budget estimate, and you will get about 11.5% odd tax growth. So that is what you will get. The small sort of a nuance in buoyancy is that while direct tax buoyancy is very high, the indirect tax, which is GST, is not that high. And so it sort of reveals a little bit about the economy of the K-shape that we've talked about, that a small 5-7%, 10% of the population which actually consumes sort of your air travel, lot of tourism, that guy is actually doing very well. And his income and the corporate taxes and all sort of booming, twice of GDP growth. But the GST, which is sort of a proxy of a general consumption growth, that is what you see in the staple growth, discretionary, that is not doing that well. So there the buoyancy is only 1.2 times. In aggregate, the buoyancy this year would be assumed at, between GST and direct taxes all put together, more like 1.2.
And what about non-tax growth? You alluded to RBI dividend, PSB growth, but what do you think is a fair expectation? Again, this year was an anomaly of sorts.
Yeah, so I think even next year, the dividend from RBI, even the PSU bank dividend will begin to actually kick in a substantial manner now. So to some extent, I think the dividend as a percentage of GDP will sort of, in my view, my assessment will rise by 5-10 basis point as a percentage of GDP. These are big numbers. 10 basis point is 30,000 crore, let's say, 33,000 crore. What has been a big disappointment so far is divestment for last 2-3 years. I think we've run out of assets now.
I think this government is one that does a buyback instead of divestments.
Or sort of, rotate the assets.
Or go on a list, right?
What do you mean we've run out of assets? Aren't we sort of late on
run
putting
out of assets that the capital market households, the sort of a blue-blooded capital is interested in. Which actually, so we've run out of those assets, and which is why,
ones are gone.
As a percentage of GDP, the non-tax revenues have sort of stagnated at 1% or thereabouts. It used to be at some point in time 2%.
Sorry, before I come to you on bonds, Mrinal, this PSU rally though, and Manish's point is well taken. We've kind of missed the bus almost every single year for the last 2 on this divestment thing. But could the PSU rally help the government put out a number which they can say is believable on the divestment side for FY25?
Well, if I were them, I would use it.
Nicely put.
Okay.
But I think, Shankar, you had a good point on divestment. You want to come to that?
I think the upside available for them, the headroom available is phenomenal. I mean, the SEBI requires you to have 25% liquidity, blah, blah, all that. None of the PSUs, most of the PSUs don't have it. There's an announcement, I think 5-6 years back, where they said they will reduce bank holdings to 51%. That's bank stocks are not too well, so you will actually give them the buyer the upside. The other thing is that if LIC at 95% or 90%, does it really make a difference to the corporation? I don't think so. So if they put out 5% more as an offer or as a Bharat ETF, they could collect. So somewhere the government has struggled to do the asset monetization, and somewhere it has struggled to do the divestment process. And I think because of the plethora of clearances and rules and all, and also there is a belief in the government that divestment gives them a bad name in the political arena.
I was just going to come to you on that. Is it a question of intent or ability? Because on all of the other things, politically and otherwise, this government has shown the capacity to do what they want to.
So there is a striking contrast if you see. The corporate world yesterday, Dabur, Bajaj, everybody actually spoke like they were releasing political manifestos, rural spend should go up, Narega should go up and all this. Okay, you never heard this before. I mean, people would squirm if you spoke about subsidies 10 years back.
Yeah, CII
now they're all, CII actually is almost sounding like the new manifesto. So, but if you see the government's approach, it's still very cagey about issues like asset monetization. Also, the depth in the market. Suppose they monetize the asset and a corporate wants to buy. The deposit growth, credit growth issue that is haunting the Reserve Bank of India will come into play. So probably next year, once the Firangs come in with the JP Morgan money or the other money, there might be some room, some headroom created. I don't know. There needs to be an innovative way to think about this. And one of the ways that I have been suggesting for a long time is to create a sovereign trust, put everything inside it, securitize it, and then make it issue a ETF on it.
Manish would have some thoughts here.
I mean, in the run-up to 2014, me and many of our colleagues read biographies of Modi, and one thing that we concluded then, and maybe things have changed, because Modi to a certain extent has changed since then, is that he never believed in all this, selling PSU assets. And so even in Gujarat, as a chief minister, his belief was that, okay, let's build our assets better, let's get better ROEs. So things like GSFC, many other. Look, I mean, there was a sort of a pride in, actually running the government corporations better.
Most certainly.
So I don't know whether it is ideological or otherwise, but the fact is that, divestment isn't happening.
It is very strategic. It is politically strategic because he believes, and people around him believe, that privatization creates challenges for the government in terms of the aggregation of wealth in certain quarters. The concentration of wealth is something that has bothered him, and he doesn't believe that private sector does better than the government if the government is efficient. It is a core belief. You can't do anything about it.
Yeah, it's possible.
There is always scope for divestment, not privatization.
So that's why.
Exactly. You don't need to privatize.
So that's why I said that the sovereign trust like Temasek or the KfW in Germany can serve the purpose.
Just a quick mention, guys, on the market. It's flat, but Bajaj Auto has reported its auto sales numbers. We've been talking about how auto has been in such a sweet spot this morning and has been on a run. Numbers have come in pretty impressive. The stock is looking okay, 1% higher. The Jan total sales are up 24% YOY, and the CV sales have risen 6%. We will break that down if we get some more time before we run into the budget in about 9 minutes. But yeah, Neeraj, you wanted to come in?
No, so I just thought, because Manish is here, and I would want to actually, just before I come to you, Manish, on the divestment side, you have this strong belief as well. Mrinal was saying that he would use it. You would believe the numbers could be high on the divestment proceeds side for FY25?
They should, because look at the valuations of PSUs that have gone up in the last 1.5 years. If there was a time to do it, this is the time, right?
Well, let's see if they
and there are lots of companies where the government owns 75+%. So there is ample headroom for at least 30 to 50,000 crores of divestment. Without really doing any strategic sale, frankly.
Okay. And before we take that break, Manish, what would please the bond markets? What would not please the bond markets?
And so after very long, actually, and it's almost like bond guys have had this, memories have faded that, there could be structurally things can get better. The bond math never worked out in India since 2007. Since Chidambaram did what he did, and in 2009 there was a massive borrowing. Finally, because of demographics, because of the cleaner way we present things, because generally inflation in India has well behaved, the fiscal policies, even though the fiscal deficit is higher, but because the structure of the spending is such that it does not inflate, I think we are headed, not just this year, but generally over the next 5-10 years, lower and lower yields. Okay, and so this particular budget, 5.3, 5.4% fiscal deficit, reasonable 15 lakh crore of gross borrowing, about 11.5, 12 lakh crore of net borrowing. These are the numbers, already out actually. Delhi has sounded us off in some sense, and everyone is going to celebrate these numbers. These are decent numbers.
Okay. We get 12 was slightly higher than 12, but you've got that $25 billion coming in. That would still be okay, I'd imagine, for the markets,
Yeah, but very unlikely it'll be higher.
This
is going to be a bond budget.
Yeah, most
it's more
not
than
higher,
equity
if
budget,
anything,
it's a
maybe
bond
lower.
Bond markets.
Yeah, but hey, guys, we need
Bond
to
and
slip into a
currency.
very quick break. So we'll continue this conversation on the other side, but need to slip into a very quick break. Back with our budget masters and minutes away from the budget speech. Okay, back 5 minutes away from the budget speech, 300 points up for the Sensex, so about 0.4%. Bond markets and the currencies also, we'll just quickly mark them as well. But keep in mind, steady as she goes, if you will, if the equity markets are a barometer of what the budget could bring. Though never are, but I'm just using that term nevertheless. Now, we've spoken about the big picture. To each of you, the nuance or one small thing that you would probably anticipate. Shankar gave 1 or 2 ideas. Me, something minutiae, micro that you probably want or expect the FM to announce.
I'm not really expecting, frankly, anything big bang. Frankly, I would love personal taxes to go down at least, because I know, as we were just discussing, this year is probably the first year where income tax collections are more than GST, more than corporate tax collections. So we're doing pretty well on that. We need some break on that.
The government are greedy. We're just spoiling them.
But new tax regime has not really kicked off as they wanted. So they might add some sweetener there, you think?
I think so, because from what I understand, only about a third of taxpayers have opted for the new regime, and I think they'll make the new tax regime even more friendly and even simpler, and keep removing stuff from the old regime to make it more difficult to stay there. That's likely. Okay. I don't know whether it happened in this budget or the July budget.
Okay, Manish? Yeah. More risk taking for infra financing, VC, private credit on the annual scope of this budget, or no?
Meaning, could something happen in any?
Could something be announced which could enable people like you to take more risks?
Yeah, so unlikely. I mean, it's a wish list. I actually wrote a couple of days back about it, but it's something that will happen perhaps next year or year after that.
One quick question, Manish. Currency. Are you expecting anything to be penciled in on currency? And the reason I ask is because with India's inclusion on JPM, the currency markets may turn volatile. Anything there? Because
positive vol. I mean, it's a good vol. See, again, currency, we've had this conversation. Generally speaking, for good 20 years, it's a steady state 3.5% annual depreciation, sometimes very high, sometimes low. But big picture is we depreciate more than our inflation differential. Okay, we are just entering in an era now where the inflation differential vis-a-vis US is just 1.5–2% over likely over next 10–15 years. And productivity differential is enough for us to not depreciate. And the dollar is extremely expensive right now vis-a-vis all currencies in the world, including India. So we are actually entering in a setup where even 10 years out, our currency could be in 80s. So maybe 85, maybe 88.
And that's comfortable.
Which is huge. I mean, otherwise, the run rate of currency depreciation is 3%. That means in 25 years, when our Amritkal ends, we should be 165 baht for a dollar. It's very likely that it'll be below 100, even 25 years out. So, which is such a big deal. Because it's just the global setup which is converging into...
So it's not local, it's actually more global than local.
Some quick updates. Prime Minister has entered the Lok Sabha. The cabinet meeting is over, and unless the FM starts the budget, no other minister is allowed to leave the cabinet meeting because there can't be any leaks. All exciting sort of trivia around the budget. You'll see that in just a minute or so. But before we get to that speech, we have Pranav Saita in the house. Very good morning, Mr. Saita. Great to have you here.
Same here.
And in the nick of time before the speech, so let's get your quick take on taxes. Lot of expectations which are always there, but do you expect anything significant to be announced today?
Nothing in this budget, in the interim budget. Maybe some swaps from an individual taxation standpoint to make the regime a little more friendly from an individual taxpayer standpoint, and some amendments to be announced maybe in connection with international tax and BEPS Pillar 2. That's by and large what we expect in this interim budget. Of course, the next one will be far more exciting.
Okay, so this actually sets the pace for what we are going to see. The countdown is just a few minutes from now, and let's see if we have any live visuals also coming in as we see the finance minister coming in. Last takes, gentlemen. Last takes, and let me come to you, Shankar. We should get the rating before the budget itself. Usually people wait for the end. Are you willing to give your 10 on 10 rating now in advance, or are you going to wait?
10 on 10, this government
has rated it already herself, so now your turn.
So over the last 9 years, I have rated it around 6.
Okay.
And 6 is more on their conservatism, and 4 for not doing the things that they can do but don't do.
Okay. We started with...
Never rate a government 10. Never rate a government, because they ought to be, as we said, delivering more than what they've delivered.
No, I agree. I'm not. That's not my rating. But
if they get satisfied, then...
it's a take. It's a dig maybe on the fact that whenever you see these ratings post-budget, everyone says 10 on 10. So
yeah, that is to please. That is to please.
It was more of a dig on that.
No, Tamanna, that is the insurance policy.
Yeah. So it was more a dig on that. Okay, let's cut across. You're seeing live visuals there.
No, I think... I think we'll just wait for...
No, you can hear the speaker.
No, I think let's just wait for the FM to come in. But we didn't get the rating from Mihir Vora, I think. So Mihir,
pre-rating.
You want a pre-rating?
I don't predict. Right?
Yeah, you're a fund manager.
No forward-looking statements.
I think, do you want insurance policy?
The earlier avatar Mihir Vora, do you want an insurance policy? Would you rate?
No. I think last FY24 has been great. And look forward to some more of the same in FY25.
Okay, we go across to the finance minister.
Honourable Speaker, I present the interim budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honorable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship. The economy got a new vigor. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once in a century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be blessed again by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level. Development programs were thus provisioned. In the last 10 years, however, have targeted each and every household and individual through housing for all, Har Ghar Jal, electricity for all, cooking gas for all, bank accounts and financial services for all in record time. The worries about food have been eliminated through free ration for 80 crore people. Minimum support prices for the produce of Annadata are periodically increased appropriately. These and the provision of basic necessities have enhanced real income in the rural areas. Their economic needs could be addressed, thus spurring growth and generating jobs. Social justice. Our government is working with an approach to development that is all-round, all-pervasive, and all-inclusive. Sarvangin, Sarvasparshi, or Sarvasamaveshi. It covers all castes and people at all levels. We are working to make India a Vikasit Bharat by 2047. For achieving that goal, we need to improve people's capability and empower them. Previously, social justice was mostly a political slogan. For our government, social justice is an effective and necessary governance model. The saturation approach of covering all eligible people is the true and comprehensive achievement of social justice. This is secularism in action, reduces corruption, and prevents nepotism, prevents Bhai Bhatijawad. There is transparency and assurance that benefits are delivered to all eligible people. The resources are distributed fairly. All, regardless of their social standing, get access to opportunities. We are addressing systemic inequalities that had plagued our society. We focus on outcomes and not on outlays so that the social economic transformation is achieved. As our Prime Minister firmly believes, we need to focus on 4 major castes. They are Garib, Mahilaye, Yuva and Annadata. Their needs, their aspirations and their welfare are our highest priority. The country progresses when they progress. All 4 require and receive government support in their quest to better their lives. Their empowerment and well-being will drive the country forward. Garib Kalyan, Desh Ka Kalyan. We believe in empowering the poor. The earlier approach of tackling poverty through entitlements had resulted in very modest outcomes. When the poor became empowered partners in the development process, government's power to assist them also increases manifold. With the pursuit of Sabka Saath, in these 10 years, the government has assisted 25 crore people to get freedom from multi-dimensional poverty. Our government's efforts are now getting synergized with energy and passion of such empowered people. This is truly elevating them from poverty. Direct benefit transfer of 34 lakh crore rupees from the government using PM Jan Dhan accounts has led to savings of 2.7 lakh crores of rupees for the government. This savings has been realized through avoidance of leakages prevalent earlier. The savings have helped in providing more funds for Garib Kalyan. PM Swanidhi has provided credit assistance to 78 lakh street vendors. From that total of 78 lakh street vendors, 2.3 lakh have received credit for the third time. PM Janman Yojana reaches out to the particularly vulnerable tribal groups who have remained outside the realm of development so far. PM Vishwakarma Yojana provides end-to-end support to artisans and craftspeople engaged in 18 trades. The schemes for empowerment of Divyangs and transgender persons reflect firm resolve of our government to leave no one behind. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided. Welfare of Annadata. Farmers are our Annadata. Every year under PM Kisan Samman Yojana, direct financial assistance is provided to 11.8 crore farmers, including marginal and small farmers. Crop insurance is given to 4 crore farmers under PM Fasal Bima Yojana. These, besides several other programs, are assisting Annadata in producing food for the country and for the world. Electronic National Agricultural Market has integrated 1,361 mandis and is providing services to 1.8 crore farmers with trading volume of 3 lakh crores of rupees. The sector is poised for inclusive, balanced, higher growth and productivity. These are facilitated from farmer-centric policies, income support, coverage of risks through price and insurance support, promotion of technologies and innovations through startups. Empowering the Amrit PD, the Yuva. Our prosperity depends on adequately equipping and empowering the youth. The National Education Policy 2020 is ushering the transformational reforms. PM Schools for Rising India, PM Shri, are delivering quality teaching and nurturing holistic and well-rounded individuals. The Skill India mission has trained 1.4 crore youth, upskilled and reskilled 54 lakh youth, and established 3,000 new ITIs. A large number of institutions of higher learning, namely 7 IITs, 16 triple ITs, 7 IIMs, 15 AIMS, and 390 universities have been set up PM Mudra Yojana has sanctioned 43 crore loans aggregating to 22.5 lakh crores of rupees for entrepreneurial aspirations of our youth. Besides that, Fund of Funds, Startup India, and Startup Credit Guarantee schemes are assisting our youth. They are also becoming Rozgar Data. The country is proud of our youth scaling new heights in sports. The highest ever medal tally in Asian Games and Asian Para Games in 2023 reflects a high confidence level. Chess prodigy and our #1 ranked player Pragnananda put up a stiff fight against the reigning world champion Magnus Carlsen in 2023. Today, India has over 80 chess grandmasters compared to little over 20 in 2010. Momentum for Nari Shakti. The empowerment of women through entrepreneurship, ease of living, and dignity for them has gained momentum in these 10 years. 30 crore Mudra Yojana loans have been given to women entrepreneurs. Female enrollment in higher education has gone up by 28% in 10 years. In STEM courses, girls and women constitute 43% of enrollment, one of the highest in the world. All these measures are getting reflected in the increasing participation of women in workforce. Making triple talaq illegal, reservation of 1/3 seats for women in the Lok Sabha and state assemblies, and giving over 70% houses under PM Awas Yojana in rural areas to women, and giving over 70% houses under PM Awas Yojana in rural areas to women as sole or joint owners have enhanced their dignity. Exemplary track record of governance, development, and performance. Besides delivering on high growth in terms of gross domestic product, the government is equally focused on a more comprehensive GDP, that is, governance, development, and performance. Our government has provided transparent, accountable, people-centric, and prompt, trust-based administration with citizen-first and minimum government, maximum governance approach. The impact of all-round development is discernible in all sectors. There is macroeconomic stability, including in the external sector. Investments are robust. The economy is doing well. People are living better and earning better, with even greater aspirations for future. Average real income of the people has increased by 50%. Inflation is moderate. People are getting empowered, equipped, and enabled to pursue their aspirations. There is effective and timely delivery of programs and of large projects. Economic management. The multi-pronged economic management over the past 10 years has complemented people-centric, inclusive development. Following are some of the major elements. 1. All forms of infrastructure, physical, digital, or social, are being built in record time. Number 2, all parts of the country are becoming active participants in economic growth. Number 3, digital public infrastructure, a new factor of production in the 21st century, is instrumental in formalization of the economy. Number 4, goods and services tax has enabled one nation, one market, one tax. Tax reforms have led to deepening and widening of tax base. Number 5, strengthening of the financial sector has helped in making savings, credit, and investments more efficient. Number 6, GIFT, IFSC, and the Unified Regulatory Authority, IFSCA, are creating a robust gateway for global capital and financial services for the economy. Number 7, proactive inflation management has helped keep inflation within the policy band. Now, the global context, Honorable Speaker, sir. Geopolitically, global affairs are becoming more complex and challenging with wars and conflicts. Globalization is being redefined with reshoring and friendshoring, disruption and fragmentation of supply chains, and competition for critical minerals and technologies. A new world order is emerging after the COVID pandemic. India assumed the G20 presidency during very difficult times for the world. The global economy was going through high inflation, high interest rates, low growth, very high public debt, low trade growth, and climate changes. The pandemic has led to a crisis of food, fertilizer, fuel, and finances for the world, while India successfully navigated its way. The country showed the way forward and built consensus on solutions for those global problems. The recently announced India-Middle East-Europe economic corridor is a strategic and economic game changer for India and others. In the words of Honorable Prime Minister, the corridor, and I quote, will become the basis of world trade for hundreds of years to come, and history will remember that this corridor was initiated on Indian soil, unquote. Vision for Vikasit Bharat. Our vision for Vikasit Bharat is that of prosperous Bharat in harmony with nature, with modern infrastructure, and providing opportunities for all citizens and all regions to reach their potential. With confidence arising from strong and exemplary track record of performance and progress, earning Sabka Vishwas, the next 5 years will be years of unprecedented development and golden moments to realize the dream of developed India by 2047. The trinity of demography, democracy, and diversity, backed by Sabka Prayas, has the potential to fulfill aspirations of every Indian. As Honorable Prime Minister in his Independence Day address to the nation mentioned, I quote, there is no dearth of opportunities, as many opportunities as we want. The country is capable of creating more opportunities. Sky is the limit, unquote. Strategy for Amrit Kal. Our government will adopt economic policies that foster and sustain growth, facilitate inclusive and sustainable development, improve productivity, create opportunities for all, help them enhance their capabilities, and contribute to generation of resources to power investments and fulfill aspirations. Guided by the principle, reform, perform, and transform, the government will take up next generation reforms and build consensus with the states and stakeholders for effective implementation. It is an important policy priority for our government to ensure timely and adequate finances, relevant technologies, and appropriate training for the micro, small, and medium enterprises, MSMEs, to grow and also compete globally. orienting the regulatory environment to facilitate their growth will be an important element of this policy mix. Aligning with the Panchamrit goals, our government will facilitate sustaining high and more resource-efficient economic growth. This will work towards energy security in terms of availability, accessibility, and affordability. For meeting the investment needs, our government will prepare the financial sector in terms of size, capacity, skills, and regulatory framework. Aspirational Districts Program. Our government stands ready to assist the states in faster development of aspirational districts and blocks, including generation of ample economic opportunities. Development of the East. Our government will pay utmost attention to make the eastern region and its people a powerful driver of India's growth. PM Awas Yojana Gramin. Despite the challenges due to COVID, implementation of PM Awas Yojana Gramin continued, and we are close to achieving the target of 3 crore houses. 2 crore more houses will be taken up in the next 5 years to meet the requirement arising from increase in the number of families. Rooftop solarization and Muft Bijli. Through rooftop solarization, 1 crore households will be enabled to obtain up to 300 units free electricity every month. This scheme follows the resolve of Honorable Prime Minister on the historic day of consecration of Sri Ram Mandir in Ayodhya. Following benefits are expected. Savings up to 15 to 18,000 rupees annually for households from free solar electricity and selling the surplus to the distribution companies. Charging of electric vehicles. Entrepreneurship opportunities for a large number of vendors for supply and installation. Employment opportunities for the youth with technical skills in manufacturing, installation, and maintenance. Housing for middle class. Our government will launch a scheme to help deserving sections of the middle class, and I quote from Honorable Prime Minister's words, living in rented houses or slums or chawls and unauthorized colonies, unquote, to buy or build their own houses. Medical colleges. Several youth are ambitious to get qualified as doctors. They aim to serve our people through improved healthcare services. Our government plans to set up more medical colleges by utilizing the existing hospital infrastructure under various departments. A committee for this purpose will be set up to examine the issues and make relevant recommendations. Cervical cancer vaccination. Our government will encourage vaccination for girls in the age group of 9 to 14 years for prevention of cervical cancer. Maternal and child health care. Various schemes for maternal and child care will be brought under one comprehensive program for synergy in implementation. Upgradation of Anganwadi centers under Saksham Anganwadi and Poshan 2.0 will be expedited for improved nutrition delivery, early childhood care, and development. The newly designed U-Win platform for managing immunization and intensified efforts of Mission Indradhanush will be rolled out expeditiously throughout the country. Ayushman Bharat. Healthcare cover under Ayushman Bharat scheme will be extended to all ASHA workers, to all Anganwadi workers and helpers. Agriculture and food processing. The efforts of value addition in agriculture sector and boosting farmers' incomes will be stepped up. Pradhan Mantri Kisan Sampada Yojana has benefited 38 lakh farmers and generated 10 lakh employment. Pradhan Mantri Formalization of Micro Food Processing Enterprises Yojana has assisted 2.4 lakh SHGs and 60,000 individuals with credit linkages. Other schemes are complementing the efforts for reducing post-harvest losses and improving productivity and incomes. For ensuring faster growth of the sector, our government will further promote private and public investment in post-harvest activities, including aggregation, modern storage, efficient supply chains, primary and secondary processing and marketing and branding. Nano DAP. After the successful adoption of nano urea, application of nano DAP on various crops will be expanded in all agroclimatic zones. Atmanirbhar Oil Seeds Abhiyan. Building on the initiative announced in 2022, a strategy will be formulated to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soya bean, and sunflower. This will cover research for high-yielding varieties, widespread adoption of modern farming techniques, market linkages, procurement, value addition, and crop insurance. Dairy development. A comprehensive program for supporting dairy farmers will be formulated. Efforts are already on to control foot and mouth disease. India is the world's largest milk producer with but with low productivity of milch animals. The program will be built on the success of existing schemes such as Rashtriya Gokul Mission, National Livestock Mission, and infrastructure development funds for dairy processing and animal husbandry. Matsya Sampada. It was a government which set up a separate department for fisheries, realizing implementation of Pradhan Mantri Matsya Sampada Yojana will be stepped up to 1. Enhance aquaculture productivity from existing 3 to 5 tons per hectare. 2. Double exports to 1 lakh crore rupees, and 3. Generate 55 lakh employment opportunities in the near future. 5 integrated aqua parks will also be set up. Lakpati Didi. 83 lakh SHGs. 83 lakh SHGs with 9 crore women. 83 lakh SHGs. 83 lakh SHGs with 9 crore women are transforming rural socio-economic landscape with empowerment and self-reliance. Honorable Speaker sir, their success has assisted nearly 1 crore women to become Lakpati Didi already. They are an inspiration to others. Their achievements will be recognized through honoring them. Buoyed by the success, it has been decided to enhance the target for Lakpati Didi from 2 crores to 3 crores. Technological changes, new age technologies and data are changing the lives of people and businesses. They are also enabling new economic opportunities and facilitating provision of high-quality services at affordable prices for all, including those at the bottom of the pyramid. Opportunities for India at the global level are expanding. India is showing solutions through innovation and entrepreneurship of its people. Research and innovation for catalyzing growth, employment, and development. Prime Minister Prime Minister Lal Bahadur Shastri gave the slogan of Jai Jawan, Jai Kisan. Prime Minister Atal Bihari Vajpayee ji, made that Jai Jawan, Jai Kisan, Jai Vigyan. Prime Minister Modi has furthered that to Jai Jawan, Jai Kisan, Jai Vigyan, and Jai Anusandhan, as innovation is the foundation of development. For our tech-savvy youth, this will be a golden era. A corpus of 1 lakh crore rupees will be established with 50-year interest-free loan provided. The corpus will provide long-term financing or refinancing with long tenors and low or nil. I repeat that sentence. The corpus will provide long-term financing or refinancing with long tenors and low or nil interest rates. This will encourage the private sector to scale up research and innovation significantly in sunrise domains. We need to have programs that combine the powers of our youth and technology. A new scheme will be launched for strengthening deep tech technologies for defense purposes and expediting Atmanirbharta. Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. Railways. 3 major railway corridor programs will be implemented. These are Energy, Mineral and Cement Corridor. Number 2, Port Connectivity Corridors. And number 3, High Traffic Density Corridors. The projects have been identified under the PM Gati Shakti for enabling multimodal connectivity. They will improve logistics efficiency and reduce cost. The resultant decongestion of the high traffic corridors will also help in improving operations of passenger trains. 3 economic corridor programs will accelerate our GDP growth and reduce logistic costs. 40,000 normal rail bogies will be converted to Vande Bharat standards to enhance safety, convenience, and comfort of passengers. Aviation sector. The aviation sector has been galvanized in the past 10 years. Number of airports have doubled to 149. Rollout of air connectivity to Tier 2 and Tier 3 cities under UDAN scheme has been widespread. 517 new routes are carrying 1.3 crore passengers. Indian carriers have proactively placed orders for over 1,000 new aircrafts. Expansion of existing airports and development of new airports will continue expeditiously. Metro and Namo Bharat. We have a fast expanding middle class and rapid urbanization is taking place. Metro rail and Namo Bharat can be the catalyst for the required urban transformation. Expansion of these systems will be supported in large cities, focusing on transit-oriented development. Green energy. Towards meeting our commitment for net zero by 2070, the following measures will be taken. Viability gap funding will be provided for harnessing offshore wind energy, potential for initial capacity of 1 gigawatt. Coal gasification and liquefaction capacity of 100 metric tons will be set up by 2030. This will also help in reducing imports of natural gas, methanol, and ammonia. Phased mandatory blending of compressed biogas in compressed natural gas for transport and piped natural gas for domestic purposes will be mandated. Financial assistance will be provided for procurement of biomass aggregation machinery to support collection. Electric vehicle ecosystem. Our government will expand this and strengthen the e-vehicle ecosystem by supporting manufacturing and charging infrastructure. Greater adoption of e-buses for public transport networks will be encouraged through payment security mechanism. Biomanufacturing and biofoundry. For promoting green growth, a new scheme of biomanufacturing and biofoundry will be launched. This will provide environment-friendly alternatives such as biodegradable polymers, bioplastics, biopharmaceuticals, and bioagri inputs. This scheme will also help in transforming today's consumptive manufacturing paradigm to the one based on regenerative principles. Blue Economy 2.0. For promoting climate resilient activities for Blue Economy 2.0, a scheme for restoration and adaptation measures and coastal aquaculture and mariculture with integrated and multi-sectoral approach will be launched. Comprehensive development of tourist centers. The success of organizing G20 meetings in 60 places presented diversity of India to global audience. Our economic strength has made the country an attractive destination for business and conference tourism. Our middle class also now aspires to travel and explore. Tourism, including spiritual tourism, has tremendous opportunities for local entrepreneurship. States will be encouraged to take up comprehensive development of iconic tourist centers, branding and marketing them at global scale. A framework for rating of the centers based on quality of facilities and services will be established. Long-term interest-free loans will be provided to states for financing such development on matching basis. To address the emerging fervor for domestic tourism, Honorable Speaker, sir, projects for port connectivity, tourism infrastructure, and amenities will be taken up on our islands, including Lakshadweep. This will help in generating employment also. Promoting investments. The FDI inflow during 2014 to 23 was 596 billion US dollars, marking a golden era. That is twice the inflow during 2005 to 14. For encouraging sustained foreign investment, we are negotiating bilateral investment treaties with our foreign partners in the spirit of First Develop India. FDI is First Develop India. Reforms in the states for Vikasit Bharat. Many growth and development enabling reforms are needed in the states for realizing the vision of Vikasit Bharat. A provision of 75,000 crore rupees as 50-year interest-free loan is proposed this year to support those milestone-linked reforms by the state governments. Societal changes. The government will form a high-powered committee for an extensive consideration of the challenges arising from fast population growth and demographic changes. The committee will be mandated to make recommendations for addressing these challenges comprehensively in relation to the goal of Vikasit Bharat. Amrit Kal as Kartavya Kal. Our government stands committed to strengthening and expanding the economy with high growth and to create conditions for people to realize their aspirations. Honorable Prime Minister in his Independence Day address to the nation in the 75th year of our Republic said, and I quote, "We commit ourselves to national development with new inspirations, new consciousness, new resolutions as the country opens up immense possibilities and opportunities. It is our Kartavya Kal." Unquote. Every challenge of the pre-2014 era was overcome through our economic management and our governance. These have placed the country on a resolute path of sustained high growth. This has been possible through right policies, true intentions, and appropriate decisions. In the full budget in July, Honorable Speaker, our government will present a detailed roadmap for our pursuit of Vikasit Bharat. Revised estimates. Revised estimates of 2023-24. The revised estimate of the total receipts other than borrowings is 27.56 lakh crores of rupees, of which the tax receipts are 23.24 lakh crore rupees. The revised estimate of total expenditure is 44.90 lakh crore rupees. The revenue receipts at 30.03 lakh crore rupees are expected to be higher than the budget estimate, reflecting strong growth momentum and formalization in the economy. The revised estimate of the fiscal deficit is 5.8% of GDP, improving on the budget estimate, notwithstanding moderation in the nominal growth estimates. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation as announced in my budget speech of 2021-22 to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path. So the gross and net market borrowings through dated securities during 24-25 are estimated at 14.13 lakh crore rupees and 11.75 lakh crore respectively. Both will be less than that in 23-24. Now that the private investments are happening at scale, the lower borrowings by the central government will facilitate larger availability of credit for the private sector. Vote on account. I'll be seeking vote on account approval of the Parliament through the appropriation bill for a part of the financial year 2024-25. I will now move to Part B. Honourable Speaker, sir, over the last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people. I appreciate the taxpayers for their continued support. The government has reduced and rationalized tax rates. Under the new tax scheme, there is now no tax liability for taxpayers with income up to 7 lakh rupees, up from 2.2 lakh rupees in the financial year 2013-14. The threshold for presumptive taxation for retail businesses was increased from 2 crores to 3 crores. Similarly, the threshold for professionals eligible for presumptive taxation was increased from 50 lakh rupees to 75 lakh rupees. Also, corporate tax rate was decreased from 30% to 22% for existing domestic companies and to 15% for certain new manufacturing companies. Honourable Speaker, sir, in the last 5 years, our focus has been to improve taxpayer services. The age-old jurisdiction-based assessment system was transformed with the introduction of faceless assessment and appeal, thereby imparting greater efficiency, transparency, and accountability. Introduction of updated income tax returns, a new Form 26AS, and pre-filling of tax returns have made filing of tax returns simpler and easier. Average processing time of returns has been reduced from 93 days in the year 2013-14 to a mere 10 days this year, thereby making refunds faster. Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive. According to 80% of the respondents, it has led to supply chain optimization, as elimination of tax arbitrage and octroi has resulted in disbanding of checkposts at the state and city boundaries. At the same time, tax base of GST more than doubled, and the average monthly gross GST collection has almost doubled to 1.66 lakh crores this year. States too have benefited. States' SGST revenue, including compensation released to states in the post-GST period of 2017-18 to 2022-23, has achieved a buoyancy of 1.22. In contrast, the tax buoyancy of state revenues from subsumed taxes in the pre-GST 4-year period of 2012-13 to 2015-16 was a mere 0.72. The biggest beneficiaries are consumers, as reduction in logistic cost and taxes have brought down prices of most goods and services. We have taken a number of steps in customs to facilitate international trade. As a result, the import release time declined by 47% to 71 hours at inland container depots, by 28% to 44 hours at air cargo complexes, and by 27% to 85 hours at seaports over the last 4 years since 2019, when the national time release studies were first started. Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units, are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Moreover, in line with our government's vision to improve ease of living and ease of doing business, I wish to make an announcement to improve taxpayers' services. There are a large number of petty, non-verified, non-reconciled or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honorable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this. Economy then and now. In 2014, when our government assumed the reins, the responsibility to mend the economy step by step and to put the governance systems in order was enormous. The need of the hour was to give hope to the people, to attract investments, and to build support for the much needed reforms. The government did that successfully, following a strong belief of nation first. The crisis of those years has been overcome, and the economy has been put firmly on a high sustainable growth path with all-round development. It is now appropriate to look at where we were then. I repeat, it is now appropriate to look at where we were then till 2014 and where we are now, only for the purpose of drawing lessons from the mismanagement of those years. The government will lay a white paper on table of the House. The exemplary track record of governance, development and performance, effective delivery and Jan Kalyan has given the government trust, confidence and blessings of the people to realize whatever it takes. The goal of Vikasit Bharat with good intentions, true dedication and hard work in the coming years and decades. With this, Honorable Speaker, I commend the interim budget to this august House. Jai Hind.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003, Medium-Term Fiscal Policy cum Fiscal Policy Strategy Statement and Macroeconomic Framework Statement.
Item number 3, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2024.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ, हाँ वालों के पक्ष हुआ। माननीय मंत्री जी विधेयक को पुनर्स्थापित करें।
So I introduce the bill.
सभा की कार्रवाई शुक्रवार दिनांक 2 फरवरी 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
All right. Well, a few surprises. If people thought it was an interim budget, it was only in the length of the budget speech, because otherwise, some of the announcements that have come out are stellar, and we'll talk about it editorially and then get in our guests to talk about this. But I think what stood out amidst all the assumptions that they've made around receipts, tax receipts and expenditures for FY24, the budgeted actual numbers, and for FY25, I think the standout announcement is fiscal deficit as a percentage of GDP for FY25 at 5.1%. I must say, guys, nobody thought about this when they were penciling their estimates.
The base case was 5.2 at best.
At best, maybe 5.3.
Even the net borrowing, and I think the bond markets have reacted, not significantly yet. The rupee is sub 83, so that's a good thing. Bonds have gone down about 7 basis points, so not a big move on the bond market, but it will play out. Banking stocks as well should be in focus zone.
So top takeaways, if we had to put it, and Neeraj is absolutely right. Fiscal deficit targets are better than expected. She's sticking to 4.5% for FY26, no moving from there. For the current year, it's below what the government had projected. They projected 5.9. It's at 5.8%. And remember, for the interim year, how do you get to that 4.6 or 4.5%? Well, the figure she's given is 5.1%. The estimate was between 5.1 to 5.3. Borrowings are lower than expected in FY25. Revenue receipts are higher than expected in FY24. And no changes in tax.
Just a quick one on capex.
That's what I'm saying.
Big jump.
Expenditure.
11% odd is better than 10% is what the street was penciling, working with. The number that she's given out is 11.1% increase in capex. So that number looking far better. And I think the street infrastructure, the sectors that we've been talking about, railways, will see a rally. And we've seen that play out in the last few days, last few minutes. Yeah. Another smaller sector, and I know I talked about this early in the day, and I didn't really think much was going to come out, was tourism. Those counters also getting excited. So clearly things are working and on track in terms of what the expectation was. But Neeraj, Tamanna, surprising, I think the equity market would start seeing some buying into a bit of a runaway. Nothing's happened on the street.
Well, I think the capex outlay being lower is something that doesn't work.
11.
Yeah, but relative to 30%.
11%.
Yeah, but relative to 30.
It's a 10% jump.
It's 11.1% uptake relative to previous year. But the point being, because of the previous 3 years, and Mihir Vora was with us in the panel, he was saying that anything below 20% might be something that might be disappointing for the market because they're used to 30-odd%.
Even I think Citibank's report was exactly that. They were working with 20%.
So multiple things have happened, right? And our guests should be with us any moment and we should talk to them. But maybe, one, the 5.8 trending number, and two, the 5.1 confidence comes from these three things. Capex outlay not very high, 11.1. Receipts much better. And the gross borrowing number, 14.1 lakh crores. It is much, much lower. Pranjul Bhandari was on record saying that any number lower than 15.2 or 15.1 is going to be viewed positively. And I think that is what has happened.
Back to the story of the fact that we've made these commitments, right? You've talked, and also talking about GDP, fiscal deficit, she said below 4.5.
Yeah.
Not even 4.6 and not even
very positive there.
Yeah. With a lot of conviction, it's going to be below 4.5. And also what was probably a way to look at it, not too many populist measures as such.
Yes,
that could also be viewed in correct light. Some disappointment on the tax front. There were, I guess, units of people expecting a little bit of tweaking on taxation, but like Mir and me discussed this earlier, no tweaking on taxation.
And which is also great news.
But
well, people would like it. But let's
tweaking.
No, we don't want negative taxation. But just before we get to our guests, a quick market check. The Sensex and the Nifty are flattish. On the index, not too much of a movement really because of the budget, if you will. On the index heavyweights I'm talking about. So autos still higher and doing okay. And that continues. So the Marutis, M&Ms of the world, no big moves there or no big developments there. But I'm just saying that the moves on the index are largely muted because the Sensex and the Nifty, in fact, now 0.22%. So kind of reeling a bit under pressure. Now, if we have our guests ready, we should go to our guests and try and get initial views from all of them. Let me start with, to my extreme left, Manish. Quick initial thoughts. What did you make of the numbers?
So it's a as we said ahead of the budget, it's going to be a bond budget. So it's a disinflation budget. Basically, the expenditure is going up only at 6%, lower than even what I thought, 7-odd%. Primary expenditure is even lower, which is ex subsidy, ex interest is likely at 4-5%, one of the lowest in last 20 years. Fiscal deficit is actually versus market expectation of 5.3, 5.4, it's 5.1. So it's sort of paving way for a pivot for monetary policy. That look, we've done enough. Capex, there's been a substantial jump. So let's sort of get into a little bit of a conservative mode now, so that we pave way for monetary policy to ease. AMIs can come off, liquidity can improve. So in a sense, the onus of actually re-stimulating growth at margin, if at all they were to be slowed down, is going to be with monetary policy, not fiscal. So if purely from the point of view of, let's say, if you're looking for a growth budget, it's not a growth budget. It's a disinflation budget, and which essentially is going to be for long-term, medium-term, very good, because government has done a lot of things. There is going to be disappointment in terms of like market expectation on capex was about 14-15%. I was actually thinking of only 11-12%, so not disappointed because I mean, even this year, there's a 50-75,000 crore worth of shortfall in terms of total capex spend so far that they've done. So it's 11% is a decent number. 3.4% as a percentage of GDP is not going to rise. So a lot of people were thinking that it'll rise to 4% of GDP in terms of capex. I think we've sort of hit a ceiling there, and this is all the capacity of the government is right now. So I think incrementally, the pivot will be back to a 2016-18 regime, where you'll have a 4.5% fiscal deficit in 1 or 2 years' time, and then mostly the local household and the private sector actually sort of re-stimulating or helping economy grow, instead of government pushing it through capex.
Do you think the onus now will be on the RBI when they meet for the next policy meet? So I think that will be more directional in nature then.
That's the beauty of this, the SKD and Modi tango, so to say, I kind of call it, because unlike the previous regimes, these guys tango very well. So far it was fisc, and then now sort of the fisc is withdrawing so that monetary policy can actually accommodate.
Okay, Rajiv Anand is also joining us now on our first quick takes of the budget. Rajiv Anand, Deputy MD, Axis Bank, with us. Very good afternoon to you, Rajiv. The conversation in here saying that it is not a growth budget, but positive on all the key factors. Your fiscal deficit targets matched for this year, better than expected. Capex at 11%, maybe lower than what the street wanted, but you're showing a continuum of growth. What's your first take?
I think I don't want to get into the semantics on whether this is a growth budget or not, but I think clearly shows the intent that the fiscal deficit is going to be managed as we get into the next 5 years as well, which is fantastic. And I think you're already seeing the fact that where the market is expecting fiscal deficit at about 5.4%, 5.1% for next year is a pleasant surprise. And I think if you look at the fiscal arithmetic as well, I think it's quite credible at this point in time. We've already seen the 10-year bond yields rally about 10 basis points on the back of that. I did hear some conversation around allocation to capital expenditure. I think capital expenditure increase is higher than the overall increase in expenses, which I think is positive again. I would have expected a little more on creating more demand at the rural level, not just more importantly creating more rural income, but perhaps that is there in the details, and maybe we can figure this out as we go forward. But I think overall a budget that I think one should be quite satisfied with.
Yeah. Rajiv, just a quick follow-up in terms of the borrowing figure and the point that the finance minister also made, that there is going to be a curtailment in government borrowing better than what the street and the broad expectations are, to be able to give enough room for the private sector. Do you think that is now expected to play out? Are you happy with that number?
I think, like I said to you, the fiscal arithmetic is credible. And so therefore, by definition, the expectation in terms of the gross borrowing program, approximately in the vicinity of about 14 lakh crores, I think is something that the markets are quite comfortable to work with as we get into 24-25. We are certainly we are certainly seeing private capex has kicked in over the last 8 to 12 quarters. One of the things that's certainly happening is the fact that because of the fact that corporate cash flows have been quite strong, much of this private capex has been funded by internal accruals. Not so good as the head of a corporate bank, but I think it just is symptomatic of what a solid state corporate balance sheets are at this point in time. And perhaps looking at this budget, and once we get the uncertainty of the elections out of the way, I think it's fair to expect that corporate India will push the pedal on private capex as we go forward.
Rajiv, just a quick follow-up on what you said. So net borrowing numbers come in lower than expected. You've got that 25 billion that's going to come our way on back of India's inclusion in the JPM. In terms of, and of course, you've got the onus now shifted to the RBI through a monetary policy measure in the next meeting. In terms of outlook or trajectory on the 10-year, what are you working with? We've already seen a 9 basis point movement, like you said, was an instant knee-jerk reaction for now.
I think if you look at the curve is very flat at the moment. I mean, overnight funding rate is at 675. The 10-year is close to 712, 713 at this point in time. I think the focus for all bankers is really to see, when the funding rates at the short end will begin to ease, which will bring down the short end of the curve from overnight to, let's say, up to 5 years. Down at this point in time. Liquidity in the system is quite tight, and as a result of that, you've already seen the fact that funding rates or cost of funds for banks has certainly gone up. That has certainly put some pressure on NIMs, for banks. And I think as banks, not so much about the 10-year, but I think the focus is to see when liquidity in the system will come back. I do hope that perhaps once the first rate cut in the US happens, and two is when the flows of money, thanks to the JP Morgan index inclusion, happens sometime in June, we will see some easing of liquidity. So really the focus of attention is around liquidity. I think there isn't that much space for the 10-year to move at this point in time.
Right. By the way, just want to mark that the EY think tank is with us in our studios and giving us all the intelligence, and it will be up on your screen as well. In a moment from now, we'll speak to Pranav Sehta as well and get his view too. But Rajiv, just one quick question before Shankar comes in with a question too. I heard you mention that the state capex has been strong. For some people, that's been the story of FY24, if you will, a 40% uptick there. Could that play a part in ensuring that the capex momentum stays high? Because not that the central government has anyways lived up to the whole amount of the capex that was the budget estimate per se. So is this not too disappointing, or are you disappointed with this 11.1% number?
I think what I mentioned was the fact that private capex has been quite strong, although much of that private capex is getting funded by internal accruals. But I think, to the point that you're making about state and state capex, I think that's really where the game is as far as India is concerned. We are seeing, healthy competition among states. We are seeing execution, although execution is different in terms of quantity and quality across all states. and given the fact that such a large percentage of central revenues is getting, there is devolution to the state governments, ultimately the onus of capex execution will rest with the state governments.
Hi Rajiv, this is Shankar here. I had a question. I mean, over the past few weeks, particularly after the bank results, there's been a lot of conversation about the credit deposit ratio. The mystery sort of is why deposits are growing slower than credit, and even though the GDP is growing faster. Do you think that if this budget sort of dips in, brings in a disinflationary, brings down the cost of capital, that part of the challenge that the financial sector faces will come down? I mean, this question is in two parts. What explains the lag in deposit growth, and would this budget address that?
I certainly do hope so. Like I mentioned to you, the focus of attention of most banks at this point in time, or most bankers at this point in time, is around liquidity. And I think what we've seen is there are multiple issues that we're currently grappling with. There's a large cash balance that's sitting with the government that is creating some tightness in liquidity. Currency in circulation is beginning to inch up, as it typically does as we get closer to elections, and we've seen outflows of FX, and to that extent has created some element of pressure on the liquidity. Ultimately, I think we will have to see some monetary action. Whether it is many more VRRs, OMO activity, or even a CRR cut at some point in time for this liquidity to ease as we go forward. Perhaps some of this liquidity has been tightened because of future cash flows that we are expecting. The JP Morgan bond index inclusion flows. For example, it is not very clear whether the RBI has not clearly articulated what exactly its thinking is at this point in time around this.
Okay, that sort of sets up the floor for the financial sector stocks.
Yeah.
Yes, indeed. Great. Rajiv, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time and your thoughts this morning. Now, a disinflation. No, the pleasure is entirely ours. Again, sticking to my left, Ravi, come to you. Thanks for joining in. A disinflationary budget, rightly pointed out by Manish. Rajiv seconds that as well. Is that disinflationary for real assets, real estate, equity markets, or do you think this capex outlay number, not a negative but a dip, if you will, but the deficit numbers looking positive, the markets will take it in the stride?
No, I think clearly there's a small bit of disappointment on the capex number, but coming on the base of a very high number last year, even though they didn't achieve their budgeted estimate, but it's still a credible number of 30-31%. On top of that, another 11% growth is not a bad number. So from an equity markets perspective, we were always looking at it from the credibility and continuity aspect. And I think on both the things, the budget has delivered. There is credibility in the numbers, whether it is on the revenue estimate side or whether it is on the tax buoyancy numbers. So we are absolutely okay. And there is some positive surprise on the fiscal deficit front. So that broadly, I think as Manish mentioned earlier, it's more a bond market budget than an equity markets budget. From our perspective, I think most of the focus is a continuation of which are the sectors that the government is going to focus on. And it's not so much of a needle mover, honestly. I think the mantle moves now to RBI, the elections up ahead, and even in US elections, and how those events are going to pan out is what is going to determine the way the equity markets are going to move.
Ravi, just point then, I just want to point out what PSU bank stocks are doing today, and you're seeing that uptick quite positively on PSU bank stocks. So the overall market is just, I think, absorbing everything that's happening right now. In terms of impact of capex, Ravi, I wanted to get a sense from you on what happens to all of those pockets of stocks, companies which have been fueled by large government spends. We don't yet know the exact figure for the railway outlay. Do you see any impact there on infra, etc.? Do do you see some cool off there in expectations of how much work is going to flow to these individual companies?
No, so first of all, even though central budget was doing bulk of the heavy lifting, going forward that mix has to change. Central government cannot be doing that much heavy lifting going on. The limits have been reached in terms of how much fiscal space they have. It will be the state government and the private capex that will have to do bulk of the heavy lifting in capex going forward. From that perspective, railway and defense are two sectors which are dependent on the central government capex. We'll have to take a look at what the breakup of that 11% is before I can say that if there is going to be any kind of a negative impact.
In fact, those stocks, rail stocks, Taman, have already started seeing a little bit of a decline. Suppose the budget, all your IRFC, Railtel, are seeing RVNL are all trading with some weakness. So the reaction, clearly, at least for now, knee-jerk it may be, is negative. Pranav, you want to come in? Are you impressed by what numbers were put out? I mean, I think people were expecting an overshoot on the fiscal deficit for this year. We've done really well, and going out as well into next year, those numbers look promising.
Absolutely. So the way I look at it is this is a prudent and confident budget. I think the finance minister seems to have a lot of confidence that growth will sustain, even if the capex is not at the same level as was probably expected by the markets. I think here she is also betting a little bit on the fact that if the borrowing of the central government is to be lower, automatically there will be more available for the private sector, and the capital expenditure push at the private sector, which has so far been a little elusive, will kick in a much stronger way. So I would feel that she is really betted on a far more confident approach, that if I control the fiscal deficit, this government has been very prudent on the macros. And this step, again, while the whole world seems to be still with a lot of fiscal deficits, already seems to be very conservative from a fiscal deficit point of view. So I think she is betting on that the fact that the macros will be good, will bring in foreign investment, will also push the Indian private sector to invest much more. Funds will be available for private sector capex. So I think it's a big bet that she is making on growth sustaining despite this particular.
In fact, that's been a priority for the Prime Minister, putting India on the global map. And we have seen that over the last decade. Things have changed and they moved. And I think just credibility is what we're currently building. And the focus is clear.
Absolutely. And that also brings in foreign investment in a much bigger way.
I mean, FDI is a big push.
So I mean, if the world feels that India is already very stable, one positive sign, and if its fiscal and macro policies are going to be continuously prudent, it probably might just give a big push to private sector capex, including foreign investments.
So the question to the jury at large, does private capex kick in a big way at a point of time when the world is not quite certain, and in a year which has got massive elections lined up? Shankar, you may want to start this, but the question to everybody.
I think it will depend largely on global cues. You see, one of the issues has been addressed, which is the cost of capital that was inhibiting private capex growth. So by doing this, by reducing the government's footprint in the borrowings market, it has created little room for the private sector. But that little room also has to be supplanted by rise in deposits, which is why Rajiv Anand spoke about the CRR issue. And so the CD ratio, whatever, people have cooked an avial out of it, but nobody knows what is the actual number that should be there. But if the liquidity improves, if the demand improves, but private capex is also haunted by the sectoral definition of the budget allocations. You see, the expectation for everyone was there would be something done for rural demand. Now that is an area that is sort of still wherever it is. Capex was expected to be higher but is at 11. I think it's a very credible figure because there is only so much that governments can execute. The absorptive capacity of the economy has limitations. So over a period of time we will see that. The money coming in from JP Morgan and other indexes is coming into the debt market, which will be only sovereign debt, so it will sort of create room for private borrowers. But they will borrow only when they see a certainty, when they see growth ahead, when they see consumption moving up. And that's a big if in a year where the global environment is sort of uncertain. Mercifully, the IMF has upped the global output. maybe these wars would sort of clear, the fog of war would clear out. And I still think that there is a latent desire to invest in the private sector, which might be unleashed if the correct kind of persuasion comes on. And the tax policies will play a big role. PLI will play a big role in this.
We didn't see too much of mention on that. Maybe we save for the budget. But
just one second, before we beat the government too much on the growth, just one thing. The FY24 capex number has actually been revised downwards from 10 lakh to 9.5 lakh crores. So on base of that, 11.1 is actually a 17% growth.
Got it.
So it's not like
even the effective capex is a very good number.
Yeah.
No. So, not beating it, because as Manish said in his opening answer, right, that if you set the limits and we see, they've not done this much as well, and the state government capex is anyways 40% growth, so there's a bit of a thing there. But the question only is that private capex and household capex, not quite there, and which is my question, that if they have not done anything in the budget, what Mr. Sehta said, that is the FM sounding confident of growth coming back, but can private capex come back in a year when global growth is looking slightly faulty?
No, I think they, from the central government's point of view, they have laid the ground in terms of, like you mentioned, about bringing the cost of capital down, building the confidence in the business, providing policies which are supportive of particular sector, and global confidence also in India's economy growing is also on a high. So, I mean, I don't see any missing piece in terms of the jigsaw, in terms of private capex picking up. How much pace and all we can keep debating, but I do directionally for sure private capex has to pick up.
So, a quick one. There was nothing said on divestment again this time. So that also was a missing piece. Nothing really expected after the disappointment.
Lesser said the better.
So to be fair,
sorry, but just Manish wanted to make a point on capex before we move on. Sorry, Manish.
Did I? Okay.
Yeah, because I thought you were wanting to answer.
No, I was just keenly listening to him. No, capex actually, I mean, if you have 100 buck of capex in a country, only 25 is done by government and 40 is done by household. Okay, so private capex is not Reliance Industries and companies of capex. It's about 40% is household, and that sort of has been pretty weak for very long, for a good 8-10 years. And because half the households are borrowing money in some form or other, okay, I think a monetary policy is a better way to reach them. Okay, so I mean, there in the budget speech in the beginning, she talked about 3 major reforms. One of them was middle class housing. And I think, you know, in July, as and when she sort of unleashes the next set of things for the 25-year of a developed country, I mean, she would and she should. And I think, you know, every Dharavi, every slum guy should be able to move to a Virars and Vasais of the world in a decent 2 BHK, is what the government should do, which is to lower interest rates, create subsidies, everything that Hong Kong's and many other, you know, East Asian countries have done. If we do that, we will have a decent capex. If you're looking for a capex like 2000s, where the you know, huge unleashing of telecom and power infra happened, and you know 20-25% CAGR happened, that's not going to happen. India's sort of basic foundation of a hardcore capital intensive infrastructure is done, and which is why the private corporations capex is not going to sort of grow very rapidly. Anyway, we're hitting at 30% GFCF level, maybe 1-2%, meaning that's the total investment as a percentage of GDP. It doesn't have much space. I think the only way we can accelerate the capex overall, if we can get households to build more houses, buy more durables, like fridge, TV, this, that, everything, two-wheelers. And we want that. And for that, I think a little bit of an easy monetary policy, a little bit of assistance on through credit subsidies for buying two-wheelers, buying houses. If that happens, likely we'll have a capex.
So to be fair, the finance minister had said that this is an interim budget. She has delivered, and she has said more to come in July. Perhaps that's why we are seeing a lot of expectations which didn't make it to the speech, and affordable housing push may be one of them, which is why I just quickly want to also show what real estate is doing. And real estate is getting a bit beaten down this afternoon, perhaps on those expectations that there would be something coming in. In terms of what could be done, and do we have the space to wait for July on pushing out consumption? Let me actually take this question to Mr. Sehta. If you want to put more money in the hands of people, you're not doing it through taxes right now. You've said, as is the tradition, I'm not touching taxes. Fair enough. Could anything more have been done, or we have the room to wait till July for this?
Yeah, I mean, from a tax standpoint, I'm not surprised that she says that we'll do something in July, not right now, which is fair. Also, they want to keep the tax rates a little stable. So that's they've not touched it right now. But I do anticipate some stops maybe in July to ensure there's more money in the hands of pockets of taxpayers. One thing that surprised me a little was she did extend, I think, from the speech, we have to see the fine print, the sunset dates for startups and for IFSC, which were expiring on 31st March 24. There was also the expiry of the concessional tax on manufacturing companies, which was ending on March 24. There was a lot of representations that concessional rate of 15% plus surcharge and cess should be extended for manufacturing units commencing production, maybe till 31st March 25, 26, whatever. That she hasn't mentioned. So does that mean she wants that to consciously expire and new manufacturing units are not going to get that? Is one surprising thing, because she did extend it for 2 of those who were expiring, or the sunset was on 31st March 24. But otherwise she's been pretty silent on taxes, saying I'll pick it up in July. I think the message is clear, which this government has been giving. They want to build a kind of relationship of trust with taxpayers and say that, okay, let's build that relationship of trust, and therefore taxpayer-friendly measures in some sense from a compliance, etc. standpoint is, I think, what she's hinting at. But the real measures on tax will come in the July budget, or the main budget, June, July, whenever it comes.
Let me take the question to Shankar. Is this a populist pre-election budget at all, or they're waiting for all of those announcements before the election dates are announced and when the actual heat and dust hits?
So the answer is in 2 parts. Every year, somewhere before the budget, some major scheme gets extended. So the free food, free ration scheme got extended last year for next 5 years. Okay. There is also the fact that the Prime Minister has publicly sought responses from various people on what they want in their wish list of the Viksit Bharat. That will form the template for the manifesto. So they have kept some room for the promises now. You can't be giving away everything, then what are the people going to vote for? So there is a combination of this play here. I think it can't be called populist, primarily because it is conservative in its approach. It has brought down the targeted fiscal deficit number is very impressive. The level of borrowings going down is very impressive. And even then the capex going up is stabilizing. I think what's happening here is that the government is betting on the private individual and the private consumption. Private final consumption is virtually half of GDP growth, and that's like a puzzle. I mean, why isn't it growing? Which part of the quintile isn't kicking in? So I think the cost of capital being brought down may kick some animal spirits in the system, and that's what they're. I also think that much of this will reflect in their presentation. One more time, they're making a presentation to the rating agencies for improving India's rating. This has been a constant endeavor of this government, that India deserves a better rating, and so they will pitch this 5.1, lower borrowing, inclusion in JP Morgan and Bloomberg, probably one more fund. And see, this is very attractive to the foreign investors, this picture. It may not be very attractive today to the real estate stocks or stuff like that, but on a performance term, this is very good for the financial sector, because there is a potential for bringing down the cost of capital for them.
Ravi, what happens now? Budget is behind us in that sense. We've got what we were looking for, a little bit of it. If you're an investor in this market, how do you view this? What happens next? Does the focus move back to global cues? Does it move back to the elections? Or do we again wait in anticipation for July?
No, I think...
I mean, what will you tell your clients at this stage?
I think, as mentioned on the panel earlier, the mantle now moves to RBI. The space has been created. Government has done its bit in terms of providing space for RBI to start implementing its monetary policy. So currently the most important thing that we are dealing with is the liquidity deficit that we are facing right now, and what steps RBI takes to correct that is what is the most important thing from equity markets perspective.
So all that is macro. Yes, last year when the budget happened, you saw sectors like defense and railway break out. Talk to me more micro right now, right? So if I had to pick a sector, what would it be? Do I have a sector? Can I call a trend into this year, or best avoid it for now?
No, it's the continuation of the trends.
So you would still buy railway, you would still buy defense?
We are still focused on domestic cyclicals, domestic capex-oriented stories, domestic. There are some noises being made about affordable housing. So there is some hope that, okay, that will also pick up pace. But otherwise, the weak link continue to be the rural consumption and the exports. Those two areas, I don't think enough has been done for me to say that the trend is going to change over there as of now. And hence, the current ongoing themes will continue. But from the perspective of the valuations, these are the exact areas where market has recognized and quite a bit of rally has already happened. So a little bit of transition might be underway over the next 6-9 months, where these already recognized sectors might actually peak out, and the ones that are providing the opportunity don't yet have the triggers in place yet, but those are the areas where valuations are getting attractive now.
All right, we'll quickly go across to Janani standing by. She's been tracking the entire budget. She's in North Block. What are the big takeaways, Janani?
That's right, Tamanna. I think we've all heard the big announcements, the numbers that we've been waiting for. But I want to, pull focus to some of the key details here. If you look at, of course, the fiscal deficit, it's now at 5.1. This is a 70 basis point drop from 5.8, which is the revised fiscal deficit estimate for FY24. Now, what I'm more interested is in lakh crore rupees. This is 16.86 lakh crore. Previous year, it was 17.86. So this, again, we can see in actual terms also, there is a big difference. Market borrowing lesser than what it was before, coming in at 11.75 lakh crore. Again, a very interesting aspect here. When we talk about receipts as a whole, an interesting trend that we notice is that the estimation for corporate taxes is actually lower, in fact, than the income taxes this time. Income taxes is at 11.56 lakh crore, whereas corporate taxes is at 10.42. This is a little bit of a deviation, considering that corporate tax expectation is always much higher. Talking of expenditures, the subsidies, ones that we've always been interested in from the beginning when we started tracking this, fertilizer subsidies actually gone down. It now stands at 1.64 lakh crore. Food risen a little bit more, considering the extension of the food subsidy scheme. This is at 2 lakh crore rupees, and petroleum subsidy significantly increased at 11,000 crores, 12,000 crores almost. And other important schemes like the Manrega scheme has seen an increase in outlay, but this is very much similar to what was in revised estimates. Manrega scheme's outlay is now 86,000 crores, whereas PMAY, the PM Awas Yojana, one that the Finance Minister also announced that will be extended to build 2 crore more houses in the next 5 years. That has got an outlay bump from 54,000 that we saw last year to 80,000 crores in the FY25 budget. Three things that stood out for me. I will end with that. Of course, one, the Finance Minister's focus on deep tech and perhaps investments through that. And the second, of course, is the 1 lakh crore funding towards sunrise sector research for private companies. We'll have to see which shape and form this will take. And of course, the PMGKY enhanced target. No tax cuts, no tax changes, might have been a letdown, but of course, she also spoke about how there'll be a withdrawal of outstanding tax demands. Now, in the back of my mind, this will be a cheer for the industry, considering that up to 25,000 pertaining to FY25 and 10,000 pertaining to FY11 and FY15, these will be withdrawn. This will be a cheer for industry, something that has been litigated for quite some time. Petty amounts, but still an interesting one. Back to you.
Absolutely, Janani. Thank you for that. Janani there getting us all the highlights of this budget, and let's see how markets are responding to it. No big moves in either direction, at least, on the Nifty and the Sensex. You're seeing real stocks maybe taking a bit of a beating today, and to be fair, expectations had run up. They were all kinds of fantastical figures being put out there on rail, on what the rail budget will look like, or what the allocation for rail will look like. Maybe a bit of a cool off that we're seeing there on real estate as well. IRB Infra is another one that we can quickly just check and see what's happening there. And, some of these key names maybe seeing some cool off this morning. But, Ravi, let me come to you in terms of big themes that you see playing out. As far as the market is concerned, will the big relief come from that? There is no negative news. It's business as usual.
No, there is a positive news. Fiscal deficit number is actually positive.
I think the markets are becoming mature.
Why do you think there's no real response or reaction right now? Because that was definitely not priced in.
That's true. However, as mentioned earlier, this is a vote on account and interim budget, and it is not budget as an event for equity markets anyway has been reducing, in its importance, and this one is even lesser, if I were to say, because of it being a vote on account. So, for all practical purpose, central government and budgeting exercise can only provide this much needle moving impetus to the overall scheme of things. So, the market moving events lie outside of the budget for me. Most of the policy announcements do come outside of the budget. What RBI does is important, what Fed does is important, and how the elections pan out in US and India is what is more important from the market's point of view.
So in terms of what the Fed did last night, and of course all of that paled in comparison to the very hectic news morning that we had and our budget, etc. When everything is digested and goes down, do you think that that's going to be something which is not half bad? A March cut now out of the way, ruled out.
The market was running ahead of expectations. Yeah. It's not that Fed has done anything that they shouldn't have done. It's just that market was running ahead of expectations, and I think some reality check over there. But the fact that we did not have a hard landing last year, and now there are expectations of a soft landing this year, that itself tells you that the strength in the US economy has till now surprised everybody positively.
Are you taking a cash call on your portfolio right now, or are you completely invested?
No, I mean, so cash call is also divided into what the existing portfolios are and what the new money is coming in. First of all, a lot of people are taking a call not to accept new money. That's not the case with us. We are accepting new money.
And you're allocating?
But we are not very aggressive in deploying on that front yet. So we are sitting on about 25-30% cash on new portfolios, but the old portfolios are about 5-10% cash.
Okay, let's get across to the CI panel where we're talking to some of the CI members.
This actually does is, one, it improves the competitiveness of the companies in the domestic sector. In a way, it also improves the global competitiveness, because if you come to think about it, while the whole idea is that we don't export our taxes and duties, but eventually our tier 2 and tier 3 suppliers do not get a refund of these taxes or duties. So they, we tend to pass it on. So I think with the duties coming down gradually, I think this definitely improves our global competitiveness. And I think most importantly, it also promotes the ease of doing business. Because what was happening was that there were a lot of classification issues with, these duty structures, different slabs. I think what the government has done, what the Honorable Finance Minister has done, is to kind of reduce the number of slabs. So that, removes all sort of ambiguities. So I think all in all, a very positive step. And I think the target that we have for ourselves in the industry is of an export of $100 billion worth of exports of mobile phones in the next 5 years. And I think we are definitely inching closer to that. And these steps are definitely very positive in that direction.
It's interesting what you were saying, Manvi, that, she stuck to a clear path. It wasn't, there weren't very many political announcements. One would have thought there would have been a large number of political slogans ahead of the election. But in fact, the only one which caught sort of my ear was when she said previously social justice was mostly a political slogan, all right? Apart from that, it was a short sort of budget speech. There wasn't very much over there. But one of the areas she did focus on, sir, and I'd like you to talk about it, the Skill India mission. We were in fact discussing it even yesterday. Which the government says has resulted in 1.4 crore youth being trained. This is essential for us to take advantage of our demographic dividend, right? Young people, reskilling, upskilling. Are these numbers encouraging, or does a lot more need to be done, even in the interim period?
Well, I would say the numbers are indeed encouraging. And of course, India is a large country. We have a large youth, and that's our demographic advantage. So it will be a journey. So there will always be more opportunity there, definitely. But the numbers are encouraging. I think what is also encouraging is the number of very good institutions that have been set up, and the Honorable Finance Minister alluded to many of those, a few of those, I would not say all of them, a few of those. So I think all in all, very encouraging. And what is very encouraging also is that, there's continued focus. Ultimately, it's going to be a journey, and we need to build it up step by step, and in each step, see how we can increase the pace. And that's what's happening, and so therefore I would say very encouraging.
Ms. Silla, another key point which I noticed she did, of course, speak about the economy doing well. The average real income of people has increased by 50%. That's a very, very major statement. It's not necessarily all that visible, but statistically it seems to be backed by the government or endorsed by the government.
Yeah, that actually, we haven't seen that number being calculated in the past, so it was interesting to hear that. Part of it is, of course, just in India every year, because of inflation, the wages go up 8 to 10%.
But she said real income.
She said real income. I'm not sure if real income has really gone up 50% unless you take in the
it's certainly going to keep us all busy over the next few days.
Yeah, I think you have to take into account investment income. Perhaps if you add that, then maybe real income has gone up, but it couldn't just be from wages. And then, of course, maybe perhaps in the lower segment of the economy, like the farmers and the rural areas. Also, I think incomes haven't gone up that much from anecdotally talking to people. So I'm sure there is a calculation there that we haven't seen.
Dr. Goenka, this is a slightly philosophical question I'm going to ask you. You're a veteran of many budgets. You've seen it through different sectoral lenses as well. I'm just wondering if the content of this budget speech, in a sense, raises expectations come July, post the elections. And, does that mean, okay, we've spent the last few months really taking stock of India's economic growth relative to the rest of the world, strong position, inflation under control, work to be done perhaps on employment, but generally a pretty good story vis-a-vis the rest of the world. My question is, listening to what you did today, are there going to be really charged up expectations for July?
So let me first say this, that knowing this government, I don't think they're going to start working on July today. They would have already done that work. So they kind of know,
that's why I'm wondering if this is a teaser.
Yeah, so they kind of know what's going to come in July, and this is in a way the preview of what we're going to see in July. So yes, it has raised expectation, but in a very positive manner. I think if you look around here in this hall today, everybody will think that the budget has given, they came to kind of expect nothing much. I mean, you come and listen for a while and go back, but suddenly you see a lot of sort of hints of what might be coming. In all sectors, it's not just about industry, it's about social sector, it's about infrastructure, it's about industry, it's about R&D, it's about education, it's about skilling, everything. So it's a preview which I think, yes, does raise the expectation, but I do believe that we will not be disappointed in July.
The fiscal deficit, and Mukesh, I apologize in advance for putting the critical question to you. The fiscal glide path management seems like 24-25 is probably the best year in a while to have really ambitious fiscal deficit management path. In light of that, are you satisfied with what the finance minister has put out there?
So what you said factually for fiscal year 23-24 is correct, but I think you need to give a context. If I look at fiscal prudence, this is a golden period.
Yes.
You look at where we were immediately in the COVID year 2021 and where we are in 23-24. That's phenomenal. You look at it since the legislation of fiscal responsibility and budget management, 2004 legislation. This is a golden period for two reasons. Number one, not just the exact figures that you're talking about, but also that this is revenue as well as expenditure driven. In the past, fiscal consolidation were largely revenue driven, where a lot of expenditure was going into areas to pay off pensions, to pay off interest payments for market borrowings. She's demonstrating that in the last 3 years, I have not just achieved an unprecedented trend in revenue buoyancy, but also spent in capital expenditure, which will have a multiplier effect in the future. So yes, given the robustness in the tax collection, one would have thought that she would have struck somewhere at 5.6, so that 5.1 for next year would have been more achievable. But I think that if the revenue mobilization occurs at the pace at which it is occurring, both on direct tax and GST front, she may not miss a lot 5% target for next year.
I'm going to get Mr. Puri's views. If you could pull all the strands together of what the thoughts on the agri sector are. And again, it's a space where you have your finger on the pulse as CMD of ITC. Collect all the strands of what has come through in the interim budget speech on agriculture and lay out the path forward for us.
Well, I think it's quite encouraging, and we have to look at it in the context of the manner in which various interventions have happened over a period of time. And as I said earlier also, it's a continuation of the themes that have been there in the past. So in the past, there has been a lot of focus on bringing technology to the farm sector, a lot of focus on aggregating farmers either through FPOs or cooperative, because we have plenty of small and marginal farmers, a lot of focus on digitization. And now I think it's building on that foundation and setting very strong directions as far as, for example, sectors like, some sectors were called out. It's sectors like aqua, 100,000 crores of exports, the dairy sector, oil seed sector. That's very important because that's our largest import basket.
Indeed.
Okay, so very very strong direction set there, and I think it's indeed very very encouraging. And this kind of sectoral focus, I think it is what is required to bring in, to enhance the productive capacity and simultaneously create the market linkages. I think this whole idea of 5 integrated aqua parks is fantastic, because you really need an integrated ecosystem. Just like you need a competitive ecosystem in manufacturing, you need it in agriculture also. So an integrated infrastructure can help create that. Yeah. So I think all very good steps to really build on the potential that Indian agriculture has got.
Okay. Well, continuity and credibility, I think that is the point that is coming out of that CII panel as well. Well, interesting. Now, just before we take that break, though, we need to slip into one. Want to mark Paytm, still down 20%. Want to mark some of the shipping counters. I don't know if this is belief that shipping will get some infra status, etc. I don't know if footnotes have it. I don't know if this budget was the budget for it, but I think they have come off as well. SCI, for example, is down today. So just pulling off Cochin Shipyard, etc. So the whole shipyard space has come off. But clearly, the talking point of this day from a market's perspective has to be Paytm and the kind of moves that it has made, or rather the kind of move that it is not able to make is just been stuck at the 20% lower circuit. We need to slip into a very quick break. We come back, continue a conversation with Shankar Iyer, get in more guests as well. Stay tuned. India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Yeah.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy.
Welcome back. You're watching the budget coverage on NDTV Profit. Lest we forget, it's also an earnings heavy day. Adani Port numbers on your screen, and those numbers look strong. I mean, don't quite have the Bloomberg estimates right now, so I'm not completely sure. But suffice to say, a 44% uptick in revenue and slightly better than that on the margins should probably be viewed constructively. That's what the market seems to be doing. Standard disclosure, the Adani Group owns NDTV and you're watching NDTV Profit. But, okay, margins are actually lower, but around that level of 60-odd%. Okay, back to the budget conversations. And Shankar, you making this point in the break that in some sense, this, I mean, as Manish said, it's a bond budget. It's a budget that plays to the gallery, just a different kind of gallery.
Well, let me sort of half in jest say it is also a blonde budget. Because what do the foreign investors look for? Foreign investors look for stability. Political stability is pretty much assured.
Yeah.
The questions about majority and all that has been settled or will get settled. The predictability is that there is no messing around with the tax structure. And there is some sort of extension of the sunrise, two sectors, whatever. Now you come to the fiscal macro management. So one of the criticisms about the Indian macro was that as a large economy, which was growing at a pace that was good, it was competing for investments with the likes of, say, Vietnam, smaller economy, Mexico, and others. What is the macro picture in comparison to those things? India had a larger fiscal deficit, larger debt to GDP ratio than some of the countries for which it is competing with, for the China plus one, nearshoring, offshoring, whatever the phraseology. By promising to bring down fiscal deficit to 5.1, we signal to the investors across the world that here's political stability, here is predictability, here we are bringing down, we are being conservative, we are bringing down the cost of capital, and by bringing down the cost of capital, we are sort of at one level moving the animal spirits in India, but we are also luring the animal spirits, the surplus, all economics, global economics functions on the kindness of strangers. So the kindness of strangers for whatever return that they want will come to India, and India will once again make a pitch for a rating upgrade. And all of this, when you see, this is a fairly good, attractive destination. Even now, India has a higher fiscal deficit than the other emerging economies. Vietnam has something close to 4%. Mexico has something close to 3.4%. So that is the target that we are looking at. And I think that this articulated well, the story is presented well, you get a good directorial team. This could win the market's Oscar.
It's needed. Sorry, just the point that it's needed because for all the talk that we do about FDI inflows, 2023 is been a bit of a lackadaisical year relative to estimates.
The next question, right?
Not what she said. I mean, she compared it to a longer period, right, from 8-10 years ago. But from the pitch, as far as the government is concerned, is that FDI is very much alive and kicking.
But you can argue in bits and pieces, but the actual numbers show that FDI hasn't been the strongest in 2023.
And also, just taking a cue from what you said, Shankar, this is great marketing of sorts, right? And this is also ensured we've got into the JPM bond index. So that plays a strong part on FDI and bond markets. Equity markets aside, haven't been, last year we were not at the mercy of FI investors. In fact, Jan saw FI selling out the most out of India as compared to our Asian peers. does it have any impact for foreign inflows coming into equity markets per se?
So this is part of the reason why they should or they will consider India, in the sense that, sound macros is something that for FPIs are looking for. In another way, the differential changes. When India's interest cost comes down and the equity returns move up, the argument is that once the capex cost, capital cost comes down, equity returns move up, the returns will be better, currency is stable. All of this will play into the mix.
Structural.
It is more structural. Last year, why they were selling off has a lot to do with what's happening in the US.
Right.
And now what has happened to China, I think now both FDI and FII money will be looking for a destination. Again, I say that it depends on how they produce and present this movie.
Okay. Now, talking about, if you're talking about this as a movie, was it a hit? Was it a blockbuster? Or is it going to go straight to OTT? Sunil Singhania, founder, Abacus Asset Manager, is joining us, and I'm going to take that question to him. Sunil, very good afternoon. Great to have you here on NDTV Profit and, have your take on the budget. Can you tell us why PSU banks are flying this afternoon? Is there anything exciting from what the finance minister has said? I think the biggest takeaway has been that she's stuck to the script, the straight and the narrow. This is an interim budget and it was delivered as such.
One is very clear. I think last 3-4 years, we have been having very consistent policies and, I would say budget estimates as well as, the way forward. And today's interim budget has only reiterated that. I don't know specifically what has happened, but the fact that we have maintained a fiscal prudence, roadmap with fiscal deficit this year expected to be better than what was budgeted, and the fiscal deficit next year of 5.1%, clearly is giving the confidence that, unlike the perception that in a budget year, the government might dole out subsidies and all, I think we have just stuck to fiscal prudence and growth in the economy. And I think the bond yields have also corrected by 10 basis points. Bonds have moved up. And maybe, that is giving the confidence that, this whole, I would say, prudence and, focusing on the core as far as the long-term trajectory is concerned, continues to be the same. So I think all in all, a non-event, but the good thing is that they have stuck to what has been done over the last 3-4 years, and hopefully it will be carried forward as we speak.
Okay, Sunil, so non-event, but did anything really surprise you? I mean, one of the beliefs was that it's a bit of a bond budget because the fiscal deficit numbers being reduced, but capex outlay not as high as the street would have imagined, though the effective number still seems to be 15-16% based on the revised estimates for FY24. You happy on the growth front or the impetus that the budget could have provided and has kind of provided?
One, it is not a full-fledged budget. It's a statement. It's more an interim kind of a thing, and that's why you had a very, very short speech, focusing more on the trajectory rather than on the detailing. Second is, I think the growth rate projected is 10.5% on a nominal basis, which is great. I think if you have a 3.5% inflation, then we are looking at 7% real growth rate. I don't think we should be expecting more than that. The other thing we should not forget is that this year, obviously, the fiscal deficit target has been cut 5.1% for the year ahead, and we'll also have a huge flow of foreign money coming into the bond because of the fact that India's bond has been included in the JPM index. So I think we should wait for the full-fledged budget to make any very, very, I would say, strong kind of a statement. But otherwise, as I said, sticking to what was being done, I think that is the biggest positive. After a long, long time, for the last 3-4 years, we are seeing a scenario where there are not too many changes, which is what businessmen and people like. We want more of the same consistency, clear focus. I think the targeted spend on infrastructure is almost 11.1 lakh crore, which is a 10% growth over last year, which was again a 33% growth over the previous year. So I think in 2 years, we have like a 50% growth in terms of spend envisaged for infrastructure. And I think that is what will make this country move from maybe 4 trillion to 6-7 trillion for the next 3-4 years in a very systematic manner.
Also have with us Prateek Agarwal, ED of Motilal Oswal AMC joining in. Prateek, afternoon. Thanks for joining in. Prateek, Nirmala Sitharaman did as promised. It was an interim budget. It was a vote of account. Big bank announcements are potentially moved to July. Is it back to business from today? Because the markets are lukewarm in their response right now.
No, sure. So markets have had a great time. It is fine if they take a rest for a few days. In many ways, if you see the response of the market post-budget, typically expectations are high pre-budget, and you do expect to see a correction post. Now, this time around, more or less markets have maintained their levels, so that is quite good. Which kind of means there was not much high expectations or position building before the budget.
Right. Sunil, hi, it's Amina as well joining in. Sunil, now what happens to the portfolio? So what sort of a stand would you be taking? Last year, of course, after the budget, you saw sectors that were government focused, rail, infra, defense, do exceptionally well. In terms of spotting the next trend, this budget hasn't enabled an investor to do that, has it?
One is, I think, investors who have stuck to their core portfolios from a 3-5 years perspective have created a lot of wealth. Obviously, if you're a trader, you would want to jump from one sector to another. But as I said earlier, I think the narrative remains the same. The focus is going to be on infrastructure development. The Prime Minister has also added 1 crore of solar rooftops to be installed as an added target. So I think, housing for all, rooftop solar, I think moving away from dependence on imported energy sources, rail, infrastructure, reducing the cost of logistics. I think all in all, I think making India a great place to manufacture, not only for the domestic economy, but also over a period of time, exports. And I think that is how any long-term portfolio would be positioned. Now, tactically, you increase your weightage to some financials because bond yields have fallen, you might do that. But I think overall, nothing changes after this budget.
Yeah. So nothing changes after this budget. Perhaps the expectation was that you'd see policy continuity, which you're definitely seeing. Prateek Agarwal, would that be the big takeaway? And perhaps a comment from you on the disinvestment target. If there has been sort of not a black mark, but a negative on list of targets, and whether this government has achieved it or not, it would be perhaps your divestment. And that divestment target for FY24 has been cut to 30,000 crore rupees. By FY25 has been targeted, or that target has been made 50,000 crore rupees. Do you think that will give some succor to the markets and something to now look forward to in terms of the next big trigger?
Yeah, I have a slightly different take there. In our line, if you have to sell something, you keep quiet about it. You don't tom-tom about it. Because if you have to sell a large quantity, and you tom-tom about it, the markets get pressurized, and the otherwise, price discovery, which the markets are supposed to do, gets hampered. So equity fundraising through disinvestments have to be opportune, done sharply. The players have to be ready all the while. If the government needs money, do it and fast, not tom-tom about it all the while. Is my thought. In fact, a big crack that happened in PSUs happened because we were seen to be selling good assets at any price through ETFs, through whichever manner, and that put the government in a not so good light as weak shareholders. And one good thing that has happened is we are doing it opportunistically when the need of money is there, when the markets will absorb it. And I kind of like it. Second, why do disinvestment if you are any which ways better off versus your fiscal targets? Keep it for the rainy day. I think that is what has happened. So next year again, if they have put a 58,000 crore kind of a number, is a small number. I mean, if you just sell a few percentage points of a few PSUs which are doing so well, you will achieve it. No big deal. And they will do it if they need the money.
I'll just take a quick take from Sunil also on the point about divestment, and a very contrarian and unusual take from Prateek, that what's the big deal? Why do you need the money and why should you go out and sell? Biggest point is, why should you tom-tom about it if you are? But nevertheless, it's an indicator that policy watchers and the market more so does look at. Any interesting opportunities there you see, Sunil, from the government's point of view?
So I think one is, I think what Prateek said was very true last 4-5 years, but things have changed dramatically. So first of all, the balance sheet of the government has become very, very strong. The value of the government's holding in PSUs have then doubled over the last 1 year. And I think that, at least from a balance sheet perspective, I think it's a very healthy balance. Second is the markets have changed. Markets are looking at supply. And in fact, if you see over the last 6-8 months, whichever company the government has divested has been more than oversubscribed multiple times, and the prices then have even higher up. So I think the whole, I would say, acceptance of government companies has changed, and investors are lapping it up, looking at the prudence with which these public sector companies have been managed over the last 5-6 years. But having said that, I think the revenue, tax collections and everything is phenomenal. We are in a situation where, the budget deficits are coming lower than what is expected. And therefore, divestment, if it happens, fine. Even if it doesn't happen, I don't think it is going to make too much of a difference. The only one thing I would like to add is that, say, a company like Air India, which was losing 30,000-40,000 crores every year, I think by divesting that, we have saved 30,000-40,000 crores, which was getting eaten away every year from the budget. I think if there are these kind of companies where, from being a government company, you cannot turn it around, I think that is what the focus should be. Companies which are doing well, earning well, I think only by way of dividend, the government will be able to maybe make more than what they would by way of this.
Hi guys, this is Shankar here. I have a question for both of you on, continuing on this issue of views on divestment or disinvestment. There is a reason why SEBI sort of puts up a number of 25% liquidity in the market, and there is the reason of opportunity cost that is hiding in government balance sheets, which could be leveraged to build infra or to fund welfare or whatever. Having said that, my question to both of you was that if the government has to, say, expand, and both of you agree that the balance sheets are better, that the PSUs are better managed, that they're doing well. So the government creates this list of disinvestments, possible privatization, various categories. But I think the opportunity is more in issue offloading of some more shares, diluting holdings, say, in PSU banks or other companies. If you were, and I'm asking both of you, if you were to create a list of, say, 3 PSUs, which you would say are ripe and would lure foreign buyers. We're also interested in FPIs. So some of the PSUs have drawn foreign investment, for instance, PFC and IRFC and all. So what looks ripe to you guys to sort of...
I'll just go one step forward. So, listing helps.
Yeah.
Divestment also leads to listing. Listing helps because then there is public scrutiny. There is answerability to the outside investor. And we have seen over a period of time, listed public sector companies tend to be more accountable than unlisted. And I think that also helps. So, for example, Life Insurance Corporation is listed. Now they are being scrutinized. What investments are they doing and so on and so on. So I think it is also including efficiency. About your questions about which PSUs, I think the government has been very smart. I think when the banks needed capital, the government was providing with capital. And there are so many banks which had, government holding go up to like 85-90%. And now tactically, the government is allowing these banks to raise capital, which will aid them to grow their balance sheets further, which again will aid capital formation and also allow them to provide the necessary.
आज का ये बजट इंटरिम बजट तो है ही, लेकिन ये बजट इंक्लूसिव और इनोवेटिव बजट है। इस बजट में कंटिन्यूटी का कॉन्फिडेंस है। ये बजट विकसित भारत के 4 स्तंभ युवा, गरीब, महिला और किसान सभी को एम्पावर करेगा। निर्मला जी का ये बजट देश के भविष्य के निर्माण का बजट है। इस बजट में 2047 के विकसित भारत की नींव को मजबूत करने की गारंटी है। मैं निर्मला जी और उनकी टीम को बहुत बहुत बधाई देता हूं। साथियों, इस बजट में युवा भारत की युवा आकांक्षाओं का, भारत की यंग एस्पिरेशंस का प्रतिबिंब है। बजट में 2 महत्वपूर्ण निर्णय लिए गए हैं। रिसर्च और इनोवेशन पर 1 लाख करोड़ रुपए का फंड बनाने की घोषणा की गई है। बजट में स्टार्टअप्स को मिलने वाली टैक्स छूट के विस्तार का भी ऐलान किया गया है। साथियों, इस बजट में फिस्कल डेफिसिट को नियंत्रण में रखते हुए कैपिटल एक्सपेंडिचर को 11,11,111 करोड़ रुपए की ऐतिहासिक ऊंचाई दी गई है। अर्थशास्त्रियों की भाषा में कहें तो एक प्रकार से स्वीट स्पॉट है। इससे भारत में 21वीं सदी के आधुनिक इंफ्रास्ट्रक्चर के निर्माण के साथ ही युवाओं के लिए अनगिनत रोजगार के नए अवसर तैयार होंगे। बजट में वंदे भारत स्टैंडर्ड की 40,000 आधुनिक बोगियां बनाकर उन्हें सामान्य यात्री ट्रेनों में लगाने का ऐलान किया गया है। इससे देश के अलग अलग रेल रूट पर करोड़ों यात्रियों में आरामदायक यात्रा का अनुभव बढ़ेगा। साथियों, हम एक बड़ा लक्ष्य तय करते हैं, उसे प्राप्त करते हैं और फिर उससे भी बड़ा लक्ष्य अपने लिए तय करते हैं। गरीबों के लिए हमने गांवों और शहरों में 4 करोड़ से अधिक घर बनाए। अब हमने 2 करोड़ और नए घर बनाने का लक्ष्य रखा है। हमने 2 करोड़ महिलाओं को लखपति दीदी बनाने का लक्ष्य रखा था। अब इस लक्ष्य को बढ़ाकर 3 करोड़ लखपति दीदी बनाने का कर दिया गया है। आयुष्मान भारत योजना ने गरीबों की बहुत मदद की है। अब आंगनवाड़ी और आशा वर्कर, उन सबको इस योजना का लाभ मिलेगा। साथियों, इस बजट में गरीब और मध्यम वर्ग को एम्पावर करने, उनके लिए आय के नए अवसर बनाने पर भी बहुत जोर दिया गया है। रूफटॉप सोलर अभियान में 1 करोड़ परिवारों को सोलर रूफटॉप के माध्यम से मुफ्त बिजली प्राप्त होगी। इतना ही नहीं, सरकार को अतिरिक्त बिजली बेचकर लोगों को 15 से 20 हजार प्रति वर्ष की आय भी होगी। और ये हर परिवार को होगी। साथियों, आज जिस इनकम टैक्स रेमिशन स्कीम की घोषणा की गई है, उससे मध्यम वर्ग के करीब 1 करोड़ लोगों को बड़ी राहत मिलेगी। पिछली सरकारों ने सामान्य मानवी के सिर पर दशकों से ये बहुत बड़ी तलवार लटका कर रखी थी। आज इस बजट में किसानों के लिए भी बहुत महत्वपूर्ण और बड़े निर्णय लिए गए हैं। नैनो डीएपी का उपयोग हो, पशुओं के लिए नई योजना हो, पीएम मत्स्य संपदा योजना का विस्तार हो और आत्मनिर्भर ऑयल सीड अभियान हो। इससे किसानों की आय बढ़ेगी और खर्च कम होगा। मैं एक बार फिर सभी देशवासियों को इस ऐतिहासिक बजट के लिए शुभकामनाएं देता हूं। बहुत बहुत धन्यवाद।
Lot of mention about what some of the nuances have been around the budget announcements. The big picture though, as we've discussed with Shankaraya and all our guests here, is that it's a bond budget. Navneet Munot, MD and CEO of HDFC Asset Management and Chairman of AMFI, joins us right now on the show. Navneet, great having you. Thanks for taking the time out. Do you reckon that it's a budget which kind of balances out the act? Usually that is, the equity markets look out for what's in the budget. This time around, the bond markets have a lot to smile for.
No, absolutely. I think almost every section has a lot to smile for. It is not only the bond market and the equity investor, provided they are long-term investors, but almost every section of the society has a lot to look forward to. This is not only about the income and expenditure account of next 1 year. This is not only about the policies and the programs for next 1 year, but continuing on the theme of an Amrit Kal, a journey towards a Viksit Bharat over the next 25 years. I think that continuity is more important, and I think that will make everybody smile a lot more than what they were smiling till this morning.
Navneet, anything disappointed you? Because there are a lot of things that could actually have pleased people, right? Fiscal deficit numbers and the glide path much better than what anybody on our shows or in the brokerage community had spoken about. Maybe you also have not thought of a 5.1%. So is that great, or would you have hoped for, it's okay, let it be 5.2, 5.3, but maybe a higher number on capex?
I think we need to balance both the growth impetus, that over a period of time higher growth will help us in bringing down public debt to GDP, and at the same time the near-term consolidation. I think the budget has tried to balance and both the objectives, and I think I'm pretty okay with the numbers that have been presented. In fact, another credit that we need to give to the finance minister and this government, that we saw that in 2019 and we have seen the same in 2024. Despite being an election year, the budget did not try to increase the fiscal deficit by doing spending which could have been kind of beneficial in the short run but could have impacted the fiscal math over a long period. I think remaining on the path of fiscal discipline in an election year is really commendable.
Navneet, good afternoon. Tamanna here. I'm just trying to understand from a market's perspective and impact. One, why are we seeing a relatively tepid response overall on the markets? Is there a greater expectation that was built in before? And secondly, you know, is this budget in any way, in your view, positive for PSU banks in terms of a lower government borrowing? Is that what you reckon is the reason?
So keep few things in mind when you are trying to judge the budget by the market reaction in few hours. This was an interim budget. This was a budget which was trying to, outline all the reforms and achievements of the last 10 years. This was a budget to outline the vision for the next 25 years. And then the today's market may be driven by many other factors which are beyond this budget, right? I mean, we have seen the global markets, how they performed yesterday and today. We have to keep in mind the global environment when we are looking at the markets today. But by and large, as I mentioned earlier to Nimesh, that I think I'm pretty feeling very positive that the way I think right notes have been made, whether on the continuity of reforms, whether on credibility of numbers, and whether the conviction that India can become a developed economy. Your specific questions on banks, I think if we remain on the path of fiscal consolidation, it gives space to RBI on the monetary policy side. This is a critical input for Reserve Bank on what government is doing on fiscal side as well as on supply side reforms. I think if we continue on that and then we have a better outlook on inflation, this will create a space for monetary easing over a period of time. Of course, we need to keep the global context in mind for that as well.
Navneet, with the macro picture turning out to be better than what the most optimistic expectation was, do you think in the eyes of an FII now Indian equity markets become more attractive? I'm asking you this because I know for bond markets, FDI, this is a great pitch, right? But for equity markets, valuation was turning out to be a bit of a concern. Do you think this positive news flow could sort of offset valuation worries?
Will it enhance confidence? The answer is yes. Will it result in cash in the immediate near future? I think that depends on many other factors than where India is currently, right? I mean, they are driven by many other factors, including relative valuations, including the valuation, including the bond yields, including their own home market, the flows, so on and so forth. But if you ask me a longer term, whether we'll have greater flows from the global investors, for the reasons that I mentioned earlier in terms of the government policies, macro stability, financial stability, and a stronger growth outlook, the answer is clearly an yes. In the near term, there are many other factors that drive flows, and it's difficult for me to give that view.
Navneet, quick one on the debt market. Equity we've talked about. Give me a sense of what are you doing in the debt market? Would you be recommending buying duration at this stage? Is that a strategy that is looking, significant and also, attractive at this stage with everything that we've seen in terms of bond markets?
So over the last couple of months, Fund House has been running a relatively high duration, and we have benefited from that. We have also benefited from flattening of the curve, which means that longer term yields have fallen more. The 30-year and plus bond yields have fallen by almost, I think, 20 basis point or more, and there has been capital gain on that. Today's fiscal numbers will give more confidence to the market. Of course, we need to keep an eye on what's happening outside India, both in terms of global commodity prices as well as the US Federal Reserve and the global bond yields. But purely from a domestic macro perspective, I think, budget has brought positive news for the bond market as well. We have been telling investors that even the bond markets have been offering a good entry point over the last couple of months, and I think we continue with that call.
Hi Navneet, this is Shankar here. I have an Amphi question for you. 2023 has been a great year for funds. Does this budget inspire continuation of that confidence, continuation of that flows, both in the equity and debt segments? I mean, you had a stupendous 10 lakh crore bump up in the last years. Because all of this flow is captive domestic savings.
No, absolutely. A large...
Yeah, please go ahead.
Yeah, so I mean, absolutely. So 10 lakh crore addition to the AUM in making the mutual fund industry a 50 lakh crore AUM industry A large part of that has come through the capital gains, through the mark-to-market gains. Another bigger part has come through the SIP flows, which are very structural in nature. Indians investing in a disciplined manner through small investments every month is a very positive trend. I think these are early days for financialization of savings. This is a structural trend, and we think over a period of time, as mutual funds continue to emerge as a preferred investment vehicle, as a preferred saving vehicle for larger and larger number of investors, and with through MFI and all our industry peers under the guidance of regulator, we will leave no stone unturned that in next 25 years as India become a developed country, how do we ensure that fruits of that growth reach as many households as possible. These are early days, as I said, while everybody looks at the 17,000 crore plus number of monthly SIP, which has doubled in last couple of years, but if you look at the proportion of overall savings pool, it's still a small number. If you look at 4.3 crore investors, it's still a small number. So we have a long way to go. Incidentally, I must mention that today is also the 30th anniversary for 1st February 24, 30th anniversary of HDFC Balanced Advantage Fund, where if you look at the 30-year track record, and there are a couple of few other funds in the industry which have built track record of 15, 20, 25 years. In this 30 years, the way wealth has got created and the track record that industry has built with also the highest level of transparency and the trust that we have built with investors, we feel very confident of reaching to many more households over the next 30 years.
All right.
One final thought, just on a data correction thing, Navneet. The 10 lakh crore, how much of it was capital appreciation and how much was actual, as they say in Mumbai, rokda?
I think a good part was capital gains, but I think, as I said, heartening feature is that 17,000 crore plus coming to the industry every single month. But again, I mean, India is a growing economy, and if you take a longer term view from 50 lakh crore, and a good part of that, now more than half of that is in equity funds. If equity markets continue to deliver, let's say, low double-digit returns, then you can extrapolate where that number could be over the next several years, and you add the SIP flows that have been coming.
Right. The SIP flow story is one that I don't think gets deterred or is not going to get deterred anytime quickly by any major factors. That's a story that's here to stay. Pleasure speaking with you, Navneet Munot, MD and CEO of HDFC AMC, also the AMFI chief there on how he views the budget. We're going to take a very short break, but stay tuned. On the other side, we get you the corporate view and from the sectors that were most likely or are most likely to be impacted by what we've heard in the budget. All of that coming up after the break. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Budget 2024, the takeoff is what we went with, and what the finance minister delivered is a very, very clear-cut, no-nonsense budget. It's an interim budget. That intent was very clear in what the finance minister announced. She is sticking to the fiscal deficit path. Capital expenditure has increased, and on a high base, it's not too shabby. Now, what is the message for corporate India? That's what we're going to talk about in this section of our coverage on NDTV Profit. And joining us on this now is Ameera Shah, promoter and MD of Metropolis. Virendra Maheshkar, chairman and Managing Director, IRB Infra, is also with us on the show, and I'm joined at this point by Pavitra Shankar, Managing Director of Brigade Group. So let's begin the conversation with Mr. Maheshkar. Mr. Maheshkar, let me come to you from the point of view of the infra push, and that's been the big story of this government in the last few years. And now the capex number that has come in is up about 11%. It's on a higher base, but the pace of expenditure from the government is going to get slower over time, at least till we see a higher number perhaps in July. Does that impact you in any way? Mr. Maheshkar, can you hear me? Okay, I don't think Mr. Maheshkar. Yeah, can you hear me?
And it's a. I would say that it was a tight walk between keeping the fiscal deficit in check and allocating the required funds for the sector. The reason why I feel that these numbers would do good is because of the rebalancing that the government is structurally doing alongside providing such significant number of funds, is the more intervention of private investment. Because we have to look at the private investment that also is going to complement this government spending. And the total picture is going to be humongous. So what we are seeing here is only the support that is going to come from the government. So if we look at it in totality, I think these numbers are very, very encouraging, while retaining the fiscal deficit plan and bringing it down to 5.1. So I think the sectoral provisions are excellent. And if we complement that with the private investment that is going to flow into the sector, this will have a huge impact on the overall GDP growth, to my mind.
Mr. Maheshkar, this is Shankar here. I had a question about, are you as a company, as an entity, participating in the new ideas that the Prime Minister has been promoting in solar on sort of monetizing the assets that you control or manage or own? And the second part is that what's your sense of where the asset monetization idea is going?
So I think the government is clearly chalked out the path that for the last 5-6 years, they spent a significant amount of money in creating a good asset pipeline, because they wanted the momentum in the GDP to come back and the balance sheets to improve. But with the improved balance sheets, they certainly want more private participation, more foreign funds to come and invest in this long-term growth story for India to really reach that developed nation status. And from that perspective, they have clearly spelled out the targets of what kind of asset monetization they would want to have. And if I have to speak specifically about road sector, I would say that out of the total asset monetization that has taken place to date in India in the road sector, we command a significant share of that, and almost 38% of that asset monetization has been led through by IRB from the front. And this is a very, very promising story to my mind in terms of giving comfort to the overall investors who want to look and come into this sector, because there are a lot of supporting reforms that have played before this asset monetization drive was taken up. For example, if we look at just the toll road sector where we belong, the FASTag implementation and the digitalization of payments of toll was a very, very big catalyst which people forget or don't pay attention to. This changed the whole dynamics of the sector, and more foreign funds are comfortable to come and take long-term bets and bid for monetization of these assets and make money available to the government to take up further growth and bring in more progress. So this is just one example of a reforms which have backed the overall strategy of asset monetization. If asset monetization would have come without a backup of the reforms, probably they might not have worked. But because of the reforms that have gone ahead, and then the asset monetization was triggered, is making those things possible. And there is a huge comfort from long-only funds, sovereign funds, to come and invest in this sector today. And this is going to pave a huge impetus in freeing up.
Right. We also have with us Amira and Pavitra. Pavitra, I'll come to you on housing. A little bit of a thrust on affordable housing was seen. The finance minister also talked about the number of homes, the fact that she would want people in chawls and huts to actually upgrade and live in rental apartments if that's what it comes to. How do you feel about this budget? Do you feel like this is good news for your sector as a representative of the space? What did you make of the budget?
Hi, good afternoon. I think overall, given that it is an interim budget, we'll still have to wait and see what is actually sort of passed later in the year. That said, maybe this is an indication of the kind of focus housing will get in the final budget. Yes, the government has focused on affordable housing over the past few years. There were PMA schemes for the customers as well as developers in the past. However, I think that the focus today that they're talking about is extremely helpful for certain sections of society. We will have to see further clarity in terms of how this develops into rental housing. Rental housing per se is not something that is done at scale or at a very professional or corporate sort of approach today. But there is a huge opportunity in that. So I would hope to see some further clarity as to what that would entail. As a developer, I think true affordable housing where we are serving the bottom of the pyramid, that has to come with some kind of partnership with the government on ensuring that we're able to get land at a decent cost so that it makes sense to develop and transfer at a reasonable price that makes sense to those who need it the most. What we've seen so far in the affordable housing schemes is, many of us have done projects in that particular price segment, but it's really just reduced the size of the houses rather than the cost per square foot that eventually the customer has to bear. So I would hope to see something on the land cost front and maybe some better financing schemes for the buyer as well as the developer. GST as well, where we had a break on GST for affordable housing that was removed a couple of years ago. So I think there is more that can be done on this front, and hopefully we'll see that when the final budget gets unveiled.
Indeed, and both the PM and the FM have mentioned this to this effect. But Pavitra, you reckon it's a thing of neeraj here? This is coming in the budget because in some sense, in order to drive household capex, housing is probably the easiest and the best way to do so.
Yeah, and I think we see that in terms of sentiment across the economy, across all sectors. They did mention also that average real income has increased by 50% in the last 10 years. That's a fantastic number. It gives a lot of perspective. We see that in all of our markets that we play in. Of course, we are looking at mid-segment housing, which today, if you see the same product, is edging into premium housing due to the pricing increase. So overall, I think that as the economy grows, the real estate sector will grow, not just in housing, but also in retail and hospitality, in office. So overall, it means great things, and construction does contribute a huge proportion to the economy. So I hope we continue to see investment in infrastructure, connectivity of tier 2, tier 3 cities, and connectivity by road, rail, and air, which the government has mentioned, and the finance minister did speak to in her speech.
Okay, Amira Sharp, thanks for joining in, and just wondering, would you have hoped to hear some more concrete steps, or are you hopeful of seeing or hearing some of these in July? And is there something that you picked up that we might have missed here from a healthcare industry's perspective?
Yeah, I think the government's focus on R&D and really stirring innovation across sunrise sectors I think is a welcome move, and certainly for healthcare as well. And I think what I'm seeing is that the government's move from really moving from a provider in healthcare services to saying, let me also become an enabler, because private sector needs certain policies and regular and some framework to be able to invest in themselves. So I think this 50-year interest-free loans that they've made available, and of course we hope that the writing is clear and that becomes available for large and small size organizations to really take that money and innovate a lot. But I think that can be a good boon for the industry. Skilling has been a big challenge in India. We are seeing not enough doctors, not enough nurses. And certainly, I think any investment move to gear up more seats for doctors, and have more talent in the country, I think will be welcome. And I think they're trying to do that through really establishing more medical colleges in the existing infrastructure. Then, of course, the cervical cancer program, vaccination program for young girls is also a good thing. Overall, obviously, finally, healthcare in India can only be revolutionized, for everybody if public and private come together and really use the public infrastructure and the private capabilities to really make magic. One of the things, of course, as an industry, we had all hoped and we had been hoping for a long time to see is that our entire industry has all the input costs on GST, but we are GST exempt, which means that we obviously don't pass that on to the customer, but we get no offset for that cost either. And putting us in the 0% GST on, or even a 5% GST on services would have just given us an ability to get a refund for the GST paid on inputs. So certainly hoping that in the July final budget, some of these points can be taken up, especially the GST one. That would be a big relief for the sector and frankly allow prices for consumers to come down.
Right. We'll come back to you for follow-ups on that, Amira. But I also want to welcome Vivek Lohia, Managing Director at Jupiter Wagons, to the show at this point. And just look at all the ground we've covered. We've spoken to IRB on the infra bit. Pavitra spoken to us about what real estate expected. We've covered healthcare. And now let's come to the meat of the matter with Jupiter Wagons. Very good afternoon, Mr. Lohia. There is a sense that perhaps it was not all that positive for railways because the amount the government intends to spend will be a bit squeezed. Is that your takeaway, or do you think that the story has just about begun as far as the railway transformation is in India?
Good afternoon. So as it was the interim budget, the whole idea was that, the continuity of the policy, and the Honorable Finance Minister was very clear when she mentioned about Viksit Bharat, and the connectivity infrastructure, as she mentioned, would be the key enabler. And we continue to see that momentum. She has announced in this budget a lot of corridors to debottleneck the steel movement, the cement movement, and that would be a huge enabler going forward in capital investment, especially private capital investment coming into the sector. You would see more investments in the steel, in the cement business and other capex-oriented business. And I think as the focus going forward is going to be more and more on the connectivity infrastructure, which is the key going forward, and that I would result in the whole railway sector, having a great impetus going forward. So I don't think that the takeaway for me is very clear that the government focus on the sector will continue, both in terms of the infrastructure as well as in terms of modernizing both the fleet as well as the railway stations. Because if you see the budget announcements, there has been an announcement of upgrading about 40,000 coaches to world standards, which is a great a task which the government has taken, and which will go in a long way in making railway a world-class organization.
Hi Vivek, this is Shankar here. I mean, continuing on the 40,000, that number has got a lot of attention in the budget, and this is interesting because, I mean, you see people taking selfies on Vande Bharat. But my question to you is, 40,000 wagons, what does it, can you quantify it in terms of value? And does this happen in 1 year, 2 years, 3 years?
So again, we need to understand the fine prints to quantify in terms of value. But I can clearly say that it is a huge exercise because you're talking about complete renewal of the fleet. Definitely, it cannot happen over a period of 1 year. Whether it will be 2 years or 3 years, again, very difficult to quantify at this moment. But the vision and the direction is very clear. That momentum which the government had set for the sector will continue to speed up going forward.
What would be a ballpark figure per wagon? I mean, the people are curious.
Again, very difficult to estimate because in terms of what the entire project entails, till we get the final details, right now for us to give any kind of number would not be prudent.
Okay. Right. So, Maheskar, I know this is a budget conversation, but I can't help but ask you about your earnings. It was a great quarter for IRB. Your top line has grown significantly. There was some pressure that we saw on your margins. You want to elaborate a little bit on that? And what we do believe is on back of higher input cost. If you can just share some more details on that and give us a sense of what we can expect going ahead. Similar sort of run rate expected from IRB?
I think with both the InvITs contributing positively to the bottom line by way of cash coming into IRB, I think the margins likely to continue in a stable manner. And I don't think there is any input cost pressure. In fact, if I look at steel, bitumen prices, they have come down by almost 14 to 15% from the peak which they achieved 9 months ago. So I think the margins likely to continue very stable, and the cash flow coming from the InvITs is likely to improve as we roll into year after year, because the portfolio that IRB holds through its InvITs is doing significantly good, and that cash is going to keep coming into IRB. So I guess that's a big positive that the company is going to see.
Hi Amira, this is Shankara here. I completely empathize with you on your issue, that you guys face on offsets on GST. This is something I think large parts of professionals also face. My question to you is slightly on the sector itself. You guys are one of the service providers for medical attention. You guys made some kind of presentation on expansion of coverage under Ayushman Bharat. Has that been taken on board? When I say you guys, I don't mean you personally or Metropolis personally, but the healthcare sector has done some presentations. So has that been taken on board? Is there a wish list there?
There's certainly, I think, a wish list. Look, Ayushman Bharat finally is helping, most people who are below poverty line or close to poverty line. And it is desire, I think, for government and private to really be able to impact that part of society. But I think this requires deeper collaboration and deeper planning between public and private to be able to really come up with effective plans to be able to do that. I think the gap that has to be bridged is usually, I think, government makes the plans and then the execution is there for a private sector to do. But I think a deeper collaboration would result in far more effectiveness. So Ayushman Bharat has great potential. I think there is great impact possible. And we certainly hope that with more and more dialogue with the government, with change of some policies, with better frameworks and governance also, this can land up impacting the hundreds of millions of people that it has always been aimed at, which today obviously it's made a lot of progress, but we haven't still gotten there.
All right, a whole range of corporate views coming in right now, and we're going to cut across to Manvi in Delhi, who is with the CII, getting some of the first quick takes from corporate India. Let's listen in.
Influence our ability to take healthcare, affordable healthcare, to the last person standing on the Indian earth. Okay. And one of the big things is when we talk about innovation, we talk about Atmanirbhar, we talk about manufacturing. Today, a large part of the cost comes from importing electronic equipment which is sophisticated, still not manufactured in India. The taxation is very high, and the companies which work in tandem with each other, the three major manufacturers around the world, they make it so end of life 7 years. So you don't even recover the cost of it. So, but unfortunately, all this is passed on to the patient. So once we have our own manufacturing, our own innovative solutions, I think it will not only help us in delivering healthcare at a lower cost, but also it is relevant for 4 billion people, other people who are in the same situation as us. So I think India can be the leader. The pinch points that we feel today is that, different from all other industries, we pay GST, but we don't charge GST to the patient, so we have no input credit. So that's where it is all passed on. So ultimately, it all goes to the patient's cost.
And
so
this is a good time to list them because, time between now and the full budget for Finance Ministry to pay heed. Final sort of thoughts from each one of you before I wrap up our conversation today on Interim Budget Day. Mr. Dinesh.
Very happy, clear direction. Looking forward to seeing what the main budget is going to be all about. Seize the opportunity with regard to innovation and see how the private sector can benefit from that.
CB?
So I think inclusive, very inclusive even from the point of view the railways last mile connectivity that we spoke about. I think development oriented and prudent, fiscal and all of that we spoke about. And I think one very important aspect that we have seen besides the rural India focus, which I liked, was the focus on women and the focus on child. And I think these are very, very important areas for us to really work on for a future of India.
Well, gentlemen, I'm going to leave it at that. Thank you very much for your time and insights here on NDTV on interim budget coverage.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Okay, back with budget coverage or post-budget analysis on NDTV Profit. The market is flat, but as the flash speaks about a fine print, I thought it's important to get in a fine print going, and that's why we've gotten Mr. Sameer Khanabar, partner of Tax and Regulatory Services at EY in the studio, and we requested Mr. Vivek Lohia to stay on because it'll be important to get his perspective on this. But Mr. Khanabar, thanks for joining in. Sure. Now, two aspects that team EY and you have picked up. Let's start off with the first one. There is a tax element angle to this budget, which will probably hurt new manufacturing.
Yes.
What is it?
So currently there is a 15% concessional tax regime available to new manufacturing companies which set up their new plants. That was announced somewhere in 2017, and the sunset clause has expired in 2024. There was huge expectation that because a lot of new units or new facilities are coming up, so there will be an extension at least for 2 years, not just 1 year, because these are huge capital incentive plans, so they take a lot of time to be set up. And this incentive is available only when you start the manufacturing, not that when you set up the company. So because it is capital intensive and it takes a lot of time to set up, the tax holiday should have got extended, but it has not.
So what happens if you're halfway through? So you made those investments, but you haven't started production.
Yes, so that's a big dampener. So if you look at any large company which has anticipated on that basis, their tax rate goes up right from 15 to 22%.
Even if they're in the middle of the construction.
Yeah.
Even if they are in middle of, because they have not started manufacturing.
Wow.
Okay, so the parameters that you start manufacturing, what would be the ballpark sort of scale or impact of this kind of a non-extension of a tax holiday?
Yeah, so that's what I'm saying. The tax rate goes up from 15 to 22%, so it's 7% increase in tax rate, and that's a clear cost, you know. So
what sectors are we halfway through in your sense? I mean, you've got a better sense of where we are halfway through making those investments and yet not having production coming on board.
Yeah, so whether you look at green hydrogen, whether you look at electronic manufacturing, whether you look at pharma, chemicals,
so it'd be interesting
railways,
to see what happens to companies like Dixon also.
Yeah, all of those.
All of them would be.
The PLI scheme would be excluded, one assumes?
PLI is an independent scheme, so that
would
continues as per the promise, so that's not an issue. This is pure incentive on the income tax side where you had this 15% tax rate.
Let's ask Vivek Lohia about this. Vivek, you just heard E&Y talk about this. Now, to your mind, how does this hurt? Because you are a company that is in the midst of large capex any which ways.
No, so definitely the scheme is a big boost. But I think for us, more importantly, it's the growth drivers, and we are very clearly seeing that the growth momentum is continuing, and the finance minister is very clear when she talks about Viksit Bharat and the focus on infra and the private capital coming in, which is going to be a big enabler.
Of course.
I think the critical thing would be more than the income tax breaks would be the PLI schemes, because that is what's going to propel big size manufacturing.
Most certainly. No, Vivek, sorry, allow me to come in, but I just want, we just want clarity here. So let's assume some of your manufacturing activities are underway. They are not under PLI, for example. If this lapses from April 1st, you are subject to 7% higher income tax, right? Is that a dampener? Do you think that this was anticipated to get extended and not being extended is a dampener for manufacturing companies like yours?
No, so most of the expansions which we are talking about is in our existing companies.
Yes.
And this is specifically, the scheme was announced for new companies. Of basically companies which are coming, which started operations in the last 2 to 3 years. So most of our investments as such also never was under this umbrella. So I don't think it would be that big a dampener for the existing companies who are there, unless they have formed any new ventures and have invested under the new ventures.
Okay, just to understand, Vivek, you're saying most of your manufacturing is under existing schemes. Is there anything in between? Because what this is going to hit is manufacturing capacity is built, but no actual manufacturing that has begun. Do you have any, in between or mid-stage sort of facilities which could get hit? in terms of the tax incentive being removed?
No, as I said that because see, for us, the capex is ongoing, and we are committed to sizable capex, and we are seeing the momentum in the sector, and the demand drive continues. So as I told you that most of our capex investments are in our existing companies, and this scheme which you are talking about, the tax break from 25 to 15%, that was as such also not applicable for companies who are doing expansions under their existing portfolio. So this is only applicable to new companies which were formed in the past couple of years. So as such, whatever capital outlay which we have undertaken would not get impacted so much by the scheme.
Right, understood. Just a quick word, Mr. Kanabar, of directionally, why would they do this? Because this scheme began in 2017. So is it sort of also telling people that this is a deadline? You're telling private sector that's a deadline. Okay, this tax holiday has gone on. But if you've not started manufacturing yet, then you better hurry up. Or make a strong case of why there's an extension already done now.
Unless retrospectively changed in July.
My point is, what is the point or the messaging of not extending it?
So two things. One is many companies were planning to do capital expansion in a new company to meet this requirement, right? So even if you are an existing company, but you are going for capex, you would set up a new company and do capex in the new company and still take this advantage which was always available. Second, of course, from whether you look at Atmanirbhar Bharat or Make in India, I think they may be still rethinking that if there is a fiscal deficit impact, and if this tax is going to impact the fiscal deficit of target of 5.1, then maybe from that perspective they may have said that okay, we may not want to extend it.
And it's also plugging a loophole of sorts, right?
No, it's not a loophole. It is an incentive available. You are taking that incentive. It is legitimate, right? Because that is provided in the law.
Under a separate company, though.
Under a separate company, right. And it was always allowed, and most of the corporates have been planned, or they have already set up new companies and they have taken this tax regime as well.
You know, Samir, while this was the fine print.
Sorry, we just need to thank Vivek Lohia because he has to leave. So Vivek, thanks. Samira,
Vivek, thank you. It was great talking to you today. A good perspective on the budget, and of course, an industry view as well coming in from Jupiter Wagons. But Samir, while that is the fine print, like we said, I'm guessing there will be a little bit of a reaction that will come through now as we see it, right?
Yes.
Do you think there would be any room for them to come back in July and retrospectively maybe alter this?
There should be, because as we are talking, and at least the way we are looking at the kind of investments that are going big time, and the plans have been done factoring this schemes. Obviously, there will be a lot of representations, and I'm sure government will look at it.
Okay. There is one more angle which you said is important in the fine print, or rather in the budget. Well, now, let's move on to that.
So this is now on an international tax development. As you would be aware, almost 130 plus odd countries agreed in principally to levy a minimum tax of 15%. And that was to sort of avoid base erosion, profit shifting, or at least to even avoid various countries not levying any tax or acting as a tax haven. So if you'll see, UAE has brought in income tax effective from 1st Jan 2024 at 9%. Most countries have sort of increased their tax rates to 12 to 15%, etc. So the idea was that every country will bring in a domestic tax legislation, and that tax legislation would frame this or make this framework or provide guidelines as to what happens if this 15% tax is not levied. So for example, if you have done an investment in an overseas entity through an intermediary holding company, which is a very common structure. Most Indian companies would go and invest outside India, either through Netherlands or Mauritius or whichever other jurisdiction, which is a good holding company jurisdiction which allows you to make multiple investments in different countries. So you choose a holding company jurisdiction and then you make further investments. The proposition was that if such investments are not taxed in those countries for exemptions provided, whether participation exemption or specific exemption, then the proposition under the new regime of Pillar 2 was to allow the host country or home country to tax this income which is tax free in that country at 15%. Now, of course, we were expecting, and of course, I'm sure India will bring this legislation, if not today, maybe in June, July, in the next full budget, which will give a broad framework. But as of now, there is a vacuum, because most countries have brought this legislation. So almost 30 plus countries or 40 plus countries have brought this legislation. It is effective from Jan 2024. So as we are talking, the legislation is effective, and they are going to tax this income if the other country like India does not bring this kind of legislation. So there is right now the investments, the corporate community is sort of confused as to, if other country starts taxing certain income, which it should not tax because India would eventually tax it, then there will be a double taxation. So this kind of legislation is quite critical.
Yeah. Right. Thank you, Samir. Great talking to you. In the meantime, the markets still trading flat. We're going into the last hour and a half of trade. It'll be interesting to see how things actually play out. Flat as it can get, 13% low. We'll take a break, but on the other side, Prashant Khemka and Saurabh Mukherjee join us with their verdict on the budget. So stay tuned.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Welcome back. This is Budget, the takeoff. And, while we're talking about the budget, let's also quickly mark what's happening in the markets. Tepid response. A no-harm budget likely, as seen. A lot of expectations, perhaps, which was supercharged, have not come through. I want to pull up Adani Enterprises because you're seeing the numbers flashing on your screen, Q3 earnings. Remember, a lot going on right now. The big jump, really, on the face of it, and this is immediately the first cut, seems to be in the profits. Revenues are largely flat, and that stock up about 2.5%, close to 3%, actually, as we get in. We'll get you a closer details of Adani Enterprises. But meanwhile, I also want to pull up what's not working on the Nifty today. And L&T, ONGC, Grasim, Ultratech, some of those counters are feeling a bit of pressure. Could be a variety of reasons, frankly, but one of them could be that capex from government is muted as was expected. And does that mean lesser inventory or lesser spends, lesser orders for some of these infrastructure led companies is the question. I'm going to go across now to Prashant Khemka. He's joining us on the show. He's founder of White Oak Capital Management. Saurabh Mukherjee, founder of Masterless Investment, is also with us. Good afternoon, gentlemen. Welcome to NDTV Profit. We've been covering the budget, the interim budget in great detail. I want to understand first from you, Mr. Khemka, why the markets are viewing it in, not very positive light, considering it's a positive surprise on the fiscal deficit targets. The capex is not as muted as it could have been. Wouldn't that count as big pluses?
Thanks, Tamanna, and hi, Saurabh. See, I think we might be slicing and dicing too much here, where there isn't really much to slice and dice. The market, as I see right now, is flat or down 11 basis points, following a day when Nasdaq was down 2.25%. And some major news came out about the Fed cut expectations in March getting delayed and whatnot. So I think the market reaction has been that it is a non-event. It is a vote on account. It's not a full budget. It was a fairly short speech. There were no changes made to tax proposals. So it's basically a continuity budget. What was presented last year, for most part, continues. And it is also continuity of last several years of budget, right? CapEx was up double digits, 11% or so on the back of a 30% plus announced last year. So over a 2-year period, 50% increase in capital outlay. So oftentimes, even if, let's say, budget expectations were met or not met, it could still be considered a good budget from market's perspective, because it's like a company where if the company has been delivering strong earnings and the expectations are very high, even if the company delivers on those expectations, there might be no market reaction. But to begin with, I would like to underline it is a vote on account budget. The positives are clearly there. Fiscal deficit at 5.1. Nobody had, I think, anticipated that, and that has its positive ramifications. This was done despite an increased outlay for capital expenditures by double digit, and no populist measures, which again is positive because there were some concerns of there being, heightened, this being a pre-election budget, there would be heightened outlays on populist measures. Maybe it is just like investors at large and the market, the government is also confident of its prospect in the upcoming election and should be perceived in that sense positively. So I would not read too much into the market reaction, whichever way you look at it, Tamanna.
That was well put. If I had to put it very simply, market kabhi-kabhi moody ho jata hai, and there's a lot more going on than just the budget. Saurabh, hi, good afternoon. Interesting take there from Prashant that maybe this government is not feeling the need to dole out big announcements for Kisan, for Yuva. I mean, they've made the right noises, but they've not really put in a lot of money there or allocations. Perhaps something is coming before the election season. I don't know. But how do you view this budget? It did, in the end of it, turn out to be a very plain old simple interim budget, isn't it?
No, I think for a free market lover like me, this was music to my ears. The government is saying, "Bahut kar liya humne." We've doubled. Your public sector capex has been doubled in 3 years, right? So Prashant said, right, 30% last budget. Uske pehle wala budget bhi 30%. So in 3 years, the government is effectively, implicitly saying we've doubled public sector capex. We're going to increase it by 11% the year ahead, said the FM. But the FM quite explicitly said that the private sector capex is now going to step up, and I think that's the right point of view. The government is saying I'm going to reduce the amount of borrowing I'm doing in the bond market, crunch the fiscal deficit, reduce crowding out. You, the private sector, now take over and drive the capex cycle. I think that's the right thing to do. It's good for the country. It's good for the bond market. It's good for the rupee. And we as investors, I think, cheer that. We as investors, I'm not just talking about Marcellus, I think we as Indian investors generally cheer the fact that this government is saying the private sector, the free market has to take over. Perhaps those who have loaded up on public sector capex plays are a little disappointed by that. But from the country's perspective, I think that's the right way to go. In addition, the FM, I think, also signaled fairly powerful moves on the energy transition, solar, EV, and she signaled that the middle class housing piece, the Grameen housing piece, she's very keen that be accelerated. It's been one of the signal successes of the NDA over the last 5 years. The PMAY, I think, has been one of the most effective and popular schemes, and she's saying they're going to double down on that. So plenty for the free market lovers to cheer about. This government is saying the free market's job, the private sector's job is to drive capex, and I think that's the right attitude to take. And the 10-year bond deal and the rupee is signaling that the government is moving in the right direction.
Saurabh, a view came in also that now, and in some sense, now the mantle is in the Reserve Bank of India's court, if you will, because the government, as you and Prashant both stated, has done what it has done. Do you expect the RBI in some fashion to announce measures, if not a rate action, then something else which could get household capex more impetus?
Sure. I think Prashant in a way put it nicely, right? The Federal Reserve Chairman last night is saying, I'm going to cut rates later. The American stock market is therefore disappointed by that. The fact that the Indian stock market hasn't gone down has a lot to do with the fact that the government of India is saying we will fiscally pull back. We will take you to 4.5% fiscal deficit by FY26. In fact, the expenditure number for FY25, 45 trillion, I think is stunning. Most people were expecting a 49 trillion expenditure number. 45 trillion means less borrowing in the market, less stress on liquidity. And you're absolutely right. I think it'll be very difficult for the RBI not to expedite at least one rate cut before the election.
One rate cut before the election. This is, well, so effectively our guests are saying that, and I'd love to Prashant's view here, but effectively our guests seem to be saying that independent of what the Fed does, we may see some activity back home as well. Prashant, one, on the RBI piece, and two, is it so there is policy continuity, there is probable political continuity. Is there portfolio continuity as well, to your mind, pre and post budget?
Just on RBI, I'm no economist and don't have a strong view here. Would defer to Saurabh and yourself on this. But if I have to give my layman's perspective, if you will, it is that, look, the economy is doing fairly well on its own, and it may not be a bad thing for RBI to keep the gunpowder to itself. In a way, it also reflects not providing cuts right now may also reflect RBI's confidence as well, based on the data that they're seeing and their assessment that the economy is expected to continue to chug along well and may not need that support as of now. So if a rate cut comes, well and good, but if it doesn't, I think that's fine as well. So continuity on government, continuity on the RBI policy, if you will, if that is there, or even if that is not there, the latter one, the former one is a assumption that is a far more crucial assumption. The portfolio, look, it is business as usual. Nothing that we tend to, nothing gets triggered in our portfolios based on such developments.
Well, maybe we talk a lot more about investing, but we need to slip into a very quick break and come back. As we head into the break, you saw the numbers from Adani Enterprises and ports in particular, jumping about 65%. The CEO, Ashwini Gupta, talks about the Q3 results in a quick fashion. Listen that in.
This financial year has been a year of milestones with Adani Ports, delivering its strongest ever quarterly and 9 months performance. Some of the highlights of the quarter gone by are: on the port business performance, thanks to our customers and stakeholders, Adani Ports achieved its highest ever quarterly cargo volumes of around 109 million metric ton, which is 44% year-on-year growth and is 3 times the India growth rate, enhancing our market share by operational excellence and the new customer acquisition. Talking about the logistics business, rail volumes reach 1.58 lakh units, which is 17% year-on-year growth, while the bulk train cargo volumes reach 5.3 million metric tons, which is 53% year-on-year growth. This robust operational performance has translated into strong financial performance. Our consolidated operating revenue for the quarter increased by 45% year-on-year to reach rupees 6,920 crores, whereas consolidated EBITDA, including Forex, increased by 59% year-on-year to reach rupees 4,293 crores. As of 31st December 23, our net debt to EBITDA ratio stood at 2.5x versus 2.8x as on 30th September 23. Recently, S&P Global Ratings reaffirmed its investment grade rating of APSEZ while revising the credit outlook to stable. Moving forward, with our agile and resilient business operations, we are on track to overachieve our cargo volume, revenue, and EBITDA guidance provided at the start of the financial year.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Welcome back. Well, whether any stock or sector is enthused by the budget or not, there's no question Maruti Suzuki is on a full run today. The stock up 5%, Cipla doing really well, so is Power Grid. Markets not responding immediately to the budget, but there's a lot that's left to be digested. Prashant and Saurabh are with us, and we'll take a quick view from them. Saurabh, I'll come to you first. What next in terms of news for the market? Now, Fed has made it clear that your next cut is not coming in March. You're saying the RBI may have a first mover advantage. The election, most would argue, is largely priced in. So what's the next trigger?
I think a couple of things to look out for. I think the situation in the Middle East is grave. The Suez Canal, the Red Sea, these are critical parts of the global trading ecosystem. I'm not a geopolitical expert, but I can see from our investee companies' working capital cycles, I can see from freight rates that global trade is being impacted. And the sooner the Middle Eastern situation clears up, the better it is for the Indian economy, for the stock market, for our investee firms. Secondly, leaving aside the elections and the union budget in July, I think the sooner the Fed cuts, the greater the room for the central bank in India to move. The easier it is for capex, private sector capex in India to start moving forward. As I said a few minutes back, I think it's high time that private sector capex picked up. Corporate balance sheets are in good shape. The banking system has plenty of tier one. But I think we do need a bit of a macro trigger from central banks, both in America and India. The sooner that comes, the better. And the third piece, I think, is last time, 2019 was the first election in India where more women voted than men. And I think that's one of the reasons why the PM, the FM, the Chief Economic Advisor are focusing heavily on women. If the 2024 elections re-emphasizes that, and once again the number of women increases vis-a-vis the previous election, and the women continue to be the majority of voters, I think we'll see a brand new emphasis in Indian policy making on tilting policy towards women, tax breaks, job creation, perhaps even interest subvention, which is focused on women. I think the next government's priority, I think, is a high possibility, huge women theme in there for investors like us to focus on.
3 cheers to that if that happens, and not just as a woman but as an Indian citizen. I think that's a great idea if that does happen. Prashant Khemka, same question to you. What is the next trigger or set of triggers for the market?
Besides the geopolitical issues that sort of discussed, and I think you talked about the elections, but I think it is still important to get it out of the way while everyone and the market is sure about it. But still, global investors, some of them at least, are on the sidelines till that crucial event is out of the way. A lot of them after December have already made up their mind that that's not going to be a big issue. But other than that, I don't see any particular trigger, a known event in the market today. Obviously, later in the year, you have the US elections, but all these are events of kind which continue to play themselves out in any given year, and I would not say these are major events or triggers for the Indian market. It is business as usual, I would say.
Gentlemen, thank you so much for giving us your thoughts. Really appreciate your time and your nuance, and have a great week ahead.
Thank you, Neeraj, for having us here.
Pleasure is entirely ours. We need to slip into a very quick break now and back with some more market voices and some more analysis. The last 1 hour, we focus a lot more on the day's trade aside of just the budget. Stay tuned. India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
An hour left to close for the markets, who have now digested the budget, have not responded in any big fashion, negative or positive, frankly. You can't even call this a negative reaction at all from the markets. A little more time to understand the implications of what has been announced and the intent which has been talked about today. This is an interim budget, so no great spends. What will be rewarded though, and is being rewarded at least on the Nifty PSU Bank, and we'll pull up the components of that index, is the tightening of the purse strings, so to speak, that the finance minister has displayed with her fiscal deficit targets. Everything above expectation. So for this year, it's 5.8% versus 5.9%, which she had budgeted for. For the next year, the idea was, or the larger thought was, it would be between 5.3 to 5.5%. That's coming, or she's predicting that at 5.1%. And the finance minister said very clearly that she's going to stick to 4.5% and in fact aim for a below 4.5% number for FY26. So all positive over there for the PSU banks. Nothing much happening with the private banks. But let's get a corporate view now. Nadir Godrej, Chairman and MD of Godrej Industries, is now joining us on the show. Very good afternoon to you, Mr. Godrej. Great to speak with you here on NDTV Profit. Let's get your first cut. There was an expectation that there would be a move from the government to bolster rural consumption and consumption at the bottom of the pyramid. That's directly, has implications for your business. Did you wish to see a little more there?
Yes, it's always good to bolster the bottom of the pyramid. We do have a bit of a K-shaped recovery. And although the economy is growing at 7%, consumption has been growing at about 4%. So higher consumption growth would be very good. But that being said, the government did make announcements on promoting animal husbandry, on becoming Atmanirbhar in oil seeds, and a lot of incentives for green energy, particularly for biofuels, biogas. And I was also very enthused by the focus on the biofoundry and making more biologicals, because this is green chemistry and helps us achieve our green goals. And in India, we find that these bio-based raw materials are cheaper, and you can sequester carbon while producing them instead of emitting lots of carbon dioxide when you use fossil fuels. So all these are positives, but a little more has to be done to promote consumption at the bottom of the pyramid.
What would you have hoped to see, Mr. Godrej? Because this is, after all, an interim budget. That's why no tinkering on the taxes, as the finance minister said. But there will be another full budget in July. We may see the same government coming, whichever government coming in. What would you hope to see?
Yes, and perhaps we have to be patient and hope that it happens in that budget. And although fiscal consolidation is good, I think it's equally important to focus what we are spending on. If the budget deficit leads to intelligent spending that grows the economy very rapidly, nothing is lost, because ultimately we have to watch debt to the GDP. And if the deficit is high, but the GDP grows very fast, debt to GDP can actually come down. And that's what we should focus on rather than having a small deficit.
Right. Mr. Godrej, good afternoon. This is Agam here. My question to you then in that case is that what is it, even besides government measures, what is it that you'd like to see in terms of factors that could potentially change and hence bring about improvement in rural demand? Because that clearly is what's been lacking.
Definitely creating more jobs in rural India would be very good. Unfortunately, it looks like more people are engaging in agriculture rather than in value-added rural jobs, and not enough people are moving away from the farm into new jobs. We need to educate people for the jobs of the future rather than the jobs of the past. All this will help. But all that being said, we must accept that we are growing at 7%, which is very good in the context of the global situation. We should be reasonably happy with that, but we should also be cognizant of the fact that we can grow faster.
Mr. Godrej, in terms of private capex, and this is key. and I just want to come on the macro. So the government, the finance minister has stuck to fiscal discipline. They're going to borrow less, and as she said in her speech, this leaves more room for the private sector to expand. Now, private capex, all said and done, is showing signs of revival, green shoots, but is lagging. Do you see enough signs for this to pick up? Do you, as a key corporate voice, feel the confidence to invest more, build more, seeing that consumption is still lagging?
Yes, we are very confident to invest more. But of course, we will invest only if we need new capacity, either because we are running out of capacity or we require a technology change. And some of both these are happening. And in our businesses, we will look to investing. And I feel that there is every likelihood that interest rates will come down after a while. And when that happens, people will be much more ready to invest. Some people are ready to invest, but want to wait for a reasonable interest rate, especially they don't want to lock in high fixed interest rates. Of course, if variable interest rates are available, people will take the plunge a little earlier.
All right. Great to hear from you, Mr. Godrej, and pleasure speaking with you here on NDTV Profit. Quick look at the markets before we get to our next set of speakers. Abhay Agarwal, founder Piper Serica, is with us as well. And markets doing okay. I just want to pull up HUDCO. And HUDCO really on fire. Now, we've been talking about how the real estate pack is down because no incentive per se to home buyers or affordable housing. But there is a clear target of building 2 crore more homes under the Awas Yojana, the Pradhan Mantri Awas Yojana, and HUDCO there perhaps responding to that about 15-16% up. Abhay Agarwal, very good afternoon. Let's get your take. First take on the budget. Are markets now mentally done with the budget during the last hour of close?
Yeah, hi Tamanna, good afternoon to you. Yeah, I think as we expected and we have been talking about it, look, the budget is frankly a statement of accounts this time. I was not expecting any massive or any material announcements. I think it is an opportunity for the government before the elections to once again reiterate the policy direction that they plan to take, assuming they come back into power. And I think it has been left at that, which is good. I would say no negative or positive surprise as expected. I don't think, frankly, there were any massive or big expectations that market participants or fund managers had about any big policy announcement impacting any particular segment or company. So I think it is, I would call it largely a non-event, which it should be seen as. And I think what is more important is to look at the policy direction that the government continues to clarify and stick to. The good thing is there are no flip-flops on tax rates or any of the policy initiatives. So overall, I would say I think people will from tomorrow onwards get on to looking at more micro themes and micro strategies, and probably focus on general elections and life beyond that.
Right, Abhay, stay with us. Let's also get in Prashant Jain, founder and CIO of 3P Investment Managers, who's joining us on the show right now. Prashant, good afternoon. Thanks for joining in. This is Agam here. My question to you is, well, there were no big bang announcements, and perhaps something that was expected, something that the finance minister had suggested earlier. Still, anything that you have picked up from her speech as well as documents which were released after her speech?
No, I think India is now a reasonably mature economy, and I think we have a fairly stable regulatory taxation framework, which is great news. And markets not moving up either way is again a very good sign. I think the focus on fiscal consolidation is the right thing to do because government has taken the lead and upped the capex significantly. And the economy is doing extremely well, despite headwinds of global slowdown, despite headwinds of tight liquidity. So I think this is the right time for government to step back, create some room for private capital to be raised and for the private sector to take, or corporate capex to take the lead. So all in all, I think an extremely good, simple budget with no surprises.
Prashant, keeping in mind the interest rate currently, also taking into consideration equity valuations, there is some amount of expectation that perhaps towards the end of the year, I could actually call it hope, that towards the end of the year there could be a temperance in your interest rates going forward. Do you think that that could be perhaps a possibility considering the kind of environment that we are in? And based on that, are we seeing valuations where they are, and is there a reason for them to be here?
Yeah, I think yields in India are materially being influenced by what is happening in the US. And if you look at the US fiscal deficit, the US borrowing, it is quite significant. While yields in US have come off a peak, but again, they seem to be inching up. So I think at times like these, it is better to be slightly cautious, because if you cut and if US yields go up, then again, it becomes an unsustainable situation. So I would not hazard a guess whether I think the 10-year yields have already moved lower. At some point of time, the short end should also move lower at some point of time, though, I mean, I don't have any specific views on that. Coming to the second question around valuations, see, valuations get priced off the 10-year yield, which in India has been quite range bound and quite stable. And if you look at the multiples, there is very little room for multiples to move up. 20, 21 times 1 year forward earnings, where the best of earnings growth is behind us. I think these are fair multiples, and that's why I feel that returns on large caps indices should should be around 12% CAGR, which is the likely profit growth as well.
Good afternoon, Mr. Jain. This is Tamanna here, and great to speak with you today on the show and on Budget Day. I just want to get a sense from you on what happens to the entire story of government spend fueled sectors and stocks which have been absolutely running up, whether you have in the PSU space, rail, defense, infra, etc. All of them have been pushed by this massive government spend. And while the finance minister has stuck to the path of fiscal discipline, that also means that this government will be spending less. Do you see the excitement on some of these stocks and sectors which have frankly run up massively now coming down?
I won't say, I mean, it's hard to say whether they would come down or not go up, but I do feel that these stocks are pricing in fairly aggressive growth rates for extended periods of time. The large order backlogs do support that for some time, but I think if markets are looking at sustained acceleration in order inflows, that might moderate in many spaces. After all, government's capex has gone up from 1% of GDP or thereabouts to 3%. Now, you can't expect that to keep on accelerating faster than the nominal GDP growth itself. So I think government's increase in capex is converging with nominal GDP growth, and to that extent, sectors or companies that have run up or where the expectations are even higher than that, I think there could be some consolidation or even correction there.
Just last point, Mr. Jain. Now, what is the next sort of strategy or play in this market? Yes, the India growth story is, of course, here to stay. You've stabilized, but maybe your big capex push will taper out and reach a steady state. What are the next areas of opportunity that you see?
One, I think the government capex will start converging, the growth will start converging with nominal GDP growth. That need not be the case for industrial or corporate or private capex, which I think should continue to grow at a healthy pace. To my mind, the large banks are offering decent value, and that's one place where there could still be some room for multiples to move up. Bank balance sheets are extremely clean. Over time, credit growth should pick up, and this sector has lagged quite a bit in these markets. And sentimentally, even though I don't particularly subscribe to that view, but sentimentally, the fall in 10-year bond yields, markets have generally reacted positively for banks whenever yields come off.
And you're seeing that play out, at least in your public sector banks. Thank you so much, Prashant Jain. Abhay, please do stay on with us. We're taking a very short break. On the other side, A. Bala joins us for more on budget, markets and the India growth story. Stay tuned.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Welcome back to the special budget coverage, and we are now in conversation with Mr. A. Balasubramaniam, MD and CEO of Aditya Birla Sun Life. Well, Mr. Balasubramaniam, pardon me, welcome to the show. This is Agam here. Your initial take on how you have seen and what you make of the budget speech, and where do we go from here?
Yeah, I think clearly, there are not many expectations in the budget, given the fact it's supposed to be a vote on account budget. But having said that, the big reassurance which has come from the budget speech, one, continuing to drive certain social projects which are supposed to be adding value to the citizens of the country, as well as help in building the GDP growth to the next level of growth, which is basically emphasizing the importance of the housing for all, emphasizing the importance of unleashing the potential of youngsters in the country by allocating close to about 1,00,000 crore. From that fund, they will give interest rate-free loan for a longer period for encouraging people actually to pursue their ambitions or aspirations in the field of technology, in the field of defense, and so on and so forth. That's something I see as a new thing which is coming in this vote on account budget. And the fiscal consolidation, last 2 years, if one looks at it, the government has not been talking about fiscal consolidation. But largely the focus was more on improving the tax collections and therefore improve the tax to GDP ratio. Having seen a significant progress in the tax collections, both in direct and indirect tax collections, and acknowledging that growth and continue to have the confidence that tax collections will continue to be the driver of the Indian economy, as a tax to GDP ratio, that focus remains as high priority for the government, and therefore taking a fiscal target. So one is, of course, setting the target for this year, and second is setting the target for next year at 5.1%. This something is actually shows the confidence how the revenue growth will come, and top of it, ensuring the government-led spending does not actually take a backseat, and therefore assuring the 11% allocation increase towards government capex, government expenditure, is also in some sense keeping high focus on growth momentum. So I think all in all, if you look at, though the vote on account budget, generally we don't expect too many things, and whatever limited things have come, but all of them are positive from the point of view of maintaining the momentum of the economic growth and making it more sustainable. And last but not the least is we continue to have the strategy of making it inclusive for the entire the country perspective, That also, I think, it goes well from a sustaining the overall momentum and the economic point of view.
Abhay, we were talking about valuations just a bit ago, and my question really is that, sure, Nifty is at around 20-21 times right now. It's still at a discount to its historical average, and it is also at a significant discount to its life high. Of course, I reckon life high would not be as relevant at this point in time. My question really is that, one, is there a possibility that we could in fact see a little more legs to this rally that we've seen, a little more legs to the strength that we've seen of late? And two, if not, what sort of earnings expectations are you factoring in as far as at least your large caps are concerned at the moment?
Yeah, Agam, I think this is the question that we are pretty often asked by large institutional investors that we have in our fund, especially the global investors who look at India valuation and compare it to other opportunities they have, especially in emerging markets and emerged markets like China or some of the other countries. And India trades at a premium. But I think at the same time, it is easy to justify that premium, Agam, because you look at today's forecast of the government of a drop in fiscal deficit, at the same time, a solid growth in GDP. I mean, how many countries in the world give you that decadal opportunity that India is giving you right now? So I think while the valuation is not low, and if anybody who's waiting to buy Indian stocks, large cap stocks on a sharp correction may be disappointed, I think the worst case for a year, 2 years from here on is that the markets go sideways and at the index level you do not make much money. But at the same time, Agam, I think for good stock pickers, for good fund managers, active fund managers, there is enough opportunity. There are enough opportunities in the wider market to make very good returns by very astute stock picking. And stock picking of the kind that plays into the emerging macroeconomic themes, industry trends, consumer demand trends, than just relying at the broad market level multiples, because many times we have seen in the past that is just a red herring that a lot of value investors are not able to allocate appropriately to the market just looking at that. And then they are surprised when the markets rally. So I think investors need to take their eye off just one Nifty valuation multiple and look at the wider set of opportunities that are available in the market to them.
Yeah, absolutely. Aditya Agarwala is with us now in the studios. He's Head of Research and Investments at Invest4Edu. Let's talk stocks, Aditya. We've done a lot of Gyan analysis. All of that has happened. Market's not very excited by this budget. You're saying that was expected. What would you buy now? What are your top calls at this hour?
Hi, afternoon Tamanna, afternoon Agam. Thanks for having the show. It has to be the banking stock because if I just purely look at the chart structure, it's banking which is looking the best at the moment. And I'll stick my neck with the PSU banks, which is where the real money-making opportunity is there. Look at a SBIN or look at a Bank of Baroda, look at a Canara Bank. All these stocks are buzzing around. So if I have to put my money at this moment for half an hour of trade, I'll basically put my money in a PSU bank. Something to buy, maybe an SBI looks attractive at current levels. One can go ahead, buy at current levels. Look for a target of 670 to about 680 on the upside with a downside support at 635. That's a good trade to take. Apart from that, there are a few pockets here and there which are moving, Tamanna, not really much which is happening. Container Corporation is something that would you like to pull out for your viewers. That is buzzing in trade at the moment. It's up almost 3%, 3.5%. One can actually go ahead and look to buy the stock at current levels for a positional trade as well for a target of 1,000 rupees with a stop loss at 850, 860. That's a decent trade to take.
Container Corporation probably because disinvestment target for next year has been upped slightly. What about Paytm? Aditya has just been stuck at that 20% lower circuit. Is there any redemption you're seeing for this stock? They're saying they're trying to figure out things, fix things. Any way you would touch it right now?
Not at all. It's a lower circuit. People who want to exit, they can't exit. People can buy though, but I would definitely not recommend people to buy till the time you get some positive news flows and some positive development for the stock. Because the stock clearly, Tamanna, time and again has seen lower lows, lower highs. It doesn't make any sense to get into a stock which is actually correcting all the way down. So I would definitely stick to a stock which is making high rise lows rather than going with Paytm.
Okay, just one more I'm going to ask you about is Hutco. Up 18% today. One assumes on the Pradhan Mantri Awas Yojana scheme could be one of the reasons. But on the charts, are you seeing a further upside here?
Strength is definitely there, without a doubt. Will I put fresh money? Maybe not after this 13% rally that I'm seeing on the charts. I would maybe put a trailing stop loss if you already hold the stock with the stop loss at 190. Maybe look for a target of 220, 230 on the upside. But fresh money, no. Maybe wait for a minor dip on the stock. Then you can look at fresh addition.
All right. We'll take a very short break at this point, but our continuous coverage is on NDTV Profit. It's the last half hour of the markets, and we'll shepherd you to what could look like an interesting close. Not too much movement, but many stories within to discover. So quick break, and we're right back.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner State Bank of India, the banker to every Indian. Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner State Bank of India, the banker to every Indian.
Welcome back. You're watching the last 30 minutes of trade as we start winding down a very, very news-heavy, event-heavy day. The market's flat as a pancake, doing absolutely nothing, respecting the 27,700 mark for now. Bank Nifty as well, not doing too much in trade. Lots of action outside the benchmark and the Nifty 50, largely driven by earnings, and that's pretty much what the focus of the markets this afternoon is about. In terms of stocks that are moving on back of earnings, Motherson Sumi is up 8.5%, so sharp up move coming in there. You've also got Suzlon, Pfizer, EID Parry, Maruti Suzuki. Those auto numbers were pretty phenomenal. Monthly auto sale numbers for Maruti. The stock clearly giving that a thumbs up. Shree Cement on back of earnings, Ambuja on back of earnings are counters that are moving up. On the sell side, 197 Com continues to be under pressure. No change there. The stock opened with a gap down, continues to trade at that circuit level even now. Well, we'll continue talking to our guests and build some perspective in the markets, but Alex, such a eventful but non-eventful day of sorts, right? It was busy from the get-go. There was so much riding on this budget, even though I think the finance minister had reiterated a bunch of times that this was just a vote of account.
Vote on account, absolutely. You said it. And I like the term that you used, flat as a pancake, for those people that haven't had too much to eat because of the fact that it was a news-heavy day. That's certainly music to your ears. It's making me hungry. But then, Samina said exactly what has panned out. Apart from a couple of announcements that would really set the tone for what will come in July, and a very confident finance minister indicating that her government will lay out the roadmap for the next 5 years in July. Apart from a few of those big ticket statements that were made, there wasn't really too much in the fine print either. Of course, that big number that everyone focused on was the spend on infrastructure, and I think the commentators that have spoken to you through the day have essentially spoken about the fact that the finance minister has been conservative in her estimations for the new financial year. The gross borrowing numbers much lower than expected. There's also only so much that can be executed from a capex standpoint, so that 11.1 lakh crore number that was indicated in budget 2024, the interim budget, of course, is something that is par for the course, especially because 9.5 lakh crore was spent in the last financial year. We've continued to have A. Bala with us. Bala, we've spoken about that infrastructure number, but I'm actually curious. You've seen so many of these stocks run up so substantially. Now we're hearing that that number that was actually spent in the last financial or the ongoing financial years, 9.5 lakh crore. It's nothing to scoff at, nothing to sneeze at, but how do you take that? We've ended up with spending of less than was previously anticipated.
I think we'll not look at this from two angles. One, what is being driven through the budget. Second is what is being driven outside the budget. I think if you look at the various institutions that has been set up in carrying out the various visions of the government on building the infrastructure, whether it is on road, NHI does all the work. If it is railways, there are various subsidiary companies in the railways, they do it. And the same way on the power sector, especially on solar, it's a combination of private and public sector are doing it. Therefore, the budget allocation is only one part of it, which nothing but reinforces the confidence that the government has got. Rather, they give to the market as a whole that how the government is serious about increasing the allocation towards the infrastructure building in the country. At the same time, as the allocation comes in, the private capex, which I think Finance Minister also mentioned about, the private sectors, then they also jump in, and that capex also is coming. I think initially, if you look at about 2-3 years back, the public sector allocations were high, and the private sector capex was not coming as much as it was expected to be. Especially the last 1 year since the time PLI scheme has been introduced, private sector capex has been rising, and along with that, public sector expenditure, government expenditure towards capital expenditure, even if it gets moderated, it should not have much impact from sustainable growth momentum point of view. That's why I see it. And second is various institutions have seen made a significant progress, especially on railways. A significant progress has been made. I think defense, there has been a significant progress being made. In addition to that, electric vehicles area where most of the automobile companies are making progress. I think if you look at a combination basis, I think the private and public sector capex would be sufficient enough. It will be to drive the growth momentum. I think aggregate number, I'll not be surprised if it goes beyond 20-25% in terms of increase the capital allocation on a totality basis.
Bala, I want to move a little away from equity markets for a minute, because this seemed like it was a budget for the bond markets. On one hand, we got a fiscal deficit number much lower than expected, at least in terms of next year. Even this year's number came in lower than what the street was working with. B, you've also got $25 billion of money coming into the JPM bond index. Both these factors together should ease liquidity to quite an extent in the bond markets. Now, if you were a debt investor, would you play duration at this stage? Would that be your strategy?
In fact, we as a fundos have been quite bullish on duration for quite some time. So I think we turned bullish on duration on two counts. One, when the US interest rates peaked about 5% plus, we started estimating that US will start planning to cut the interest rates as they progress in the year 2024, and which you continue to have the belief that US will cut interest rates during the course of the year. Second, as far as India concerned, Since the time the JP Morgan bond index was announced, which itself is a big news from India point of view, as because of we have been pushing for this index inclusion for a very long period of time, and finally it got materialized. It will have cost impact. One, currency flows. Second, liquidity improvement in the improving, and third is the forex reserves. Balance of payment will become better, and therefore on the bond market as well. On top of it, the current fiscal deficit number which has been set as lower for next year. I think it does two things. One, of course, it shows actually confidence of the government in boosting the overall tax to GDP revenue, tax to GDP ratio, and therefore overall contribution goes up quite significantly, both on GST and indirect and direct tax collection, and therefore the borrowing comes down. And the JP Morgan bond index money as this starts coming in with the less supply, probably it will actually lead to, if not a rally, at least the upside will get protected in terms of the government borrowing cost, which ultimately will have a significant impact on the bond market in terms of yields going down, even for the borrowers in general. So therefore, I think it's a win-win situation for everyone. I think as a fund house, we've been quite bullish on long durations, especially the government of India security, government of India bonds, and probably as time progresses with the spreads widening for corporates as it stands today, because RBI has been tightening the capital adequacy norm for lending, that has resulted in yields going up for non-government borrowers. Probably will see the opportunity coming in that space as well.
Okay, fair point. Viewers, do keep one eye at the bottom of your screen. You're seeing numbers for Titan for the third quarter being flashed. And you have a few of the headline numbers in, of course. You have the net profit number that is coming at just over 1,050 crore rupees, more or less in line with expectations. Consensus estimates stood about 1,118 crore rupees. The top line stood at about 14,164, and that's an uptick of about 22% from the comparable quarter. The margins have contracted just a tad bit, and it's come in 55 basis points lower than the comparable quarter. The stock is down. It has seen just a bit of a pop from the low point of the day, but it's under pressure, Samina.
It is. In fact, that could be on back of the way gold prices have also moved in the quarter. A quick mention on Eicher Motors. Auto has been in a pretty sweet spot over the last couple of days. Let's pull up the counter. There you go. It's looking great at the day's high point, 2.5% higher. The Jan auto sale numbers have come in where commercial vehicles are down 1.6% year on year. Domestic sales are also down by 4.2%. Exports is what the significant number there is up 76% YOY. So the stock getting excited on back of export numbers, domestic numbers not so much as compared to what you see on exports. Aditya, I want to come to you on auto. Yesterday, Tata Motors overtook market cap of Maruti, and that became quite a talking point on the street. Maruti, of course, decided to feel left out, or rather was left out, and did a pretty good catch-up this morning. Eicher also in front of you, looking like a good sort of move as we speak. Amongst the auto majors, one stock you'd go long on right now?
Could be an Eicher Motors because I believe both actually Maruti and Eicher, it's very difficult to pick, but if I have to pick one, I'll go with Eicher Motors. I believe stock has taken support at crucial moving averages and trend line, and from there it has seen good volume back buying. So that is something that that interests me, and I'm looking for a target. I'm looking for a target of at least 4,200 on the upside. If that is taken out, 4,400 can also be seen with a good strong support closer to about 3,800 on the downside. Looks like a good trade to take.
Okay. We've also got Abhay Agarwal with us. Abhay, coming to you on the auto pack, of course, it's in focus today on the back of volume numbers or wholesale numbers for the month gone by. And we've seen, as Samina just pointed out, a couple of those stocks that are doing particularly well. Maruti Suzuki up and about in trade today. What's your view on the latest pulls in the space? The big question about rural recovery and rural demand, is that out of the way based on the numbers that you're looking at?
Yeah, I think what is happening is that, let's break up the auto pack into two parts. One are the two-wheeler companies, and we've seen very good results from them and good stock performance. You look at companies like, Bajaj Auto, Hero MotoCorp, TVS. I think that's a demand that is very, very solid. It's getting stronger as people have easier access to credit in rural, semi-rural, semi-urban areas. So that's a very robust demand, and in fact, on top of that, there are high upsides that as the global markets open up, the exports will also pick up. And on the four-wheeler side, we are seeing two very, very strong players. Maruti always was a strong player, and Tata Motors with its revamped product portfolio, of passenger vehicles has really become a very solid competitor. And it is getting rewarded for that, the hard work that they did over the years. And for a long period of time, the stock was beaten down and the company's strategies were under question. But now if you look at it, Tata Motors, all their businesses are fighting, whether it is the GLR business or domestic PV, CV business. And I think it's just because of the product portfolio. They've launched vehicles, both Maruti and Tata Motors. They have very wide service network. So they have become de facto number 1 and 2 four-wheeler players in the country. And I think this dominance will continue for next 3 or 4 or 5 years because nobody else has the reach of distribution, product innovation, and servicing that these guys have. So I think these will continue to be very strong portfolio stocks for all funds and investors going forward.
Aditya, quick one, 15 minutes to go. It is Nifty expiry. It's a surprising Jan of sorts. We're going to a new series tomorrow. Where are you anticipating expiry at?
So I believe the weekly expiry would be somewhere around 21,700, 21,650. That is where the maximum open interest is. If you take a look at the open interest, how they're stacked up. And on the upside, I believe 21,800 is seeing on the call side maximum build up on the open interest. So something between 21,650 to about 21,750 is what I believe markets will expire, which is why actually Samir, not seeing that kind of a volatility coming in the markets, despite the fact that few market participants would be disappointed with the budget. But because it being a weekly expiry for the Nifty, you're not seeing that kind of volatility in the markets.
Right. Just a quick mention, HUDCO, GIC Housing and NBCC are all trading with very, very strong gains. And these are the few stocks that have actually rallied up right after the budget speech ended. Could be largely on back of rural housing. Abhay, you want to comment on this? The finance minister did indicate that, I'm not even going to call it affordable housing, largely rural housing, the trust on rural housing. Of course, we don't have numbers extensively. I think 2 crore houses is what...
So the target of 3 crore is eminently achievable. They're very close to that target. Abhay, is what I remember the finance minister saying. And in fact, they're rolling that forward over the next 5 years, another 2 crore under the PM Awas Yojana, if I'm not mistaken. So what are the implications of that, according to you?
Yeah, I think this is, again, a macro level policy statement that this government has stuck to since it pretty much came into power 10 years ago. And that has become stronger and stronger. And the execution has also been pretty impressive, I would say. They have walked the talk. And they are focused on very inclusive growth, which is creating jobs, housing, a better standard of living for the lower strata of the society is all coming into the play right now. So as you said, it's not about, last 5 years, next 5 years, it's way beyond that. So these are multi-decadal opportunity in rural housing, affordable housing that is emerging. And I think different investors are playing it differently. You're looking at companies that act as nation builders, and some of them are PSU companies. So the hope is that they will benefit more as government leans on them for affordable housing, for rural housing schemes, affordable housing schemes. So they will see a scale up in business. And then you have private sector players that cater to affordable housing loans, loans in the range of 7 to 9 to 12 lakh rupees playing out. And then you have the whole supplementary industry, tiles, cement, paint, also playing out with that. So again, this is one of the themes that market has picked up in terms of its executability by the government and the demand that is very, very clear and present. And the industry that caters to them is also consolidated. So the players are well known. So I think this is going to be an interesting space for investors to look at for the next 5 years.
Just want to clarify, what I was talking about was Grameen, right? So you have the subdivision of the Awas scheme into Grameen as well as the urban, but the target of 2 crore is within that Grameen sub-segment of the program. But I want to stick with the real estate pack and talk to Dharmesh Mehta, MD and CEO of DAM Capital, who's joining us. Dharmesh, the other announcement related to the real estate space was a bit of a teaser. I guess you'll get some more clarity when you have the budget in July. Ceteris paribus, what would you say about the announcement with regard to the middle class housing which was made, right? They said that they're going to facilitate building of a house or buying of a house for those that are currently renting. That bodes well for the real estate pact that has done quite well over the last 12 months.
Well, there is, government focus always will be to give affordable housing to the people of India. So obviously they need to keep on investing or keep on pushing policies which actually help every Indian to actually own a house. And that's the dream of every Indian. So I'm not surprised by that investment, by that announcement. We need to see more details how this actually helps them to do this much quicker. And as you rightly said, the main guidelines and policies will actually come in the next budget post the elections.
Dharmesh, one more quick question, largely on the budget macros. The fiscal deficit came in better than expected. The commentary was also very promising, and it was the confidence. I think that's what everyone stood up and took notice of. This is a great story when you're actually pitching to a global audience as well, right? And that's been a priority and an objective of the Prime Minister in the last decade, to put India on the map. Now, this is garnering really well for the debt markets, but will it encourage incremental flows coming in from FIs into India? And the reason I ask this, because equity markets is more of a valuation play, I'd imagine.
Well, thankfully, India is already on the map, so we don't need to pitch people to put India on the map. And what is happening to China, in fact, India becomes a hot destination for everybody to come and invest, because China no longer is a great investment option as today to the global investors. And especially what happened last year, there was a huge underperformance thanks to China for all the global investors. Valuations definitely will be an important benchmark, but if you look at the large caps in India, they're actually still very fairly valued. They're not overvalued, or they're not in a crazy valuation zone, which we generally see on some of them, which we are seeing in the mid-cap segment. So if I look at it, my Sensex P or my Nifty P is not at all-time high, anywhere close to that. So there's enough room for that to go up. So in that sense, the large FIs, when they come to India, are looking for large caps more rather than mid-caps. The mid-cap party continues with the retail investor money. So if my large caps are not going to collapse, my mid-cap is also not going to see some major sell-off. Yes, there will be some correction, which is bound to happen, 10-20%, which will happen unless there is a huge political destabilization, which doesn't look as of today.
And Dharmesh, I think we're not completely in a zone of decoupling just yet. So if there is, pulls and pressures globally, we may feel the heat of that. But we'll take a quick break. We've got last 10-12 minutes to go before we close out today's trade. So stay tuned with more on the other side.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Yeah. Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of
Welcome back. We're winding down this budget day and the market's not doing too much. You have the benchmark Nifty 50 that's trading very close to that 21,700 mark. Samina called it flat as a pancake. It remains to be the case. Some of the names that are moving in that pack, of course, the auto pack doing particularly well for itself. And the top gainer on the Nifty 50 remains Maruti Suzuki, gaining about 4.5% or thereabouts. A few others also, Cipla, Eicher, Power Grid, gaining ground. Among among the losers. You have Larsen & Toubro, which is losing about 2.5% or thereabouts. Ultratech Cement, ONGC, Grasim also losing. But I want to focus on a pack of stocks that's arguably the pack of the day, which is the PSU banking pack. And Abhay, I want to come to you on this one, right? You've seen the strength of the balance sheet of these banks improve quite substantially in a situation where the government seems to be moving towards a more conservative fiscal approach, perhaps setting the tone for the next 5 years, or at least the start of the next 5 years. How does this pack move? And would you bet on any of these big names?
I think this is a pack that has already done well. If you look at the last calendar year, it was one of the best performing packs. And one of the reasons for that is people had low expectations. And typically we have seen such massive outperformance comes in when a sector outperforms all expectations and is under-owned. And I think that is what has played out here. And even now, I would say that, with the way the government policy direction is, which is to cover a very wide set of beneficiaries, the reach that PSU banks have is unparalleled. Just the physical reach that, say, an SBI or Punjab National Bank or Bank of Baroda or J&K Bank, and some of these banks, it cannot be matched by any private sector bank, and nor do they want to match it. So, and with the cleaner balance sheet and full government support and direction, I think the PSU banks will continue to grow. We are seeing them become very competitive and give private banks give a run for their money, not only in retail, but also in corporate banking space. So some of the bids that SBI puts in for some of the large treasury deals is unmatched. And, a lot of private sector banks are actually worried about competing with a behemoth now like SBI. So that is the overall view on the PSU bank pack. And if I was to own anything in the portfolio, again, this is not a buy recommendation. I would look at the size, the big players, which would mean an SBI for sure, and probably PNB and Bank of Baroda, because they have unmatched, presence, both physical and relationship-wise. And I think there is plenty of juice left in this space still.
Aditya, any trades? Buy today, sell tomorrow, sell today, buy tomorrow?
So I'll go for a BTST, Samira, not for a STBT. MCX is looking interesting on the charts. It's trading at days high. Look at BSE, actually it's popping up. So I believe MCX2 can catch up with BSE. It's broken out into from a consolidation pattern. So I'll go ahead and buy at current levels, look for a target of 35.70 on the upside with a stop loss at 34.20. Second set of stocks which are actually looking interesting is the insurance space. Look at an ICICI General or a SBI Life, they're looking interesting. So I've got ICICI GI, which looks interesting on the charts, broken out again from a consolidation pattern. Go ahead with a buy recommendation here, look for a target of 1560 on the upside with a stop loss at 1480 on the downside.
Right. Thank you very much, Aditya. Great having you on the show today. And so those are a few trading ideas coming from Aditya. Dharmesh, what are you doing with banks at this stage? If liquidity is bound to improve, it's going to be a big leg up for PSU banks, and we've seen that in today's day of trade. If I had to ask you for an investment, a strategic investment, would it be with private sector banks like the HDFCs of the world, or would you stick your neck out and pick up PSU banks, because a lot of it is working for these stocks?
See, I'm overall very bullish on the banking sector, so it's whether private or public, it will depend on what valuations you're buying at. I think so. The credit cycle is going to take off in a big way once the elections are over, and the corporate India knows what the policies are going to be of the next government. And there is so much, growth opportunity which is available in India thanks to China +1 and overall Indian consumption moving, starting picking up. I think so. Banking is the place where one should be. Whether to be in private or public will not depend on what valuation you're buying at. A lot of stocks are in private sector are also very reasonably valued. So my pick would be, as of today, it would be more private banks over PSU banks.
Let's talk about a couple of other aspects as well, because I'm wondering about the rural story. And Abhay, I know you spoke about the auto pack, but then from the other side, you have FMCG companies, and I think that was visible in the numbers as well, with volume figures and revenue growth for a couple of these companies still sputtering a little bit. Does that change at all? We were anticipating, the reason I ask is before the elections, we were anticipating a few measures that could potentially prove to be a shot in the arm for this particular consumption belt. That hasn't come to pass. So what happens to these names?
Yeah, I think the rural economy is in good shape. I don't think there is any distress. I don't think there is any worry. I know the monsoons were uneven, but we haven't seen any negative impact of that. We haven't seen any default. We haven't seen any slowdown in consumption in any rural part of the country broadly. There would be some extreme pockets, yes, but overall, the consumption pattern in rural economy has been pretty robust. I think why we are not seeing that translate into the volume growth of the large listed companies is because there are options available across the country by local brands and local products that have innovated, become very competitive. So if you are in Gujarat, you will find Gujarati brands. If you are in Rajasthan, similarly South, that cater to the local taste on the food side and then also on the personal care side. So there is a very solid competitive environment that these large national level FMCG companies have to compete in. And they are, I think right now struggling a little bit because they don't know how to bring down their costs to a level that they become price competitive. So they are refusing to drop the prices, and the local players, smaller players are actually gaining market share at their cost. I think that is what is playing out in the rural economy. I don't think if the volumes are not growing for the large national players, it means the rural consumption is not good.
Right. Abhay, last year after the budget, we saw rail stocks, defense stocks, all of them became the darlings of D Street. This budget has left maybe short-term or medium-term investors maybe slightly disappointed. Do you think these are trends that will continue? I do know that we've talked about how this budget is more long-term in nature as opposed to 1 year or 2 years. Do you think railways, defense still are hot spaces to be in?
No, absolutely. And I think, I don't think the budget, we need a budget direction to further, build belief on that, because I think the policy direction has been very clear. Gati Shakti, the Pradhan Mantri Gati Shakti Yojana has been very clear that they will continue to add new trains. They had announced earlier 3,500 new Vande Bharat trains with 16 bogies each, which is a massive investment, still small, compared to what we need. So, if they had said 10,000, that also would have been absorbed by the users. So there's a long way to go, and PSU companies is not the only way to play. We're seeing smaller companies, private companies emerge, like again, not a buy recommendation, but a company we have in our portfolio called Amber Enterprises that does HVAC for trains. Has been constantly increasing its sales to railways. And on the defense side also, I think the action has been limited to public companies, rightly so, because these are strategic assets. Right. But still, I think it will flow beyond that sooner than later.
Right. Abhay, Dharmesh, both of you, thank you so much for joining us on Budget Day and giving us your perspective, not just on the budget, but on the prevailing trends that we're witnessing in the economy. We're drawing to a close on today's session, of course, and we are moving slightly low on the benchmark indices. And you have the benchmark Nifty 50, of course, that's trading with cuts of about 0.2% or thereabouts. The banking pack as a whole doing reasonably well, up about 0.5%. And I think that's primarily on the back of the performance of the PSU pack, the mid-cap index losing ground about 0.6%. But the small-cap index up and about, up about 0.1% or thereabouts. In fact, let's look at the heat map just to see how we're closing today out. And remember, today, of course, is the options expiry also for the week, and you have Maruti Suzuki on the top of the pack that's looking pretty on the back of volume numbers. A few of the other names that have done well, Power Grid, Cipla, Eicher, all gaining over 2%, and the texture more or less even Stevens, more or less. Towards the end of the session, you have a few more that have slipped into the red. But at the bottom of your screen, you have the likes of Grasim, you have Larsen & Toubro. Remember, it's a company that posted results not too long back. It has been under pressure. The margin picture really is not something that the street took very well, and the likelihood of a weak Q4 based on what you've heard from the government and based on the likely spend on capex from the government end, that really is a fear that seems to be coming true, and we'll know soon enough, of course, as the order inflows come in. A few of the other names then: Dr. Reddy's Laboratories, Ultratech Cement, as well as ONGC losing about 2% each or thereabouts. Samina, looking at the broader markets though, there were a few very big movers.
Yeah.
I think a few of the power names also from the broader markets doing well.
The broader markets definitely were more action-packed than the Nifty 50 this afternoon. We'll quickly wrap up what stocks led the way up, what actually did well in today's day of trade. First up, there was earnings reaction that you were watching out for. So you had counters reacting to earnings, and you also had some of those housing names which actually did well, and ancillary to housing on back of the rural push. So counters like Hudco, NBCC, GIC Housing have actually had a pretty solid run in trade. Hudco going up, closing the day at 21% gains. GIC Housing also up about 9% So very strong up move on some of those affordable housing theme counters that we saw. Beyond that, Godrej Consumer saw a gain of 8.5% on very good numbers being posted by the company. Motherson Sumi also posted earnings that were better than what the street was expecting. That could be one reason, or the only reason rather, the counter was up 8%. You also had Suzlon, Indian Bank, Global Health, Avanti Feeds, if we can get that one up on the screen, Apex Frozen. These were stocks from the fishery space that got a bit of a bump up. On back of solar panels, you had stocks like Urja JSW that actually performed fairly well in today. And Vari as well actually had a pretty strong day. Urja going on with a gain of 10%. Vari as well seeing a sharp up move in today's trade. Rail stocks seemed a little disappointed. Those counters went home with some cuts. The defense as well as the pack didn't have it too good today. With that, we'll take a quick break, but we'll come back. There's a lot more programming on the other side. But Abhay, Aditya and Dharmesh, thank you very much for joining us today on the show. It was a pleasure talking to all of you.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian. Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
What is an interim budget and vote on account? In an election year, the elected government is responsible to come up with the union budget for that financial year. However, until elections happen and the new government is formed, the current government comes up with a temporary financial plan which is referred to as the interim budget. Because the current government's union budget is valid only until the end of the fiscal year, which is March 31st. So to meet the financial needs of the country until the new government is formed, an interim budget is presented. Nirmala Sitharaman, the Finance Minister of India, will be presenting the interim budget on the 1st of February. Now, a vote on account is a formal permission from the Parliament to spend money for short-term requirements from the Consolidated Fund of India. Now, the Consolidated Fund of India reserves all the revenue generated by the central government in terms of interest on loans, taxes, and portion of state taxes. And money from this fund cannot be withdrawn until it has been appropriated by the law. Therefore, vote on account is the permission procedure to do just that.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Yeah. Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Hello and welcome. Continuing with our budget programming, we have with us a very special guest, Ashish Rajvanshi, CEO Adani Defence and Aerospace joins in. Hi, Mr. Rajvanshi. Great having you today on the show. The budget, contrary to what the street was expecting, was not just shorter, but of course was also an interim budget in every sense. What did you make of the budget on the face of it? And then, of course, I'd like to talk to you about capex allocation in my second question. But on the face of it, thumbs up to this interim budget, vote of account?
See, definitely a well thought through budget. This is reflecting government's vision of Viksit Bharat by 2047. It's important to appreciate we cannot be looking at the defense sector from an annual perspective, but the roadmap which has been defined for the next 25 years for India to become self-reliant is very positive. So the allocation to defense at 6.2 lakh crores is the highest within different industries. Just to give you a perspective, this is 4.5% year-on-year growth compared to last year. But if you look from FY22 to FY25, we are talking about an 8.7% CAGR growth, where the country has moved from 5.2 to 6.2 lakh crores over the last couple of years. At the same time, just to give some comparison, the US is at $842 billion, while China is at $270 billion. And India's current budget is $75 billion. So probably we just need to relook into some of these numbers. The budget stands at 1.9% of the GDP. The US budget is at 3.5%. Most of the countries in the European market are doubling their spend. So we definitely look at the government to see how this budget can be reviewed and a bigger allocation can be done predominantly to modernization.
Ashish, there was also an innovation fund for defense tech. You want to elaborate a little bit more on that, and what does that also mean for Adani Defense?
See, what's important is India has to go up the value chain, not only focusing on manufacturing, but how do we get into greenfield, deep tech technologies and research innovation. The 1 lakh crore fund, which has been kept aside for research and innovation, is a welcome step, which is not limited to just the defense industry, but to other industries as well, giving out loans to MSME startups at a very, very competitive rates, which will spur innovation in India. At the same time, talking about deep tech is important. Until now, over the last decades, the focus has been on platforms and systems, but there's an increasing realization that unless we focus on digitization, machine learning, cybersecurity, which has been core to the recent conflicts in the Middle East and Eastern Europe, we will not be doing justice to the defense and aerospace industry.
Right. Ashish, a little more forward-looking, right? I mean, the capex allocation this time around is a tad lower than what expectations were being set out for. But of course, the focus is on structural growth. It's a 10-year story. It's still about Atmanirbhar Bharat. Keeping that in mind, what did you make of that capex number? Did you anticipate a bigger piece of the pie coming in? Because if the allocation was higher, it would only mean good news or better news, in fact, for defense, and the momentum then would continue into next year as well.
Spot on. I think on the modernization budget, the number could have been bigger. At 1.82 lakh crores, which is $22 billion, it's a 6.5% growth year on year. This is 29% of the total defense budget, which has not changed compared to the last year. The other factor which is important to consider, this is 16.4% of total government's capital expenditure at 11.1 lakh crores, which has reduced from the share of 17.1% last year. The other important part is in FY23, government has kept aside 68% of modernization budget for domestic industry. We are definitely looking at a guidance from the government to have a bigger chunk going up to 80%, which should be kept aside for the domestic industry. And other important element is how even this 80% of the domestic industry gets segregated between public sector versus private sector. So very positive policy push, but it's important that some of these guidance clarifies what is in store for the private sector and how we continue to support and complement our partners in the public sector.
Sheesh, that brings me to my next question, right? So I know there was so much of trust on Atmanirbhar Bharat, and we've done really well. I mean, your sector has been one sector that I think every other industry has also talked about in one way, in more than one ways. But if India has to become a global leader, which is what the vision is for the government, do you think enough is being done, or do you have, may I say, a wish list of sorts come July, and you'll put these demands up? Because while this is great for Atmanirbhar, we don't have enough, or there's not enough commitments being made to make put India on the world map in the global defense space.
See, if you look at, again, the roadmap over the last 5 years, the policy push, the conversation, and just the dialogue in terms of the industry, academia, and the armed forces has been very positive. There's a lot more transparency in terms of the requirements of the Indian armed forces and how it translates into our efforts. What's important is this 1.8 lakh crores is being aligned to the national priorities. There's a robust governance mechanism which is being set up to monitor the timely awards of contracts, because we have these long, lengthy 4 to 5 years process of RFI to contract award. And if the governance becomes strong on management of some of these things, I think India can take off much faster. But if you ask me, compared to 7 or 8 years back, we are on a very, very positive footing.
I've managed to catch you for a few minutes on budget deal. Let's talk about business. And I know Adani Defense focuses on multiple business verticals in that sense. How is work looking? Orders, of course, being one. The gestation period is fairly long for your sector. In terms of execution, are you facing any execution challenges, A? B, any sort of joint ventures on the horizon that you've undertaken, looking to undertake, global partnerships maybe?
So, two parts. We just came back from the World Economic Forum in Davos, and one of the key conversations was the geographic fragmentation which is happening. And every country is focusing on making their supply chain independent and a lot more self-reliant. And I think the same applies to India. So with the global push coming, with the conflicts burgeoning in Middle East, Eastern Europe, and some parts of South Asia, it is important that India focuses on the self-reliance in supply chain, which actually creates a lot more opportunities in terms of job creation, creating technology centers within the country, and also an opportunity for India to become a global hub for defense technologies. The competitive manpower in terms of engineers, technicians, the research scientist base, what we have, along with the passion which the people are building now in manufacturing, I think there's a very big, bright future, which will not only help us serve Indian armed forces, but a lot of the markets in Africa, Southeast Asia, Latin America. On the business, a lot more push now from the Indian armed forces. There has been a very positive momentum in terms of giving out awards, either on the fast track basis or under emergency power or moving long-term capital procurement. So business is bright. We have been having active conversation in the export market, going very well. So yeah, nothing to complain.
Oh, things are looking up. Ashish, what sort of growth are you internally working with in terms of order wins going to the next few quarters?
So difficult to quote a number, but we are talking about doubling our order pipeline and also doubling the execution capability. So this is the time and demand we don't see as a challenge, but how do we fast track on the supply? Very recently, we gave our first male UAV to Indian Navy. And in the next couple of weeks, we are coming up with a new facility you'll be listening about very soon.
And you want to talk to, when can we expect this new facility? What is the capacity? What is the vertical that it's going to be focusing on?
So this is going to be aligned to our strategic roadmap, but too early, too soon. So give us a couple of weeks and we'll come back to you.
We will be knocking on your door to find out more. But one quick one, you talked about how within India, of course, there's enough demand. Your order book is going to double, execution is going to double. And this we're talking in the near term, right, Ashish, in the next couple of quarters, potentially?
Potentially, you're talking about the number or you're talking about the...
No, I'm talking about the timeline. So when do you expect or when can the street expect doubling down on order book and execution?
See, it's happening while we are talking. So the team has been working very closely with the customer.
Okay.
And this is not something which happens in a specific month. This is on a rolling basis. So FY25 is going to be a lot more brighter for the defense business. So we'll come back to you on the specific numbers later.
Ashish, any conversations underway with friendly neighbors? Anything on the export front that we'd like to know if there are, and even if there are conversations happening?
See, again, without naming the country, what's happening is the competitiveness what the Indian product and technology is bringing has been acknowledged by our partners in Southeast Asia, some parts of Africa, and Eastern Europe. Number of ongoing conversations where there's a little bit of difficulty they are facing working with the old partners, and they see India to step in and act like a big brother as a big support to some of these countries. So if you ask me, this is the right time when the Indian companies should actually work out these bilateral relationships, whether it's in Southeast Asia, middle parts of Africa, Eastern Europe, and the partners and the customers are very willing to acknowledge and take into account what Indian companies are bringing to the table.
Ashish, very lastly, this of course was an interim budget, but the big bang budget will happen in July as indicated by the finance minister as well. Could we anticipate, I mean, as an industry representative, do you think more specific measures will be announced to continue the trust on the defense sector?
So absolutely. I think three things what we discussed. One is how do we increase the share of modernization budget in the total defense budget? Number one. How do we ensure that the percentage allocation to the private sector of the modernization budget is clearly defined, which is number two. And Number 3, having a very clear target for the Indian industry to become a hub for the export market, and all of us working jointly to make it happen, is the third area we should be clear about.
Right, Ashish, it was great talking to you. We'll hopefully connect with you in a few weeks when you announce your new facility to get more details about what's happening at Adani Defence. You have a great day, and thank you very much for joining us on the show. Well, that was Adani Defence sharing its views on all the action that is brewing in the defence sector. Remember, it's been one of the biggest talking points. The railways and defence has largely been the big trust from the government, and those sectors are clearly doing exceptionally well with orders and executions as well. On that note, we'll take a break, but there's a lot more programming on the other side, so stay with us.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching NDTV Profit. Now, if it wasn't for the budget, one of the biggest stories that we would focus on is Paytm and the regulatory action that has been taken by the Reserve Bank of India against this company. The stock was down as much as 20% today. We're listening to the management con call right now. Here's what they have to say.
The question is, do you have adequate time to operationalize this to the other banks, given it's only a few weeks to go? And if you can elaborate a little bit in terms of the process on a per consumer or merchant basis, if you have clarity there. Thanks.
Sanku, let me take the third point first. I think I briefly touched upon that there is the merchant side, the user side is a Paytm Payment Bank ownership. Merchant is the Paytm aggregation ownership in online and offline, wherein Paytm Payment Bank is the acquirer for UPI and wallet. And there are other banks who are acquired for debit cards, credit cards, and net banking. So the part of migration has three legs. One leg is that you should have a partner bank interested to own up even the UPI acquiring and wallet acquiring. We have enough and more partner banks who are interested and integrate with Paytm. So that is sorted out. The second part is the commercial in that transaction similar, better, or lower than what we get today? I can assure you that the commercial is in the similar range that we get from PPBL, in some cases better, in some cases a bit lower, but on an average in the similar range. Now is the third part. One is that you do account by account migration, which is a bit time consuming, and you rightly pointed it out that the time is short. Other is you do a one-time migration. We have obviously started discussions with the relevant authorities, both in RBI and NPCI, etc., who are helping us extremely well to see to it that how can this migration happen. And there are precedents in the past wherein we've seen that there was disruption in some other bank, etc., in the past, and this handles were able to get changed, or VPAs were able to get changed. But we don't know at this point in time what will be the migration journey. I think we'll have better clarity in a week from today. But we are pursuing both the approaches, and we're very positive to be able to meet the timelines of this migration with least disruption.
Before you move on, just maybe one quick clarification on that point. Will this entail any kind of reacquisition with fresh KYC, or can the existing KYCs be transitioned if that's required?
Yeah, so Ankur, that's the point I'm making. So those are nuances because we are talking about 40 million merchants out there on UPI acquiring. All those merchants also do other acquiring. So it's a large set of migration to happen. So it needs guidance from both the NPCI and RBI, and the discussions have started. So what and how will they guide and appropriately guide us? We will see maybe in some course of time next week. And whatever is the guidance that we get from them, we'll adhere to that guidance. The idea from both the sides, from our end and obviously from the other side, is to ensure that there is least disruption to merchants, because a large infrastructure wherein the people should not get inconvenienced. So we'll do whatever is the best and whatever is the right approach regulatory allowed to this matter.
Ankur, your first question was about what kind of reasons existed. Can you just re-ask, because I think Bhavesh actually touched upon your first part also. Sure,
Vijay. The question was, do you think the reasons for the comments by the regulator was because of the nature of the business structure or the linkages between OCL and PPBL? Or was it a specific inability to comply with recommendations maybe over the last 22 months since this matter has come to the light?
I think it is a bit of both. There is no doubt about it that the very nature that payment business is significantly carried by parent, Paytm, in this situation, as you just heard us talking about it. So bank did have dependency on Paytm for some of the payments offerings like wallet, etc. And we were able to deliver a lot of comfort, but it seems like, which is the second part that you're asking, that they were not completely comfortable. So I would say a bit about.
Ankur, maybe I can just add, I think this is sort of underpinning both your first and the second question, which is that by design, bank has to make its decisions independently. And the relationships between Paytm and Paytm Payments Bank have to, historically, whatever relationships we've had, have to go through thorough arm's length process. So going to your second question then, yes, some of these partnerships may look very similar to the partnerships that consumer technology companies, technology apps like us have with bank partners. Like I said at the beginning of the call, in some cases we had those partnerships with other banks, in some cases with Paytm Payments Bank. Those partnerships over time will be with third-party banks, like Vijay mentioned at the beginning of the call. And the advantage that we have is the advantage that we always have had, which is that we know how to build great technology for our consumers, and we know how to acquire and retain customers and get them to do many, many things on the Paytm app over time. And we have advantages on the merchant side in terms of our product innovation and our distribution and our service and so on. So those are the advantages that Paytm has carried for many years and developed and expanded on. For some of these, we need a bank partner. Like I said, Paytm Payments Bank historically has been our bank partner with some of these products. Going forward, that would be other banks.
Thank you.
Thank you. Next question is from Piran Engineer from CLSA. Piran, you may please ask your question. Piran, you're not audible.
Can we come back to him?
Sure. Will yeah.
Hello, am I audible?
Yeah, hi. Next question is from Nitin Agarwal of Motilal Oswal. Nitin, you may please.
Hello. Yeah, hi. Thanks for the opportunity. So, a couple of questions. One is that, do you think that you will be able to retain most of the merchants that are there on PBBL and seamlessly migrate them to other bank? And the similar question on the consumer side. So is 1 month going to be sufficient for this migration, you think?
The idea here is that it is not necessarily something of a retention issue. It is an optionality to be given to the merchant, which is currently was Paytm Payments Bank, and we have to switch that to another bank, right? So as I said in a previous question, we are continuously discussing with the stakeholders, which is NPCI, Reserve Bank of India, etc., that how can we manage the transition in the most seamless manner, right? Once we have the direction from them that yes, you can manage it because the precedent, there is a process to be able to do that, then this entire thing is going to be very, very quickly. And I think we'll have more clarity about this in maybe a week from now. But we are very confident that we'll be able to retain these merchants and the users that we have on our platform.
Nitin, I wanted to add here that it has happened in past in UPI's case that a certain bank had a concern and then it was to be solved and relevant stakeholders were able to take a quick decision to get this continuously to another bank, because the architecture is made in a way that it is not stuck and locked into there. If it is interportable payment instrument, it is easy to migrate. It is about, like you heard from us, the wallet, where there is a customer, the wallet customer, that is where the discussion and step are needed more clarity. As far as the UPI is concerned, there are precedent of.
Okay. And how difficult it is to move QR codes to another bank? And this hit of 300 to 500.
Like I said, there is something that has happened in past related to moving significant large UPI operators bank, and that got done if you go back in that. So there is a precedent of this, by the way.
Okay. And this hit of 300 to 500 crore that you have talked about, is it a one-time, or you think that is going to be a permanent damage to the EBITDA?
We think that's, we have said annual EBITDA, Manish, but we've also said that that's a worst case situation. So over the next year, this should be a 300 to 500 crore hit from where we were going.
All right, that was the management of Paytm talking about the latest regulatory action against Paytm Payments Bank and talking about how they will react going forward. The management has gone on record to say that it will endeavor to fix the issues that were raised by the Reserve Bank of India. In the meanwhile, the stock has been put a little bit under pressure, to say the least. It ended at a lower circuit today. Let's shift back to the budget, because that really has been the big focus today. And to delve a little deeper into the big talking points after the presentation of the interim budget, I'm joined now by Anish Shah, the FICCI President and Group Chief Executive Officer and Managing Director of Mahindra & Mahindra. Anish, pleasure speaking with you, and thank you so much for joining in. I want to start by asking you about what you thought about the budget as a whole, and then we'll delve into a few of the deeper sectors or sections that I think our viewers will be most interested in getting your opinion on. But one, what did you think about the budget as a whole?
So first, it's a pleasure being here with you, and the budget on the whole is really a very good budget. It's one that puts economics at the center stage, not politics. There are no major populist measures. If you go back over the last few years, that has been the theme of various budgets. And this is one that is growth-oriented. It positions India very well in terms of its Viksit Bharat goals. And it is also inclusive. So it really covers a lot of ground, covers a lot of constituents, and I would say it's a very thoughtful budget.
Delving deeper, as I said, into a few of those big headlines, right? One was the capex number at 11.1 lakh crore rupees. Some were a little disappointed looking at the number, saying that they had expected more, but in the context of what was actually spent in the current financial year, which is pegged at around 9.5 lakh crore, it's not an increase to sneeze at or to scoff at. It's still a considerable amount of money. What did you make of it? And of course, we'll wait for some clarity on where this money is going to go.
It is a good number overall, because it shows, again, a solid growth over the previous year. It also helps achieve the fiscal discipline targets that have been put, which is important for the economy. And it is time for private investment to come in at a faster rate than it has been before. And therefore, on balance, we should expect India Inc. to be in a much better place.
It's interesting that you say that, representing FICCI as you are, and a very large manufacturing company as well. The question is the stage set then? And talk to me about which areas, in your opinion, require that capex from the private sector. And bankers that we spoke to earlier in the day, Anish, were pointing out that corporate balance sheets are looking so good that internal accruals are, their best place to fund their capex with internal accruals. So from the banker's perspective, it's not good news, but it's good news for private as a whole.
Yeah, but let's take a step back on that and look at what's required for our Viksit Bharat goals. If manufacturing has to be 25% of GDP, and if we've got to meet the goal of that has been set both from a GDP standpoint and a per capita standpoint in 2047, manufacturing has to grow 16 times versus where it is today. And that's going to require significant capex investment over the next few years. The economy is running very well right now. Demand is doing well. The consumption story is starting to come in. And as you rightly said, corporate balance sheets are in a good shape. While bankers may not be happy in the short run, given the level of investment that's required, we will see the need for credit growth to increase as well. And therefore, all of the aspects are coming together very well. It's now about execution on the ground. It's now about ensuring that we can invest and create the capacity that's needed to be able to serve India, and not just serve India, but able to serve the rest of the world as well. Because the India growth story is not going to be domestic itself. It has to be make in India for the rest of the world.
Speaking of Make in India, Anish, from the fine print, what we saw is that 15% tax regime for new domestic manufacturing companies has not been extended. And so effectively going forward, the tax rate would go back up to 22%. Do you think that that will hamper setting up of new facilities at all? Or do you think that the regime is still supportive and a lot of expansion can still take place?
I'd point on the focus on innovation and R&D. Overall, I don't think the difference to answer your question directly, whether it's 15 or 22% for new companies to set up, that's not going to make as much difference because there are lots of existing companies that have done very well, are creating products that are world-class products, and the focus on R&D and innovation is one that's going to help create a much greater incentive for industries in India to be able to create world-class products that they can sell outside. So I would look at it as a positive in terms of the focus on R&D. I don't think the tax change really makes as much of a difference.
How big then is the announcement, and if I understood that right, Anish, the announcement of the availability of significant funding from the government at very low rates of interest for investments in innovation in sunrise sectors then?
That is critical because I'm looking at this as a budget that's not just for the short term, but it's supporting the long-term ambitions of the country. And to support the long-term ambitions of the country, we need a thriving manufacturing sector. For a thriving manufacturing sector that's making for the world, we need very strong R&D, and that's where these incentives come in, and which is the reason why I think it's a great move.
Specifically on electric vehicles and beyond your the fact that you're representing the industry body, there's also the fact that electric vehicles seems to be a big thrust, not just in this budget, but in a lot of stuff that the government has been doing, and also charging infrastructure. What did you make specifically on what was spoken about today?
So this again is consistent with where India needs to be long term. It will help in terms of having lower fuel imports. That helps the balance of trade from a country standpoint. Electric is a lot more efficient than fossil fuel based cars. Electric also will have much better cars, and we will see a slew of born electric cars coming into India over the next 12 to 18 months as some of the models start getting rolled out. Electric also is easier to operate, and therefore the move to electric is one that requires incentives in the short term. Charging infrastructure is critical for this because without charging infrastructure, we're not going to see this move, and therefore the various actions taken here are going to help continue the momentum we are starting to see in the EV space. We still have a long way to go. We are still far behind many of the Western countries in EVs, but India has leapfrogged in many industries, and this is one also I believe we will leapfrog, and we will start creating an EV ecosystem that is unparalleled in the world.
Anish, the last talking point that I want to address with you is the whole consumption story, and particularly in the rural segment. As somebody that has the pulse because of the products that you manufacture or your company manufactures, I'm actually curious. A lot of people headed into today thinking that there would be a little bit of a shot in the arm for that section as a whole. That really hasn't come to pass with, as you pointed out, the fiscal glide path being paid a lot of attention to. Do you think that that was just a bit of a miss, or do you think that that section will gather pace going forward?
We feel that rural is reasonable right now. It's not on a very strong path, but it's not on a poor path as well. As we look at the tractor industry, for the year it would be flat to probably about 5% lower than last year. But that has to again be looked at in the context of the last 3 years. And the industry has grown very significantly in the last 3 years. Yes, government spending is not as high as it was 2 years ago. But then again, an industry or an economy cannot survive just on government spending, and therefore fiscal prudence is important. This is once again, I would underline the fact that it's a longer term focus and one that is right for the economy. It's not a populist budget, and from an economic standpoint, an industry body or our members would always want a long-term focus on economic growth as compared to populist measures that are just focused on the short term.
Thank you so much, Anish, for talking to us. Rather than populist, prudent and pragmatic seems to be the word and the key takeaways from budget today. We have to slip into a very quick break on this program, but we've got more coverage on the other side, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay
make opening remarks. After that, we will open the floor for discussions and questions and answers. Thank you. Over to you, Minister Ma'am.
So thank you for coming here today. Thank you very much for coming here today. Slightly longish opening remarks. I'll try to cut it down. But over and above what you heard me say, I just want to give the overall perspective, so I'll take a bit longer than I desire. See, this is an interim budget presented just before the election, obviously. The four large things that I want to draw your attention to is GDP. You get the numbers, you see it and so on, but I want to bring in this dimension, that governance, development and performance. On all these three heads, I'd like to say what actually we have achieved, because that forms the backdrop. So on governance, this budget speaks from a position where we have delivered on development, we better manage the economy with correct intentions, correct policies, and correct decisions. So it's a governance with care, conviction, and confidence. If that stood for the GDP's G, the D stands for people living better, earning better, and having high aspirations for the future. And if I move to the P, the performance, 3 consecutive years of 7% growth. Fastest growing economy in G20, all parts of the country participating in the growth. Price stability and inflation management. Handling the health and economic fallout of COVID. build out of physical, digital, and social infrastructure. DPI as a factor of production almost for formalization and financial inclusion and growth of the economy. Cleaning up the banking system, GST, One Nation, One Market and One Tax, the IBC. So if you were to look at payments, I've listed some of them. So your GDP, as we look at governance, development and performance, I have something to say on each of these. So this budget, or vote on account, is getting presented with the GDP that we want to speak to you about. And in that, the fiscal management actually is something which I would like you to spend some time, even as you go through the budget. But I'll flag it here. Bringing down the fiscal deficit in spite of very challenging times, as per the announced consolidation path, and with transparency and prudence. So in fact, I was just remarking to my officers this morning, most of you all had already calculated the figures, RE revenue, RE expenditure, this is what it is, because every month you get the reports coming out. So you don't need to wait till the budget statement. Every month you get the accounts, and so budget process has become absolutely transparent and questionable. If there are any, you're there to question, we are here to answer. But we set in the process of keeping everything brought on budget and nothing kept aside from it or underneath it. So with that, the budget deficit, fiscal deficit, 5.8%, which is much lower than the 5.9, which was at the BE. Similarly, for the 24-25 budget, we've given 5.1 as the fiscal deficit, so clearly indicating that we are on track to meet the glide path which was set in 2021-22, and that we are well on track to meet the 4.5% fiscal deficit, on or below 4.5 even by FY26. If this is the background with which I'm talking and the presentation of the budget happened, I want to very clearly put some things under the heading, if you want to call it that, Disha Nirdeshak Baatein. You must have heard the Honorable Prime Minister speak before the Parliament session, well before the sessions commenced. His usual customary remarks. He said the budget will be presented tomorrow and you will have some Disha Nirdeshak Baatein in it. So, what are those Disha Nirdeshak Baatein? There are about 5 of them I highlight. Social justice as effective and necessary governance model. So it's not just a slogan for us, social justice, we'll have to work for Nyay. No. We've shown you that it is a governance model and a successful one at that. So social justice as an effective and governance, necessarily a governance model. Then 4 major caste groups, as we call it, as Prime Minister has emphasized, the poor, the women, the youth, and the Annadata. So Disha Nirdeshak Baatein, you have the second point. Third, focus on infrastructure. This year again, massive increases of capex happened in the last 4 years. This year too, there is 11% increase, resulting in a very recallable number, 11,111 crores. So continuing the trend of the last 4 years, where capital expenditure has been the route, one for revival earlier from COVID, and now for sustained growth towards Amritkal, towards the Vikasit Bharat goal. Fourth, is the using of technology as a huge opportunity. DPI as almost a new factor of production. So it is actually bringing in the value addition to the economy. It is facilitating every sector to bring in the value addition which is so required and improves on our productivity. And the last Disha Nirdeshak Bate is high-powered committee for extensive consideration of challenges arising from population growth and demographic challenges. So if these are Disha Nirdeshak Bate, what were the major announcements? I'll recall very quickly 12 of them. I'm not spending any time except for reading out what those 12 are. 2 crore more homes under the PM Awas Yojana. We already completed nearly the 3 crore. Housing for middle class. Rooftop solar for at least 300 units of power generation every month, which will be muft bijli for the households. There will be some assistance and some kind of a funding which will be extended. So you're generating renewable energy, providing the renewable energy generators the free they would want to use, and over and above that, the surplus that they produce can be used for selling and earning money out of it. Enhancement of target for Lakpati Didi from 2 crore women to 3 crore women. Preparing and empowering the MSMEs to grow and compete globally. Aligning regulatory environment for them. The sixth is making sure that the eastern region, and when I say eastern region, I'm not talking about northeast. Northeast will get the attention that they've been getting all the while. They will still continue to get it, and they will be on the top of our priority. But when I say the eastern region, I'm talking about Bihar, Jharkhand, Chhattisgarh, and Orissa, making sure that they'll become the engines of growth for the new Amritkal India that we are trying to use as a bridge towards leading to Vikasit Bharat 2047. And Eastern India, I've missed out on West Bengal, please add it. Bihar, Jharkhand, Orissa, Chhattisgarh, and West Bengal. Next generation reforms will be carried on, building consensus with states and stakeholders for reform, perform, transform. 3 major corridors, which are programs for railways, for logistics efficiency, and they have been explained. The important point that I want to highlight there is to make sure for Vikasit Bharat, you just don't need to build for better passenger convenience, you need to build for better passenger convenience. You need to give them safety. You need to shorten the traveling time for them. So one of the corridor is going to give emphasis for high density routes where passengers traffic is very high. We need to bring efficiencies and better safety in those areas. But for Vikasit Bharat, passengers need to move as they wish. But equally, materials, raw materials, building goods, cement, rare earths, minerals, we need them to move efficiently as well. So the corridor will take care of that as well. So the synergy between movement of people and movement of goods is what is being highlighted in the 3 corridors that we're talking about. Ninth announcement, that is urbanization, looking at Metro and Namo Bharat. One of the railway related things which I missed out on telling you, 40,000 bogies are going to be improved in the standards with which they can be effective rolling stock and also give the convenience in the passenger experience inside the bogies as well. So 40,000 coaches are going to be brought up to the level of Vande Bharat standards. Metro and Namo Bharat I did mention, so that urban transformation through transit-oriented development can happen. The 10th announcement which I draw your attention to is 1 lakh crore corpus for research and innovation by private sector. So that's coming in at the 10th. 11th is boost to tourism, including spiritual tourism. Interest-free loans will be given to states so that they can build on iconic tourist centers. And the 12th one is supporting reforms in state. They are separate from the development of tourism centers, and therefore I want you all to have the clarity that help to centers are supporting reforms in state is slightly different from boost to tourism. There will be a white paper on economic performance of the last 10 years compared with the previous 10 years. The 12th announcement is so much a statement that I would like to make, which is what I made in the budget speech as well. Government has got the trust and the confidence and the blessings of the people based on its exemplary track record of GDP, as I said, governance, development and performance, effective delivery, and also on Jan Kalyan. So highlighted points have been realized as goals of Viksit Bharat till now, and they are the realizable goals also continuing to be so, because what we want to underline is we govern with good intentions, true dedication and hard work in the coming years, and that's why Amrit Kal is also now called Kartavya Kal. In short, that's a budget. Thank you very much.
The Finance Minister has just now encapsulated the key highlights of the budget. We'll now open the floor. We can begin with the front row here. Please go ahead, 53. Please hand over the microphone here.
Hello, ma'am. This is Priyashmita from Informist Media. Ma'am, I wanted to know about the projections in your tax collections. So tax collections are seen currently growing at about 14.4%. Your April to December data shows. However, the projections in your budget are lower than that. So a back of the envelope calculation shows that you're going to get about 55,000 above your revised estimate if the collections continues. So your estimates are conservative, would you say that?
I'll certainly ask Somanathan to comment on that. Estimates are always realistic with us.
So let me clarify this. If you look at page 6 of the budget, you can look at it later. I'll just explain it to you. We are projecting that gross tax revenue. Now, this gross tax revenue in this sheet is net of refunds. So, net of refunds, we are projecting that in this financial year, it will grow by 12.5% with reference to last year's actual. So, from 30.54 lakh crores last year to 34.37 lakh crores this year is what is presented in our revised estimates. However, the sharing of taxes with the states is different for different taxes. Not all taxes are shareable in the same ratios. What has happened this year, if you look at the number, and they are given on page 6, union excise duties have actually shrunk. They have not increased. Most other taxes have grown at, as you say, 14%, etc. Union excise duties have grown minus 5%. That reduction is almost entirely on the account of the center, because the same way that cesses are not shared, reduction in cesses is entirely borne by the center. So as a result, the state's share has increased by 16.5% in our revised estimates. Between the state share in the revised estimate and the state share last year, there's an increase of 16.5%. So taxes are growing 12.5% net of refunds. State share is growing 16.5% net, and therefore net to center is growing only 10.8% approximately. So there it is not. There is no expected further, padding or anything here. This is our realistic, but slightly conservative estimate.
Okay, the next question, please. 65. Please go ahead.
Hi, ma'am. Yeah. I'm Kriti from Informist Media. So you mentioned that CAPEX, there has been a push towards CAPEX. However, the CAPEX jump for this year is 11%, right? Which is lowest in last 4 years. So are we moving towards a place of moderation in CAPEX? And secondly, while the budget, this is another unrelated question, while the budget clearly says that you are committed to your 4.5% target. You have also been recommended to bring down your debt to GDP ratio to 40% level, which still stands above 50%. So how are we looking towards moving towards that target? Thank you.
First of all, I'm on the second, your second bit was on the debt to GDP. What was your first one on? CAPEX. 11% growth in CAPEX. You've got used to about 30%, 23% from a low base. And today 11% on a high base appears low, informist. 11 lakh crores going for capital expenditure. And you're seeing also that the private sector is coming in with their investments. So one has to have a clear understanding that when the government wants to spend through capital investment, it can be for one, triggering the economy so that private sector also comes in. At a time when private sector didn't come in, we still fully came in. Now we are seeing also signs of private sector also coming in. So it's only natural for two reasons, therefore, for you to look at. One, on what base are you saying 11% is less? Growth it is. And second, please do look up if private sector is coming in or not. Does that answer you?
Yeah. The next question, we'll take it.
Wait.
Still? On your 40% of, first of all, that was a figure that was set before COVID. Its relevance today is something that has to be looked at completely afresh. And in fact, in 21-22, the finance minister had set out a particular fiscal consolidation glide path, which is the post-COVID glide path. I would only point out that today India's debt to GDP ratio is one of the lowest in the G20 apart from other countries. So we have to look at things in today's context, not based on a historical relic of a report which was prepared long ago before COVID happened.
Yeah.
And again, our external debt also is something which you should notice has never been high, not high even now.
Yeah, second row, I would request you to confine to one question, please, because there are many questions coming up. Yeah, thank you very much. Please go ahead. Yeah. दूसरा दे दीजिए. Give this
नमस्कार मैम, आलोक प्रियदर्शी हूँ मैं CNBC आवाज से. मेरा सवाल मैम ये है कि एक कंज्यूमर के नाते, एक टैक्स पेयर के नाते हमेशा लोगों की ये उम्मीद रहती है, या इस देश में कैसे कह सकते हैं कि चुनाव इतने ज्यादा आते हैं कि लोगों को लगता है कि जब चुनाव आएंगे तो उनकी जो मांगे हैं वो पूरी हो जाएंगी, टैक्स के मोर्चे पर कहें, या फिर जो पॉपुलिस्ट मेजर्स सरकार लेती है. लेकिन क्या इस मिथ को क्या ये सरकार तोड़ना चाहती है कि जब चुनावी साल होगा तो पॉपुलिस्ट बजट नहीं देंगे? जिस तरह से फिस्कल प्रूडेंस की आपने बात करी, आपने फिस्कल प्रूडेंस को लेकर काफी जोर दिया है इस बार बजट में, तो ये इस बात का कॉन्फिडेंस सरकार को ज्यादा है कि वो अगली बार पूरी तरह से आके और जनता के जो उनकी उम्मीदें हैं उनको पूरी करेगी, या फिर सरकार इसी तरीके से जिस तरह से फिस्कल प्रूडेंस का जो रास्ता है उसको अख्तियार करेगी और उसी हिसाब से चलती रहेगी, और चुनाव के मौके पर लोग आम आदमी एक्सपेक्ट ना करें कि कोई पॉपुलिस्ट बजट आ सकता है?
आप डिस्कशन जैसे प्रश्न पूछ रहे हैं भाई. मैं पहले से बोलते आई हूं और माननीय प्रधानमंत्री जी भी इस विषय में बोलते थे, कल परसों भी उनका बयान है. वोट ऑन अकाउंट क्या है, कैसे है, आपको मालूम है. सो वी largely kept vote on account as vote on account, but also showed how the economy will be moving forward and what's our plan for it. Who are we going to aim at when in July, when we come back to present a budget? Who are the sections who will be addressed? What are the kind of investments we'll make? However, very clearly showing that on capital expenditure, we are showing an increasing growth. More money is being put in for that, for innovation, and so on. So announcements भी है, ये नहीं है कि vote on account है, इसमें कुछ और नहीं है. Announcements है, दिशा निर्देशक बातें भी है. सो वोट ऑन अकाउंट एंड इंटरिम बजट को कैसे किस हद तक उपयोग कर सकते हैं, और वो भी कॉन्फिडेंस सरकार, उस हद तक हमने यूज ही किया है.
Yeah, Z Business, and after that you hand over the microphone to your right. Yeah.
मैम, आपने दो बड़ी स्कीम्स का ऐलान किया, एक अर्बन एरिया के अंदर हाउसिंग स्कीम का, दूसरा रूफटॉप सोलर के लिए. मैम, इसका बजट एलोकेशन कितना है? एक सवाल. दूसरा सवाल मैं मैम पूछना चाहूँगा डाइवेस्टमेंट के ऊपर. मैम, पिछली बार 51,000 करोड़ का टारगेट था, वो टारगेट नहीं मीट हो पाया. इस बार बजट में ये नहीं मिल पाया कि कितना टारगेट अगली बार के लिए रखा गया है, और ऐसे टाइम पे टारगेट नहीं पूरा हो पा रहा है जब मार्केट, इक्विटी मार्केट बहुत अच्छा परफॉर्म कर रहा है.
पहली बात तो मैं ये स्पष्ट करना चाहूँगा कि जो डिसइन्वेस्टमेंट है उसमें हम वैल्यू लॉकिंग का प्रिंसिपल लाते हैं. आपको एक मैं छोटा सा उदाहरण देता हूँ. हमारे जो 61 लिस्टेड CPSCs हैं और 16 PSBs हैं, एक यानी कि 1 जनवरी 2021 में, यानी कि 3 साल पहले उनका कंबाइंड मार्केट कैप 15 लाख करोड़ था, और आज के वक्त में वो 58 लाख करोड़ है. तो हमने 42 लाख करोड़ की वेल्थ क्रिएट की है पब्लिक सेक्टर में, और उसको माइनॉरिटी शेयर होल्डर्स जो उसमें हैं उन सबके साथ उनकी वेल्थ शेयर हुई है. तो आप वेल्थ इफेक्ट नहीं देख रहे हैं, आप सिर्फ उसमें से वेल्थ में से हम क्या निकाल रहे हैं, लेकिन वो जो वेल्थ जनरेट करना भी इक्वली इंपॉर्टेंट है. एक साल लोन में हमने 25 लाख करोड़ का एडिशन किया है. तो आप समझ सकते हैं कि 2014 से जब हमने 4.2 लाख करोड़ का डिसइन्वेस्टमेंट किया है और 4 लाख करोड़ का हमने डिविडेंड लिया है CPSC से, 8.5 लाख करोड़, उसके मुकाबले एक ही साल में 25 लाख करोड़ का हम मार्केट कैप ऐड कर रहे हैं. तो ये जो वैल्यू अनलॉकिंग स्टोरी, इसका मतलब ये है कि आपको डिसइन्वेस्टमेंट करना है तो वेल्थ भी इंप्रूव करनी है, शेयर की वैल्यू भी लेनी है, और तब डिसइन्वेस्टमेंट कैलिब्रेटेड वे से करना है. इसलिए सरकार ने डिसइन्वेस्टमेंट का एक तो हमने कोई फिक्स टारगेट भी इसे नहीं रखा है. हमने ये कहा है कि हम एक अदर रिसीट्स में एसेट मोनेटाइजेशन हो, डिसइन्वेस्टमेंट हो, वो सब जाते हैं. और दूसरा रिसीट का एक इश्यू है कि हम कभी भी यदि हमें अपॉर्चुनिटी मिलेगी इससे ज्यादा भी कर सकते हैं, लेकिन एक उसको फिक्स्ड मार्केट सिग्नल ये देना कि हम शेयर बेचेंगे ही बेचेंगे, इसी प्राइस पे बेचेंगे, उसके कारण उसका प्रतिकूल असर मार्केट में पड़ता है. इसलिए जो हमारा वो है, अर्थ ये है कि हमारा जो रेवेन्यू है, और दूसरी हमने इंपॉर्टेंट स्ट्रैटेजी है कि डिसइन्वेस्टमेंट और डिविडेंड ये दोनों ऑपोजिट डायरेक्शन में हैं. जब हम कंबाइंड कह रहे हैं हम 92,000 करेंगे तो कंबाइंड आप देखिए, और नॉन टैक्स रेवेन्यू इज द बिगेस्ट स्टोरी. लगभग 75,000 करोड़ का नॉन टैक्स रेवेन्यू ऐड हो रहा है और हाईएस्ट ग्रोथ उसमें ही है. और अब लगभग 1 लाख करोड़ जो है, यदि आप बजट से देखें और नेक्स्ट बजट में देखें तो 1 लाख करोड़ का नॉन टैक्स रेवेन्यू हम ऐड कर रहे हैं. और नॉन टैक्स रेवेन्यू ऐड में डिविडेंड की बहुत बड़ी भूमिका है, और डिविडेंड हम एक्सीड कर रहे हैं. तो इसलिए आप कंबाइंड वे से इस सारे, यदि इस सेक्टर को देखें तो हमको एक नई दिशा में जाने की जरूरत है, जो हम गए हैं.
रिगार्डिंग द न्यू स्कीम्स, रूफटॉप सोलर के लिए 10,000 करोड़ का प्रोविजन है बजट में. As regards the urban housing scheme, its contours are being worked out, and there is a token, and it will be funded when the exact contours are finalized.
Yeah, the next question, please go ahead. 81, please. Okay, I mean, I'll...
Hello.
Yeah, go ahead.
Yeah, sir, Prakash Pedashi from ET Now. Ma'am, the benefit of lower tax rate of 15% has been extended for startups and investment by sovereign wealth funds. My question is, I mean, has it also been extended for manufacturing unit? No, I'm asking, I'm seeking clarity. No.
Thank you.
Yeah, Bloomberg, Ruchi.
Ma'am, some of the rating agencies have said that they will take a call on a ratings upgrade for India only after the next budget. But given that this budget of yours, you did say that it has been transparent, you've maintained the path of fiscal prudence as well, what will be your message for rating agencies?
Not only aligning with the fiscal consolidation roadmap that we gave earlier, but bettering it. Is that one simple, straightforward message which every rating agency should take on board? Should take on board.
Ma'am.
Yeah, please go ahead.
Yeah. Sapna here from CNBC TV 18. Ma'am, two questions. One very broad, generic. Excellent work in terms of fiscal consolidation. Just want to understand, is it slightly ambitious to have a 5.1 number right away in the interim budget? I mean, broadly expectation was July budget, you will start kind of... No, I don't mean that. No, I don't mean that, but just try to understand, like in 2 years, you'll be able to do below 4.5%. Very broad understanding, ma'am. One is that. Second, ma'am, you're talking about next generation reforms. Within that context, the government has had a massive privatization agenda. There doesn't seem to be, any mention of that as of now.
Just heard to him. Sapna, you're asking the same thing.
No, but
you went elaborately on it.
But will you still be sticking to it? Just broadly wanted to understand.
Yeah, please go ahead.
Yeah. Timsi Jaipuria from CNBC TV 18. Ma'am, in your budget speech, you've given a very ambitious target of 1 lakh crore worth of a fund for private sector for research and innovation, where you've promised 50-year interest-free loan. If you could give the contours of this scheme, which are the sectors who will benefit in terms of the private sector, which are the specific sectors who can avail this corpus, and what kind of work or research and innovation are we focusing on? Sectors and how this scheme will work.
So I'll tell you the quantitative part, and Secretary EA can expand on the sectors. There is the 1 lakh crore is a provision over a period of time as the need emerges. This will be provided as a 50-year interest-free loan to a financial institution which will be identified, which will be within the government ambit of financial institutions, who will then finance or refinance projects at long tenors and at concessional rates of interest. Money has been provided in this budget in the Department of Economic Affairs for multiple purposes, including this one. So there is a provision for this in the Department of Economic Affairs, which covers many other things also. As regards the sectors, I'll leave Secretary.
See, as announced in the budget speech, these are the sunrise sectors. And what is the economic logic behind it? These are the innovations and research. Investments are needed today, and the private sector, the returns will come a couple of years down the road. And those couple of years can be 4 years, 5 years, 10 years. For some investments, it can be even longer. So it will not be commercially viable for private sector to invest if it were to be a commercial money for them. So this is what the fund will help them. Clear identification of those sunrise sectors will be through a stakeholder process.
Yeah, business line.
Namaskar, ma'am. Shishir here. Just two clarity, ma'am. One is about the TCS. Some changes have been made in the TCS on the LRS. So what are those changes? There is not much clarity because explanatory memorandum is not there. And the second part is the housing scheme. Will it be just like an interest subvention scheme, or what will be the contour of that?
So you are aware that, sometime I think last year, maybe in June or July, there was a press release in which the TCS rates were later on changed from what were announced in the budget of 23-24. So basically it is just to align those TCS rates with what was announced in the press release. There is no further change from what was announced in the press release.
your question on housing was?
What will be the contours?
It's still being worked out.
Interest subvention, will there?
It could be one of the features of the scheme, but nothing has been finalized yet. It's under discussion between Department of Financial Services, Ministry of Housing and Urban Affairs. Multiple options are being considered on how to achieve the purpose that has been set out.
Hello, ma'am. Ruchika Chitravanshi from Business Standard. One question was regarding the relating to the announcement you made about the withdrawal of demand for outstanding tax. What will be the cost to Exchequer for the tax that will be foregone? And second, a small clarification: the 75,000 crore 50-year loan that is linked to the milestone reforms. Yeah, is that in addition to the 1.3, or is it part of it?
So all of you would be aware, that there are a large number of small demands that are pending with respect to income tax, wealth tax, gift tax. They number in all about 2.68 crore such demands. The total amount, of course, is very high, which is 35 lakh crore of outstanding demand. A lot of it is in litigation. But many of these demands, about 2.1 crore, in fact, 2.1 crore out of 2.68 lakh demands are valued less than 25,000 rupees. Now, many of these demands are very, very old, dating from 1962, when Income Tax Act was enacted, and right now till very recently till today. So this has been causing a lot of hindrance, especially for the taxpayers, because these demands are very old. Many of them are unreconciled because of systemic issues. We shifted, our CPC, all the tax records, centralized them in 2010-11 year. And so that's why a cutoff has been taken at 10-11, because previously the demands were decentralized. And so we are unable to, verify many of them, causing disruption and hindrance in payment of refunds. So out of this 2.1 crore demands, which are less than 25,000 rupees, about 58 lakh demand entries for the period pertaining to financial year 9-10. And then from 10-11, these are less than 25,000, as already announced by the Honorable Finance Minister, and another 53 lakh entries pertaining to the remaining 5 years from 10-11 to 14-15. So 1.1 crore small demands, 25,000 and 10,000 for the 5 years. These are being remitted. The total amount is less than 3,500 crore rupees.
The 75,000 crores is part of the 1,30,000 crores.
Yeah, go ahead, please. Yes, go ahead.
Hi, ma'am. This is Pushpita from the Core. You mentioned about that nearly 40,000 rail bogies will be converted to Vande Bharat standard. But if you look at the price of Vande Bharat, is comparatively higher than the other ticket prices. So, considering the affordability of the passengers, what will be the pricing and how will it be decided? If you could.
It's up to the railways, but Vande Bharat trains are one thing. The bogies, 40,000 being upgraded to the Vande Bharat standard is another thing altogether. Those bogies probably cannot even take the speed with which we want to improve the high density areas with better speedy transportation for the common man. Equally, the inside bogie experience is also not up to the mark, because they've been so for a very long time, and as time passed by, their quality has also come down a bit. So we are talking about the bogie quality matching with the Vande Bharat standards. As to which of those lines of traffic that they will get connected to, and as a result what will be the rationalization of the ticket price, is not something that we can talk about. That's something which the railways will work out gradually. But progressively, that point proves that through the 40,000 bogies that we're talking about, the quality of the Indian rail bogies, which are so important for safe travel and also ease of living travel and comfort, will need upgradation, and this is what we're aiming.
Yeah. Please speak into the microphone.
Yeah, good evening, Minister. Minister, you had announced an aggressive plan for privatization of 2 government banks a couple of years back. So is that proposal still on table? And my second question is your thoughts on the shrinking successively, every successive years we've been seeing the divestment receipts shrinking. So your thoughts on that?
I thought Tuhin had explained the second part of your question, but never mind, I'll ask him to again probably explain it.
The disinvestment receipts, as you say, is that, is basically you part with your wealth, which is the shares or a property, and convert it in and monetize it. Now there is a wealth effect also there, and we have partners which are the listed companies, the minority shareholders. Our point is that we are also, taking care of GDP, as FM mentioned, in respect of CPSCs. If you look at the CPSC's performance, whether it comes to capex of 3.2 lakh crore, whether it is their growth story, whether their investment in green energy, whether their performance in return on capital employed, whether you look at return on equity, on all fronts, we are seeing that they are big market players. They continue to improve, and therefore they continue to reward shareholders, including the government. Government is a majority shareholder, but a large part of our shareholders are minority shareholders. So therefore, any strategy, calibrated disinvestment strategy, which will actually do the sum over a period of time, is much more than that. And besides, the shares also give you dividend, and we have a consistent dividend policy too. And money is fungible. So we have to have a new paradigm in terms of thinking about, and not to just keep on parting with our wealth at one stroke. We can always do it in a gradual, calibrated way.
We'll take a question from the right side, ma'am. Please go ahead. Yeah. Yeah.
Ma'am, I have a question on this committee on demographic change challenges. Ma'am, what would be the mandate? What are the areas it would look at? Will it be urbanization? Will it also include issues around, this whole issue about constituencies, political constituencies, given that the northern states have grown faster? Also, 2 clarifications. One is on the 70,000 crore with DEA for new schemes. What kind of schemes apart from solar rooftop are budgeted for? And 2, on this issue of tax, these small disputes, does the 25,000 include only the principal amount, or is it interest and penalty for that 25,000?
On the provision for Department of Economic Affairs, this has 2 components. There are certain specific announcements that have been made, and those are provided for. In addition, there is a large increase in our capital expenditure budget. We have, as was done in the year 2022-23, we have kept this in the Department of Economic Affairs to be allocated to whichever department requires it at the pace that it's able to absorb, so that we have flexibility to allocate it to whichever department is able to absorb it fastest, whether it's railways, highways, telecom. We have all of them, and they are all essentially eligible to take this money when the requirement arises, so that we have flexibility to optimize its utilization.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India as an ambition.
The ambition is to become the 3rd largest economy in the world.
to have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action
in the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita and here are the top takeaways from today's budget announcements. Now, the government sees FY24 fiscal deficit at 5.8% of the GDP, while in FY25 that number is expected to be at 5.1%. Meanwhile, the government for the year of FY26 aims to bring that below the 4.5% mark. The outlay for capital expenditure has been hiked by more than 11% to 11 lakh crore rupees. This is of course versus the 10 lakh crore number estimated for last year and 9.5 lakh crore number which is now part of the revised estimates for FY24. Quickly on to the infrastructure outlay for FY25, that's also been hiked to 11.11 lakh crore and is projected to be 3.4% of the GDP now. Quickly switching over, in a relief for corporates, the tax rate was decreased from 30% to 22% for existing domestic companies and 15% for certain new manufacturing companies. Finally, no changes in tax slabs and no tax will be collected at source for foreign trips below 7 lakh rupees. Now I'm going to quickly switch over, listen in to some of the key bites from the Finance Minister's budget speech.
Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation as announced in my budget speech of 2021-22 to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25
is estimated to be 5.1% of GDP, adhering to that path.
Right. So Nirmala Sitharaman, the finance minister, proposing no changes to both direct and indirect taxes, and also issues tax benefits with regard to investments. No change there either. Now, the government will also withdraw old, petty, disputed, outstanding direct tax demands up to 25,000 crore rupees for a period up to FY 2010 and beyond that as well, up to FY 2015. The amounts are slightly larger for the period thereafter. I'm going to go across. We had Pranav Saita of EY, Ravi Dharamshi of Value Quest Investment Advisors, and Shankar Iyer, who's the political economy analyst. But before we go to that, let's quickly go to the bite of the finance minister talking about those tax changes that were proposed.
Tax proposals. As for tax proposals, in keeping with the convention, I do not propose to make any changes relating to taxation and propose to retain the same tax rates for direct and indirect taxes, including import duties. However, certain tax benefits to startups and investments made by sovereign wealth or pension funds, as also tax exemption on certain income of some IFSC units, are expiring on 31/3/2024. To provide continuity in taxation, I propose to extend the date to 31/3/2025. Moreover, in line with the government's vision to improve ease of living and ease of doing business, I wish to make an announcement to improve taxpayers' services. There are a large number of petty, non-verified, non-reconciled or disputed direct tax demands, many of them dating as far back as 1962, which continue to remain on the books, causing anxiety to honest taxpayers and hindering refunds of subsequent years. Honorable Speaker, sir, I propose to withdraw such outstanding direct tax demands up to 25,000 rupees pertaining to the period up to financial year 2009-10 and up to 10,000 rupees for financial years 2010-11 to 2014-15. This is expected to benefit about 1 crore taxpayers. 1 crore taxpayers would benefit out of this.
Right, that was the finance minister. I'm going to go across to Pranav Saita of EY, Ravi Dharamshi of Value Quest Investment Advisors, and Shankar Iyer, who's the political and economy analyst and author, for their views which they gave today morning.
From a tax standpoint, I'm not surprised that she says that we'll do something in July, not right now, which is fair. Also, they want to keep the tax rates a little stable, so that's they've not touched it right now. But I do anticipate some stops maybe in July to ensure there's more money in the hands of pockets of taxpayers. One thing that surprised me a little was she did extend, I think, from the speech, we have to see the fine print, the sunset dates for startups and for IFSC, which were expiring on 31st March 24. There was also the expiry of the concessional tax on manufacturing companies, which was ending on March 24. There was a lot of representations that concessional rate of 15% plus surcharge and cess should be extended for manufacturing units commencing production, maybe till 31st March 25, 26, whatever. That she hasn't mentioned. So does that mean she wants that to consciously expire and new manufacturing units are not going to get that? Is one surprising thing, because she did extend it for 2 of those who were expiring, or the sunset was on 31st March 24. But otherwise she's been pretty silent on taxes, saying I'll pick it up in July. I think the message is clear, which this government has been giving. They want to build a kind of relationship of trust with taxpayers and say that, okay, let's build that relationship of trust. and therefore taxpayer-friendly measures in some sense from a compliance, etc. standpoint is, I think, what she is hinting at. But the real measures on tax will come in the July budget or the main budget, June, July, whenever it comes.
Let me take the question to Shankar. Is this a populist pre-election budget at all, or they're waiting for all of those announcements before the election dates are announced and when the actual heat and dust hits?
So the answer is in two parts. Every year, somewhere before the budget, some major scheme gets extended. So the free food, free ration scheme got extended last year for next 5 years. Okay. There is also the fact that the Prime Minister has publicly sought responses from various people on what they want in their wish list of the Viksit Bharat. That will form the template for the manifesto. So they have kept some room for the promises now. You can't be giving away everything, then what are the people going to vote for? So there is a combination of this play here. I think it can't be called populist, primarily because it is conservative in its approach. It has brought down the targeted fiscal deficit number is very impressive. The level of borrowings going down is very impressive. And even then the capex going up is stabilizing. I think what's happening here is that the government is betting on the private individual and the private consumption. Private final consumption is virtually half of GDP growth, and that's like a puzzle. I mean, why isn't it growing? Which part of the quintile isn't kicking in? So I think the cost of capital being brought down may kick some animal spirits in the system, and that's what they're. I also think that much of this will reflect in their presentation. One more time, they're making a presentation to the rating agencies for improving India's rating. This has been a constant endeavor of this government that India deserves a better rating, and so they will pitch this 5.1, lower borrowing, inclusion in JP Morgan and Bloomberg, probably one more fund. And see, this is very attractive to the foreign investors, this picture. It may not be very attractive today to the real estate stocks or stuff like that, but on a performance term, this is very good for the financial sector, because there is a potential for bringing down the cost of capital for them.
Ravi, what happens now? Budget is behind us in that sense. We've got what we were looking for, a little bit of it. If you're an investor in this market, how do you view this? What happens next? Does the focus move back to global cues? Does it move back to the elections? Or do we again wait in anticipation for July?
No, I think...
what will you tell your clients at this stage?
I think, as mentioned on the panel earlier, the mantle now moves to RBI. The space has been created. Government has done its bit in terms of providing space for RBI to start implementing its monetary policy. So currently the most important thing that we are dealing with is the liquidity deficit that we are facing right now. And what steps RBI takes to correct that is what is the most important thing from equity markets perspective.
So all that is macro. Yes, last year when the budget happened, you saw sectors like defense and railway break out. Talk to me more micro right now, right? So if I had to pick a sector, what would it be? Do I have a sector? Can I call a trend into this year, or best avoid it for now?
No, it's the continuation of the trends.
So you would still buy railway, you would still buy defense?
We are still focused on domestic cyclicals, domestic capex-oriented stories, domestic... there are some noises being made about affordable housing. So there is some hope that, okay, that will also pick up pace. But otherwise, the weak link continue to be the rural consumption and the exports. Those two areas, I don't think enough has been done for me to say that the trend is going to change over there as of now. And hence, the current ongoing themes will continue. But from the perspective of the valuations, these are the exact areas where market has recognized and quite a bit of rally has already happened. So a little bit of transition might be underway over the next 6-9 months, where these already recognized sectors might actually peak out, and the ones that are providing the opportunity don't yet have the triggers in place yet, but those are the areas where valuations are getting attractive now.
in terms of big themes that you see playing out? As far as the market is concerned, will the big relief come from that? There is no negative news. It's business as usual.
No, there is a positive news. Fiscal deficit number is actually positive.
I think the markets are becoming mature.
Why do you think there's no real response or reaction right now? Because that was definitely not priced in.
That's true. However, as mentioned earlier, this is a vote on account and interim budget, and it is not budget as an event for equity markets anyway has been reducing, in its importance, and this one is even lesser, if I were to say, because of it being a vote on account. So, for all practical purpose, central government and budgeting exercise can only provide this much needle moving impetus to the overall scheme of things. So the market moving events lie outside of the budget for me. Most of the policy announcements do come outside of the budget. What RBI does is important, what Fed does is important, and how the elections pan out in US and India is what is more important from the market's point of view.
So in terms of what the Fed did last night, and of course all of that paled in comparison to the very hectic news morning that we had and our budget, etc. When everything is digested and goes down, do you think that that's going to be something which is not half bad? A March cut now out of the way, ruled out.
The market was running ahead of expectations.
Yeah.
It's not that Fed has done anything that they shouldn't have done. It's just that market was running ahead of expectations, and I think some reality check over there. But the fact that we did not have a hard landing last year, and now there are expectations of a soft landing this year, that itself tells you that the strength in the US economy has till now surprised everybody positively.
Are you taking a cash call on your portfolio right now, or
No.
are you completely invested?
No, I mean, so cash call is also divided into what the existing portfolios are and what the new money is coming in. First of all, a lot of people are taking a call not to accept new money. That's not the case with us. We are accepting new money.
And you're allocating?
But we are not very aggressive in deploying on that front yet. So we are sitting on about 25-30% cash on new portfolios, but the old portfolios are about 5-10% cash.
Right, very interesting views coming in there on budget day. One on tax, the other on the economy as a whole, and the third on what you should do with investments, especially Ravi Dharamshi's views. They're very, very interesting. But let's slip into a very short break. We'll have more on the other side, so stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India as an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Welcome back. We'll continue to get your reactions with regard to the budget. We now have Pavitra Shankar of Brigade Group, Ameera Shah of Metropolis, both of whom gave us their views with regard to the budget earlier today. Listen in to a slice of that.
I think the government is clearly chalked out the path that for the last 5-6 years, they spent a significant amount of money in creating a good asset pipeline because they wanted the momentum in the GDP to come back and the balance sheets to improve. But with the improved balance sheets, they certainly want more private participation, more foreign funds to come and invest in this long-term growth story for India to really reach that developed nation status. And from that perspective, they have clearly spelled out the targets of what kind of asset monetization they would want to have. And if I have to speak specifically about road sector, I would say that out of the total asset monetization that has taken place to date in India in the road sector, we command a significant share of that, and almost 38% of that asset monetization has been led through by IRB from the front. And this is a very, very promising story to my mind in terms of giving comfort to the overall investors who want to look and come into this sector, because there are a lot of supporting reforms that have played before this asset monetization drive was taken up. For example, if we look at just the toll road sector where we belong, the FASTag implementation and the digitalization of payments of toll was a very, very big catalyst which people forget or don't pay attention to. This changed the whole dynamics of the sector, and more foreign funds are comfortable to come and take long-term bets and bid for monetization of these assets and make money available to the government to take up further growth and bring in more progress. So this is just one example of a reforms which have backed the overall strategy of asset monetization. If asset monetization would have come without a backup of the reforms, probably they might not have worked. But because of the reforms that have gone ahead, and then the asset monetization was triggered, is making those things possible. And there is a huge comfort from long-only funds, sovereign funds, to come and invest in this sector today. And this is going to pave a huge impetus in freeing up.
Right. We also have with us Amira and Pavitra. Pavitra, I'll come to you on housing. A little bit of a thrust on affordable housing was seen. The finance minister also talked about the number of homes, the fact that she would want people in shoals and huts to actually upgrade and live in rental apartments if that's what it comes to. How do you feel about this budget? Do you feel like this is good news for your sector as a representative of the space? What did you make of the budget?
Hi, good afternoon. I think overall, given that it is an interim budget, we'll still have to wait and see what is actually sort of passed later in the year. That said, maybe this is an indication of the kind of focus housing will get in the final budget. Yes, the government has focused on affordable housing over the past few years. There were PMA schemes for the customers as well as developers in the past. However, I think that the focus today that they're talking about is extremely helpful for certain sections of society. We will have to see further clarity in terms of how this develops into rental housing. Rental housing per se is not something that is done at scale or at a very professional or corporate sort of approach today. But there is a huge opportunity in that. So I would hope to see some further clarity as to what that would entail. As a developer, I think true affordable housing, where we're serving the bottom of the pyramid, that has to come with some kind of partnership with the government on ensuring that we're able to get land at a decent cost so that it makes sense to develop and transfer at a reasonable price that makes sense to those who need it the most. What we've seen so far in the affordable housing schemes is, many of us have done projects in that particular price segment, but it's really just reduced the size of the houses rather than the cost per square foot input that eventually the customer has to bear. So I would hope to see something on the land cost front and maybe some better financing schemes for the buyer as well as the developer. GST as well, where we had a break on GST for affordable housing that was removed a couple of years ago. So I think there is more that can be done on this front, and hopefully we'll see that when the final budget gets unveiled.
Amira Sharp, thanks for joining in, and just wondering, would you have hoped to hear some more concrete steps, or are you hopeful of seeing or hearing some of these in July? And is there something that you picked up that we might have missed here from a healthcare industry's perspective?
Yeah, I think the government's focus on R&D and really stirring innovation across sunrise sectors, I think is a welcome move, and certainly for healthcare as well. And I think what I'm seeing is that the government's move from really moving from a provider in healthcare services to saying, let me also become an enabler, because private sector needs certain policies and regular and some framework to be able to invest in themselves. I think this 50-year interest-free loans that they made available, and of course we hope that the writing is clear and that becomes available for large and small size organizations to really take that money and innovate a lot. But I think that can be a good boon for the industry. Skilling has been a big challenge in India. We are seeing not enough doctors, not enough nurses. And certainly, I think any investment move to gear up more seats for doctors, and have more talent in the country, I think will be welcome. And I think they're trying to do that through really establishing more medical colleges in the existing infrastructure. Then, of course, the cervical cancer program, vaccination program for young girls is also a good thing. Overall, obviously, finally, healthcare in India can only be revolutionized, for everybody if public and private come together and really use the public infrastructure and the private capabilities to really make magic. One of the things, of course, as an industry, we had all hoped and we have been hoping for a long time to see is that our entire industry has all the input costs on GST, but we are GST exempt, which means that we obviously don't pass that on to the customer, but we get no offset for that cost either. And putting us in the 0% GST or even a 5% GST on services would have just given us an ability to get a refund for the GST paid on inputs. So certainly hoping that in the July final budget, some of these points can be taken up, especially the GST one. That would be a big relief for the sector and frankly allow prices for consumers to come down.
Right. We'll come back to you for follow-ups on that, Amira. But I also want to welcome Vivek Lohia, Managing Director at Jupiter Wagons, to the show at this point. And just look at all the ground we've covered. We've spoken to IRB on the infra bit. Pavitra has spoken to us about what real estate expected. We've covered healthcare. And now let's come to the meat of the matter with Jupiter Wagons. Very good afternoon, Mr. Lohia. There is a sense that perhaps it was not all that positive for railways because the amount the government intends to spend will be a bit squeezed. Is that your takeaway, or do you think that the story has just about begun as far as the railway transformation is in India?
Good afternoon. So as it was the interim budget, the whole idea was that, the continuity of the policy, and the Honorable Finance Minister was very clear when she mentioned about Viksit Bharat, and the connectivity infrastructure, as she mentioned, would be the key enabler. And we continue to see that momentum. She has announced in this budget a lot of corridors to debottleneck the steel movement, the cement movement, and that would be a huge enabler going forward in capital investment, especially private capital investment coming into the sector. You would see more investments in the steel, in the cement business and other capex oriented business. And I think as the focus going forward is going to be more and more on the connectivity infrastructure, which is the key going forward, and that I would result in the whole railway sector, having a great impetus going forward. So I don't think that the takeaway for me is very clear that the government focus on the sector will continue. both in terms of the infrastructure as well as in terms of modernizing both the fleet as well as the railway stations. Because if you see the budget announcements, there has been an announcement of upgrading about 40,000 coaches to world standards, which is a great a task which the government has taken and which will go in a long way in making railway a world-class organization.
Right, those were a plethora of managements that came out and spoke about what they felt about the budget. But we'll dive into another short break. We'll continue with trying to break down the budget, voices from all sectors coming through. More on the other side, so stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond. What is the direction that we saw from the Interim Budget 2024? It is definitely the year and time of a takeoff for the Indian economy, big dreams and hopes ahead. Did we get enough of a direction from the budget on the way ahead, or is the best being saved up for the one coming in July? What is the perspective for markets and for investors right now? To speak on all of this and more, I have with me someone who I think goes viral every time he speaks. Ace investor Vijay Kedia is with us at the NDTV Profit Studios. Vijay ji, बहुत अच्छा लग रहा है आपसे मिलकर आज बजट के दिन. बजट को आपने देखा, डाइजेस्ट किया, हजम कर लिया, क्या निकला है उसमें से?
तो डकार निकली मैंने इतना बढ़िया बजट था कि आत्मा तृप्त हो गई, इसलिए मैंने बोला कि अच्छा बजट था. और बाकी बजट तो क्या, इंटरिम बजट था. जैसा हम सब जानते हैं कि इसके अंदर में अभी फाइनेंस मिनिस्टर को अपने हाथ में डिविडेंड की चेक तो देने वाले थे नहीं, तो लेकिन जो डायरेक्शन और जो गाइडेंस और जो इन्होंने जो रखा है वो उन्होंने किया. और एक बात आपको समझना चाहिए कि देयर वाज ए सिंक बिटवीन व्हाट पीपल इन द मार्केट वेर थिंकिंग एंड द बजट वाज प्रेजेंटेड. लाइक व्हाट आई एम ट्राइंग टू टेल यू इज दिस: all the names which finance minister took during the budget, like renewable energy, like hydrogen, like airport, like tourism, like PSUs, like railways and defense, and market is bullish in all those sector since last 1 year. So there is a sync between what investors are thinking and FM has presented. So that means market understands the pulse of the government, or government also understands the pulse of the market. You know, so.
But ये pulse फिर थोड़ी गायब सी नहीं लगी when you saw the way market responded? Tepid, not a very excitable response, and plus, you know, the fear that the government is going to spend less. Your capex has come down relatively. It's still on a high base, up 11%. लेकिन जिन सेक्टरों की और आप उसमें स्टॉक्स की बात कर रहे हैं, उनमें अगर सरकार ही पैसा खर्च कम करेगी तो क्या उनमें इस तरह की बढ़ोतरी दिखेगी हमें आगे?
नहीं, पहले आपका पहले क्वेश्चन का जवाब देता हूँ। आप ये समझिए कि ये सारे सेक्टर्स एक साल के अंदर में 2 गुना, 3 गुना, 4 गुना, 5 गुना हो चुके हैं। कई सेक्टर्स ऐसे हैं, जैसे डिफेंस की आप बात कीजिए, तो ये सारी चीज़ें प्राइस में हैं। अभी गवर्नमेंट के पास में नया मार्केट कब बढ़ता है? जब कुछ अनएक्सपेक्टेड होता है। सारी चीज़ें डिस्काउंट हो जाएगी, सब चीज़ों का प्राइस में अगर है तो फिर आगे फर्दर ऑक्सीजन तो चाहिए मार्केट को बढ़ने के लिए। तो अभी फर्दर जो ऑक्सीजन है वो है खाली लिक्विडिटी। बाकी सब चीज़ें मोर और लेस यहाँ पर मार्केट में मेरे को लग रहा है डिस्काउंट है। कंपनी के पास कितना ऑर्डर है, सरकार का क्या बजट है, कितने का एक्सपेंशन हो रहा है, कितने का क्या हो रहा है, ये सब चीज़ें अभी सबको मालूम है। सरप्राइज बोल के कुछ नहीं है। इसी बोलकर ऐसे लगता है कि अच्छी बात आने पर भी, और हमारे मार्केट में कहावत भी है कि बाई ऑन रूमर एंड सेल ऑन न्यूज़। तो जब न्यूज़ आती है तो उसके बाद ऐसे भी मार्केट थोड़ा सा, आप देखें कंपनी की रिपोर्ट पहले भाव बढ़ जाते हैं, फिर कंपनी की रिपोर्ट आती है तो भाव गिर जाते हैं, क्योंकि वो पहले डिस्काउंट में है। तो मार्केट अलग है और इकोनॉमी अलग है। इन दोनों इन द सेंस दोनों है साथ में, लेकिन जो रिएक्शन और एक्शन होता है वो मार्केट में पहले हो जाता है चीज़ों का।
मार्केट के लिए अब डायरेक्शन कहाँ से? अगर आप कह रहे हैं कि जो अच्छी बातें हैं या जो पॉजिटिव ट्रिगर है वो लार्जली डिस्काउंटेड है। जेरोम पावल जी ने भी ज़्यादा तंग नहीं किया, उन्होंने कहा कि हाँ रेट कट होगा, बस मार्च में नहीं होगा। यू हैव एन इलेक्शन कमिंग अप, उसको भी मार्केट ज़्यादातर डिस्काउंट कर चुकी है कि कंटिन्यूटी स्टेबिलिटी हम देखेंगे। तो अगला ट्रिगर कहाँ है?
अगला ट्रिगर एज सच मेरे को ऐसे नहीं लगता कि मार्केट आज, जैसे जीएसटी के भी आंकड़े हैं 1,72,000 करोड़ का ऑल टाइम हाई जैसे कलेक्शन है, सब चीज़ों के भी जो भी आप देखें सब पॉजिटिव साइन है। तो मेरे को नहीं लगता कि अगला जो ट्रिगर आएगा वो कोई इंटरनल कोई ट्रिगर, शायद मेरे ख्याल से ऐसा कुछ है नहीं। और जैसा आपने बताया कि इलेक्शन भी, ऑफ कोर्स इलेक्शन भी डिस्काउंटेड है। और जब से नीतीश जी आए हैं, इन्होंने ज्वाइन कर लिया इस गवर्नमेंट को, अब खाली राहुल गांधी का ज्वाइन करना बाकी है। तो कहने का मतलब है कि ये जिस तरह का ये माहौल बन रहा है, ये सब चीज़ें ऐसे लग रहा है मोर और लेस डिस्काउंटेड है। तो एक्सटर्नल कोई फैक्टर अगर कुछ बनता है, एक्सटर्नल फैक्टर जो हो सकता है इसमें कुछ ब्रेक लगाए, या जैसे एक बेवकूफ़ को यहाँ पर मार्केट में क्या होता है ना कि आप लेते जाइए, आपको अपने से बड़ा बेवकूफ़ चाहिए, अपने से बड़ा मूर्ख चाहिए जो आपको छुड़ाए और वो खुद फंसे। तो ये कब तक चलता है ये देखना चाहिए, थोड़ा सा सतर्क रहना चाहिए, ऐसा मेरे को ऐसे लगता है।
नहीं, अच्छा बेवकूफ़ तो मैं नहीं कहूँगी, लेकिन इस डेफिनेशन से आप ये देखो कि जो मार्केट में ढेर सारे नए इन्वेस्टर्स आए हैं, लॉट ऑफ न्यू इन्वेस्टर्स नाउ हैव हैड देयर फर्स्ट एक्सपीरियंस एज वन ऑफ pretty much whatever they buy runs up massively. You think that phase is now coming to an end where you will see these huge returns, these huge run up? There has to be, more sensible kind of an outlook and expectation.
देखो तमन्ना जी, मेरे को क्या लगता है ना, पहले आपके बोलते बोलते मेरे को एक मेरा गाना याद आ रहा है, अगर आप परमिशन दो।
प्लीज।
वो एक गाना मैंने पहले लिखा था जो 21 में मार्केट वो रोज़ नया हाई दिखा रहा था। तो मैंने गाना लिखा था कि न्यू हाई डेली बना रहे हो, क्यों इतनी जल्दी मचा रहे हो, गिर जाओगे यूँ तेज चलते, क्यों लोगों को कुछ डरा रहे हो, ऐसा वैसा मैंने कुछ लिखा था। अभी पूरे एग्जैक्ट लाइन बोल गया। तो मार्केट बोलता है लास्ट में कि मैं क्या करूं, मेरा है ये नेचर, तुम इतनी जल्दी मचा रहे हो। तो इन लोगों को बड़ी जल्दी है कि यहाँ पर जल्दी सबको पैसे वाला बनना है, जल्दी सबको यहाँ पर करोड़पति बन जाना है। तो ये जो आप नए इन्वेस्टरों की बात कर रहे हो, ये ज़रूर मार्केट में फ्रोथ जो है वो क्रिएट हो रहा है। और एक बात मैं आपको बताना चाहूँगा, वो आप देखिए कि एक थोड़े दिन पहले कि लास्ट ईयर भी आप देखते तो सेंसेक्स जो है वो 500-600 पॉइंट अगर एक दिन में घट जाता तो एक क्रैश का जैसा दिखने लगता कि इंडेक्स 600 पॉइंट गिर गया। बीएसई सेंसेक्स की बात मैं कर रहा हूँ। अभी आप देखिए 1500 इंडेक्स का जो, ऑफकोर्स सेंसेक्स का वो भी बढ़ गया है, लेकिन 1500-1600 पॉइंट अभी एक कॉमन सा दिखने लग गया। 2 या 3 बार ऐसा हो गया कि इंडेक्स 1500 पॉइंट डूबा, उसके बाद मेरे रिकवर हुआ। मेरे को क्या लगता है ना, इंडेक्स एक जगह बना रहा है, ये एक ऐसा क्रिएट कर रहा है कि 1500 पॉइंट गिर जाता है, लोग पैनिक में आते हैं, उसके बाद में रिकवर कर जाते हैं, तो लोग दूसरी बार तैयार हो जाते हैं कि तो 1500 कोई खास बात नहीं है। तो इसका मतलब एक टाइम ऐसा आएगा जब मालूम पड़ेगा 5000 पॉइंट चला जाएगा, ये 1500 आज गया, 1500 कल गया, 1500 परसों गया। तो ये होना ही है। टाइमिंग मेरे को भी नहीं मालूम, ये कल होना है या 1 महीने बाद होना है या 2 महीने बाद होना है, ये नहीं मालूम है।
तो क्या हम समझें, जो देख रहे हैं आपको और सोच रहे हैं कि आगे क्या वो करें, किस तरह का बेट लगाएं, आपको लग रहा है कि इलेक्शन के पहले एक करेक्शन आना बाकी है?
ये बोलना मुश्किल है, लेकिन मैं लोगों को यही बोलता हूँ और मैं खुद भी ऐसा समझता हूँ और ऐसा ही चेष्टा करता हूँ अपनाने का, कि मैं सोच के बैठा हूँ कि जो भी शेयर्स मेरे पास में पड़े हैं ना, वो हो सकता है मार्केट गिरेगा, मेरे शेयर 20-25% निकल जाएंगे। तो मैं उसके लिए मेंटली प्रिपेयर हूँ मैं कि 15-20%, 25% तक मेरे शेयर्स में गिरावट आ सकती है, क्योंकि उस अंदर में जो बढ़ा है वो भी ये बुल मार्केट के कारण बढ़ा। अगर ऐसा बुल मार्केट नहीं होता तो वो भाव, देखिए बुल मार्केट में क्या होता है ना, आदमी 2 साल 3 साल में जो होने वाला है उसका भाव आज बना देते हैं, और जब मंदी चलती है, जब बेयर मार्केट होता है ना, तो ट्रेलिंग इंडेक्स की बात करते हैं, ट्रेलिंग नंबर्स की बात करते हैं कि 2023 मार्च में ये कमाया था तो आज ये भाव ऊंचा है, और अब 25 और 26 से आप गुणा भाग करोगे, बोलोगे ये भाव नीचा है। इतना ही सेंटीमेंट का फर्क होता है। तो मैं तो मेरे शेयरों को ऐसा देखता हूँ कि ठीक है, मंदी आएगी तो 20% 25% गिर जाएगा तो आई एम ओके विथ इट।
लेकिन जनता ऐसे शायद नहीं सोचेगी, उतना ठहराव नहीं है उनको। उनके लिए आपकी क्या एडवाइस है, जो अभी नए मौके देख रहे हैं, ढूंढ रहे हैं? आपने बात की इन सारे सेक्टर्स की, रेलवे की, सोलर एनर्जी इज द अदर बिग वन, हाउसिंग, स्टॉक लाइक हटको वाज जूमिंग राइट नाउ। आर दीज मेकिंग सेंस इन टर्म्स ऑफ वैल्यूएशंस?
Some of the shares must be making sense and some of the shares are not making sense. And as I said that sometimes people discount 2026, 27, 28 का earning in 2024. So that's a mind game. आपको क्या लगता है, लेकिन जो वो जब तक होता है जब तक मार्केट में दिवाली होती है। जब मार्केट में थोड़ा सा वो स्प्रिंग के बाद का थोड़ा सा वो सीजन आता है ना, तो सब लोग अगला पिछला पुराना 2 साल 4 साल 5 साल का भूल जाते हैं, अगले क्वार्टर का भी भूल जाते हैं, फिर पिछले क्वार्टर के याद आने लगते हैं। तो ये यहाँ पर जीवन चक्र है, ये लाइफ का जैसे साइकिल है ना, जैसे दिन रात का है, स्प्रिंग का है, मौसम का है, वैसे ये भी ये साइकिल है। तो अभी यहाँ पर दिवाली चल रही है तो ठीक है,
अब मौसम ठीक है फिलहाल,
अभी फिलहाल ठीक है। ये कब तक ठीक रहेगा ये मालूम नहीं है। तो मैं तो कहने का मतलब ये अपने मन में इसकी तैयारी करो कि कभी मार्केट गिर सकता है।
ओके, अगर मार्केट गिरे, इफ यू डू सी अ करेक्शन, व्हाट इज द अपॉर्चुनिटी दैट यू शुड पिक? वी आर गोइंग टू टेक अ वेरी शॉर्ट ब्रेक, बट वी विल बी राइट बैक विद विजय केडिया टू अंडरस्टैंड हाउ ही इज लुकिंग एट द नेक्स्ट लेग ऑफ अपॉर्चुनिटी, वेयर यू सी द नेक्स्ट सेट ऑफ ग्रोथ इन द इंडियन स्टॉक मार्केट। स्टे ट्यून्ड।
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only...
Welcome back on this special show. We're getting a perspective on budget, markets and beyond with Vijay Kedia here in our studios today. Vijay जी, हम बाजार की बात करते हैं, नए निवेशकों की बात करते हैं, लेकिन इसमें से बहुत सारे ऐसे निवेशक हैं जो सिप के माध्यम से भारतीय बाजार में आज मौजूद हैं, और उनकी नंबर्स देखिए, 17,000 crore rupees in SIPs in the last month which was clocked. For them, maybe the preparation of seeing their portfolio come down is not as much. They've also seen a one direction kind of move. What would be your advice for them?
I'll tell you, first of all, this 16-17,000 crore per month is just a very small number. That means just 500 crore a day. Just imagine in a market cap को 3.5-4 ट्रिलियन डॉलर के मार्केट कैप के अंदर में अब 500 करोड़ रुपया डेली का अगर समझिए अगर सिप के अंदर में अगर आता है तो ये क्या है, ये कुछ भी नहीं है. हम लोग को ऐसे लगता है बिकॉज वी हैव सीन 5,000 करोड़ कमिंग पर मंथ और 7,000 करोड़ coming per month. So that is why we feel the number is very high, but I don't think it's a high number. In a country of such a big country and such financial literacy, now people are becoming literate about financing and all, about investment and all. So I think this 16,000 crore, 70,000 crore rupees per month is a joke, in fact, if you ask me. I think it will come every week, and maybe if not sooner, maybe in 5-7 years, it could come daily also, 16,000 crore. One major change is what I'm seeing in the mindset of the public, of people here in India is this. You remember, Tamanna ji, earlier we used to talk, we had been taught that roti, kapda aur makan. So that was the logo in India. Movie भी आई थी रोटी कपड़ा और मकान. So that was the basic, that was the only requirement कि रोटी कपड़ा मकान ही चाहिए. Now things have changed. In last 15 years or mainly for last 10 years, you will see roti, kapda, makan or data. Now data has become more important than roti. You can diet. You may have food at कि डाइट करके खाना नहीं खाना, कम खाना है, जो भी खाना है, कपड़े 5 शर्ट है, एक शर्ट में काम चलाना. You can't compromise on data. सुबह उठ के रात को सोने तक गुड मॉर्निंग से लेकर गुड नाइट तक आपका डेटा ही का काम होता रहता है. बकवास का भी काम होएगा या काम का होएगा, ठीक है. इवन माई ड्राइवर कीप्स 2 मोबाइल, जस्ट इमेजिन. ओके, सो व्हाट आई एम सेइंग, तो रोटी कपड़ा मकान और डेटा. नाउ द 4th एडिशन इज रोटी कपड़ा मकान डेटा और सिप और इन्वेस्टमेंट इनटू द मार्केट और स्टॉक मार्केट. सो नाउ दिस इज द न्यू एडिशन की रोटी कपड़ा मकान डेटा और सिप या स्टॉक मार्केट. तो ये कल्ट हो रहा है इंडिया के अंदर में. और ये कल्ट जब इंडिया को एक कल्ट, जब इंडिया में अगर कुछ अगर फैशन ट्रेंड अगर होता है तो आपको मालूम 100 करोड़ आदमी को गणेश जी को दूध पिला देते हैं. 100 करोड़ आदमी यहाँ पर ऐसा रेवोल्यूशन आता है यहाँ पे. मेरे को लगता है स्टॉक मार्केट में वैसा रेवोल्यूशन शुरू हो गया इसके अंदर में. लेकिन इसके उतार चढ़ाव का सबको आइडिया नहीं है. जो नए इन्वेस्टर आते हैं ना, फर्स्ट टाइमर जो आते हैं, दे डो नॉट अंडरस्टैंड द निटी-ग्रिटी ऑफ दिस ऑफ स्टॉक मार्केट. लेकिन एक बार उनको जब चोट लगती है वो छोड़ के चले जाते हैं, जब वापस आते हैं थोड़ा होशियार हो जाते हैं वो लोग. तो ये रोटेशन चलता रहता है इनका.
अच्छा, आपकी रोटी कपड़ा मकान डेटा और सिप के चक्कर में बैंकों की हालत ख़राब हो रही है, उनके डिपॉजिट गिर रहे हैं. क्या जो हम देख रहे हैं इस वक्त, आज तो पब्लिक सेक्टर बैंक चढ़े हैं बजट के बाद, लेकिन बैंकिंग सेक्टर में जो अपने बाजार में भी उसका रिएक्शन दिखा, इससे आपको कोई चिंता है या आपको लगता है ओवर रिएक्शन हो गया है?
नहीं, मेरे को इससे कोई चिंता है, इससे कोई फ़र्क नहीं पड़ने वाला है. वो इतनी जिस तरह से इकोनॉमी आगे ग्रो करने वाली है, अब अमृतकाल में जिस तरह हम बातें कर रहे हैं कि आज हमारी 3.5-4 ट्रिलियन की इकोनॉमी है, जो भी है, हम बात कर रहे हैं 2047 में 30 ट्रिलियन डॉलर की हो जाएगी या 35 ट्रिलियन डॉलर की इकोनॉमी हो जाएगी. तो ये सब टेम्परेरी हिकअप्स है जो आप बता रहे हैं. मेरे को लगता है सब टेम्परेरी है, ये आगे पीछे सब एडजस्ट हो जाएगा इसके अंदर में. और एक बार जब $2,500 से पर कैपिटा इनकम बढ़ती है, जो इकोनॉमिस्ट भी ऐसा बोलते हैं कि 2200-2500 के ऊपर में जब पर कैपिटा इनकम बढ़ती है तो एक रेवोल्यूशन आता है स्पेंडिंग के अंदर में. तो हम उस कस्प पे हैं, हम उस इन्फ्लेक्शन पॉइंट पे है, और ये आगे जाकर ये सब एडजस्ट हो जाएगा. अच्छा, तो अब पॉइंट पे आते हैं, क्योंकि जो देख रहे हैं वो सोच रहे हैं कि विजय केडिया जी से को हम सुन रहे हैं, वो हमको नुस्खे बताएंगे, वो हमको सेक्टर बताएंगे, वो हमको तरीका बताएंगे कि अब इस बाज़ार में इस इन्फ्लेक्शन पॉइंट पे, जैसे आपने कहा, आप पैसे कैसे बनाएं, कौन से सेक्टर आपको सही लग रहे हैं, और क्या यहाँ पर इस वक्त अपने पोर्टफोलियो को भी देखने की ज़रूरत है कि कुछ कंपनियाँ इतनी बढ़ गई है जिसमें फंडामेंटल शायद मैच नहीं हो रहे हैं. तो अगर आपको लगता है कि फंडामेंटल मैच नहीं हो रहे हैं आप, तो हु स्टॉप्स यू फ्रॉम सेलिंग? आप रॉन्ग ही तो होगे ना, और आप कम से कम रिग्रेट करोगे तो प्रॉफिट बुक करके रिग्रेट करोगे. तो अगर आपको लगता है कि ये समझिए मिसमैच है और फंडामेंटल बैक नहीं है, तो आपको उन शेयरों को बेच देना चाहिए और बेच के दूसरा शेयर उसके लेना चाहिए जो आपको लग रहा है कि जिनके अंदर में अभी शुरुआत हो रही है जर्नी. तो ये तरीका आपको करना पड़ेगा. जो सी मेरा कोट है कि इन्वेस्ट लाइक ए बुल, सिट लाइक ए बेयर एंड वॉच लाइक एन ईगल. आपको प्लांट के जैसे है, जो रोज़ रोज़ आपके पौधे को देखना पड़ेगा कि भैया ये पौधा ठीक है ना, इसको न्यूट्रिशन बराबर जा रहा है ना, इसमें पानी आ रहा है ना, हवा पानी धूप इसको मिल रही है ना. तो एक बार इन्वेस्टमेंट करने के बाद में आपके पास काम क्या रहता है, यही है, अपने पौधे को आप वॉच कीजिए आपको. तो ये पद्धति लोगों को अपनानी पड़ेगी, और जल्दी जल्दी पैसा कमाने का जो जुनून है वो छोड़ देना पड़ेगा, क्योंकि यहाँ पर ज़्यादातर लोग इसलिए शेयर बाजार में अनसक्सेस होते हैं कि वो इसको जुआ समझने लग जाते हैं इसको, या कैसीनो के जैसे समझते हैं कि तुरंत पैसा आ जाएगा और जल्दी जल्दी पैसा कमाने के सोचते हैं। अगर इसको बिजनेस अगर समझेंगे तो फिर आपको बिजनेस के से ट्रीट करेंगे तो मार्केट विल रिवॉर्ड्स यू एज पर योर परसेप्शन। इफ यू विल ट्रीट इट लाइक ए गैम्बलिंग देन इट विल प्रूव ए गैम्बल फॉर यू।
सो लेट्स कम बैक टू द मेन पॉइंट। अभी इस वक्त से आपको लगता है यही जो सारे सेक्टर्स और स्टॉक्स हैं, गवर्नमेंट पुश वाले, आपके आत्मनिर्भर वाले थीम, यही चलेंगे? कुछ इसमें आपके फेवरेट्स आप बता सकते हैं सेक्टर्स एंड स्टॉक्स?
मेरे को क्या लगता है कि ये जो हमारा अमृतकाल चल रहा है ना, इसके अंदर में एक्सपोनेंशियल डेवलपमेंट होने वाला, ग्रोथ होने वाली, एक्सपोनेंशियल ग्रोथ होएगी। इसमें ऐसा नहीं है कि एक सेक्टर चलेंगे, दो सेक्टर के चार्ट चलेंगे। मेरे को लगता है 90% सेक्टर चलेंगे और सारे ही सेक्टर चलेंगे। फ़र्क इतना हो सकता है कि कुछ सेक्टर है जो समझिए 140 किलोमीटर की स्पीड से चलेंगे, कुछ हो सकता है 80 किलोमीटर की स्पीड से चले। तो ये ऐसा ही विकास होगा, तभी ये चतुर्मुखी विकास माना जाएगा। तो मेरे को लगता है कि ये सारी थीम चलने वाली है। और एक बात मैंने अच्छी तरह समझ ली है कि इंडिया जो है चाइना के मॉडल को फॉलो कर रही है, ऐसा मेरे को लग रहा है, क्योंकि 1980 में हम और चाइना एक ही जगह थे और उसके बाद चाइना हमसे 6 गुना बड़ी इकोनॉमी हो गई, 5 गुना 6 गुना हमसे बड़ी इकोनॉमी हो गई पिछले 30 सालों के अंदर में। तो अच्छा है कि उसने ऐसा अच्छा क्या किया, हम सभी से सीखे हम लोग। तो चाइना में जो विकास हुआ है उसके अंदर में सबसे बड़ा योगदान रहा है ऑफकोर्स हेल्थ का और समझिए एजुकेशन का, और लेकिन जो दिखता है वो विकास उसको है इंफ्रास्ट्रक्चर का। तो मेरे को लगता है इंफ्रास्ट्रक्चर के गवर्नमेंट का भी ऐसा ही, गवर्नमेंट भी ऐसा ही सोच रही है। इसलिए बोलकर सब पावर के अंदर में एक्सपेंशन हो रहा है, एयरपोर्ट पे हो रहा है, पोर्ट्स पे हो रहा है, सड़कों में हो रहा है, रेलवे में हो रहा है, डिफेंस में हो रहा है। और तो ये सारे सेक्टर जो हैं जिन जिन इनकी चीज़ को कैटर करते हैं, गवर्नमेंट ने जो नाम लिए आज, जो एफएम ने जो नाम भी लिए हैं, तो ये सारे सेक्टर ही अच्छे करने वाले हैं, इंक्लूडिंग जो आपने पहले बताया पीएसयूज, बैंक्स वगैरह वो सस्ते हैं, वो भी अच्छा करेंगे। तो ये मोर और लेस सभी सेक्टर अच्छा करेंगे। टाइमिंग की बात अलग हो सकती है, पहले गिर भी सकते हैं, टाइम वाइज करेक्शन भी आ सकता है, प्राइस वाइज करेक्शन भी आ सकता है, उसके लिए तैयार रही है। मेरा खाली ये बोलने का।
लास्ट सवाल आपसे, इस बीच में जो हमने पूरे 2023 में देखा था कि स्मॉल कैप और मिड कैप जो कंपनियां हैं, और ख़ास करके स्मॉल कैप कंपनियां बहुत ही अच्छा रिटर्न दे रही थी, ये आपको लग रहा है कि ये एक ट्रेंड चलते रहेगा या अब थोड़ी सतर्कता की ज़रूरत है?
नहीं, सतर्कता की ज़रूरत तो पक्की है। ये ट्रेंड कोई भी चीज़ शेयर बाज़ार में स्ट्रेट वो तो एक नहीं चलती है कि हमेशा चलती रहेगी, ऐसा कभी नहीं होता। लोग पिछला इतिहास भूल जाते हैं। बात यह है कि जब वो नई ट्रेंड आती है और जो नए लोग आते हैं, चूँकि उन्होंने पहला देखा नहीं है, तो वो ट्रेंड को भूल जाते हैं। तो मेरे को लगता है कि ये इस तरह तो नहीं चलेगा और कभी न कभी ये ठहरेगा, रिएक्शन भी आएगा, क्रैश भी होएगा। लेकिन जो अल्टीमेटली जो अंडरलाइंग जो ट्रेंड है इकोनॉमी की, वो इकोनॉमी पर डिपेंड करती है, वो हमारी अच्छी है। तो अच्छे शेयर है वो तुरंत रिकवर हो जाएंगे और जिन शेयरों में दम नहीं है वो शायद नहीं, उनका जो होगा वो होगा।
ऑलराइट, जाते जाते जैसे हम रैप करें विजय केड़िया जी, आपको एक पोएम और एक गाने के बिना हम नहीं छोड़ सकते हैं। आज के इन्वेस्टर के लिए आपका मैसेज?
आज के इन्वेस्टर के लिए मेरा एक मैसेज ये है जी कि देखिए स्टॉक मार्केट में क्या है ना, सबसे इम्पोर्टेंट ये है कि यहाँ पर मौसम बदलते रहते हैं। यहाँ पर अच्छा मौसम, बुरा मौसम, सब ये आते रहते हैं। तो यहाँ पर लोगों को टिकना कैसे है, टिके रहें, उसका गुण इसको आना चाहिए। क्षण मंगुर जैसे नहीं होना चाहिए कि रात भर का है मेहमान अंधेरा कि मालूम एक रात के मेहमान के हुए आए और पैसा कमाया और मार्केट डूबा और आप भी आउट हो गए। वो काम नहीं करना चाहिए। उसमें फिर आपका मनोबल इतना टूटेगा कि सेकंड इनिंग खेलने के लिए तैयार आप में मनोबल नहीं बचेगा। तो ऐसा अपने आप को समझो पहले कि वाई एस इज़ मोर इम्पोर्टेंट, नो योर सेल्फ, कि मेरा क्या एटीट्यूड है, मेरा क्या पर्सनालिटी है। और बाज़ार में ऐसा सोच के चलो कि डूब भी जाए बाज़ार तो मैं यहाँ टिका रहूँगा, मेरे इतने पैसे नहीं लगेंगे कि मेरे को छोड़ के जाना चाहिए। और एक नई क्रॉप आई है शेयर बाज़ार में, रिटेलर इज़ द किंग। अभी के ये अभी शेयर बाज़ार का अभी जो अगर आप बोलें किंग कौन है, ये रिटेलर है। मैंने पूरा पार्टिसिपेशन जो रिटेलर का हुआ, इसके कारण ये बाजार चमका है और इन्होंने एफआईएस को अच्छी तरह जवाब दिया है, इन्होंने मुंह तोड़ जवाब दिया एफआईएस का। तो इस मार्केट का किंग रिटेलर है। लेकिन ये सब अभी नए नए हैं ये लोग, तो इनको ये समझना चाहिए कि इनका टाइम आया है, लेकिन इनको टिका रहना चाहिए। तो मैंने एक 4 लाइन की कविता, मैंने पीयूष गोयल जी और फडणवीस जी ने मेरे को अवार्ड दिया था, जो आपने बताया एस इन्वेस्टर, बाय द वे ACE इन्वेस्टर, एस का मतलब AWS नहीं तो एस इन्वेस्टर का अवार्ड दिया था। मैंने एक कविता सुनाई थी कि हर हालत में टिके रहो, यही समय का नियम है। ऑटो ड्राइवर CM बन गया, चाय वाला PM है। ये खेल अभी भी जारी है, करनी तुम्हें तैयारी है, कसले कमर उठा ले बीड़ा, अब तेरी ही बारी है, अब तेरी ही बारी है.
Wow, on that note, बहुत बहुत शुक्रिया. Thank you so much, Vijay Kedia ji, for joining us. So that was investor Vijay Kedia on how he views the budget and the journey for the markets and investors going ahead. Thank you for watching.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner. State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner. State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita. Here are the top takeaways from today's budget announcements. The government sees FY24 fiscal deficit at 5.8% of the GDP, while in FY25 that's expected to be at 5.1%. Meanwhile, in FY26 the government aims to bring it below the 4.5% mark. the outlay for capex has been hiked by more than 11% to around 11 lakh crore rupees from the 10 lakh crore number last year. Now, mind you, spends or the revised estimates for capex for this financial year, FY24, were actually trimmed to 9.5 lakh crore. So that growth number is much more than 11%. Infrastructure outlay for FY25 also hiked to 11.11 lakh crore and is projected to be 3.4% of the GDP. In a relief for corporates, the tax rate was decreased from 30 to 22 for existing domestic companies and 15% for certain new manufacturing companies. This happened in earlier years. Finally, no tax changes in this year or in this budget. Tax slabs will be as is. Tax collected at source for foreign trips below 7 lakhs has been exempted. So there will be no tax collected at source for foreign trips below 7 lakh rupees. Let's now listen to some of the key bites from the Finance Minister's budget speech.
Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,11,111 crore rupees. This would be 3.4% of our GDP. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation.
Right, that was the Finance Minister herself. Now let's go across to Manvi Sinha Dilhon, who is in conversation with Ajay Seth, who is the Secretary, Department of Economic Affairs, and Vivek Joshi, Secretary, Department of Financial Services.
Years in a row, I'm coming straight to the pessimistic bit. Are there any risks to that number? So what do you see?
The risks are external to our economy, to our country largely. I'll put it that how geopolitical situation is going to develop and what impact it can have on commodity prices and in particular about petroleum prices or the crude oil prices. So that one risk it does carry, but we are reasonably we feel that the numbers 7% plus or around 7% is a realistic number for next year. But as far as budget is concerned, that estimation is 10.5% of normal growth, which we feel is a realistic number.
Okay, bringing down the fiscal deficit to 5.1% for FY25, I think the consensus opinion is that the government's commitment to fiscal propriety is evident and the budget math looks strong. Can you just give us a brief insight into the path for achieving that 5.1% fiscal deficit for FY25, just sort of key pieces that come into play?
Finance Minister announced the path in 21-22 that by 25-26 it will be 4.5 or below 4.5, and where we were at the time of the budget for the current year 5.9, that means another 1.4% was supposed to be done. Government is very clear that enough is space for private sector. They are the primary wealth creator who add to the economy. When government has to provide a very strong support, government is always there. And the areas where government has to invest, especially on infrastructure, government is doing. I'm not talking about where the people require help. So the choice was that first this year itself, can it be better than 5.9? Because the goal is to 4.5. That's why this year itself it comes down to 5.8.
Yes.
Tightening the belt. While meeting all requirements. The second next year, thereafter another 1.4 to be done. Should it be 0.5 this year and more heavy lifting next year? But government believes to take the challenges head on, more this year.
Okay.
Meaning 24, 25 and less for the final year.
Okay, there's one statement, and correct me if I heard it wrong, read it wrong. A finance minister saying in her speech that average real income has risen by 50%. Can you just provide some context, the period she's referring to, and the construct against which she's made this statement?
See, this is a per capita income in 10 years period, which has gone up by 56 or 57%. She has used 50% as a roundabout manner.
Okay, I'm sure we're going to have a deep dive into that sort of data point, but I'm going to turn my attention to Dr. Joshi and just get straight to, just for some context for our viewers, you're the top bureaucrat when it comes to the financial services sector, and that provides context for the couple of questions that I wanted to ask you. Can I go with some statistics first and get them absolutely clear and transparent? The domestic savings to GDP status currently in the budget, what are the numbers you're working with? If it's too much to get into the statistics, a few sort of broad strokes in the interim budget that have come through. Can you point me towards the measures that the government is sort of embarking upon for further financial sector stability, sustainability, resilience, particularly in light of, you know, an erratic global environment?
So the RBI is actually making those norms for the credit, and for example, for unsecured loans, they have made these provisions for extra provisioning by the banks and NBFCs very recently. Similarly, the expected credit loss, which RBI has circulated a draft paper on which they have constituted a committee to look into the more tighter norms to make the financial sector more robust.
Okay. Digital public infrastructure focus to really promote financial inclusion. Again, in the text of the budget document is, have we moved a few steps forward on that front? It is a stated objective of the government, but any sort of concrete movement forward in this interim budget?
So digital public infrastructure, as you know, is
taking it one step forward for greater financial inclusion.
Yeah, so for basically it is being there is no clear-cut statement, but the underlying is that for using these digital public infrastructure for MSMEs, we have been working on TREDS platform, account aggregator, to make the life of MSMEs simpler. So on that account, we have been progressing.
So building on the past, yes.
Yeah. If I can supplement on DPIs, and Finance Minister has used the term, these are the new factor of production.
She did, and that was a very interesting way of looking at it.
This is a digital public infrastructure, but use cases are entirely by the private sector, mostly by the private sector.
You're right.
It lays the layer, identity, payment, data, as many use cases as one can bring out a commercial use around it. And we should be seeing rather an explosion of using DPI. And if you can take you back, so about 10 years back, when Aadhaar was being rolled out, we were struggling with what use case it can do and where we have traveled. So it is really a new factor of production where the innovations are with the private sector.
And, I actually really, that new factor of production really appealed to me because that's the role that this digital public infrastructure is playing You also see it in the efficiency in distribution of direct benefits to beneficiaries. Coming back to the sort of broad economic numbers, there's a positive surprise on government borrowings, and I'm wondering how that came about.
Surprise not for us.
Yes.
Because the path was well laid out in 21-22 of a fiscal consolidation. And that is possible in spite of a growing economy. The borrowings have to come down. And this year, in absolute number also they are going down. Till last year, they were going down proportional to GDP. This year we are seeing it wherein 5.9 to 5.1 is about 13% reduction. Economy growing by 10.5%. So there is an absolute reduction which is on the happening. Plus, on the gross side, gross borrowings, a part of the borrowings were done short term so as to pay compensation to the states or provide that loan for those years. Now, compensation proceeds by design will be used for repaying those debts. So government doesn't have to borrow again. So there is no surprise. It is only a question, a seed was sown, a promise was made in 21-22, and government has been very dutifully
adhering to that promise.
Path.
Okay, two related questions on the economy, really. I wanted to get a sense from you. You know, you've already pointed out to one factor that is a risk factor for India's economic growth. But just in terms of inflation management strategy, I know you've had recent practice with that when it came to geopolitical shocks and commodity price hikes that the economy had to withstand. But just in terms of price stability, inflation management, any specific thoughts going into, the new financial year?
See, as we see that core inflation is well within now the policy band, though the headline inflation is a bit elevated, but it is also in the policy band. But in the coming year, we see a further moderation. And while we take this risk that the geopolitics continues to be a risk, especially around the Middle East and what is happening, but there's also all players there, not players in the sense all stakeholders there, while they are taking their position, the idea is to contain the conflict there, not precipitate it. That is what the direction is coming. And plus a positive factor, globally we are seeing it now, the inflation even in the advanced economies seems to be getting anchored. So perhaps somewhere during the course of the year, and it is a big question mark, then when a moderation in the policy rates globally may start. And I leave it at that.
Okay. Many commentators, analysts that we've spoken to said this government likes to under-promise, over-deliver, and they've said it in the context of tax estimates in particular. Conservative tax estimates, would that be a fair statement to make in the context of FY25 tax estimates as well?
I'll make a generic one. Government promises and makes its full effort to deliver on that promise and even more. So there is no conscious design to under-promise. Whatever it makes the best estimate that we will deliver, what is needed for the country, that is a promise done. But efforts are done even more that can be better at ourselves, and that's effort.
The dividend from public sector banks, financial institutions, certainly coming in for FY24 at a much higher level than was, put forward in the budget. So I'm just trying to get a deep dive into the numbers that you're working with for FY25 in the interim budget.
So, whatever is there in the budget document, I think those numbers are there, and we are working with those numbers. And it's not appropriate for me to tell you the exact distribution of those numbers.
Okay, I'm going to ask you both gentlemen to sort of put one key message, according to you, that the interim budget has delivered, which sets or anchors expectations, choose your verb, for the full budget when it comes in the summer of 2024. So what's that one key message according to you?
That Finance Minister said that July budget will have a detailed roadmap for coming years and even more a longer term, that there are several pointers in this budget where the thought process, the philosophy of the government wants it to take the economy forward, country forward, and we do expect a more detailed roadmap to come in.
What, according to you, Dr. Joshi, is the key message this government has delivered?
Viksit Bharat. That is the key message.
On that note, gentlemen, thank you very much for your time and insights here on NDTV. Pleasure talking to you.
Right, very interesting conversation happening there, but it's time to slip into a very short break. We'll of course have more on the other side. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Hello and welcome to NDTV Profit. The interim budget has set a vision to become India to become a developed country. Now, staying on this path is going to be critical as we get along. The most important question that keeps coming for a country like India, which is resilient in terms of its economy, there is political stability and the fastest growing economy. The question that arises is, will international rating, global rating agencies upgrade India's rating? Now, that's the big question we are asking today evening after the interim budget has set a very clear path of fiscal consolidation. Now, who better to answer this than Christian de Guzman, Senior Vice President, Sovereign Risk Group at Moody's Investor Services. Thanks for joining us, Christian. Welcome to NDTV Profit.
Thanks for having me, Morley.
Okay, so my first question is loaded in my intro itself. When will India get its upgrade?
Well, I think I'd like to answer that question by referring to our published downward triggers. So when we do have ratings, we do express to the market what it would take for us to upgrade or change the outlook to positive, or to downgrade or change the outlook to negative. So in that context, we have publicly said that it would take very material debt reduction on the back of material deficit consolidation and continued high growth. And accompanying that would be an improvement in what we call debt affordability. So in essence, what we're looking for is an improvement in the weak points of India's sovereign credit profile. You've already mentioned some of the strong points, such as the very strong economic growth for even a country this large. We also have a few strengths that we haven't mentioned. I think we do have a nice track record of macroeconomic stability and overall institutional strength. We have political stability, as you mentioned. That doesn't mean everything is well with political risk, but we can get into that. We also have a stable banking system, a recently more stable banking system. So there's a lot of strengths, but there are also weaknesses that need to be addressed before we can consider upgrading India.
Right. Okay. So that's a very interesting observation. There are many tick boxes we can tick from the checklist. Before I come to the most important question of the overall debt, I would like to have your reaction on today's budget. We have very clearly set a fiscal, prudence and management path. What is your reaction?
Well, my reaction is that in many ways, this was really more of a political statement, in terms of what the budget speech represented, rather than really, a very detailed plan, fiscal or economic, in terms of going forward. Indeed, one of the highlights of the budget speech is the announcement of a white paper, in essence, doing a report to the populace, to the voting population, of the good things that have been done over the past 10 years. So having said that, we do acknowledge that there is a very firm communication of that commitment to fiscal deficit consolidation. We do have the government basically committing again and again towards that 4.5% of GDP deficit by 25-26. In the details, I think what we have found is that deficit consolidation is being driven by lower spending as a share of GDP rather than increasing revenue. So perhaps there's some risk here, as shocks propagating from the challenging global environment, or maybe even climate-related shocks. I think El Nino is still a risk for the region, for example. This could perhaps push up expenditures more than what we currently envision, or what the budget envisions. And then perhaps on the revenue side, I mentioned debt affordability earlier. Debt affordability, we can measure that by interest payments to revenue. We are in a currently high interest rate environment, and so what is perhaps needed to improve debt affordability is to increase revenue, and we didn't quite see any significant revenue or tax measures in this interim budget.
Yeah, so as the finance minister suggested, there are no tax measures because it's an interim budget. More importantly, she has set the path for a developed economy, and they are going to come out with a
very clear roadmap to achieve the stage of developed economy over a period of 10 years or so. My next question is on the issue of risk arising from interest rates. Now that risk is abating. If you see, we have reached a pivot globally. In India, inflation is also coming under control. The RBI governor has said that in another 1 or 1.5 years, we would be able to achieve that inflation target. So the interest rate risk is also waning as far as the country is concerned. How would you look at that?
Well, it is indeed true that the interest rates are waning, but they are currently high. And they have been high for the past year or so. So which means that the debts that were incurred over the past year carry these higher interest rates. And, we don't expect interest rates for the Fed to be cutting rates over the next quarter at least. Or, we're only looking at the Fed cutting rates in the middle of the year, for example, which means that the debts that are going to be incurred over the next few months are also going to carry these high interest rates, including the debts that were incurred, some of the debts that were incurred during the pandemic at very low rates. So you can see how that those refinancing pressures at these currently high interest rates are going to continue to apply pressure on what we call debt affordability. But yes, I would agree, over the medium term, interest rates will come down and it will alleviate some pressure, but the pressure is still has not yet abated.
Okay, so let me come back to the critical question. So we have a situation where we need to push growth. If we push growth, expenditure has to be pushed, capex expenditure has to be pushed. The states are also being empowered through a scheme where the center will give them a loan, 50-year interest-free loan of 75,000 crores to be given to the state to help reach the developed economy goal. Now, see, this is also going to be a very important development insofar as, so that will also help the state governments, right? So from that perspective, how do you see our debt to GDP ratio, the combined one, from the centers and the states?
Sure. It's good that you sort of bring that up, because our sovereign credit rating actually looks at not just the union budget, but what we call the general government balance. So that includes the union budget plus the states. And here, I think there is perhaps less evidence of more significant fiscal consolidation, given that the states themselves have not exhibited the same kind of fiscal discipline that the union government has over the past couple of years. Yes, there has been progress, but it's still a weak point relative to where we see the union government in terms of their progress. Now, with perhaps the other part of your question is it going to help? Now here, perhaps it's not just about funding growth or funding development. India has always had very good access to funding, whether it's tapping the deep domestic capital markets or tapping multilateral development bank debt, debt from the World Bank or the ADB, which then comes with technical assistance to facilitate that development. So financing is not the issue. It's what will these states do with that funding? Is there enough absorption capacity at the local levels to really maximize the development impact of these funding avenues that have been made available by the union government?
Right. So from the checklist that you mentioned, the only area where we cannot clearly tick is the combined debt of both the state and the center. The data that I just looked at shows that the ratio has come down sharply from 88% in 2022 to about 81% in 22-23. Now, where should that go down for India to qualify for a rating? Does it have to go down by another 10 or 20% lower?
So let me maybe perhaps take a step back. The weak point in our sovereign credit rating assessment of India is fiscal strength. And fiscal strength is broadly can be encapsulated into two things, which I mentioned and which we have been talking about. The first, of course, is debt, and debt is very high. And yes, it has come down, but I think a lot of the analysis that we do is comparative in nature. While it has come down, it's still over 80% of GDP. the general government debt levels are still over 80% of GDP, which is still higher than all other BAA rated emerging market economies.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India as an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India as an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai.
Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai.
Hello and welcome to NDTV Profit. I'm Harsh Saita and here are the top takeaways from today's budget announcements. The government sees FY24, the fiscal deficit for FY24 at 5.8% of the GDP, while in FY25 it's expected to be at 5.1%, so a contraction of around 70 basis points. Meanwhile, in FY26, the government further aims to bring it below the 4.5% mark. Second, the outlay for capital expenditure has been hiked by more than 11% to 11 lakh crore rupees from the 10 lakh crore number last year. By last year, I mean the estimate for FY24. Now, the estimate for FY24 itself has been revised to 9.5 lakh crore. So, expect that 11% to be much more based on the revised estimates. Quickly moving on, infrastructure outlay for FY25 has also been hiked to 11.11 lakh crore and is projected to be at 3.4% of the GDP. Now switching over to tax. In a relief for corporates, the tax rate which was decreased from 30 to 22 for existing domestic companies and 15% for certain new manufacturing companies remains as is. There is no change. Finally, no changes even with regard to slab and with regard to tax collected at source on foreign trips below 7 lakhs. There's now an exemption which is in play. Let's also quickly listen in to some of the key bites from the Finance Minister's budget speech.
Infrastructure development. Building on the massive tripling of the capital expenditure outlay in the past 4 years, resulting in huge multiplier impact on economic growth and employment creation, the outlay for the next year is being increased by 11.1% to 11,111 crore rupees. This would be 3.4% of our GDP. Budget estimates for 2024-25. Coming to the year 2024-25, the total receipts other than borrowings and total expenditure are estimated at 30.80 and 47.66 lakh crore rupees respectively. The tax receipts are estimated at 26.02 lakh crore rupees. The scheme of 50-year interest-free loan for capital expenditure to states will be continued this year with an outlay of 1.3 lakh crore rupees. We continue on the path of fiscal consolidation as announced in my budget speech of 2021-22 to reduce fiscal deficit below 4.5% by 25-26. The fiscal deficit in 2024-25 is estimated to be 5.1% of GDP, adhering to that path.
Right. Let's also now quickly stick with, or go into a short break. More on the other side. Okay, so we're going to quickly go across. We have some political views coming through. We'll quickly look at what Jyotiraditya Scindia has to say with regard to the budget.
एक ऐतिहासिक बजट है जो पूर्ण रूप से परिलक्षित करता है कि प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में जो भारत में एक नई क्रांति और परिवर्तन पिछले एक दशक में आई है, एक विकसित भारत का लक्ष्य, एक आत्मनिर्भर भारत का लक्ष्य, एक विश्व गुरु बनने का लक्ष्य, उन तीनों लक्ष्यों के प्रति पूर्ण श्रद्धा के साथ और गति के साथ भारत बढ़ चुका है.
Right. While we continue to take stock of what political leaders are saying with regard to the budget, let's also go across to Nitin Gadkari, his reactions with regard to the interim budget 2024.
दुनिया में भारत को तीसरी अर्थव्यवस्था बनाने का जो संकल्प प्रधानमंत्री जी ने किया है, उसी के अनुसार वित्त मंत्री जी का ये बजट हिंदुस्तान की आर्थिक क्षेत्र को मजबूत करने वाला है, एक्सपोर्ट को बढ़ाने वाला है, उद्योग व्यवसाय की तरक्की करने वाला है और रोजगार नए क्रिएट करने वाला है. मुझे विश्वास है कि इंफ्रास्ट्रक्चर को अब सबसे ज्यादा प्रायोरिटी मिली है. हमारा भी बजट काफी बड़ा है और निश्चित रूप से आने वाले समय में हमारे देश का रेलवे का, हवाई जहाज, एयरपोर्ट्स, रोड और पावर, ये जो इंफ्रास्ट्रक्चर के चारों क्षेत्र हैं, हम वर्ल्ड स्टैंडर्ड के बनेंगे, ऐसा मुझे विश्वास है. देश के विकास को गति देने वाला, रोजगार को बढ़ाने वाला और गांव गरीब मजदूर किसान के कल्याण की सोच रखने वाला ये बजट आदरणीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में वित्त मंत्री निर्मला सीतारमन जी ने दिया है. मैं दोनों को बहुत बहुत शुभकामनाएं और शुभेच्छा देता हूं. नमस्कार.
Right, we'll stick with comments coming in on the budget. Budget 2024 was, and I quote, judicious, non-populist, visionary, said the IMF's K. Subramanian. In an interview with NDTV Profits Sakshi Bajaj, he spoke about how he was impressed by the budget, and he emphasized on how the budget is on a credible path when it comes to fiscal consolidation. Let's listen in to what more he had to say.
I would use the following acronym for the budget: JNV. J for judicious, N for non-populist, and V for visionary. To me, the visionary aspect is that the 1 lakh crore 50-year loans for innovation, especially, and you would recall that in the 2020-21 economic survey we'd written on innovation, the fact that India had broken into the top 50 in innovation rankings for the first time, and giving impetus to that, giving impetus to research, especially as somebody who started out as a researcher, that gladdens my heart enormously. It is judicious because the fiscal consolidation path that has been laid is, I think, is very credible. That has been the case, even when I was part of government. That was a feature of, the budgets in recent years. And I think the 5.8% which has been announced for this year, my sense is the actual number will be lower than that. And even if you take the projections for revenue for the next year, 5.1%.
Right, we continue to move on. Manvi Singh Dhillon is now in conversation with Sanjay Malhotra, Revenue Secretary, and Anant Nageshwaran, who is the Chief Economic Advisor at the CEI event. Let's be.
Pleasure.
I'm going to get straight to it, and I apologize in advance that a lot of this conversation, at least on the revenue side, is going to be, let's just break down the numbers for our viewers so that they understand what's going on. So that's a warning going out to you beforehand. If I can talk about what is, I think, an important feel-good measure, which is the 1.1 crore small tax demands, which have been remitted. What is the thought process behind that? And what is the amount that will be foregone with that measure?
Yeah, so first of all, the numbers
We are improving on, the B, given the growth rate that we have seen. The revenues were projected to grow at the rate the economy was projected to grow, which is 10.5%. The economy, of course, as now projected by the latest estimates, is to grow at 8.9%, but as per our estimates, the RE is pegged at 12.5%, gives us a buoyancy of about 1.4. Next year again, they are projected to grow at 11.5% vis-a-vis nominal GDP growing at 10.5%. So that's again a buoyancy of more than 1, about 1.1. So this is insofar as the numbers are concerned. Yes, the Honorable Finance Minister did announce that small tax demands of less than 25,000 crore dating up to the financial year 9-10 and small tax demands up to 10,000 for the period between the financial years 10-11 and 14-15 will not be pursued and will be withdrawn. Basically, these demands, most of these demands are arising because of non-reconciliation, as she announced in the budget, or have not been verified, or are very, very small. And this has happened because till the year 9-10, all our records were decentralized. The PANs were also decentralized. From 10-11, we centralized the record keeping. There was a central processing center where all this data was migrated.
Absolutely.
So when this data migrated to the central processing center, many of the demands which actually had been paid by the taxpayers were not updated. And similarly, even after that, the systems that we have put in, the IT systems that we have put in place, because they could not, sometimes, because of technical errors, the payment is made on one system and the updation happens on another system. So there is a break in the link.
Exactly.
So most of these demands actually pertain to that. And so keeping in mind the inconvenience that it would cause to the taxpayers for especially demands dating back to 1962, 63, 64 onwards, where, they have not kept, obviously, records for having made those payments. And we also, do not have the records for many of those petty demands. It was thought by the Honorable Finance Minister that we should not pursue them, because then they get into the way of refunds. When we process the refunds, then the refunds get stuck.
And what does that total add up to?
So this, so there are about 58 lakh demand entries for the period up to 9-10, amounting to 25,000, less than 25,000 rupees each, and another 50 plus 55 lakh or so, about 1.1 crore demand entries. The total amount will be less than 3,500 crore rupees.
Okay, and I'm going to come back to some of the revenue calculations, but sir, if I could pull you in, 7% GDP growth, 4 years in a row, if it works out for FY25, that's impressive. I'm going to pick some areas where there could be potential concerns going forward, and we had a chance to read your economic review document as well. Public investment has been driving this growth, private investment stepping up with equal ferocity. What will it take to achieve that? Do you see that playing out in FY25? What's some of the deep dive insights you can share?
Well, it's not going to play out in FY25. It's been playing out already, the private investment pickup. And what is going to drive it? The fact that the corporate balance sheets, you look at the net financial savings of private corporate sector, in the last 3 years it's been positive. Earlier years, when they were trying to improve their balance sheets, trim their debt by selling off assets, etc., their net financial savings were negative. In the last 3 years, you look at they have been achieving surpluses, which means the corporate sector not only has its own internal resources, but now it has a banking sector that is willing to lend. You see the non-food credit growth growth, excluding personal loans, growing at 13%. You look at the buoyancy in the capital markets with IPOs and also external markets. Interest rates have peaked in many countries in the world. So I think all the boxes are ticked for the private corporate sector to scale up its investments, and we are seeing that in the data. Listed companies have been increasing their capex, and it is beginning to happen already.
I think that everyone who heard the budget speech today, economists, analysts, they find the fiscal math sound, the budget math sound. They are optimistic based on the fiscal prudence approach that the government is taking. With 5.1% fiscal deficit set for FY25, could potentially anything be a wild card that you'd like to flag off, something that could go wrong?
Well, on the contrary, I would say 5.1% is extremely realistic. This is just a payoff for being prudent and transparent over the last 4 or 5 years. And Sanjay was responding to your earlier question about the buoyancy rates that we have assumed, etc. And we have assumed only 10.5% nominal GDP growth for FY25. And the fact that we could achieve a 5.8% fiscal deficit, despite the fact the nominal GDP growth is going to be around 9% this year, is a testimony to the buoyancy of the economy, not just the collection efforts and use of technology, etc. All those things played a part, but the underlying economic momentum is there. You see it in the e-way bills, number of e-way bills generated, and the GST that is being collected, etc. So, and you see it in the purchasing managers indices, which have been above 50 for almost 2 to 3 years now. So, I think there is an underlying economic momentum, and therefore, and we are not banking on it fully. We are only understating the amount of nominal GDP growth we can assume, etc. So I think wildcards will always be there, and we can imagine them, but it's a preponderance of probability. The preponderance of probability is in favor of us being able to meet this 5.1%.
Good to hear that. Non-tax revenue, if you can do some sort of number clarity on that front, whether it comes from divestment or it comes from the dividend path for the government, the FY25 number, how does it look? How does it break up?
Yeah, so that's an important component. Non-tax revenue is almost 4 lakh crore, 3.75 lakh crore to be precise for this year, vis-a-vis less than 3 lakh crore. So it's an increase of about 33% this year, which is huge. Yes, major contributors for them are, number one, the dividends from RBI, from the financial institutions, from the PSUs. So this contributes. Then there is, as you mentioned, disinvestment. Then there is a lot of non-tax revenue or royalty on from the telecom sector, and there are other fees, etc. So these are primarily the 3 components of non-tax revenue.
Sure. I was trying to get a number sort of that you're working with for FY25 for 2 categories in particular, the dividend category and the divestment, if you can shed some light on that.
So my colleague, Secretary Deepam, will be here. I think he's joining you. And I'll leave it to him, to answer and to give you, the numbers on the disinvestment. But let me tell you that we don't have any separate number for disinvestment. It's a number for disinvestment plus monetization of other assets, etc. So it's a combined head. There is no separate head for disinvestment. But I leave it to Secretary Deepam to share more on this.
Okay. I think it's fair that there weren't any tax changes announced in this budget. It is an interim budget ahead of a general election, and we'll have to wait till July. But I'm trying to just get like many of the points made by the finance minister in the speech were indicators of what, lies ahead for India in the months through the summer, etc. Is there a strong case now building up for rationalization of, whether it's TDS, whether it's capital gains? Is there a strong thinking on that front?
No. Let's stick to, what we did today.
Okay.
Yes, of course, we have been, and FM did mention that in the last 5 years, we have been trying, our focus has been to simplify things and to make and to improve, taxpayer services. And so if there is any rationalization to be done, with regard to any of these things, then well, certainly, we would be having a look at those. But there's no specific thing, on the cards or on the table as of now.
I wanted to come back to, and I'm not saying this because I'm just a pessimist by nature. I'm saying this because, we've seen some of the shocks coming from the global economy, and India has withstood them admirably. In light of that, I'm wondering, sir, with the global growth picture likely to be fairly subdued, the India export story, does that translate on very basic terms to a subdued story as well?
I agree with you. I mean, in fact, one of the reasons why we, in last year's survey and also here saying growth rate is between 6.5 and 7, etc. on average in the medium term, we aren't assuming a big kicker coming out of the net exports. But that said, the services sector exports are growing at about 7 to 8%. And because imports also, both in services and in the merchandise sectors, have come down, the overall service sector trade surplus has been maintained. And the fact that the merchandise sector, which showed a big jump in 21-22, is hanging on to those improvement. And we are seeing, and as we wrote in our collection of essays which we brought out in November, we are expanding our basket of exportable goods and also tapping into newer markets. So whatever comes from the net exports as a contribution to GDP growth, we will take it as an additional unexpected or icing on the cake or the bonus. We are not making assumptions on that, given, as what you said, given the uncertain global growth environment.
Okay, I just want to...
Let me add, of course, as he said, globally trade is down. The positive thing is that we are not, as much down, because globally, trade is down by about 4.5% and we are still growing. So that's certainly a dampener, but we are doing better than others.
Indeed, and that point has been sort of well absorbed. I wanted to put the ball in your court. As architects of this interim budget, what is that one thing that you think may have been missed or needs to be definitely highlighted from an economy, growth, resilience perspective, and from a revenue path that the government is pursuing? Would you like to go first?
Revenue, as I mentioned, and as, in fact, the Honorable Finance Minister mentioned, that we have been trying to improve the services, we have been trying to improve compliance, we have been trying to widen and deepen the tax base. So that is one work that will continue to engage our attention without increasing the tax rates. And that is what has been demonstrated, and that is what, that is one takeaway that this budget can have insofar as taxation is concerned.
And technology playing a greater role in ease of facilitation.
Exactly.
I would highlight two things. In fact, I had highlighted them in my preface to the economic review. One is there is not enough appreciation of the way the health and economic fallout of COVID has been managed, which is what exactly led to the quick recovery and its sustenance, and also being able to secure energy supplies in the last 2 years in a very fraught geopolitical environment by walking the fine balance. And the second thing that is underappreciated is the quality of growth. Being able to grow at 7% when the world economy is growing at between 2 to 3% is much more qualitatively superior to what we could achieve by growing at 8 to 9% when the world economy was growing at between 4 and 5%. I covered these aspects in the preface to my economic review.
And I don't know if we have the time and space to deep dive into it, but a statement in the finance minister's speech on, a 50% increase in real income, average real income, any sort of clarity you can share on that?
I think basically it was between FY14 and FY23, real per capita gross national income went up by 53% or 56% in this period, and also real per capita GDP growth in this cumulatively in this 9-year period. That's what she was referring to.
Okay, good to get that clarity. Gentlemen, thank you for your time and insights, and look forward to reconvening for the full budget.
You're welcome.
Thank you.
Thank you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai.
Special partner, State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai.
Special partner, State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action.
In the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner.
State Bank of India, the banker to every Indian.
India was the 10th largest economy in the world. Today, India is the 5th largest economy. India will be the 3rd largest economy soon.
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. Aapka bhala, sabki bhalai. Special partner.
State Bank of India, the banker to every Indian.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the 3rd largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay
Hello and welcome to this very special coverage of the big story that's played out today. It is Paytm. I'm Harsh Saida, with me is Vishwanath Nair, and we're going to try and dissect what's happened with Paytm today and what we can expect, Rishi, going forward.
So what's happening, Harsh, is at this point in time, last evening, just about this time, Paytm came out, Reserve Bank of India came out with a statement saying that Paytm Payments Bank is going to face some additional strictures. Now they're saying additional because March of 2022, Paytm had to face the original set of strictures where basically customers were not allowed, or new customers were not allowed to be onboarded on the Paytm Payments Bank app. What is also interesting to note here is that after that, the RBI conducted a system-wide audit. They did an external validation of whatever came out from that audit and found that there were persistent non-compliances and there were maximum or material supervisory concerns that were coming out at Paytm Payments Bank, and that's why the RBI came out with a set of strictures. Now, what are these strictures? That's something important to note here. Basically, there are no fresh deposits or top-ups allowed in a Paytm Payments Bank account. What we also know from the RBI's statement is that customers can continue to spend or withdraw the funds which are currently in their account. However, after the 29th of February, they cannot make fresh deposits. They cannot make any kind of other banking services or banking transactions on the Paytm Payments Bank account. The question, Harsh, here is why did the RBI go after this? So what our sources have been telling us is that there were material supervisory concerns basically with regard to KYC, data storage, and how data identification was being done between the two entities, Paytm as well as Paytm Payments Bank. That's why the RBI has come out very strongly and they have done these specific sort of strictures against Paytm Payments Bank. What is also interesting to note here is that as far as the customers are concerned, there is really no problem with the way they conduct their transactions on the Paytm app. Customers can continue to use their UPI accounts. They can continue to borrow loans from Paytm. They can continue to do equity transactions, brokerage services, as well as insurance transactions. All of those things remain the same at Paytm. However, the problem will come in as far as the payments aspect of it is concerned. Paytm, over the last 2 years, since the RBI put out these strictures in March of 2022, Paytm had been already shifting their back-ended bank-related services to other banks. Now, what they're going to do is basically move completely to the other banks, and that's where the situation stays right now, Harsh.
Yeah, absolutely. And Vishy, before we delve deeper, let's quickly go across to what the management actually had to say. We had both the founder, CEO Vijay Shekhar Sharma, as well as Bhavish Agarwal, who's the CFO, speak about what's happening and what the plan going forward is all about. Let's listen into a slice of that.
Important thing is that Paytm Payments Bank has received regulatory directive from RBI, and we are taking immediate steps to comply with the directions. The users of the Paytm Payment Bank can use the saving account balance, the wallet balance, which is used in FASTag and NCMC, etc. account till 29 February. And effectively, that means that they can continue to add money, etc. But after 29 February, they cannot add incremental money to the bank account or saving account and so on. OCL, as a payment aggregator for online offline merchant, and already works with various other banks, and Paytm Payment Bank is one of the key banks in that. And from here on, we are very clear that we will work with only other banks and not PPBL. And PPBL is just one of the various other banks, any which ways. OCL has already been working with other banks since last 2 years, and especially when embargo had come to the payment bank, we already had started to work and accelerated the plan for movement to other banks, and other banks have actually already started working with us. So it is an important thing for me to tell you that we continue to decline and decrease the slantwise dependency on Paytm Payment Bank, but there is a still significant enough dependency, I would rather say, there. And we now accelerate the plan and completely move to other payment banks partners. And remember, these are payments related relationships, which means all banks have necessary technology and capability already there. And I'm very happy to tell you that we are genuinely overwhelmed by the support that we've received from the various banks, large banks of this country and our country, and those who are already a partner, and more additional large banks have reached out at very, very senior level to say that they will be very happy to help us and happy to execute relationships that we in past have been doing with Paytm Payment Bank. And we obviously very clearly, we are going to take that as a step forward and work with current and many more incremental bank partners. Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. With regard to the direction on termination of nodal account of OCL, that is 197 Communication PPSL by Feb 29, OCL and PPSL are already in process of moving nodal account to other large commercial banks, and that will be done definitely before the due date. And OCL's marketing and financial services businesses, where we market and sell other services to the consumers, are not affected due to these directions. And these directions are towards the associate company, Paytm Payment Bank Limited. It is important for me to point out that there will be requirement to have operational change for the merchant relationships that we have, where the merchants have relationship with Paytm Payment Bank, and those relationships needs to be operatingly be changed, and there will be an operation change there. Overall, I can say that it is on behalf of Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be.
Till the time we're able to make these operational changes, let's pause the new origination of loans for that period of time. And once we are able to solve the operational things for existing and the new one, we restart. So there will be some disruption, and hence this 300 to 500 crore number that Madhur was saying will have some impact from coming in from lending, that we will not be originating loans for maybe a couple of weeks before we solve for the operational challenges, and then we go back to normal.
Right. So loans originating loan originations, as they call it, has stopped, Vishy. What is the impact? Well, Paytm came out with a release yesterday. We all know about it, 300 to 500 crore on EBITDA. Yeah. And we were speaking earlier today, the EBITDA of Paytm, 450 crore is EBITDA before ESOP, right? So if you wipe out 300 to 500 crore of that, that's virtually leaving you back to where you were probably a year or two back. And so it pushes back profitability by quite a bit. Of course, we don't have the exact numbers on where it pushes profitability back, Vishy, but one guesses that it would be at least a year or two. Yeah. And the other piece is, on top of this, you have an ESOP of 1,000 crore, all of which needs to be covered to go PAT positive. Yeah. Yeah. So it does push the business back by quite a bit. The other piece I also want to highlight last off before I hand it over to you for our exclusive, Vishy, is the fact that you have a customer base of 35 crore customers, 10 crore of which are monthly active users, right? A lot of this will play negative sentiment on the monthly active users. So how many of them will actually migrate to a new commercial bank, which Bhavesh and Vijay were speaking about? I'm not so sure. And once they migrate, will they migrate back to Paytm Payments Bank as and when the license comes back is the real question. Yeah. And that is where we are in limbo. We're not sure whether customers will actually even come back and that 300 to 500 crore EBITDA will actually get recovered or not. That's where the question lies, right?
Yeah. So that's also where one of our exclusive stories is coming in that we broke just this morning. Basically, what we understand from sources is that the Reserve Bank of India's move last evening was specifically intended as a precursor to a license revocation for Paytm Payments Bank. Now, that is a big move from the RBI towards a payments bank. Now, payments banks are a little less than 10 years old in the ecosystem. They were brought in as a differentiated sort of banking service, and they were intended to support financial inclusion. Now, of course, with the RBI being pretty unhappy with the way compliance has been handled at Paytm Payments Bank, they're saying that, listen, enough is enough. Your game's about to end, and you need to really pull up your pants. So by the 29th of February, we'll have clarity on what happens with Paytm Payments Bank and therefore Paytm.
Yeah, absolutely. And, that essentially could mean big news for Paytm as well as Paytm shareholders, because we're not sure how the business is going to evolve post this. And with so much of uncertainty and the news that we're getting in, Vishy, it seems like we are on a very, very weak footing when it comes to Paytm. But RBI has put restrictions on Paytm. We have Pragati with the analysis on how this will impact the various products and various lines of business of Paytm. Pragati.
Right, Harsh, as Vishy also rightly mentioned in the beginning, that we need to assess this entire situation into two aspects. One, impact on products, and the other, impact on customers. And for the benefit of our viewers as well, I'm going to break it down into two parts here. First, I'll begin with the impact on products. Now, naturally, Paytm and Paytm Payments Bank have a number of offerings. So we need to see at every single offering from both the merchants and the customers' perspective and how they will have a bearing on the daily working of that. One, let's take a look at the Paytm Payment Gateway. The business continues as usual for all the online merchants. There's no change in that. Second, the offline merchant payment network offerings also continue. There will be no impact on that whatsoever, and the company has also clarified about it in the exchange filing that we were just talking about in the show in the beginning. Next, the FASTag continues as usual. FASTag was one product that was being talked about repeatedly, and even the customers were concerned as to what will happen, because that's a major offering from Paytm. It continues as it is. There's nothing to worry about. The Paytm POS and the Soundbox services also remain unaffected. There's, however, one slight change that is coming with regards to loan. Even though Paytm has said that there's no material impact on the lending business, in a con call or the analyst call that was conducted today in the afternoon at 3:30 p.m., Bhavesh Gupta, the company COO, has said that for the time being, temporarily, the origination of new loans is being paused because they are trying to await a resolution of operational issues, because a number of operational issues have come up because of the changes that are happening. So for the time being, they have paused the rolling out of fresh loans. However, in the near future, they might start them again, but we are awaiting clarity on that. Let me be very clear about that. Next, let's look at the impact on customers. We already mentioned it during our other coverages that there is no material impact on customers whatsoever as to what has happened at Paytm. One, if you look at, there's no impact on user deposits in saving accounts. Nothing much is changing for customers. There's no impact on deposits in wallets, FASTags and NCMC accounts as well. And as far as the UPI payments are concerned, because a lot of people have been thinking that maybe there might be some changes in that, there's no immediate impact on UPI payments as well. One small bit even here as well, like it was there in the impact on deposits. Customers, because RBI has given a deadline of February 29, customers will not be able to add any money in wallets and savings account after February 29th. So that's the update that we have in terms of the impact on customers and the impact on the products.
All right, thanks for that update, Pragati. Harsh, the interesting part here is in terms of the company always been trying to downplay any kind of negative news. This happened last month as well when the RBI raised the risk weights back in November. After that, the company came out with an entirely different story, saying that they were anyway not going to look at the 50,000 or sub 50,000 sort of loan, even though that contributed to a large chunk of their loan volumes, not as much value. Now, of course, the company is saying that we will move everything to the other banks and that will sort of, magically resolve this problem. 29 days is a very short period of time to resolve that. An interesting question also I had was with regard to the investor community, because Paytm has been that stock that everybody loves to talk about straight from the day it got listed till now. Every time something happens in the sector, the investors sort of bear the brunt of it. So with this move, what exactly has happened and is likely to happen?
Right. So, Vishy, before we step into what the investor profile currently looks like, I want to highlight that this was a company which listed at 45 times sales 2 years back. Now, 20,000 crore was the size of the IPO. 9,000 crore was the OFS size. Yeah. And what we saw, therefore, is a large retail participation which came out. It was 2 times oversubscribed at 1.5 lakh crore market cap, right? Now, when you look at the market cap as of yesterday close, it was 50,000. So you had investors who had invested at 1.5 lakh crore at IPO price, losing 67% of their wealth as of yesterday alone.
Oh my God.
Now, to give more perspective, today the stock is down by another 20%, another 10,000 crore wiped out on investor wealth. And, I've listed down some shareholders who have lost wealth today, like the likes of a Safe Mauritius, Safe Partners owned entity, Resilient Asset Managers, again, 1,000 crore each of these, and Finn has also lost 1,000 crore. Vijay Shekhar Sharma is the 4th largest shareholder there. He's lost roughly 800 crore in today's 20% slide. SoftBank loses around 490 odd crore. SVF also, which is SoftBank Vision Fund, also losing around 490 crore. So you have these plethora of investors losing a large amount of wealth. And, one more piece, very interesting here. Berkshire Hathaway owned 2.5% in Paytm till the September quarter. They have sold out in the month of December. Right? So we've seen Berkshire Hathaway also sell out of Paytm. So that's the one very interesting piece. I'm not sure whether they made a profit or a loss. That we'll have to go back and check. But nonetheless, they've sold out.
Interesting bit for that. But you know what, Harsh? I have a problem with the way brokerages have been covering the stock. Yes. Despite multiple bad news coming in over the last couple of months, we have not seen that big of a move from the brokerages. We have seen some downgrades. some maybe change in the target price, but mostly brokerages have remained fairly neutral to any kind of news that's coming in. I have Mimamsa standing by to tell us what exactly is happening with the brokerages on Paytm.
Hi Vishay. So several brokerages have downgraded their view on Paytm on business growth to 6.30% year on year, citing serious concerns over the RBI's move along with the business model of the company. Now Bernstein has said that for all practical purposes, RBI's order ends operations of Paytm Payments Bank, and it adds to the already heavy regulatory overhang on the business, considering the RBI stopped Paytm to onboard new customers in 2022 as well, which is a restriction that still remains in place. Now Paytm has already been struggling to turn profitable. With this development, Citigroup as well as Paytm itself has said that they are expecting operating profits to take a hit of rupees 300 to 500 crore annually. Considering existing customers will not be able to avail basic banking services, it can significantly hamper Paytm's ability to retain customers in slightly longer term, and that would in turn affect the business. Well, analysts do not expect any near-term solution to this, but the only comforting factor that the analysts are pointing out is that the fintech company's lending, insurance, and equity broking businesses are independent of the Paytm Payments Bank. So that is something that will still continue, and the business remains as usual for them. So there won't be any immediate impact on Paytm's UPI business as well. However, there is a risk associated to the margins for payments business, as higher margin products like wallets and FASTag are dependent on the payments bank entity. So if we look at other businesses as well, things are not looking very promising, as Paytm had exited its BNPL segment in December and rejigged its lending portfolio towards higher ticket loans. So all in all, things are not looking as promising according to analysts, as a major chunk of the business is going to go away with Paytm Payments Bank business.
Right, very interesting, Mimamsa. One last piece, Vishy, I'd like to try and just flag off. You were speaking about how in November RBI tweaked the RWAs for various assets. In fact, December was the first quarter when their loan disbursements degrew. Right, so Paytm's first quarter where the loan disbursements actually degrew sequentially was December, coinciding with RBI's so-called rap on the knuckles. but that's the insights that we've tried to summarize and bring to you, Vishy and myself, as well as everyone who spoke with us. It's a wrap on this edition of The Big Story. Stay tuned to NDTV Profit. We hope this was insightful. From Vishy, myself, everyone who put the show together, thanks so much for watching.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
India has an ambition.
The ambition is to become the third largest economy in the world.
To have authority in the new world order.
And to hit the $10 trillion GDP mark.
Welcome aboard as we travel to our ultimate destination.
There is more to this journey than just getting there.
Like more balancing and more staying afloat.
More discipline for more changes. More ways to stay determined.
NDTV Profit is ready to go above and beyond to capture all the action
in the run-up to get the flight off the ground.
Let us witness India at the cusp of the takeoff.
Co-presented by Canara Bank. Together